my name is Shashikiran for the students who are seeing me for the first time. So I will be handling the economics paper in the CA Foundation as well as strategic management and CA Inter and as well as CS Professional Strategic Management and CMA Inter Strategic Management. So usually I handle economics and strategic management. So today, tomorrow, day after tomorrow, as well as on the Sunday, the next 4 days. So from 4 o'clock to 8:30. So this will be the class duration. So before starting, couple of questions like what exactly you are expecting me to do? Because if I have to go in my own flow, it doesn't make a purpose to make other students to come and sit here and to attend the marathon. Let me know what is your requirement. Based on that, I will be taking up the class. So should I go in detail with the concept or just revision with the concept? Or you have any specific topic that you haven't understood in any of the chapters, right from the chapter 1 until chapter 10. If you have any specific topic, this I haven't understood at all, or I need to know about this particular topic, let me know. Give me the list of the topic that I can go little in detail. Okay, chalo. Now, even for YouTube students, so do let me know like what exactly you're looking out for. So based on which I can take it up. So you want me to go with the concepts in detail part, or should I solve more MCQs, or should I solve more PYPs, or should I go with combination of concept, PYPs and tricky questions? How exactly you want me to do it, I will be doing it for the next 4 days. So depending upon our audience requirements, we'll be going ahead. So what do you want me to do it?
Combination of everything.
Combination of everything.
Overall revision and some important topics we can go in detail.
Important topics. So you have to tell me which is that important as per you.
The chapter we can know that some weightage portions.
Okay, so weightage portions. Chapter 5 and 6. Okay.
Second chapter, demand and supply.
Demand and supply. That is the most easiest. Macro part. Full whole macro. Last. 8 and 9 and 10. Okay. So in detail concept. So suppose if anyone is looking out for in detailed concepts, let's say for example, there are certain cases like I have seen it when the result comes up. So I usually receive a text message from the student. Sir, I watched your May marathon. Sir, I watched your January 26 marathon. Just by watching your marathon, I scored 60, 70, 80. Like I have cleared my exam. I used to get 30, 20s and all. I have scored more than 50, 60s. So suppose if anyone is looking for in detailed, let's say conceptual, that I don't want, let's say any MCQs. I don't have a conceptual knowledge. I need to go in detail with the concepts. I would still suggest you can go with the January 26 marathon or even May 26 marathon. I think Jan 26 20-hour plus marathon is there. So that has got in detail. Like every concepts detail by detail I have gone, I have covered everything. Even in, let's say May 26 marathon also, I have gone almost in detail. I have also included few MCQs into it. Okay, weightage portions detailed please. Okay. In detailed part for high weightage chapters. Okay. Weightage part. Sir, go with the details. Fully. Okay. All the topics exam oriented. Okay. Cover as much as PYQs. Okay. So how many PYQs you want? 5, 10, 15, 20? 10. I'm okay to take it up. So the conceptual explanation little goes down. The more MCQs if I add, concept will becomes little low. So I need to balance between both. Okay, let's take past 5.
Right.
5 past 5 attempts or 6. Okay, chalo, one more bonus 6. We will take one more plus 1 6. So I will do one thing. We will take from the time when ICA started issuing question paper to the students. That is from September 24. So September 24 and onwards, ICA started to give question paper to the students. I hope that will be also with you guys. Or if not, I can only share it with you. Not a problem. Okay, macro detailed, macro detailed. Okay, most of them want macro in detail. Okay, chalo. Numericals, main important. Okay, so our YouTube student wants more and more numericals. Okay, there are 80 students who are watching in online live. Okay. Okay, I will also be reading your chats and I will be taking it up. No worries. You can text me up in the chat box here. Okay. So most of them are saying that, sir, we need macro in detail, especially numericals are needed, PYQs are needed. Is that, or should I add anything from the offline side? Same. price determination, chapter 4, unit 2. Okay. Chalo, fine. We will take it up. So let's get started. So I will be covering both, like combination of PYQs as well as combination of concept wise. First understand, see, before coming to any exam, like before starting with any subject, first you need to understand the question paper pattern. In economics, it is clear cut easy. See, total there are 10 chapters. In that, to be frank, first 4 chapter itself is micro. Remaining 6 chapters is macro. Chapter 5 is of macro only, but we call it as a micro into a consideration. But most of the topics, elements, what we cover here is a macroeconomics. So let me still consider this business cycle as a macro only. Micro is only just 4 chapters. See, in this, what you need to cover the most. If you are looking for a easy marks, chapter 1 is a easy marks. You will get 5 questions here. And most of the questions from this particular chapter 1 comes from unit 2. Basic problems of an economy and types of economy. And in the unit 1, there are 3 topics, which is most repeatedly asked and most commonly asked questions are positive signs, normative signs, and microeconomics, macroeconomics. Those questions will come, and especially initial introduction topics of Adam Smith, Alfred Marshall. Those are the areas where you will get the question. And business economics, the definition. And business economics is a branch of economics, so applied branch of economics. Those silly questions like small questions will come. So these are the areas. Usually 5 questions are going to come from chapter 1. Average it is. What is it? Average. Average is going to be 5 marks. Sometimes if you are lucky enough, you can go up to 7 marks. So easy marks is 5 here. And next comes chapter 2. There are total 3 units. Demand, supply, consumer behavior. Demand is unit 1. Supply is unit 3. Consumer behavior is unit 2. In this consumer behavior, why I will keep it at last is you will hardly get 2 to 3 questions here. You will not get more. But concept is little vast there. If you see the question paper, if you go and see every attempt question paper, 2 to 3 questions will come from the consumer behavior. Rest almost 8 to 10 marks, or sometimes if you are not lucky enough, 7 or 6 marks will come from these 2 only, demand and supply. And even we can short say where exactly the question comes. In demand, you can clearly say that the questions are going to come from price elasticity of demand. That is the one area, and especially numericals, calculations. That is where the question comes. And see, if you analyze the question paper of past 5 attempts, easily 60 to 70 marks is already with you. You know that this is the area where the questions are going to come. See, I usually say this in my class, like whenever I'm conducting the class, whenever I'm going with a regular flow with the class, wherever the important topic comes, I will simultaneously take up like this. See, I have almost like 6 attempts paper. So in the morning batch, I was taking it. Every topic wise, why I usually don't include this in my material, why I show this as an ICA material itself is the seriousness will come. If I just extract, copy, paste, and if I put it in my material, students will not take it serious. So I take up the ICA material. I will bifurcate everything into chapter wise like this. Chapter 3 here, chapter 3, chapter 4, chapter 5 like this, chapter wise, and with answers marked, we will discuss it. So it is always clear which is the most important topic in every chapter, what exactly the questions have been asking for. So once student knows this kind of a weightage, what topics are most important, for them preparation becomes most easiest. So I will try to include all those parameters what I usually do in my regular class this time, and let's make it more simplified this time. Whoever is watching in the online, whoever is watching in the YouTube, whoever wants to, at least if they want to score somewhere between 60 to 80, that should not be a challenging at all. So economics, to be frank, I'm saying scoring 60 is very chiller. If you know the concept, if you have understood the concept, scoring 60 is never a difficult task in economics. 60 to 80 is where your practice matters. After going back home, when you're sitting, when you're solving MCQs, that is where 60 to 80 comes up. 80 to 90 is the place where little in-depth knowledge of the subject. 90 and above, sir, because we have seen your podcast and all of the students, 94, 98, 99 and all are there. That is where I say, some 5 questions, nook and corner of your ICA material, they will ask. ICA doing ICA things. They will ask from nook and corner, especially macro. And another 5 questions will be a GK related questions. Or maybe from nook and corner. So scoring up to 90 is definitely possible. 90 and above, little nook and corner of the book will come. 95 and above, sometimes your luck with general knowledge, what you know, same question comes up. Definitely it works. Is that clear? Okay. So without wasting the time, let us get started. So first we will start with the chapter 1 itself. Better today and tomorrow we'll cover with microeconomics, and day after tomorrow and Sunday we'll cover with the macroeconomics. I will dedicate more time for macro and we will speed up little micro part. In whichever topic you feel, okay, this particular topic I need little more explanation, or any topic if you haven't understood, let me know, the offline students or the YouTube live students. I will take up those topics. Today is a night marathon of micro complete session. Hello boss, human in nature. Morning I had 6 hours class. After that now I am taking another 4 hours in a day, 10 hours. Whole night if I sit, next day morning, my morning bus student should meet me in hospital. You guys have nice demands, man. Elasticity concepts, little detail. Okay, fine. Anyone please tell sir to complete micro today itself. Okay, sir. Sir, do more PYQs, sir. More PYQs and macroeconomics in detail. Sir, how to get PDF? Okay, so for the people who are asking PDF from the past 2 attempts marathon also, let me clarify this. My material is a simplified version of ICI material. There is nothing difference in that. If you see the ICI material and my material, it is almost the same, and you will not find it any difference. In ICI material, slightly Greek, Latin and French printed in English. In my material, English is given in simple English. That is the only difference. So whether you have this PDF or whether you don't have this PDF, no worries. You can still refer it from ICI material, understand the concept. That is most important rather than focusing on PDF. Okay. Today we'll go with chapter 1 and chapter 2 better. We'll finish it off. So tomorrow 3 and 4, 5 in detail we can take it. Okay, let's get started. Chapter 1 will not take much time. Chapter 1 hardly it will take 15-20 minutes of time. So chapter number 1. Introduction. So total 5 to 7 marks. If you are lucky enough, 7 marks. If not, on an average, 5 marks is going to be there. Clear? Okay, so chapter 1 has got 2 units. Introduction to business economics and basic problems of an economy. So who is called as father of economics? Adam Smith. Why is he called as father of economics? He was the first person to give a systematic definition of economics. See, earlier this economics was studied under political economy. In the year 1776, which year?
1776.
He was the person who systematically defined economics, and he said economics is a study about wealth. And the book written by Adam Smith is called as An Enquiry into a Nature Causes Wealth of Nations. What is it? Enquiry into a Nature Causes?
Wealth of nation.
Wealth of Nation, popularly known as Wealth of Nations. Clear? And later people started hating the subject. They called it as Gospel of Mammal. That means people started hating this because it only concentrates on wealth. Wealth. Other than wealth, it doesn't even speaks about anything else. Later, the subject was redefined by Alfred Marshall. Who redefined it?
Alfred Marshall.
Alfred Marshall said economics is a study about welfare. What is it? Study about?
Welfare.
So, wealth definition was given by Adam Smith. Welfare definition was given by Alfred Marshall. And Alfred Marshall is called as father of which economics?
Modern economics.
And there is one more, your best friend of macroeconomics, John Maynard Keynes, J.M. Keynes. He is the father of macroeconomics. Which economics? Clear. See, the fundamental premise. The word premise refers to assumption. The fundamental premise of economics is human wants are unlimited. What is it? Human wants are?
Unlimited.
But resources to satisfy such unlimited wants are limited. That is scarce. So this is the basic fundamental premise. Human wants are unlimited, but resources are scarce, limited. And that is the main subject matter of an economics. So in economics, we need to balance things. We have unlimited want, we have a limited resources. How by using this limited resources, we try to satisfy our unlimited want. So we call economics as an art. What is it? Economics as an art. So that is what the word derives here. Art of household management. It is a Greek word. Which word? Oiko and nomia. Oiko refers to household, nomia refers to. That means art of household management. That is what the intro part. Usually from this area you can expect a question. If not, they will ask you the question from the business economics definition. Like just now we studied about fundamental premise of economics. Human wants are unlimited, but resources are limited. Same way, be it any business organization, for us our input, that is my resources, are factors of production. Land, labor, capital and organization. We don't have it in an unlimited manner. We have it in a limited manner. So we have a limited inputs. By using that, we try to produce a more and more output. That is maximum Output. So in short, business economics is nothing but rational business decision making. Which making? That means taking right decisions at right time. What is it? Taking right decisions at? To achieve organizational goals. To achieve which goals? See here. Business economics is a problem of rational business decision making, selecting an appropriate alternative at right time to achieve organizational goals. So for me, I need to take a right objectives, or let me say I need to take a right decision. For that, I have a multiple, let me say, alternatives in front of me. Now, let's say, for example, after your 12th standard, you will be having options. Should I do CA? Should I do CS? Should I do CMA? Should I do ACCA? Or I don't want any professional exam. Let me just do BCom. Like this, you might be having multiple alternatives. In that, which alternative is best? You need to select. Same way, every business organization, when they have multiple options, they need to select which option is better suitable to achieve my goals. What is their goals? Profit making, wealth maximization, profit maximization. So end of the day, they have a goal. They need to achieve their goals and objectives. So in order to achieve that, first we will evaluate an alternative. To evaluate that, we will also collect a basic information and we take a rational judgment and we use our productive resources which are limited, land, labor, capital and organization. Those limited resources has to be put into a dash uses. So therefore, most effective alternative. Suppose in front of me there are three options. Let's assume, Shashikiran, rather than doing, let me say, marathon class in Coimbatore, why didn't you do it in Bangalore? Every year you are doing in Bangalore, right? Now I have an option in front of me, Bangalore or Coimbatore, whichever is more suitable, I will select it. Like that, every businessman, whatever option right in front of him to achieve more profit, whatever alternatives are there, which is more suitable, he will pick. And he will leave the less suitable alternative. So that is what, at the end, we have to select the most suitable alternative and we need to leave the less effective alternative. So in short, business economics is what? Rational business decision making, and also it is going to fill the gap between theory and business. We call it as pragmatic in approach. Which approach? That means we don't just follow the theories given by Adam Smith, Alfred Marshall, ACP Go, JS Mill, all those business economists, whatever they have said. Yes, no doubt, those economic theories are also important, but they may apply to the present practical world or they may not apply. So today, what is that exact problem we are facing? We need to analyze that basic problems and then we need to take a solutions. So along with theory, we also consider the present business. So we call it as pragmatic in approach. Which approach? And to take this right decision at right time, we use a lot of economic tools. What do we use? That is demand, supply, cost, price, competition. And all of these tools are related to microeconomics. Which economics? So henceforth, business economics will be highly dependent on microeconomics for decision making. Which economics?
Microeconomics for decision making.
Is that clear? So this is related to business economics. That is the another area where you can expect a question. Next, difference between micro and macro economics. Clear. Next comes micro, individual aspects in detail. That means like demand, supply, cost, production. That is microeconomics. We will study those concepts in detail. But in macro, we don't go much in detail. We will consider entire economy as a whole, like national income, unemployment rate in the economy, poverty in the whole country. Like this, I don't come and say in Coimbatore, in Ramnagar, what is the poverty? That becomes in detailed analysis. We don't do it. We just say what is the unemployment problem in the whole country. That is macro economy. Which economy?
Macro economy.
Entire economy has a whole analysis as macro. Individual aspects in detail is a. And microeconomics is a dash theory. And this is the repeated area question. And macroeconomics is a determination of price, demand and supply, market forces concept. Chapter 4, Unit 2. The central theme of microeconomic analysis is determination of price. That is why microeconomics is called as macro is called as
income theory.
And microeconomics has lot of assumptions. We will study about it in chapter 2 also. For example, law of demand. All other things remains constant. Only when price increases, demand. Even in LDMU, we will consider that. Taste and preferences of a customer will remain constant. Technology remains constant. Law of variable proportion. Like this, we take a lot of assumptions and most of the things are unrealistic. What is it?
Unrealistic.
In microeconomics. But in macro, we don't take much assumptions and there are more of realistic. Micro is more of internal to the organization. Macro is more of And there is one more topic in this. For example, a scope of economics. Like for example, scope of microeconomics and scope of. That is one such area of question they will be always asking. Wait, let me also download the ICA material. ICAIBOS. BOS Knowledge Portal. Okay, study material, new scheme, foundation, English medium. Okay, when are you guys writing exam now? Okay, no one is in May 27, right? Okay, chalo, then I will take May 26 exam and onwards. Okay, chapter 1. Okay, intro. See, this is another area. Wait, I will show it. Especially this last two topics now. This is another common area. The question keeps on repeating. One question will come from here. See, nature of business economics in this scope. See, internal issues are also called as operational issue that belongs to the micro. In this now, most common thing is, which among the following is not an internal issue? Which among the following is not an element of microeconomics? Now observe, demand analysis and forecasting. We'll try to understand the future demand. That is from producer perspective. Next 3 months down the line, 6 months down the line, what will be the probable demand? What will be the probable demand? Let's say next month, there is a Ganesha festival coming up. Now we will say how many Ganesha idols are required in, let me say, Coimbatore. Last year, let's assume that 1,50,000 Ganesha idols are sold. Previous to that, 1,30,000 was sold. Previous to that, let me say 3 years ago, 1 lakh we have sold. That means trend is increasing. So let's say coming year we may sell 1,70,000. Like this, we try to analyze what will be the probable demand. What will be the probable demand? Like this, we try to understand demand forecasting and analysis, production and cost analysis. What will be the cost of producing the goods and services, inventory management, how much of raw materials we should always have, like reorder level, ABC analysis. We will study this in CA Inter. And market structure and pricing policy. What type of market we have? Monopoly, monopolistic competition. And also we speak about resource allocation. For what purpose, what resources to be allocated, and how much capital and investment we have to make, and profit analysis, risk and uncertainty. See, these are the parameters which comes under micro. Which comes under where? Micro. And they will give a questions like this. For example, which among the following is not a micro element? They will give business cycle. Is business cycle micro? No. Business cycle comes under macro. There is one such question in exam. I will show that. See, in the macro analysis, see macro environment or external environmental analysis. See their stages of business cycle. Business cycle comes under macro. General trends in national income, employment, price, savings, investment, government economic policies like industrial policy, competitive policy, fiscal policy, globalization, workings of central bank, capital market regulation, social and political environment. See, you have to just go through this like a newspaper. Is that clear? Most repeated question in that unit 1 is which among this is a micro element and which is not a, or which of this is not a macro element. So they are asking this question multiple times. Is that clear? So the scope of economics and this difference between economics and business economics. One of the most favorite question is this branch. Business economics is an applied branch. Which branch? That means general economics is a bigger concept. Inside a general economics, one of its branches is business economics. What is it? One of its branches. So which is the wider concept? Business economics or general economics? General economics. Inside general economics is one of the branches. Business economics. Is that clear? Which is the most widest? Broadest or widest? General economics. Inside that, which is a narrow? Business economics. So like this, small questions will come. So don't miss out this difference. Clear? So these are the common areas of asking question from the unit 1. And later there is one such question. Is economics science or is economics an art? Both. It is a combination of science as well as art. Be it any subject has to be called as science. There are 5 conditions. How many conditions? 5 conditions. Number 1, systematic body of. Answer should be. There should be tools to measure. Universally. The problem with economics is it will satisfy first 4 conditions. It will not always satisfy. For example, LDMU will apply universally, but in terms of lifestyle commodities will not apply universally. Let's say car. Whatever the car that is demanded in India, is it the same the demand happens in USA? No. So like this, universally not applicable. Every economic concepts are not universally Acceptable. Henceforth, business economics is no doubt a science, but not a pure science. It is a partial science. Which science? And economics is also an art, that is practice of knowledge. What we study in theoretical, we have to apply that in real life. What does it apply that in? That is called as an art. Yes, we know that buy one get one free, Big Billion Day, Great Amazon Festival sale, Munyappa sale, Rangappa sale, Marappa sale. When we do all this, people will get attracted. They will come to buy goods and services. We know it. That is why we start giving offers, promotions. Straight away, if I say my product is $499, no one will buy. I say flat 50% off on MRP. MRP is $999. What is it? MRP is
$999.
Flat 50% off. Now people will buy. If I straight away say my product is $499, they don't buy it. See, art is a practical application of knowledge. What we have studied in theoretical, we should apply that in real life. That is what economics does. So economics is both science as well as science in its theoretical way, art in its practical way. So economics is both science as well as. Under science, there is another two more classification. What is it? Positive science and this topic, they can club it with any chapter. They can club it with any concepts from chapter 1 to chapter 10. Two differences are there. Just two differences you should remember. One will just describe the problem. Other, along with describing a problem, it will give a solution. It will give a solution. In class, I have created one story for this. Shashikiran, I am a patient. I am unable to eat water, drink food. I am a drunkard fellow. So, we will create one big story and I will explain that. So, what happens now? A person is finding a problem. He will be just defined with a problem. That is called as positive. Along with defining problem, if there is any solution given, which is given, that is called as which statement? Normative statement. Especially this last 4 pointers, this is where most of the question comes. See, suppose, let's say for example, if there is any facts involved, which is involved? Now I will say, for example, highest number of pubs in Asia is located in Bangalore. That is a fact. Highest number of two-wheeler riders are there in Bangalore. Fact. And cause and effect relationship. What is it? If you drink too much of alcohol, your liver gets damaged. Yes, cause is too much of drinking alcohol. Liver damages. Effect. So, cause and effect relationship. When we speak more and more about facts and we are just defining the problem, describing the problem, these all are the elements of. Okay, let's take one statement. Now I will make a statement. You tell me whether it is positive statement or normative. Normative means there should be a solution in that. Positive means just I am defining the problem along with facts or along with cause and effect relationship. Now let's say there is a cyclone which is affecting the Chennai and the coastal side. Fishermen are advised not to go for fishing. Normative, because they are defining the problem, cyclone, and they are also suggesting. Or if they just make a statement, there is a heavy rain expected in next 3 to 4 days due to cyclone. Positive signs. So in a given statement, there is one more nice logic my students will come up in the class. Sir, when the word should is there, that means it is always normative answer. Whenever we find that word should, I will show in the exam questions and all, when they are reading an option, the word should, sir, whenever the word should comes, that means it is normative. That doesn't apply every time. It depends upon the statement. You need to understand the question. You need to go with the statement. Without understanding the statement, if you straight away mark answer as should, gone. Every time the word should means it is not always normative. There is one assumption with the student. So don't get fooled with that. Clear? So remember, only two differences here. In case of positive science, it only describes the problem. It is called as descriptive science. Which science? In normative science, it is called as a prescriptive science. And it will prescribe. That means it will provide solutions. It will provide what? Solutions. But here it will not provide any solution. It will not pass any value judgment. But here it will pass value. Who is more concerned with facts? Who is not concerned with facts? Who explain cause and effect relationship? Who will be not concerning about cause and effect relationship? Clear? And they may also ask you from objectives. For example, who has the main objective of being uniform? Everyone are one and the same. Uniformity. Ideals. Normative science. Clear? So this is one such question where they can merge with any chapter. Next, pragmatic. I already spoke about this. That means we don't just consider theory. Today, along with the present problems what business is facing, we try to come up with a solution. And business economics is not independent. It is interdependent. What is it? That means, suppose, let's assume that if I know how to run a business, if I know how to perform my business in successful way, that alone is not sufficient. I should also have a knowledge about other subjects. For example, I should also have a knowledge about mathematics, management theory, accounts, statistics. So business economics is interdisciplinary. That means it is interdependent. It is not independent. It is not same way. It is incomplete element. It is not just knowing how to run your business. You should also know about your Nirmala auntie in the country. You should also know about your interest rates, industrial relationship, government policies, employment level, general price level. That means inflation factors. All these various economic factors you should be knowing. And the entire microeconomics is the main element for business economics. As a business manager, I should take right decisions at right time. To take that right decisions at right time, we are more and more concerned with microeconomics. Which economics? See, business economics is largely based on, as a business manager, we are more concerned in achieving our, and such business economics is concerned with decision making aspects, and we are heavily relying on which economics? And this is another area of asking question. That's it. This is unit 1. Maximum probable expectation is 2 to 3 questions from this area. My expectation is only 2, not even 3. More question comes from the unit 2. In this unit 2, this is one common area where students will do mistake. What are the basic problems of economy? What to produce, how to produce, for whom to produce, and what provision should be made for economic growth and development. Is that clear? Now remember, all these 4 basic problems of an economy arises because of the problem of allocation of resources. And once they have asked this question, basic problems of an economy is mainly concerned with dash, allocation of resources. We know that human wants are, resources are, such resources can be used in the alternative ways. Now, as a nation, how exactly are we allocating these limited resources for various purposes? So, basic problem is occurring because of dash, allocation of resources. First and foremost, what is a basic problem? Simple logic it is. It is a problem of choice making. What type of goods and services should we produce in our country? What is it? What type of goods and services? Okay, now should we produce bench? Should we produce chocolate? Should we produce car? Should we produce AC? Is it durable goods? Is it perishable good? Is it single time use? Is it multiple time use? Is it superior goods or is it inferior goods? Like this, what type of goods and services are we going to produce? Because we have a limited resources, we can't produce each and everything. So first we should decide what goods. That is what we call problem of dash making. Okay, now we decided, okay, Shashikiran, bench manufacturer. Now after deciding what technique of production, that is second one, how to produce. What is it?
How to produce.
That means, should I use more of labor or should I use more of capital? Now a country like India, do we have more money with us or more labor with us?
More labor.
More labor with us. So labor is available for a cheaper price comparing to the money. If I go and take a loan from a banker, interest rates are higher. So a labor surplus country will select labor intensive. Capital surplus country will select a capital intensive technique. So first one, you should decide what type of goods. Second one, how to produce that goods. Should I use more of labor or should I use more of capital? So the second problem, how to produce, is also called as problem of choice of technique of production. What is the choice of? Is that clear? Next comes third one, for whom exactly are you producing those goods? Which class of society? Is it elite class? Is it middle class? Is it lower class? Or is it based on age group? If I say based on age group, is it 0 to 16 age, small age group? Or is it 16 to 60, middle or working age group? Or 60 plus, senior citizen? Which citizens? For whom exactly am I producing these goods and services? Who exactly are my
Target.
which class of society they belong to? And is there having their ability to buy my goods and that is whom to? And next comes last and the most important. What is it? What provision should be made for economic growth? And that means, see boss, resources are limited, we know. We can't over exploit them. We cannot produce each and everything just for present consumption only. We should preserve them, protect them even for future. That is what we call sustainable development, meeting the needs of present generation without compromising the needs of future generation. Utilize the goods, utilize the resources for the present as well as protect them, preserve them even for future. That is what provision. Provision means what are you setting aside? What are you preserving it aside? For even future generation, not just only for present consumption, even for dash consumption, future consumption. So these are the four basic problems of economy. What to produce, how to produce, for whom to produce, and what provisions has to be made for economic growth and development. Is that clear? Understood. Next comes. This is the area where you can expect more questions. Kinds of economic system. There are three types of economic system. Number one, capitalistic. Number two, number three, mixed economy. See, all these three types of economic systems are important. The very first one, capitalistic, understand the logic. Private run economy. Which economy?
Private.
Or also called as free market economy or laissez-faire economy. See, the word laissez-faire, that means very minimal or zero intervention. Either minimal or
Zero
intervention of government. That is what we call laissez-faire. Minimal or zero intervention. That means completely free flow of goods and services are there. Demand and supply. What is it? Market forces are still operating. Private people are commanding. Private people are controlling. That is called as capitalistic. Complete opposite to socialism. What is it? Socialistic. Socialism model. Wherein which complete control will be in the hands of whom? Complete control will be in the hands of CPA, Central Planning Authority, and this was developed by Karl Marx and Friedrich Engels long ago, very long ago, until 1990. USSR, presently called as Russia, used to follow this socialism. But in today's world, there is no country which is purely socialistic. What is it? No country which is clear. Sir, then capitalistic, is it followed? Yes. Majority of the developed countries are following a capitalistic. Sir, is there a mixed economy? Yes, India is the best example of.
mixed economy.
Even many developed nations are moving towards the mixed economy. So existence of both government as well as private. Both will be continue. Let me say cardinally they are working together or they are producing together and selling goods and services. Clear? Okay, let us understand the characteristic features. Now, in the capitalistic economy, there is something called as dash.
Right to property.
You can own factors of production. You can own assets in your name. But in socialistic, no, everything is owned by the public, that is government. Next, freedom of enterprises is existing for private. Government interference is almost
Zero.
that is what we called
Laissez-faire.
laissez-faire. And private people's, what is their main motive?
Profit.
Profit motive. And there will be competition existing between one another. And customer has a choice. I will buy with whomever I want. Whichever goods are satisfying my needs, that is called choice making ability of a customer, called as consumer sovereignty. What is it called? That is ability to choose. That is not restricted, but in socialistic it is restricted. You don't have an option whether you are rich, whether you are poor, whether you are beggar. Whatever CPA decides, government decides, you will get the same commodity. That is socialism. Next, in capitalism, there is a problem of unequal distribution of income and wealth. Rich will become more richer and richer, poor is going to remain.
Poor.
This is the problem with capitalistic economy. But socialism, equitable distribution of income and wealth. See, whatever we are deciding here, Allah, same, reverse is socialism. Private ownership of property is there. That means there is a concept of what?
Right.
There no private ownership of property. For each and everything, license has to be taken from the government. Here there is a freedom of, that is private enterprise has a freedom, but there is no freedom of enterprise. Everything is controlled by.
CPA.
Here, private is dash motive.
Profit motive.
Their public will be welfare motive. And here, existence of. There is no. Next, consumer sovereignty is. In socialism, consumer sovereignty is. And in capitalism, inequality of distribution of income and there, equitable distribution of income and wealth. Clear? Now, same things. Now, advantages, disadvantages. Whatever we decided. Now, you have to just split it up. You can go through it like a newspaper once. Pause it. But most of the times the questions are coming from the speeches. Is it clear? And next comes socialism. As I said, who introduced it? In their book called as Communist Manifesto in the year 1848. Clear. Now presently there is no country in the world which is purely socialistic. There is a dash ownership of property. Public ownership. Entire factors of productions are owned by public and there is no freedom to the private enterprise. Each and everything is controlled by dash mechanism, social welfare mechanism and planning mechanism guides production. Clear? Next, no competition, absence of, restriction of,
freedom of
equitable distribution of. Clear? Understood. Now comes mixed economy. There is a combination of both. Totalitarian means it is only one single family has a control over the whole country. North Korea. What's totalitarian? Yeah. Socialism means completely controlled by the nation's government. There, the government itself is one single family. In governing, you can change the government, political leaders, parties will change, but there it doesn't happen, na? Only one family. Okay, next comes mixed economy. Rather than doing from this, I will straight away go with the difference here. That will make your life simple. Yeah. See, in capitalism, who will own the property? In socialism, here,
both.
private enterprises have freedom where?
Yes.
Capitalism, but no freedom in. Here, private people have freedom, public people doesn't have any.
Freedom.
Next, motive of capitalism,
Profit motive.
socialism. In mixed economy, both profit motive in private, welfare motive in.
Public service.
Who will control production? In capitalism, that is demand and here,
CPA.
that is CPA. Here both price mechanism as well as. In India, what is that planning mechanism called as? Niti Ayog. What is it called?
Yeah.
Earlier we had a 5-year plans. It has been scrapped. PCI, Planning Commission of India, is no more existing. Now we have Niti Ayog. Next up, competition. Where is the competition existing? Capitalism, but no competition in. In mixed economy, competition exists only in.
Private sector.
Okay, next, distribution of income. In case of capitalistic economy, unequal distribution. Socialism, equal distribution. But here, in mixed economy, considered as.
Inequality.
Still, even in socialism, we say that it is unequal distribution. We are exploiting the poor people for a temporary benefit. That is what Schumpeter says. See, in the disadvantage, demerits now. We say that Schumpeter says this mixed economy is nothing but capitalism in an oxygen tent. We just provide some temporary advantages for the working class. And the country whichever follows this mixed economy, there will be a dash taxes. Best example, India. See, Nirmala aunty, 18%, 40%. Whenever she wants, she will increase. Next, excessive control. Mixed economy is difficult to operate because balancing and adjusting between both is not easy, public as well as private. That's it. So this is your unit 1. There is nothing big in the unit 1. Clear? So I finished it off in first so that we will get a more time for the other units. Clear up? So usually 5 marks is going to come. How many marks?
5 marks.
Clear? Sec. Okay. Oh, we have Nancy Mata here. How many days for marathon? 4. Okay. Okay. Let us continue. So let's enter the dragon. Main concepts. So demand. So total there are 11 topics here. In that 11, 6 of them are most important. How many of them are most important?
6 of them.
6 of them are most important. Clear? So first and foremost, the meaning of demand. Here there are 3 simple conditions. Desire to buy, ability to pay,
Willingness to spend.
or if not, any commodity at a given point of time. Now I will say, I want to sell this watch for 1000 rupees. Now Shiva will say, okay, I will buy. At this moment, for 1000 rupees, if customer is ready to purchase, even that is called as an time, readiness and purchase. What is it? Time, readiness and
Okay.
same way. Desire, ability, willingness. When all the 3 conditions are satisfied, it is called as a demand. And determinants of demand. So shortcut to remember, PITCAT. In that the very first one and the most maximum affecting factor is price. And the main thumb rule is negatively related. When price increases, demand. When price decreases, demand. And the relationship between price and demand expressed in the form of mathematical equation called as demand function. That is D is F of price. Demand is a function of price. And we can also represent it as Q is A minus B of P. See, this is where the numerical question comes. And this is related to price elasticity. Which one? Price elasticity of demand. I will explain it today. Today I will make you to solve at least one numerical problem from your past exam papers only. Clear up? So that you will get a better idea. Next. See there, demand function is mainly of two kinds. One direct relationship, second one is. See, direct relationship means there are positive conditions. That means if price increases, demand also. Price decreases, demand also. And this will not apply most of the circumstance, only and only in few circumstances. But in most circumstances, majority of the cases, there will be dash relationship, indirect relationship or negative relationship. Which relationship? Indirect relationship or negative relationship. That is the main thumb rule of a demand chapter. Is that clear? So remember, price is an important determinant that affects demand to dash extent. Maximum extent. So demand as a two relationship. One is direct relationship, second one is indirect. That is negative and positive relationship. Clear? Next comes. Second one is income represents what? Purchasing capacity. Income and demand is dash related. Positively related. That is for normal good. Which good? For a normal good, income and demand is positively related. Next point number 3 is tax. Nirmala Aunty department. When tax rates are increasing, will you buy more goods or lesser goods? Negative relationship is there. And same topic will come in chapter 6 also. We have something called as disposable personal income minus direct tax. Which tax? Point number 4 is climatic. Fifth one. Sixth one. Seventh one. Next, eighth one. This is what is most important. This is where many of the times question comes and many of them will make a mistake. Complementary goods which are consumed together, bike and petrol, pen and ink, and they are negative related. Which related?
Negatively related.
But in your class now, whenever I ask our 11th and 12th standard students, full on, they will, with confidence, they will say substitute goods are negative, complementary goods are positive. See, the mistake is, you will compare price and quantity of same commodities. But here you should consider price and quantity of different commodities. We should take relation between two goods. One product's price, another product's demand. So that is the reason you will go wrong. So be careful. Substitute goods are positively related. Complementary goods are. In exam, by mistake, if you are getting confused, don't worry. What is my name? First alphabet. Yes, substitute good first alphabet. Both are positive. If substitute is positive, complementary, negative. And even after teaching this shortcut, still many of them will make blunders in exam. Complementary goods will be positive related. That is how they will answer income. Substitutes will be always in positive. Complementary answers will be in
Negative.
Clear? Understood?
Yes.
And demand function. Remember, we said na D is equals to F of P. It is not only just a functional relation with price. It is a functional relationship with all the determinants. That is PITCAT PCs with all the determinants. D is a function of PITCAT PC. Price, income, tax, complementary, substitutes, all those elements. Clear? So shortcut to remember, I have given it as PITCAT PCs. Now comes demand function. Whatever we discussed now, same thing. Law of demand. What is it?
Law of demand.
According to ceteris paribus. A ceteris paribus is a Latin phrase. Which phrase? Once they have asked an exam question on this. Wait, I will show that. Ceteris paribus is a Latin phrase. In the Jan 25 attempt. See, a ceteris paribus. It is a. What does it generally mean? All other things will remain constant. What is that word? All other things are going to remain constant. What does it refers to? That means now in the PITCAT PCs, now only price will change.
All other things.
IT, CAT, PC, all the other elements are going to remain constant. They will be fixed. That is the statement. All other elements are going to remain fixed or it remains constant. That is a Latin phrase, ceteris paribus. Is that clear? So even that small topics, the questions will come. Sometimes ICA wants to donate some marks. You should be knowing to accept the donation. Silly concepts they will ask. Literally, if you see every question paper, around 10 to 15 marks is a silly questions. Literally, ICA is like, le lo beta, muft mein le lo. That is literally free. Take it free of cost. 10 to 15 marks in every paper if you see in economics. Silly questions will come. By just looking into the question, you will be like, am I writing CA Foundation exam? That is all. Only 15 questions, not more than that. 10 to 15 questions, they will be like, okay, at least 10-15 you would take. That is how they will give. Literally such easy questions will be there. Clear on? So observe, in this law of demand, it will only tell us the direction of change. What will it tell us? That means price increases, demand. It will never say how much price is increasing, how much demand is decreasing. It is called as qualitative statement. Which statement?
Qualitative statement.
But there are also areas law of demand will not work. We call them as exception to law of demand. Now this is important. This is where most questions are going to come. The very first one, conspicuous consumption. The term conspicuous refers to luxurious or prestigious goods. Which goods?
Luxurious or
Prestigious goods. Sir, PYQ, PYPs of the first I will do it. Wait. I will do it. It is an easy chapter. That is why I didn't text that. First, let us go to the main chapters. How many hours classes per day? 4 hours. Sir, September attempt will be easy or not? Definitely it will be easy. Don't worry. If you have prepared, that is most important. Without preparing, going and sitting, Shashikiran said it was easy. Even God cannot come to save you there. Highly impossible. You have to prepare and go. When you are preparing and going, it will be easy. Okay, chalo fine. Conspicuous consumption. Conspicuous refers to what?
prestigious or luxury goods.
Prestigious or luxurious goods. See here, people will connect with the price of the product. When the price of the product is increasing, utility will also increase. What will increase?
Utility also increase.
That means satisfaction will increase more and more. Best example, our females' most favorite product, gold. See, just to today, 4% sweek, it went up. All credit goes to USA. So just one single day, 4% rally. And now, whenever the gold price goes up, have you ever seen your mom, chitama, auntie, dodama, any female stop buying gold? No way. They will still buy it. See, even though price increases, demand will still
Increase.
The product becomes expensive, they get more and more satisfaction. That means when price becomes more, utility becomes more. So price and utility goes in same way. That is conspicuous consumption, also called as prestigious goods or luxurious goods. Next comes giffons, one of the most important area. There are two conditions here. Number one, inferior in nature. You need to remember this word, in nature. This is where most of you will go wrong. See, in many of the author books, suppose if you are referring any other material, they might have mentioned like this. It is a better alternate of a superior commodity. What is it? Better alternate of a?
Superior.
Which is at an affordable price. Which is at an?
Affordable price.
That is what I am mentioning as in nature. That means inferior in
Nature.
In reality, they are not always low quality. That means, let's say, for example, rice example. If you like biryani, they use basmati rice in that. At your home, every day, do they use basmati rice?
No.
In comparison to normal rice, what your parents are using, let's say 90 rupee per kg. Basmati is 150 rupee per kg. Comparing to basmati, this 90 rupees inferior in nature. But it is not always inferior. Got it?
Yes.
And sir, there is one more, sir, 10 rupee kg rice. All these ration shops, they will give, 1 rupee kg rice, 10 rupee kg rice. That is no doubt inferior. Can I call that as giffen? No. Giffen's goods are inferior, but all inferior are not. I am not joking. Even there, the question has been asked. This today morning I was showing in the class. Chapter 2. This is in September 25 attempt paper. Which of the following statement is true about them? All Giffen's goods are.
Inferior.
But all inferior goods, is it a giffen?
No.
Is Giffen's goods a close substitutes? No. Is Giffen's goods will be following law of demand? No. Exceptions to law of demand. Is that clear? Giffen's goods are inferior, but all inferior are not Giffen's goods. Clear up? And remember, point number 1, Giffen's are inferior goods. What is it? Giffen's are?
Inferior goods.
On which customer spends major part of the income. These two conditions are satisfied. It is called as a Giffen's goods. Clear? In your ICA material also, rice, bajra, maize, these are the example. And this concept was developed by Robert Giffen. That is why it is also named after him. Giffen's goods. Which goods? Clear? Point number 1, conspicuous consumption. Point number 2, Giffen's goods. See, there is another 2 more. And this is another area where repeatedly the questions have been asked. Usually, I have supposed to explain this with PitCat PC. But confusions will start. So, I never explain it with determinants. But in ICA material, see, in my class, there is one logic. Usually, my students know this. I don't follow the ICA flow. I have my own flow. I will say them in a very first day. Which topic, where I will do, and certain topics of demand, I will not touch it in demand. I will do it later in chapter 4. Wherever it is most appropriate, I will take that and I will do it in the appropriate areas. So that's the reason usually in my class, in my material, if at all anyone sees that, you will not find the ICA flow. ICA flow is different. My material flow is little different. That is why even though our YouTube students will be asking us SAR PDF and all, I usually don't share it. This is the reason, because they will be comparing, Shashikiran, you have missed some topic, you have skipped some topic. It is not skipping, boss, because my flow is little different. That is the reason I haven't included few things in chapter 2, few things I will do it in chapter 4, few things I will do it in chapter 3, even in chapter 6 also. I will jumble it little. So if at all student has not attended my regular classes, if he just gets my material, if he thinks that, okay, I will watch marathon with this material, I will pass, he will be like full tare zameen par. When you don't know the proper flow, that is why I usually don't give that PDF. Most of them will be, sir, PDF I have, I will sit and study. If I just give PDF and if you sit and study, then why is the teacher to explain? This is the problem. So that is why I usually don't share that PDF, because my flow is little different. Only the student who has attended the class, at least who have been instructed, now they will be knowing the flow. If not, they don't know the flow. Again, that leads to new confusion. So I usually don't share it. Clear? Okay, now listen. Snob effect. Remember Zudio. Let's assume Shiva went to Zudio. He bought a new cloth. There was a new design, everything. He got excited. He went and did shopping for some 3,000-4,000 rupees. Next day, with great excitement, he is wearing that new shirt, new pant, new sneakers and all. Like him in his college, another 20 is wearing same shirt, same pant, same sneakers. It has become like uniform. He's like, either he will stop wearing that, or once in blue moon, he will wear that. When a product becomes common, either we altogether stop its consumption or we reduce its consumption. That is called as which effect?
Snob effect.
But Veblen is totally different. Veblen is nothing but conspicuous consumption. Especially the word, this keywords you should remember. In the exam, same to same keywords will come. I will show in the exam paper. Highly priced goods are consumed by whom?
Status seeking rich people.
In order to satisfy their dash consumption.
Conspicuous consumption.
Let's assume after 10 years down the line, now Shiva will become a richest chartered accountant in India. Next, he wants to just travel in Rolls Royce only. He doesn't want to travel other than Rolls Royce car. His prestige, his level itself is Rolls Royce car. Even if Lamborghini comes, he's like cheap car, get lost. Like he wants to only travel with Rolls Royce. Even if Rolls Royce comes with a new addition, even if it is 10 crore, earlier older one is 7 crore, new one is 10 crore, I want same Rolls Royce only. Even though price is high, I want same commodity. That is dash effect. And who does that?
Status seeking rich people.
Status seeking
Rich people.
rich people to satisfy their dash needs. Conspicuous needs. Which needs?
Conspicuous needs.
Question number 10. September 24 attempt. Mr. X and Mr. Y are rich rivals. In a party, Mr. X is wearing an.
Expensive.
On seeing that, Mr. Y, who is also having a, decides to.
Reject the use of same dress.
What is it? He rejects the use of a same dress in using further. Rather, Mr. Y will try to use even more.
Expensive one.
Here, most of them got confused by reading this last statement. But here, they saw, sir, he is going to buy even more expensive one, Veblen. But here, the whole story is rejecting to use that dress. This is. Got it? So here, by reading this last statement, many of them got confused. Full, entire. Two people are having a same dress, so one rejects that. I don't want to use it further anymore because he is having it. I will go with much more higher one. So here that was the confusion. But even the answer he said, no. Clear? Next.
Because they ask which effect affects Mr. Y, they ask.
Yes, affecting. Because he is having, I'm not using it. Okay, next. This I have to do still bandwagon. Next question it will come. Okay, anyhow, I will open it and I will keep. Chapter 2. Highly priced goods are consumed by whom? See, word to word is same. That is what I said. Keywords are important. Highly priced goods are consumed by to satisfy their dash need. Clear? Veblen effect. So usually word to word is going to come with the same way. So you need to remember the keywords there. Clear? And next comes conspicuous necessary is also called as demonstration effect or sir, my friend bought a new cell phone. It's good, sir. Even I want same. My friend bought a new watch. It is good. Even I want same. Even though price increase, it doesn't matter. I want same. Someone else is using it. I liked it. Even I want the same. That is called bandwagon effect. Which effect? Is that clear? Understood. Next comes expectation of future change in price. This one, chapter 4, unit 2, chapter 4, chapter 3, chapter 7. Everywhere they will take connection this point. Let's say next month there is a Ganesha festival coming up. Our parents are smart enough. They know very well on the day of festival, flowers, vegetable, fruits, every prices are going to be high. So they don't buy it on the day of festival. They will buy one day before festival or 2 days, 3 days before festival. In future, if prices are increasing, present demand increases. In future, if prices are decreasing, present demand decreases. Even such questions, silly questions will come in exam, man. Read 34th question. This is May 25th attempt paper. An expectation that price will fall in future. Fall in. When will you buy? Future or now? What do you mean by CMN? Got it. I clearly said, even this question, people will make mistake. By saying that, I have shown the question. See? In future, if the prices are going to fall, when will you buy? Future. So what will happen to present demand? Decreases. You see, literally same to same statements. This is what now in class we would have done that. Just you need to focus on the question. See, most of the students now in exam, why they are unable to crack this? Once they see the question, they will get excited. I know this. Laddu is not in the question. Laddu is in option. Sometimes Laddu will be in question. Options are easy. That is how literally they will plan. And this is LHS shift. That means whenever demand decreases, it will be having LHS shift. I should do this. Last topic. But question is related to exception. Options are related to another concept. This is how they will play. So don't get excited when you see the question. First understand. See, even after explaining the concept, after reading the question, still 3-4 students will always give reverse answer. It will happen. See, that is common tendency. So don't be in a hurry to answer. Think calm. First understand question. Automatically you will answer. In future, if prices are decreasing, when will you buy? Future. Present demand decreases. Got it? Yes. Understood. This is how the questions are going to come. Next. Speculation, activity, emergencies. See, emergency, beautiful example, highway food articles. You are traveling on a national highway. You have stopped your vehicle near a hotel. There is one small shop there who is selling water bottles, biscuit packet and all. One biscuit packet is 20 rupees, but this fellow is charging 25. Will you say, hey, I will give consumer complaint and all? No. You know it, next 100 kilometers, there is no shop. Whatever I want, I need to buy from him only. Emergency situation, you will end up paying more. Same way in case of speculation. Auction sale, betting, I will say, this is a cricket bat used by MS Dhoni in 2011 to hit that last World Cup winning 6. I want to sell this for 1 crore rupee. Shiva will say 1.5 crore, 1.8 crore, 2 crore, 2.5, 3 crore. Demand is increasing now for this and prices also. Exception, law of demand is not working here. And in case of present trends and changes, torn jeans example, best one, normal jeans pant 700 rupees, no one will buy. Tear it and give 1500 rupees, everyone wants to buy. Present trends and changes. Is that clear? So these are the 8 scenarios where law of demand will not work. Clear? So this is the base of demand chapter. When you understand this base well, going further topics are very much easy. See, demand schedule representing in form of table. There is nothing much in the 2 types are there, individual and market. If I only analyze one individual customer column because of change in price, that is individual demand. If I consider everyone's put together total demand column, this column and price column, that is called as market demand schedule, representing demand in the form of a graph. That is called as what? General nature of demand curve. Downward sloping curve from left to right. Because we have a dash relation. If there is a positive relation, then graph will be
Upward sloping curve.
clear.
Yes.
Understood. Now comes the another area, elasticity of. First understand why is this elasticity. In law of demand, it was only telling us a direction of change. What it was telling us?
Direction of change.
But in elasticity, not just a direction, it will show a numerical change. In law of demand, what did I say? If price increase, demand will. It will never say how much price will increase, how much demand will. But in elasticity, we will say how much prices are increasing in terms of percentage. Suppose if 10% price increases, how much percentage will demand decrease? How much percentage will?
Demand decrease.
Is that clear? So it will show us the numerical changes. See here, law of demand will only tell us the direction of change in price, but elasticity will tell us a numerical change or percentage change along with the
Direction.
law of demand is a qualitative statement. Elasticity is a quantitative statement. So responsiveness or a change in quantity demanded due to change in. By the way, which are those sum determinants? Number 1. Number 2.
Income.
Number 3.
Cross.
Number 4.
Advertisement.
Advertisement. So these are the 4 types of elasticity of demand. In that the most important one is
Price.
price elasticity of demand. Clear? Under the price elasticity, there are 5 types. Relatively,
Elastic.
E greater than.
1.
Relatively,
Inelastic.
E lesser than.
1.
Unitary elastic, E is equal to.
1.
Perfectly inelastic.
Inelastic. 0.
Perfectly elastic.
Is within.
Sometimes even from this area, na, silly questions they will ask. Suppose in an exam, they will just give a word called as elastic. They will just give a word called as.
Inelastic.
That means relatively elastic and relatively.
Inelastic.
Wait man, I will show that question also. Here only. See here. Question number 8. Demand is said to be. What is it? E greater than.
1.
See, literally every attempt now, some 10-15 questions donations are there. Like this, literally free. Enjoy. For students, that is how ICA will give the questions. The silly topics. That's a small topic you should be knowing. Just if you know that, aram se 10-15 marks will come here. So, relatively elastic is nothing but just a word. E greater than.
1.
Clear? Now comes the important area. Price elasticity, in that the very first one, relatively elastic. See, you already know the concepts of this. Relatively elastic, you know. Relatively inelastic, meaning you know. That anyone having a conceptual difficulties in this 5 types of elasticity, let me know, I will explain. If not, I will straight away go to numericals here. Anyone having conceptual difficulty in understanding the relatively elastic, relatively inelastic, unitary elastic, perfectly inelastic and perfectly elastic. Okay, where does socially undesirable goods will come? Cigarette, alcohol, all this. Connection is in macroeconomics. Socially undesirable goods. Chapter 7. Pigouvian tax. Tax system. Relatively inelastic. Even though when price increases to a large extent, demand only decreases by some small extent. That means even though price, 1 beer bottle, 100 rupees to 200 rupees you make, instead of buying 5 bottles, they will come and buy 4 bottles. They will definitely buy. Instead of 5, they will buy.
4.
That means proportion of increase in prices 100%, but decrease in demand is hardly 20%. So proportionate, less proportionate. What is it? That is socially undesirable goods. And E0. Example. Perfectly inelastic. E0 example.
Not doing in depth, we can go glance of this one.
Okay, chalo, fine. For that, our table is only sufficient. Huh? In class, we have done this.
Yes.
See, relatively elastic, E greater than.
1.
Nature of demand curve is.
Flatter demand curve.
Will be having flatter. See, generally it is a downward sloping, 45-degree downward sloping curve. But in relatively elastic, it will be sleeping curve like this. That is flatter. And we also call it as a more proportionate change. That means price changes by small extent. Reaction to that quantity changes by more, large extent. So more proportion. Relatively inelastic, opposite. Price changes by small extent or large extent. Large. Price changes by large extent, but quantity changes by
Small.
so it is less proportionate and it is a steeper curve. Which curve?
Steeper curve.
And next comes unitary elastic. Downward sloping
What's the thing?
straight line curve, also called as rectangular hyperbola or equilateral hyperbola. Another name of it, rectangular or equilateral hyperbola. Is that clear? Now, this is where numerical problems are there. There are 3 types of numerical problem. How many types?
3 types of.
Okay, so first and foremost, okay, let me make your life simple. See, whenever you get a numerical problem from the demand or from the supply, from the elasticity concept, remember this formula, P by Q into change in quantity divided by change in price. Suppose if you are referring from ICM material, now only I am saying formula will be like this. P by change in price into change in quantity by quantity, or sometimes even this change in price is there, they will give it as P2 minus P1, here Q2 minus Q1. So same formula cross substituted, nothing much. Because why did I cross substitute like this? Because there is a connection in the second problem. That's the reason I have cross substituted. Clear? If you are referring from ICA material, formula is similar only, no difference. We have just cross substituted. Clear? Okay, I will erase this. Okay, chalo fine. Now P by Q. Let's say Shashikiran is a chocolate seller. Let's assume I'm selling a chocolate for rupees 10. This is the price. And I used to sell 100 chocolates in a day. How many chocolates?
100.
Okay, now I will decrease the price to rupees 5. When price decreases, demand
Increases.
let's say it increases to
170.
170. Now identify the type of price elasticity for the same. What is the initial price?
10.
Initial quantity,
100.
new price,
5.
new quantity.
170.
Okay, now P stands for initial price. What is initial price?
10.
Now Q stands for initial quantity. How much?
100.
Now change in quantity, present minus previous. 170 minus 100. 170 minus 100 is plus 70, na? Next up, change in price. 5 minus 10 is
5.
minus 5.
7.
Clear? So 5 minus 10 is minus 5. But 170 minus 100 is positive 70 only. Clear? Okay, let us solve this. So it will be 10 by...
But while solving, do we take the minus?
I will explain. 5 minutes. Give a time. I know that you have attended my class. Others haven't attended. So you remain silent today. Now this will be 170 minus 100 divided by 5 minus
10.
So this will be 10 divided by 100 into 70 divided by. For a time being, ignore this negative. I will teach what to do with this negative. For a time being, ignore it. So it will be 10 ones are 10 tens are 5 ones are 5 14s are. So this will be 14 divided by 10. Answer is 1.4 is greater than 1 or lesser than 1? Which elasticity? Relatively elastic. Just assume if I haven't ignored negative, answer should be minus 1.4. Now you tell me minus 1.4, is it greater than 1 or lesser than 0? Then how will I call it as relatively elastic then? This is the biggest drawback of this formula. Without ignoring negative, I can't come to the conclusion. So we have to ignore negative. But in exam, sir, what if sir, same numerical problem is given? Let's assume we ignored negative. 1.4 is an answer. Suppose options are like this. Option A, 0.4. Option B, minus 0.4. Option C, let's say positive 1.4. Option D, minus 1.4. Now which one should we mark? Minus 1.4. Because you ignored minus, you should consider minus while giving an answer. Clear? Sir, what if? Minus 1.4 is not there. Only positive 1.4 is there. Now what is the answer?
Positive 1.4.
Got it? Clear? Okay. If corresponding negative value is given, corresponding negative value will become the answer. Clear? Now, this is the first way of asking the question. Now comes the second way of asking the question. That is based on equation. Demand function. If you remember when I was explaining there, I said Q is equals to A minus B of P. See there? Demand function of the product X is expressed as Q is equals to 1000 minus 50P. What is it? 1000 minus?
50P.
Where Q is a and P is the price of the product. When the price of the product is rupees 10, the price elasticity will be dash. Okay, let me put across everything here. This is the second way of solving the problem. Q is equals to 1000 minus 50 P. They have only given the prices. They are asking us to identify price elasticity. We also know this. We have one more equation. That is Q is equals to A minus B of P. Now comes the twister. Listen to this carefully. This is where in common you guys will make a mistake. Whatever this value of B is there, this is called a slope of the curve. What is it? Generally, in mathematics, what is slope of the curve equation? Or let's say there is a graph given. In the graph, x-axis and y-axis is there. First and foremost, which one do you take for a slope? X-axis or y-axis? X-axis, huh? Okay, next you will take y-axis. Okay, x-axis is quantity, y-axis is price. Now what do you take first? First we will take quantity, sir. Change in quantity. Next we will take. Clear, huh? This is the slope. Change in quantity by change in. Can you see that? This is the value of B. What is it? Value of? Clear? Understood? But there is one more twister. What is this twister? Now listen to this carefully. When you are reading from ICI material, which material?
Okay.
They will give you this statement. What is the slope of demand curve? What is the slope of?
Demand.
Has anyone bought ICI material? Open the ICI material. Wait, I will also download the ICI material for your understanding. Come to the demand concept. Below the demand curve. Come below the demand curve. Come below the demand curve. Demand curve graph is there. Come below the demand curve graph. Demand curve, demand curve. Just tell me the page number there. Demand curve concept. Demand curve. Got it. See, this is the one. Page number 2.12. Come to page number 2.12. In ICI material only. Below the graph. Second paragraph. The slope of the demand curve is minus change in price by change in quantity. Can you see this? Minus change in price by change in quantity. Because first and foremost, price is going to change. Because of change in price, there is a change in demand. And price and demand is a negative relation. Which relation? When price increases, demand. When price decreases, demand. So price is a independent factor. Demand is a dependent factor. And you don't believe once they have asked a question from this also. Let me show that. Question number 83. This is January 2025 attempt. The slope of demand curve is minus change in price by change in quantity. Is that clear? Understood? See, conceptually, what is it? Because price is an independent factor, demand is a dependent factor. So independent divided by dependent they have taken there. So minus, that is why the minus symbol, because inverse the relationship. Which relationship? Price increases, demand decreases. Price decreases, demand increases. That is why minus change in price by change in quantity. Is that clear? Understood? But now when we are solving a numerical problem like this mathematical equation, which equation?
Mathematical equation.
Now, whenever you are speaking about the slope of the curve, that is not minus change in price by change in quantity. That will be change in quantity divided by change in. This difference you should know. If you don't know this difference, you will get confused and you will mark for both one and the same. Now that means whatever this value of B is there, that is nothing but change in quantity by change in price. This you should be having in your mind. Is that clear? Understood? Now let us solve it. Now we already have a value of price. We should identify the value of quantity and we need to use our main first formula only. By the way, what is our first formula?
P by Q into delta Q by delta P.
Delta Q by. In this already we have delta Q by delta P. What is the delta Q by delta P?
50.
50 value we have. Price also we have. We just need a quantity. Clear? Let us identify the quantity. So Q is equals to 1000 minus 50 of 10. So this will be 1000 minus 500. So this will be 1000 minus, okay, wait 1 second. So quantity will be 500. Already identified. Now P already given 10. Quantity just now identified. How much?
500.
Into 50. So simple now. 10 into 50. Why was that? 10 into 51. Next. What is the answer?
1.
Minus 1. Negative relation. What is the answer?
Minus 1.
Same mistake they have done in exam. Everyone did the same mistake. They went and marked positive one as answer. Price and demand is negatively related. Answer is? Yeah, CA means come again only. They also don't differentiate. See, Nirmala Aunty and ICA Institute, they don't differentiate anyone. Nirmala Aunty is regressive tax. ICA is all are welcome inside once again to write exam. Clear? Understood. This is the second way of asking question. What is it? Third way of asking question, missing figure. What is it? Now you only solve it. I am not helping. This is less of economics, more of mathematics. So better you only solve. 1 sec. May 25 temp paper. Wait. Just morning batch I was solving with them. So let me erase all this. 1 second. Yeah. Solve it. This is the third type of question. This is the third way of asking question. A consumer buys 100 units of goods at a price of rupees 6 per unit. Suppose price elasticity of demand. Already they have given price elasticity minus 3. At what price they will buy 80 units? At what price they will buy 80 units? Sir, does ICA give hard questions in September? They may just some 5 or 10 questions. See, you check any question paper. Randomly you pick any previous year question paper and search for a difficult question. It will never exceed beyond 10 to 15 questions. Concept based, straight away concept based 40 to 50 questions will come. Donation of marks, another 10-15 questions will come. Slightly twisted, some 20 questions will come. Little bouncer, nook and corner, some 5 questions will come. Hardly another 10 questions is where the difficulty is. Economics paper can never be difficult. If you know the concept, it is damn easy to score 80. 60 to bare minimal if you have attended your regular class of your faculties. If you have prepared notes, if you have studied, 60 to bare minimal it is. Sir, once more, Jan 25, 83rd question. Okay, I will do it. First, finish this. Sir, explain the type of goods in detail, like not to confuse. In elasticity of demand. Okay, fine. Sir, why elastic did not refer as perfectly elastic but relatively elastic? See, perfectly elastic is myth. Shubhash. Sorry, not Shubhash. Shubhashrita Ramesh. See, perfectly elastic is myth. Usually, they will not ask more questions from perfectly elastic every time. Even if you start seeing the materials also, hardly 1 or 2 questions is there even in the exam. But most of the concept related is from relatively elastic. Richie, if you want in-depth explanation, better watch the Jan 26 or even the May 26. Here I'm not going in-depth much because I'm combining MCQs also, I'm combining important topics also, I'm combining. I'm not going in detail. Suppose if anyone is watching a Jan 26 marathon, even if they don't have a knowledge of that economics, at least once you have attended your faculty's class, you have some vague conceptual knowledge there, but still you can understand it, still you can crack it. Here we are going more from the exam point of view. Exam oriented preparation marathon it is. Got it? 6 point. Anyone getting confused here? Here the last step calculation is where you will go wrong every single time. Okay, listen. Whenever you get any questions like this, put it across like this, P and Q. Initially what you are writing is initial price. Later what you will write is a new price. Initial quantity, new quantity. See the consumer. Okay, let me also write it. Let me also solve it for you guys once. Okay, the customer is going to buy 100 units for 6 rupees. So price, quantity. Price is 6 rupees, quantity is 100 units. Suppose the price elasticity they have already given. Minus 3. At what price they will buy? 80 units. Now they're asking what is the new price. Now first convert this into percentage. See, whenever you get such kind of questions, don't go with formula method or don't go with arc method formula. Yes, you can also solve by using them. But the most easiest is go with the main formula. Which formula? That is elasticity of demand formula. The main formula. This one. Percentage change in quantity demanded divided by percentage change in. Convert that into percentage. So life will become more and more simple here. See, 100 to 80. What is the difference? 20 units is the difference. Do you agree? So how much was it earlier? 100. So into. So 20 percentage. We got it. So 20 percentage is the change in quantity. So price elasticity of demand. Percentage change in quantity demanded divided by percentage change in price. Already they have only given the elasticity. Now quantity demanded changes how much? Now this is what we should identify. Change in price. Now simple. Change in price goes here. Minus 3 comes to denominator. Positive 3. So simple now. Change in price is equals to 20 percentage divided by 3. How much it is? 6.66 percentage. What is it? 6.66 percentage. Now how to convert this? This is the last step. This is where you guys will go wrong. So 6.66 percentage is what given. Even the earlier price is also how much? For this 6 rupee, you should add 6.66 percentage. So simple logic here. 6.66 divided by 100 into initial price. That is 6 rupee. So we will get 0.39. If you calculate, you will get 0.39. 39 paisa. For 6 rupee, if you had 39 paisa, what is that? 6.39. What is that? 6. So nearest answer for 6.39. What is the given answer here? 6.39. 6. Here there is no negative at all. Now, if there is a negative sign, I will consider negative, but none of the. When it goes to RHS, LHS to RHS, minus will become their positive, right?
Goes in a multiple basis. So that it
Okay, ignore it. Better ignore it. Hello. Okay, shall I give one more question? Will you solve it?
Yes, sir.
Okay, recent Jan 26 attempt question. Do this. This is actually common sense question it is. Solve this. 80th question. This is Jan 26 attempt paper question. More of common sense it is than a concept. Okay, I will do it. Jan 25, 83rd question. I will write it down here. 1 second. Jan 25. Where is that chat? 83rd question. Okay. Sir, why is there a 2 days gap for law exam? Is it just for Janmashtami or will the paper be tough? See, paper will never be tough. It will be lengthy. That I will agree. But end of the day, even if they don't want to keep laddu, you will only keep self laddu in law papers. Because you guys will not practice at home. You will just sit and read. Reading alone will not serve the purpose in law paper. You have to sit and write. You have to write and practice. Sir, suggest only one of the Jan 26 or Jan 26. Go with Jan 26, Richie. 20 hours it is. 20 hours marathon. That has more detail. Sir, break when? Maybe we'll take at 6 o'clock. Another half an hour. At least we'll finish the demand concepts. After demand concept, we'll take the break. Or anyone needs now itself. Okay, done. Did you find it? Answer. Answer. See here. Actually, common sense. What is elasticity? -1. Ignore minus. 1 means which elasticity? Unitary elastic. Unitary elastic means whatever price changes, quantity also changes in same proportion. Which proportion? See, if price increases by 20%, demand also decreases by same 20%. Unitary elastic means same proportion. Na? Common sense it is. Now observe here. The price of the product. Okay, price, quantity. Price of the product is 100 rupee. If the price falls by 20%, what does 20% fall in price means? 80. So this fall is how much percentage? 20%. Now, if the price falls by 20%, the quantity increases by. That means Q plus 120 it is. Wait, I will use the same color better. So it will become Q plus 120. Clear? Now the price elasticity of a demand is -1. The new quantity demanded due to fall in price. That means they haven't given the quantity at all. Now we need to identify this Q. For that, if I add 120, that will become a new quantity. That means common sense. We know that price has fallen by how much?
20%.
And that too, it is unitary elastic. That means this 120 is also 20% only, na? That 120 is also 20% only. So use your common sense little. Simple. See that 120 is just a how much percentage?
20%.
Into 100. What is the value? 600. That is the old quantity. Which quantity? For this add 120. What is the new quantity? That's it. Common sense. Because answer was -1. Ignore that -1. 1 means which elasticity? Unitary elastic. Unitary elastic means both changes in dash proportion.
Proportion.
Clear? You need not to solve multiple formula. Common. That is what I'm saying. When you know the concept, Allah, you will do like this. That is what I'm saying. By hearting will never work. When you know the concept, you will clear. Understood? Okay, let us also solve this by using the formula also. Like whatever we did. Okay, sir, we don't want common sense and all. We don't have that during the time of exam. Okay, chalo, fine. Now come to this. We will go with the same logic here. Already we have elasticity. Okay, I will write it here at the bottom. So price elasticity of demand is equals to percentage change in quantity demanded divided by price. Okay, we have a price and we have a elasticity -1. Change in quantity is what we should identify. How much percentage?
20%.
20 into 1? 20% only. Even that speaks about 20% only. That means that 120 indirectly, that is also saying that 20% is 120 only. Got it? Both are one and the same. Understood? Anyone finding it difficult? Okay, chalo. One of the students want me to do Jan 25, 83rd question once again. Okay, Jan 25 paper. Okay. 83rd question. Slope of demand curve. This is straight away from the ICA material only. Minus change in price by change in quantity. Simple. Dependent factor, independent factor. Price is independent factor. Demand is dependent. And price and demand is negatively related. That is why minus change in price by change in quantity. Clear? Sir, for more concepts, okay, I answered it. Okay, chalo, let's continue. Anyone having any doubts in the concepts of price elasticity? Any of the 5 topics, conceptual knowledge is missing, sir, here. Okay, perfectly inelastic. Whether price may increase, whether price may decrease, it doesn't matter. Quantity will remain unchanged. And this is where vertical demand curve. Which demand curve? And the last one, myth. Horizontal demand curve. There is no real life example at all. Infinite quantity. Which quantity?
Infinite.
And there are total 4 methods to calculate this. First one, P by Q into change in quantity by The biggest problem of this formula method is number one, negative. Number two, when you cross multiply the problem, in mathematics, what happens when you cross substitute also, you should end up getting the
Same answer.
but in formula method, we don't get. That is the reason we introduced one more method that is called as arc method. Which method?
Arc method.
And here, they will play sometimes in exam. Listen, what is formula method's formula?
Q into delta Q by delta P.
Formula P by Q into change in quantity by change in price. And I also said you to remember this portion is also called as B in that equation. Clear? Okay, now when we go to arc method, which method?
Arc method.
Now same to same, delta Q by delta P into P1 plus.
P2 by Q1 plus Q2.
This I will teach in the class. But in your ICA material, they will play like the same formula. No difference. Observe. They will make it as P1 plus P2 divided by P2 minus P1 into Q2 minus Q1 divided by Q2 plus Q1. Wait. Here also Q2. In ICA material, first they have taken numerical 2, then they have taken numerical 1. Now this is the formula. Sir, full confusion. What is this? Now simple. Q2 minus Q1 is nothing but change in quantity. This is delta. This is also delta. Price delta is denominator. Quantity delta is numerator. Same to same. Next. P2 P1 numerator. Q2 Q1 denominator. Cross substituted. And once literally they have asked this question in the exam. Wait, I will show. Where is that? Just a second. Here, may attempt only if I'm not wrong. They have asked the formula itself. Anyhow, we will be solving we'll come across that question. I will show that, no worries, even if I don't able to find it now. Wait, where did the question go? Okay, anyhow, we will be seeing once I see that question, I will show. They have asked a formula itself. Same, whatever it is given in the ICM material, they have asked ditto same. 1 second, last time I will give a try. You will find one list of formulas. If you find that, just stop me. Okay, leave it. Definitely not September attempt. I will show that the same formula, whatever I have written here, in one of the attempt, they have asked this formula. Rather than writing like this in ICA material, this is how it is given, and this is the way they have asked one question in the exam. Clear? So this was arc method. Which method? Arc method. Next comes point method. Which method? See, point method explanation is unrealistic. We say that to identify extremely small changes. Which changes? Extremely? We use point method. And we say that lower segment on the demand curve divided by upper segment on the... See, the middle portion of the demand curve is dash elastic, unitary elastic. Upper portion is relatively elastic. Lower portion is point which touches y-axis is perfectly elastic. Point which touches x-axis is perfectly inelastic. How? Sir, how do you say that point C is unitary elastic? We said no, lower segment by upper segment. See, between these points are called as segments. Between A and B is one segment, B and C is one, C and D is one, D and E is one. Total 4 segments. At the point C, how many lower segments?
2.
How many upper segments?
2.
2 divided by 2.
1.
That is why I said unitary. One means E, one means unitary. Got it? So if I take point B, how many lower segments? How many upper segments? 3 by 1. 3 is greater than 1. Relatively elastic. Got it? And next comes total outlay method, one of the most favorite question of ICI. Relationship between price and outlay. What is it? Relationship between? This is one of the most favorite question. Now, in this topic, now, they are not asking you about a relation between price and demand. They are asking relation between price and outlay. Outlay is also nothing but total revenue. Which revenue?
Total
So what is the main thumb rule of a demand chapter? When price increases,
decreases.
when price decreases,
Demand increases.
but now we are least interested about this demand. Rather, we are interested on outlay. Outlay is also called as TR. That means spending capacity of a customer. Whenever there is a change in price, whether price increases or whether price decreases, whether customer is spending more money or whether customer is spending less money or customer is spending same money. That is what we should identify. And the formula of this outlay is nothing but price into quantity. What is it? Also called as outlay. Clear? Now let's go to the table. Now observe here. Batman, Superman, Iron Man. 3 examples. Here prices are decreasing. No doubt, when price decreases, individual quantity demanded will
Increase.
But we are least interested on this quantity now. Rather, we are interested on what?
Outlay.
Outlay, how do we identify? Price into quantity. 6 into 10. 5 into 15. 4 into 20.
80.
Hey, not 420. Now 4 into 20 is 80. Someone is like 420. Okay, now observe. Batman, first he was spending 60 rupee. Next term. Is he spending more money or is he spending less money? When prices are decreasing, Batman is spending more proportion of money. The word more proportion, somewhere you studied this. More proportion. Relatively elastic. So when customer spends more proportion of money, that is called as relatively. Now observe the arrow mark. Price is decreasing. Outlay is increasing. So price and outlay, is it in same direction or opposite direction?
Opposite direction.
So when price and outlay move in opposite direction, that is relatively. So this relationship is important. Especially this red color arrow marks, what I have marked, this is important. This is where exam question comes, and I will show in the recent attempt also the questions have been asked. And next comes, see, Superman example. Prices are decreasing, 654. 6 into 10. 5 into 12. 4 into 15. Superman is like, whether you decrease price, whether you increase price. My budget is 60 rupee only. I will only and only spend same proportion of money. Same proportion means which elasticity?
Unitary elastic.
Got it? Whether price decrease, whether price increase. If the spending nature is same, that is which elasticity?
Unitary elastic.
Next, observe Iron Man. 6 into 10. 5 into 11.
55.
4 into 13.
52.
52. Initially he was spending. Next, Kanjus fellow, he is decreasing his spending capacity. So when prices are decreasing, his spending capacity is also less proportion of money is spent. Less proportion means which elasticity?
Elastic.
Got it? So more proportion means relatively. Same proportion means less proportion means. Got it, pa? Now observe the arrow mark. Price and outlay moves in a dash direction in relatively elastic. Opposite direction in relatively elastic. Price and outlay is moving in same direction in dash elastic. Here, whether price increase, whether price decrease, it doesn't matter. Outlay remains the same in dash elastic.
Unitary elastic.
Got it? Now recent attempt, May 2026 attempt. Let me show the question. See, arc method question is there in the recent attempt. We'll solve all the numericals, will solve once. Wait. I will show chapter 2. Either this or January attempt, there is a question. Jan attempt, not this attempt. We got it. See, arc method I was searching now. Year only, Jan attempt it was. Even I got arc method formula. See, arc method. P2 plus P1 divided by P2 minus into Q2 minus divided by Q2 plus. Okay, leave that. Now see the question number 12. Even after increase in total revenue. Total revenue means outlay. What is that? Remains. Even though price increases, TR is remaining. Which elasticity? Got it? There is one more question. Nice question in September 24 attempt. I will show that. I know that most of them have done a wrong answer here, but actually common sense question it was. Same outlay method question only. See here. Suppose the price elasticity of a demand for the firm for its product is minus 1.2. Ignore minus. 1.2 greater than 1 or lesser than 1. Relatively. In relatively elastic, price and outlay will move in dash direction. Opposite direction. We know that now it is going to move in the opposite direction. If the price of the product is, that means if price is increasing, that means outlay will, and moreover, more proportionate of money will be spent. When customer spends more proportion of money, will the manufacturer make more profit or less profit?
More profit.
Simple, na? Common sense it is. Now see there, they are saying E minus 1.2, that means 1.2. Ignore minus 1.2. Relatively elastic. If the price of the product is by 5%, what is the most probable outcome? Both total revenue and profit will increase. No, total revenue will decrease. Next, both total revenue and profit will decrease. Profit will increase. Na? Next, total revenue will decrease. But profit will increase. Yes. Option C.
Logic behind profit increase.
This is the sales revenue of the firm. Batman is spending more proportion of money. He was spending 60 rupees, next he will spend 75, next he will spend. When customer are spending more money on your company's product, will you earn more or will you earn less? When you are earning more, are you making more profits or less profits? Profitability will increase when it is E greater than. If it is E lesser than 1, you are losing out money, you are not making much profit. Here it is stagnant. Got it? And moreover, in the given question, in the given question, E is 1.2, greater than 1. Greater than 1 means, are you making more proportion of money or less proportion? So profitability increases. And moreover, they are saying prices are increasing. When prices are increasing, TR will decrease there. So TR decreases, but profitability will. And this is how someone asked, sir, will they give difficult question? Not difficult, tricky questions like this. That's it. There won't be nothing called as difficult question here. Conceptual knowledge if you have, you will crack it off. Clear? Understood? Especially price and outlay relationship is important. Especially this one. If anyone wants, take a screenshot. Especially this red color arrow marks. Now, this is where the exam question comes. From outlay method. Price and outlay. What is it?
Outlay.
Clear? By this, price elasticity comes to an. See, there is one more small topic. Determinants of price elasticity. Same, more proportion, same proportion, less proportion. Related topic of PITCAT PC. What is the related topic of?
PITCAT PC.
Like necessary goods, luxury goods, normal goods. What will be the proportion? You have to go through that like a newspaper one. Sometimes, till now, only one question has been asked from that area. Clear? Understood? Okay, next comes, which elasticity? Income. Elasticity. Now, simple concept. When income of a consumer increases, will your income increases means demand increases or will it decrease? Increase. Clear? When you earn more income, you will demand more and more. This is in terms of normal goods. But in terms of inferior goods, which goods?
Inferior goods.
Now, this is where the twister comes. When you earn more and more money, would you like to buy luxurious goods, better goods, or still a low quality goods? Better goods and luxurious goods. That means when your income increases, low quality goods demand.
Decreases.
Negative relation. And related to this, there is one superb problem. There is one superb question they have asked in September 24, if I am not wrong. Up to some level of income, the demand for the product increases. Up to certain level of income, demand for the product.
Decreases.
Once the income exceeds a certain level, Once the income exceeds,
Certain level.
demand for the product decreases. Which good? Inferior goods. Wait. Here only, this one only. 32nd question. Commodities. This is May 2025 attempt paper. Commodity for which quantity demanded rises only up to the of income. Let's assume you are earning 15,000 rupees. You are buying one Poma duplicate t-shirt, P-O-M-A, Poma, that is 200 rupee. Fine. Then later the demand will decrease. Why did the demand decrease? Because there is an increase in income. Your income increased from 15,000. Now your salary became 50,000. Now which one will you buy? Puma original or Poma still duplicate?
Original.
What will happen to demand for Poma?
Decrease.
Got it. See here, commodities demand will rise only up to a certain level of income. Later that demand will, because of increase in your income beyond a particular level. Which good? Clear? Understood? So like this, tricky questions will come. Usually tough questions and all will never be there in economics. Clear? Understood? So this was related to income. And here we have formula method and arc method. Same to same. Instead of P, we have to replace it with Y. What is it?
Y.
P by Q. Now Y by into change in quantity by change in income. Next up, change in quantity by change in income. Instead of price, we will write it as Y. Next, Y1 plus.
2.
Now, by solving this, and this is the most repeated questions in the exam. If income elasticity, answer E is greater than 1. What is it? E is? Which good is that? E lesser than 1. Necessary or? E equal to 1. Either luxury or either necessary goods. If E is equal to 0, that means my income increased from 15,000 to 20,000. I am not even spending anything extra money. Let's say my income was 15,000. I was spending 12,000. Now my income increased to 20,000. Still I am spending 12,000 only. Entire 5,000 savings. No change in demand. No change in. Even in dream also it will not happen in India. But still, we have to learn the concept. E is equal to 0. That means demand is not at all increasing even though if your income increases. Is that clear? Next, E negative. What is it? Ignore negative, ignore negative, ignore negative. I kept on saying now because if the values are in negative, we call them as a
Inferior goods.
clear, and this applies to price elasticity also. So remember in income elasticity, if E is greater than 1,
Luxury goods.
E lesser than 1,
Normal goods.
E equal to 1, either luxury or necessary goods. E 0,
No change.
E negative.
Inferior goods.
Is that clear? Understood. By this, income elasticity also comes to an end. Next comes cross elasticity, complementary and
Substitute goods.
one biggest logic what you should remember here is the blunder what people will do is in cross elasticity we don't have formula method, we don't have arc method. Straight away we should take this main percentage formula. Which formula?
Percentage formula.
And see, we are considering related goods. Price of one commodity, demand for another. Okay, substitute goods. Can I take coffee and tea as example? Let's assume if coffee prices are increasing. What is it? Coffee prices are? Because of that, demand for tea will increase. That means due to change in price of one good, there is a change in demand for another good. So responsiveness. Let me go to the meaning. Responsiveness or change in quantity demanded for a one good happens due to change in price of the another good. First and foremost, this denominator is getting affected. Because of that, numerator gets affected. So first primary factor price, next secondary factor demand. Got it? Denominator changes first, next numerator changes. There are two commodities. Clear? Even while writing the graph, substitute goods positively related. So graph will be upward sloping. Complementary goods are negative related. So graph will be downward sloping. Now y-axis represents price of one commodity. X-axis represents quantity of another commodity. Clear? Now straight away let's go to the exam problems here. This is where usually most repeated questions are coming from cross elasticity. Clear? Okay, straight away let's go to this problem. Okay, wait. Let me erase this off first. I've just altered the names here, but this was actually an exam problem. I will also show the exam problem. Miss Anushka owns a coffee shop where she sells 100 coffees per day for rupees. Due to increase in price of raw material, she increases the coffee prices too. See, coffee 10 rupee has become 12 rupee, due to which her sales reduced it to 75 cups. Earlier it was how many cups? 100 to 75. Now, an opposite tea shop of Mr. Kohli received more customers all of a sudden. He sells a tea for rupees. And he started selling 400 cups too. Now, simple logic. Coffee price increase because of the tea demand increase. We just need this two shaded information. We don't need this quantity of coffee at all. There's an extra information. So, due to change in price of coffee, there is a change in demand for tea. So, percentage change in quantity demanded for what? Tea. Due to percentage change in price of coffee. Now, convert this into percentage. Now, 10 rupees to 12 rupee, how much is the difference? Earlier, how much was it? Into 100, how much percentage?
20%.
So, how much percentage did the price change? 20%, na? Next, 400 to 500, how much is the change in quantity? How much was it earlier? Into 100, 25%. So, quantity has changed by 25%, price has changed by. So, 25 divided by 20, answer.
0.25.
Now comes the twister in the exam. Remember, substitute goods answers will be always in positive. Complementary goods answers will be in
Negative.
And in substitute also there are three variations. Close substitute, not close substitute, perfect substitutes. There are three things. If it is close substitutes, which substitutes?
Close substitute.
Answers will be E greater than 1. E greater than 1, close substitutes. E lesser than 1, not close substitutes. E infinite, if it is totally unrelated goods. Price of coffee increases, demand for bike decreases. What, we'll put coffee to petrol tank and we will ride? No. So totally unrelated goods. For unrelated goods, E will be 0. What is it? E will be in cross elasticity. Is that clear? Understood? So this is the concept of cross elasticity. Answers will be positive in substitute. Answers will be negative in complementary goods. Which goods? Solve the second problem. See, don't worry. Same to same. Recorded access will also be available in the YouTube. Even if you want to check the same problem once again, you can go to YouTube. You can pause at that point. You can also revise it once again. Clear? Or if you want, you can take a screenshot, or if you want, you can take a photograph. I will also show the exam question paper now. I will make you to solve from the exam question paper. Hey, this girl I suggested now, Richie, you can watch Jan 26 marathon. That is completely in detail. When will be the next live? Tomorrow. We are already in live. Done. Second question, answer. Super. Minus 0.8. Because which good is this? Complementary good. But most of them will say 0.8. 0.8 is wrong. Minus 0.8. Clear? Okay. Solve from the exam question. Recent attempt only. I will give from the May 2026 attempt paper. Yeah. Okay. This is... Wait, not cross elasticity, but we'll come back to this. Just remind me. Arc method. Question number 80. This is May 26 attempt paper. I know that I have given answers there, but still try to do it. When the price of the sugar is rupees 60 per kg, its demand is 10 kg. Subsequently, if the price of the coffee declines, by the way, sugar and coffee, complementary or substitute? Complementary, na? For coffee, you will add sugar, na? Complementary means answer should be in.
Negative.
Definitely B and D is never an answer. Ruled out, huh? We know that complementary goods answers will be in negative. See, whenever you get a questions like this, I'll put that PQ of that commodity and get to know what is happening. In complementary, negative relation is there. See, price of sugar 60. Price of sugar 60 and they were selling 10 kg. Oh, okay. Next, subsequently, if the price of coffee decreases from 500 per kg to 450, coffee prices 500 to 450, the usage of sugar increases from 10 to 50. So, quantity of sugar increases from 10 to 50, prices of coffee decreases from 500 to 450. So, here price of coffee decreases, sugar consumption increases. We just need this two information. Convert this both into percentage and use that same percentage method and identify the answer. Come up with the answer. Got it? Minus 5. Anyone finding it difficult or you want me to solve step by step here? Okay, chalo, fine. Solve this also. Same, by using the percentage method or formula method, whichever you want, you can solve it. See, this attempt now, four questions from the demand concept numericals. 4 questions. Find the coefficient of price elasticity when the price of the product decreases from 10 to 6. Quantity demanded rises from 10 to 20. Even you can use formula method here. You will end up getting same answer. So straight away I took percentage. 10 to 6 means 40 percentage. Huh? Here 10 to 20 means 100 percentage. So quantity changes 100 percentage. Price changes. So 100 by 40 minus 2.5. That's it. Got it? Okay. Let's go back. Another 2 more numerical problems was there na. Solve that also. Advertisement elasticity to chiller problems will come. I will show that. Solve this both. See, one is arc method. Second one is same. Missing figure calculation. My brother got 92 by watching your Jan marathon, sir. Thank you. That is the purpose, na? End of the day, the people who can't able to afford to the classes or who can't able to come to the classes because they are in their native far places, enjoy. Corporate social responsibility, CSR. Sir, I got low marks in model paper. It means that my performance will be low in the main paper. No. You improve it, man. See, understand, Ajay. Are you lacking with the concepts or are you getting confused after reading questions? Or you are marking wrong answers even after understanding the concept? You need to understand which category you belong to first. Next live, tomorrow. Today we are going live till 8:30. Now I will give a break. Another 5-10 minutes, I will give a break. Done? Did you solve it? Answer. 13th question, 1.4. Next, 12th question. Same, missing figure calculation only.
Same question, the option is minus 1.4.
Minus 1.4. Done, finished. Able to get answers or not? Okay. See the next one, advertisement elasticity, one of the most easiest it is. They will give silly questions from this. The logic is when you spend more money on advertisement, there is a high chances that you get more demand. What is it? High chances that you get? Same, more proportion, same proportion, less proportion. Suppose, sir, I spent 10 lakh rupees, I got 40 lakh rupees worth of demand. More proportion, na? Spent 10 lakh, but you got demand worth of 40 lakh. Sir, I spent 10 lakh, I also got demand worth of 10 lakh. Same proportion. Sir, I spent 10 lakh, I got demand worth of 2 lakh. Less proportion. So more proportion means E greater than 1 there. Same proportion means E equal to 1. Less proportion will be E lesser than 1. And I will show the exam problems on this. You will laugh literally. Such a silly questions they will ask, man. See here. If the company increases its advertisement expenditure by how much?
20%.
The quantity demanded increases by demand by expenditure. 40 by 20. Answer. That's it. And even one more question is there, but I will show that. Two questions are there. Till date, they have asked. If you are lucky enough, they may also ask in this attempt also. One more question is there. We have to just search that. See, this is even more easiest question actually. Cross elasticity only. Even without solving, you can tell the answer. A shopkeeper is selling how many goods?
2 commodities.
A and B, which are dash substitutes.
Close substitute.
Already we studied. Close substitute. E will be. And moreover, substitute good. Answer should be in positive or negative. Definitely B and D cannot be answer. Close substitute means greater than 1. Only one greater than 1 here. But still we will solve it. See here. Close substitutes. It is observed that the price of the commodity A rises by
20%.
and the demand for B rises by demand by price 30 by 20. See, that is what I'm saying. Conceptual knowledge. When you have conceptual knowledge, hardly it takes us 30 seconds. Bandwagon. Okay. See here. Advertisement elasticity. Silly questions, man. If change in quantity demanded is how much?
E.
And change in advertisement expenses. Very difficult question. This is 60 by 20. Answer is 3. 6 by 2. Clear? Understood? Such a silly question. So by this, elasticity concept comes to an end. So this brings to the last area of the demand concept. Expansion, contraction of demand, increase and decrease in demand. See, even it is a very silly concept, but usually students will make a mistake here. Whenever in PitCat PC, price changes. Which changes?
Price changes.
That leads to expansion or contraction. That means on the same demand curve itself. See, whenever price goes up, demand is coming near to the origin. Now observe this orange color line. Demand is coming where? Near to the origin. So that is called as contraction. If it goes near to the origin, contraction. If it is going away from the origin, expansion. See, when price reduces, quantity is going away from the origin. Price reduce, expansion. Price goes up, contraction. This point E will move towards E1 or moving towards. That means on the same demand line, we are making adjustment. So we are making a movement. What are we making? Movement. So expansion and contraction is also called as movement on dash demand curve. Movement on same demand curve. Clear? Now in PitCat PC, only when price changed, it became expansion or contraction. Now other than price, ITCAT PC changes, that is called increase or. When other factor increases, we will draw a new demand line towards right side. So it is called right hand shift. Which side shift? Whenever other factor decreases, we will call it as left hand side shift. LHS shift. That means we are shifting. What are we doing? Either to right side or either to. So increase and decrease is also called as shifting demand curve. What is it called as? And there is one more logic here. Students will get confused. There is a difference between the word demanded and quantity demanded. What is it? The word?
Demanded and quantity demanded.
If the word quantity gets included in the statement, quantity demanded means change in price. That is expansion and contraction. If there is just a change in demand, what is it? Change in
Demand.
That means increase and decrease. Change in quantity demanded. What is it? Change in? That is called expansion and contraction. Change in demand, increase and Clear by this. Demand also comes to an one of the biggest it was. Once demand is done, next everything else will just get over like this. So today we'll finish chapter 2. If time permits, then we will go with chapter 5. 1, 2 and 5 if possible, we'll try to finish it off. So tomorrow we can finish it off 3 and 4. Because many of them said 4 we need to go a little in detail. 4 we need to understand few things in detail. Clear up? Okay, so we'll hardly take 5 minutes to solve exam questions. So that demand we will finish it off. Chapter 1 we will finish it off. 1 and 2 until demand concepts. Okay. Demand curve sloping. In case of which of them? By the way, upward means positive slope or negative slope? Okay. Conspicuous necessaries, also called as
Very good.
demonstration effect or bandwagon effect. That is conspicuous consumption. Luxury. Here, conspicuous necessaries. Yes, that is also exception to law of demand. Exception to law of demand means positive related. Next, normal goods. Negative related, na? Downward sloping. Unitary. Same, downward sloping, 45 degree. Next, elasticity greater than 1. Yes, flatter curve, but downward sloping only. Only this was the positive slope. Already we did this. See here, which of the following conditions the demand curve touches the vertical means y-axis. It touches the vertical axis. E is equal to infinite horizontal curve, and also the demand curve is parallel to which axis?
Exactly.
See here, it is horizontal and parallel to price line. Price line is horizontal. That is relatively elastic. Perfectly elastic. E is equal to infinite. Clear? Okay, indifference curve concept it is. Almost major numericals, everything I have touched. Chapter 2. Okay, which of the following is not a set of a complementary good? Car and petrol, electricity and electronic gadget, bread and jam, blazer and jacket. Either blazer or jacket you will wear. Any one you will wear, not both. It is substitute, not complementary. Next. And household, suppose, let me say the household, suppose the income elasticity is 0.5. Income elasticity 0.5 means greater than 1 or lesser than 1. In income elasticity, lesser than 1 means which good? Necessary goods or normal goods. Next, articles of prestigious value where rich people status symbol. Already we did. That's it. Next. Taken care. This one in the question only they had given answer. The product of price quantity ratio. What is it? Price and quantity ratio. That is x-axis and y-axis at a particular point on the demand curve. Particular point, middle point unitary, upper portion relatively elastic, lower portion relatively inelastic. Which method was that? Point elasticity method. Indifference curve concept. Supply. This is not supply. Chapter 6. Which of the following is a non-price determinant other than price? Non-price determinant for the dashward shift. Leftward means decrease. Rise in price of substitute. Substitute goods are positive related. Na? If one product price increases, other products quantity demanded will also increase. If demand increases, there will be RHS shift. Next, rise in price of one product price, complementary price increases. That means others demand will decrease. Yes, LHS shift possible. Next, an increase in number of buyers. If there are more buyers, demand will increase or decrease? Increase. RHS. Next, an expectation that price will rise in future. If price rises, when will you buy? Present demand. Increase means RHS, not LHS. RHS. So where it is LHS? Only and only in case of a whenever cross elasticity is 0, which good is that? Unrelated good. Supply. I had to do consumers behavior. Already we did this. See, this is the very difficult question. Other things being equal, ceteris paribus, law of demand. Demand and price has dash relation. That's it. Next September 25 term paper. What will happen to the demand when large proportion of people belonging to the old age group relating to the younger age group? When old age group people are there, more and more gyratic care, spectacles, walking stick demand will increase. Next, elastic means E greater than. Next, how does an increase in income of a consumer generally affects the demand for which good? Income increases. Advertisement elasticity. Given goods taken care. Consumer surplus. Budget line. That's it. Supply arc method it is. When two goods are positive relation or negative? Negative. LDMU we should to do. This already I explained. See, expectation that price will fall in future. If price falls, when will you buy? Present demand. Decrease means LHS or RHS? Next, highly priced goods are consumed by status seeking rich people. Inferior, I explained this. Okay, which of the following statement is in determining the greater the proportion of income spent, that means E greater than 1, lesser will be the elasticity of demand. No, greater proportion means E greater than 1 means greater will be the elasticity. But here they are saying option A, and these three determinants of price elasticity I said na. Asked you to read and come that once like a newspaper na. From that all these three options were, and all the three were correct. Already price and TR relationship we explained this. This is also done, taken care. Okay, next Jan 25 attempt paper. When some people starts investing money in the share market, then many people also starts following the same without considering its advantages, and someone else is doing, even I will do. Demonstration effect or bandwagon effect, or also called as conspicuous necessaries. Taken care. It to do. Citrus paribus, taken care. Okay, supply. September 24. Okay, taken care. Indifference curve. Supply. Taken care. Snob effect. Okay, when income elasticity is greater than 1. Luxury goods. Okay, consumer surplus, indifference curve, cross elasticity of demand. Solve this. This will be the last. By this we will take a break. So now the time is around 6:18, 6:20. Consider half an hour break. We'll start back at 6:50. Break till 6:50. So after the demand, the next topic is about supply. See, supply is very simple there. Whatever we discussed in demand, the complete opposite will be the supply. So supply is a flow concept and demand is also the flow concept over there. So demand we studied from a consumer point of view. The entire supply we are going to study from a producer point of view. Clear? So manufacturer or a producer point of view or a supplier point of view. Now, supply is a part of stock. What is it? Supply is a which is offered for sale. Let's say that I have a 1 acre plot of land. In that 1 acre plot of land, let's assume I am growing paddy. I am growing 100 bags. In this 100, I am selling 80 bags. So this 80 bag is a part of this 100 bag only. So this 100 bag is a stock. And this 80 bag is a. So this flow is nothing but a supply. Supply is nothing but what? Flow concept. Supply is a part of stock which is offered for Same. Now, determinants of supply. Same to same logic. The very first one, price. Now we think it from a manufacturer point of view. As a manufacturer, you tell me, when you are earning more money, are you interested to sell, or when you are earning less money, are you interested to sell? When you are earning more money, you are interested to sell. That means when the price of the product is more, automatically we supply more. When price of the product is less, we will supply less. Is that clear? So there is a positive relationship. Which relationship? Done? Settle down fast. Okay. So price and supply has got a dash relationship. Price and supply has got a positive relationship. Clear? Next, price of related goods. That related goods is nothing but complementary and substitute goods. Even due to change in the price of complementary substitute goods, even our commodity supply will also vary. Now let's assume I'm a manufacturer of a chocolate. Assume Dairy Milk. If day by day, Kit Kat is becoming more famous, Kit Kat prices are less, people are attracted towards Kit Kat, what will happen to my product's demand?
Decrease.
Production should. If people are not ready to buy more, what will I do by producing more? Automatically my supply will also decrease. So even if it is complementary, suppose let's say for example, you are having a EV vehicle. Now you are having a EV showroom. Let's say you are a EV manufacturer. It doesn't mean that you are just manufacturing EV vehicle. You are also manufacturing that spare parts, batteries, everything. Now even that demand will also increase. So your production should also increase. Complementary substitutes. So both put together is called as related goods. Next comes, in today's world, technology and business both are highly interdependent with each other. When technology gets advanced, automatically production capacity will increase. When technology gets outdated, production capacity will. Next comes factors of. This is where usually you guys will go wrong. How many factors of productions are there? 5 are. Which are those? Land, labor, capital and organization. Land expects labor, capital, organization. See, when you pay more rent, are you happy or less rent? More wages or less wages? More interest or less interest? More profit or less profit, are you happy? See, when other cost of factors are less, when your profit is more, you are interested to produce and supply more. When other cost of factors of production prices are high, your profitability is less. Are you interested in producing?
No.
Are you interested in supplying? No. So this is negative relation. Which relation?
Negative.
Same way. Expectation of future change in price. Already we did this in demand. Now you are a manufacturer. Assume in future prices are going to increase. When will you supply? Now or future?
Future.
So present supply.
Decrease.
In future, if prices are increasing, present supply will.
Decrease.
See, negative relationship is there, but we don't focus much. So same dialogue. Relation between price and supply expressed in the form of mathematical equation called as dash function. Same, S is equals to function of, or we can mention it as A plus B of P. Here plus because there is a positive relationship. Which relationship?
Positive relationship.
Is that clear? And next, have a look here. Government policy. Which policy? See, if government has too much of rules, regulations, strict measures, automatically production will not be increasing. A manufacturer will be hesitant to produce because government is having unnecessary rules, unnecessary regulation, lot of restriction. Only when government policies are friendly, only when government policies are, let's say for example, supportive in nature, that is when as a manufacturer we will like to produce. We will like to, let's say for example, produce more and supply more in the economy. So these are the determinants of supply. What is it?
Determinants of supply.
So same way, determinants is not only just with respect to the price. So the supply determinants are functional relationship with price, price of related goods, technology, factors of production, government policies. So it is having a functional relationship with all the determinants. What is it? Clear. So law of supply, all other things remains constant. When price increase, price decrease.
Supply decrease.
So representing supply in the form of table, supply, schedule, representing supply in the form of graph.
Go.
Clear? So straight away elasticity concept. Now, at least in demand, there were 4 types. Price elasticity, income elasticity, cross elasticity, advertisement. But here straight away we consider price. Whatever we discussed under the price elasticity there, 5 types. Relatively elastic, E greater than.
1.
Relatively inelastic, E lesser than. Unitary elastic equal to
1.
perfectly inelastic equal to
0.
perfectly elastic equal to same to same logic, but the graph is going to change now. In supply, since it is positively related, graph will be upward sloping. Demand negative relation, so downward sloping. Supply positive relation, so get ready in exam. If at all you make the same mistake, CA means come again. So in case of relatively elastic, no doubt upward sloping, but it will be flatter curve. Which curve?
Flat.
See, like the sleeping curve. And here one more extra topic we should remember. When we extend the supply line, what is it when we extend? In relatively elastic, it will cut y-axis. It will cut which axis? And same logic, more proportionate, flatter supply curve. There it was flatter demand curve. Now here it will be flatter supply curve. Next, relatively inelastic, same to same, steeper supply curve. But when supply curve getting extended, now it will cut which axis? But in unitary elastic, upward sloping straight line curve, when supply curve is getting extended, it will intersect at origin. It will intersect at where?
Origin.
And next, perfectly inelastic, same, vertical, perfectly elastic is horizontal. No difference at all. Concept also remains. Here na, even numericals also the same. Formula method, arc method, point method, outlay method. Same 4 methods what we discussed in demand. We have same to same 4 methods in supply. So supply is not at all a difficult. I said na, supply will get over very fast. And same numericals what we did in demand last, same to same formula method, arc method, missing figure, equation problem. Once again that comes in supply also. Have a look here. In recent attempt also they have asked a question. Let us solve that questions from the supply. Wait, I will do one thing. Only one small topic is remaining. I will finish it off. See, formula method already we have done. Arc method. Now see here. Expansion and contraction of supply curve. Same logic. Whenever there is a change in
Price.
also called as movement on same supply curve now. So one single supply line is there. Movement will happen from point E to E1 or E2. When price goes up, now supply is going away from the origin. So it is getting expanded. When price reduces, supply is coming near to the origin. So it is called as contraction. Next, whenever there is an increase in other factors except price, whenever supply increases, other factors like technology, price of related goods, government policies, factors of production, expectation of future change in price, there will be RHS shift. Which shift?
RHS.
And when other factor decreases, LHS shift. Is that clear? So RHS and LHS shift. That's it. By this supply comes to an. There is nothing big in supply. But usually the question comes in supply. Na? That is easy. Jackpot question. To be frank, 3 to 4 questions will come sometime if you are lucky enough. If not, just 2 questions. See, consumer behavior 2 questions. Supply also 2 to 3 questions. Remaining majority questions are going to come from demand. Demand is where the most of the question comes. In that numericals will be bare minimum 2 to 4. What is that? Bare minimum? If you are really lucky enough, sometimes in chapter 2 alone, they can ask up to 13 questions. How many?
13.
When if they go 13, 15 questions and all, pakka demand alone, they will ask 8 to 10 questions. That is a jackpot there. Any one chapter, 2, 3 and 4, any one chapter, they will always go beyond 10 questions. I can't exactly say this chapter only they will go. It's up to I say. But in macro, we can say chapter 6, for sure, 15 question. What is it? For sure. 15 question. Chapter 6, National Income Accounting and Keynesian Theory of Determining National Income. Both put together. Those 2 units put together, 15 questions. That we can for sure say. Clear? Okay, chalo. Let's finish off the supply MCQs. Even chapter 1 MCQs are still pending. I know that I will take it together with 5. Or if not today, before winding up, we'll take up the 1. No worries. Just you only check how many questions are coming from supply when we are solving now. In this is the latest attempt paper, May 26 attempt paper. Demanded. There is not even a single question in the recent attempt in supply. Full jackpot then. More questions will be from demand only. Okay. Done, taken care. Okay, this is consumer surplus. It to do. We'll do this. Which of the following are the types of measurements of supply elasticity? Total 4 methods are there. Formula method, arc method, point method, and outlay. Point elasticity. Is this a method? Yes. Inelasticity. Is it a method? No. Arc elasticity. Is it a method? Yes. Perfectly elastic. Is it a method? No. 1 and 3 are the methods. So, okay, one question. Just calculate how many supply questions are coming up. Cross elasticity, taken care. Already done. Demand question. That's it. See, just one question from supply. Next September 25 attempt paper. Okay, in this I think 2 questions have been asked. Okay, consumer behavior question. Not even a single question in supply here also. See, very less chances of supply questions. You cannot skip. Sometimes they will give a surprise, like 2-3 marks they will give. Look here. Solve it. They are only specifically giving which method? What is arc method formula? Change in quantity by change in price into P1 plus P2 divided by Q1 plus Q2. Solve it. Solve this. 40th question. Even consumer behavior, hardly you will get 2 questions. Sometimes if you are lucky enough, 3 questions. Supply 1 or 2. In some attempt, they have asked 3 questions also. That is what? If you are lucky enough. Jackpot that is. Sir, are you a CA? No, I am qualified from National Law School. I am a law graduate actually. NLS, National Law School of India University, CLP, Consumer Laws and Practices. But I have done my foundation and inter done. I didn't do my finals. I came out. Consumer court lawyer. Sir, sorry to ask this. Will we be able to get this past PYPQs marked answers PDF for free or minimal cost? I can give it for free itself, not a problem at all. But I will ask Arivu people to put this as a link below the video, like all the 5 attempts paper or 6 attempts paper. I will ask them to put it in a drive link. Hey, by the way, I didn't even do anything. Just ICA material thing, I have just marked it. All my students already have it. Every batch of mine, very first day of the class, everyone will be having this. Sir, I got 55 in MTP, which was conducted by ICA for September, and most of the places I lost my marks were in macro. So, what will you suggest me to do to increase my macro part? First, don't make impulsive attending. That is the first thing. Okay, I will ask Arivu team to put it in the link below. Don't worry, this question papers, past 5 attempts paper, you need it. Okay, chalo, I will give. No worries. Enjoy. Done? Able to get the answer? What is the answer? Okay. So, one question now. Now, observe how many questions are coming from supply. That's it. Only that one question. Next, Jan 25 attempt paper. Here they have given 3 questions. See, opening only 3 questions. Solve it. Like this, you should be lucky enough. In some attempts, 3 questions also they have asked. Micro, macro. See, this is formula method. And this is equation question. See, Q is equals to 120 plus 6P. My notes PDF, I clearly said why I was unable to share us. My format is totally different than ICA format. That will lead to a lot of confusion, Naresh. That's the reason. Even in the past marathons also, I didn't share that PDF. But it is from the same ICA material only. I made it simplified. But the alignment, the flow, that is different than ICA. Then you will get confused. Sir, in ArivuPro, online test is good for real exams. You can take it. See, the more you solve the questions, that is always good for you. Team Guru, yes. See, it doesn't matter wherever you take. It doesn't matter whether Arivu or outside. The more new questions you solve, that is always good. Beat any subject. Done? Did you get the answer? See, in this equation, they have not given the end values here. They have stopped at the last phase of the equation. So it will be around 60 by 180. 60 by 180 simplified is 1 by 3. Positive 1 by 3. Is it clear? Okay. Next, September 24 attempt paper. Okay, consumer surplus question. Have a look here. Again, missing figure question. The price of the commodity is rupees 10 per unit. At this price, quantity supplied is 500 units. Price elasticity of a supply of the commodity is 1 point. Already they have given elasticity 1.25. At what price the quantity supplied will be 20% more? See, initial price is how much? 10 rupee. Initial quantity is how much? 500. And elasticity is 1.25. They are saying that quantity supplied would be 20% more. That means what is 20% of 500? 100. So 500 plus 100 is 600. We already got the new quantity. What we need to identify is only the new price. Say missing figure calculation. So do it. Straight away convert this into percentage. Take it out. There is nothing big here. Percentage change in quantity demanded. 20 by change in price into 1.5. 1.5 will come to RHS denominator. Change in price to LHS. 20 by 1.5. How much? 20 divided by 1.25. How much, ma? 1.6. Hey, no, not 1.6. 16.6 percentage it is. 16.6 it will come. Percentage. So 16.6 percentage divided by 11.6 or 16.6. Check with. I don't have calculator here. Do it, man.
1.6 plus 10. 11.6.
I'm not asking end answer. I'm asking what percentage. So first take out calculator. 20 divided by 1.25. How much is that?
16.
That's it. I wanted that. So 16 percentage divided by 100 into what was the initial price into 10. How much is this? 1.6 rupees. So earlier price is 10. For that 1.6 should be added. What is the new price now? Clear? So don't skip the steps when we are solving. Others will get confused. Especially in Keynesian theory. Full none. Bouncer will happen. Clear? Understood? That's it. See, hardly 1 or 2 questions from supply. And even consumer behavior also just 1 or 2 questions. You will not get beyond that. Clear? Okay. Let's finish chapter 4 unit 2. Graph question. See, in graph question now, most repeated questions, what is going to come? That I will teach first. See, remember, already we have learned about increase and decrease in demand, increase and decrease in supply. See, whenever demand curve is increasing, RHS shifter or LHS shifter? Okay, so this is supply curve, this is demand curve, the point where demand and supply intersect, that is called as what? Anyone having doubt in this concept? Okay, so this is equilibrium price. One sec. Okay, what is equilibrium price is also called as? What is another name of equilibrium price? Market clearing price. What is it called? Market clearing price. So this is equilibrium price, equilibrium quantity. Now, let's say the questions are like this. Demand increases and supply decreases. What is it? Demand?
Increases.
Supply decreases. Demand increases means RHS shift. Supply decreases means LHS shift. Do you agree? But the twist is they haven't given which proportion they are changing. Now what did I say? Demand will increase. But in what proportion? They didn't mention. I said supply will decrease. But in what proportion? I didn't mention anything. So when nothing is specified in form of proportion, in form of what? Consider it as same proportion. Let's say that demand is also increasing by 10%. Supply is also decreasing by. But the twist is whatever comes as constant. Whatever comes as?
Constant.
Let's say for example, price may become constant, or in this case, see, quantity is becoming constant, but prices are increasing. See, here the answer will be price increases, but quantity is uncertain. What is it? Quantity is? I know that, sir. Don't you think this is constant? Yes, I know it is constant. In option also, they will mention it as constant, but don't mark constant as an answer. You should mark it as. That is the only area where you guys will go wrong in chapter 4, unit 2. Rest remaining, anyone having conceptual doubts in chapter 4, unit 2, or I haven't understood chapter 4, unit 2 at all, equilibrium concepts, how to plot the graph, demand increase means RHS, supply decrease means LHS, that also I don't know, sir, why it is RHS, why it is LHS, anyone having in that category, either in YouTube or either in offline or either in online, anyone? Because I'm believing that you guys already know that concept, so I'm going straight away to the exam oriented question. Clear? So that is why I said detailed explanation, everything we have done in the previous marathon. This time we are going with exam oriented marathon. Clear up?
And then the graphs, any other points is important, can you provide a graph?
I will. In this chapter now, I will show the exam question only. Other than graph, nothing is going to come here in chapter 4, unit 2. Because after demand and supply, in my class, I will do chapter 4, unit 2. So I have a format. Wait, I will also give that format. Usually what I will do in my classes, first I will go with demand. That is chapter 2, unit 1. After that, chapter 2, unit 3. Supply. Next, I will straight away jump for price determination. Later, I will come back to chapter 2, unit 2, consumer. This is the first slit. This will take bare minimum 25 hours. Bare minimum 25 hours it will take. I will go a little slow here. Full MCQs, everything will do. And after this, year after, slowly the speed starts. Chapter 3, unit 2, I will start. Theory of cost. After that, chapter 3, unit 1 will come. Theory of. After that, remaining portions of chapter 4, unit 1 and unit 3. Market and its types. Then later, we will come to chapter 1 and next we will go to chapter 5. This is the order of flow in micro. What we follow. This is what becomes easy. After demand and supply, when we straight away go to chapter 4, unit 2. That makes more sense, more connection there. And few topics I will intentionally not do it in 2. I will take the in 4. Like TR, AR, MR concepts. Those things I will take up in chapter 4. Revenue. Only outlay 1 alone I will explain initially. Clear? Okay. Now, I will show the exam questions only for you guys. Now try to plot the graph. If anyone finds, sir, I am unable to plot the graph, teach me this, or you only draw the graph and tell us how to draw this, let me know. Okay, go with this. First, you try to do this. These are easy questions. This is not a difficult at all. Most easiest this is. So, okay. Sir, when will macro? Maybe tomorrow. Tomorrow doubtful. Day after tomorrow. Raja. Done? Able to do it? Have a look here. What happens to equilibrium price when there is a decrease in with no change in? Okay. Demand is, supply is. This is equilibrium price. This is equilibrium quantity. Clear? So what is happening here? There is a decrease in supply. Whenever supply decreases, LHS shift or RHS shift? LHS shift. And demand, there is no changes at all. So this will be the new equilibrium. See, this is S1. So at the new equilibrium, what is happening to price? Prices. Quantity is decreasing. Clear? So observe, price is increasing and quantity is decreasing. Equilibrium price are going down. Is it going down? No, it is going up. Equilibrium price remains constant? No. Equilibrium price goes up? Yes. Equilibrium quantity increases? No. Answer is option C. In such kind of questions, now you can't do magic, inky, pinky, ponky and all here. You have to plot the graph and then you should come to the conclusion. Is that clear? Okay, next question. See here. In case of demand decreasing and supply increasing, see, that's it. What is the expected impact on equilibrium? Now see, they haven't mentioned a proportion. What we should assume as? Same proportion or equal proportion. So what happened, girls over there? Any doubts? Okay. Now demand is decreasing. When demand decreases, LHS or RHS? Demand decreases, LHS. And supply is increasing. When supply increases, 1 second, cross line. Yep. See, observe, this is the new equilibrium point. This is S1, this is D1. Now, at this new equilibrium point, what is happening to the price? Price is decreasing, but quantity is, don't write it as same or constant. It is undetermined. What is it? See, this is where you will go wrong. Next, I will show the exam question. They have played with that also. See here, in this case, the price is decreasing, quantity is uncertain. What is it? Quantity is? Okay, here entire explanation is related to the price. So in this case, what is happening to price? Equilibrium price is falling. Okay, next January attempt. Jan 25 attempt question paper. Chapter 4, Unit 2. Yep. See there, when there is a decrease in demand, what is it when there is a? They are just saying that demand is going to decrease. That's it. That means supply is remaining constant. Demand is going to decrease. Okay. When demand decreases, what happens? Price is also decreasing. Quantity is also decreasing. Clear? Huh? Okay. Now, the overall decrease in price but increase in equilibrium quantity. No, both were decreasing. Now, price and quantity both were decreasing. Overall increase in price but decrease in equilibrium quantity. No, decrease in equilibrium price as well as quantity demanded and supply. Yes, both are decreasing. Option C is the answer. Solve this. Now, this is where you will go wrong. Now, observe the options. You will definitely go wrong here. You only solve this. Question number 5. See, usually 2 questions will come. How many questions? See, chapter 4, unit 2, 2 questions. Supply 2 questions. Consumer behavior also 2 questions. All those units are just to 2 questions. If you are lucky enough, maybe 1 more question extra. 3 questions. That is why we took more time in demand and we are not taking more time in these other units. When both demand and supply is increasing, but they haven't mentioned which proportion, so we should assume it as dash proportion, same proportion. Assume both are increasing by how much percentage? Draw the graph. Hello girls over there, answer. Answer for the fifth one. Did you draw the graph? Graph done. Answer. Both demand and supply is increasing. Demand increase RHS, supply increase also RHS. So price is remaining. Don't use the word constant, uncertain. Quantity is. So price uncertain. Quantity is increasing. So here quantity is increasing, prices uncertain. But observe the option D. There is also a word called as constant. This is what you will end up making. You will just go and B, option B, sorry. Quantity will increase and price will remain uncertain. You will end up making as option B rather than marking option C. Whatever comes as constant, that has to be read as uncertain. Okay, next.
Marketing also has the same everything. And the price doesn't decrease.
But here there is no clarity in the question, right? They haven't spoken anything, what proportion, nothing. That's the reason.
If it's mentioned,
Yeah, if it is mentioned, then you need not to go with the word uncertain. Yep, do the same to same question once again. See, most of the time the questions are coming from that uncertain terminology only. That is where usually question comes. And there is one more kind of a question. I will show that. Solve this. Karunya, simple Karunya. When the question doesn't speaks about anything, just if it is given about increase, decrease, that's it. What proportion increase is not mentioned, what proposed decrease is not mentioned, whether quantity or whether price, whichever in your graph becomes constant, that has to be read as uncertain. Because in the question, they haven't completed the information full. That's the reason. Karunya, clear? Done? Is it finished? Answer. What will happen to equilibrium price and quantity when demand is increasing, supply is? So here demand is increasing. Wait 1 second. Demand is increasing, supply is decreasing. See, quantity is remaining uncertain, prices are increasing. So price will increase but quantity remains. So option B, price rises but quantity will be uncertain. Next, September 25 term paper. Okay, solve this. In an increase in supply with unchanged demand. What is it? Increase in supply? Unchanged demand. Only supply is increasing, demand is remaining unchanged. Only and only supply is increasing. So with that respect, this was the initial price and quantity. Now this is the new equilibrium. Equilibrium price is decreasing, equilibrium quantity is increasing. Equilibrium price will go down and equilibrium quantity will go up. Clear? Anyone having doubt in this, or you want me to draw proper scale, pencil, everything here? This is another bachu silly question. See, I said expectation of future change in price, everywhere they will connect multiple places. See, assuming that supply of a car will remain, price of the car are expected to increase in. What will be the effect on the what is happening here? Price of the car is expected to increase in future. If price increases, when will the people buy? Now or future? Hey Shiva, what is CADA? In future, if prices are increasing, people would like to buy now. So present demand increase means demand curve will be RHS shift. Clear? Okay. Chapter 4, Unit 2. So this question I will not help. In the recent attempt question it is. You guys only do it. Yeah. Solve this. Below that only, I have only drawn the graph, but still, you guys have to do it. Draw this 99th question. See there, in every attempt, one or the other, usually two questions will come. Sometimes, if you are unlucky, just one question will come in the chapter 4, unit 2. See, don't give much stress on consumer behavior, supply, chapter 4, unit 2, because that particular unit, average questions are how much? 2. Uncertain is where repeatedly the question is coming. What is the answer for this? Draw the graph and let me know the answer. Confirmed. I will show one more question paper. There, uncertain questions have not come. Rangoli competition has come there. Done? Sir, my MTP result is showing 0 in each subject. Maybe some error while giving your paper, maybe your number or what something, you would have made some mistake. Got it? What will be the impact of equilibrium price and equilibrium quantity when demand decreases, supply? Demand decreases, LHS shift. Supply increases. Quantity is uncertain, prices are decreasing. So equilibrium price falls, but equilibrium quantity is clear. See, out of the past 6 attempts, in 5 attempts, the questions have come from the uncertain. That is a one common area the questions are repeatedly coming. And usually 1 or 2 marks will be there in that question. Clear? Understood? Okay, there is one more kind of a question which they have asked in June 2024 attempt paper. Which attempt paper? But I will show morning batch. I was just showing to them. Yeah. Let's see how many of you can able to identify this question paper. Now, actually, the ICI didn't issue to the students. Somehow in new Telegram here and there we found it. Yep. One second. Okay, draw this graph and keep it ready. Yeah, write this Rangoli and keep it ready. I will show the questions. There's one more type of a question. Finished? Especially these points. Point 1, 2, 3, 4, 5, 6, 7, 8, 9. So these points are important. See, this is another kind of a question. See, S1 and D1 are the original demand and supply curve. Initial equilibrium is 0.1. What is the initial equilibrium? 0.1. Clear up. When the demand increases, it goes to D2. When demand decreases, it comes to D3. Supply increases, S2. Supply decreases, S3. Clear? Did you draw this graph? Okay. Now, look at the board. I know that definitely you will not answer it. I will only help you guys. Assume that the end user expects the price of the purchasing new motorcycle will significantly increase. From past 1.5 hours, you are seeing this question like significantly price increases next year, price decreases next year. I said now that one point, they are mix matching like crazily in multiple places. Literally more than 10-15 questions we have solved like this. Price increases next year, price decreases next year, both demand and supply. That is one of the most favorite point to ICI. Clear up. So next year, motorcycle prices are going to what happen? Increase. What point on the figure is most likely to be the new equilibrium price and quantity? You tell me next year if the prices are increasing. When will the customer buy? Now or next year? So present demand. And there is no information given. See, assume supply remains. At least here they have given. Same questions are also there in your ICA material. Last topic of chapter 4 unit 2. There they haven't given any information like this in bracket. Full suspense there. You should not take any new assumptions and all. If no information is given, that means it is remaining constant. In this case, demand is increasing and supply remaining constant. Demand increases means supply remaining constant is S1 only. So S1 and D2 intersecting at. So answer is point for the first question. Clear? Okay, next. Heavy storms, that means heavy rain in Maharashtra. Sorry, in exam paper, they have given it as Tamil Nadu, but in our ICA Institute paper, same question is there. Maharashtra is given there. 2005 and 6, heavy storms in Maharashtra destroyed rice crop. Same question is there. Okay, heavy storms in Tamil Nadu during 2011 and 12 has caused a havoc with the crop. But there they have given rice crop. But here they have just given a word called as crops. Now, what would be the figure about the most likely to be the new equilibrium? Assume there is no change in demand. Here, because of flood, because of storms, crop supply will no change in demand. So, supply decrease. Which side shift? LHS. Yes, 3 and demand no information. Answer is 0.3. What is the answer?
3.
Clear. Next up. Mr. P visits a supermarket and was purchasing a dash good. Which good? Say jam. Holding everything else constant, assume that income rises and the price of factors of production. Just few minutes back we did. When price of factors of productions are less, supply will increase. Why? Because profitability is more, supply will increase. And also, see here, income of a consumer is also increasing. Income is rising. When income rises, demand will also rise. When prices of factors of production decreases, supply will also rise. So demand is also rising, supply is also rising. So demand rises D2, supply rises S2. Answer is 0.9. What does it answer is? Clear? See, like this Rangoli competition questions can also come. Once they have asked, just once. That means my expectation is they may ask it anytime, because from the past 6 attempts, they haven't asked this question. So chances will become very high. Wait, let me show the ICI material questions only for you. It comes in chapter 4 unit 2. Last question. See, this is the questions. See here. Assuming X is a holding everything else constant, income rises, prices of factors of production increases. In exam question they are given decreases. And see here, heavy rain in Maharashtra during 2005 and 6 has caused a in the dash crop. But there nothing. They said Tamil Nadu 11 and 12 just a crop. Next up, assume consumer expects the price of a new car, their motorbike in exam question. But here to significantly increase next year. There is one more question. Okay, do this. You only solve the second question. Let's see. One more question this is. Consider same graph. Whatever graph you have written Allah. For the same graph, answer the second question. Answer the second question. Point 7. Okay, let's see. Let's others. Give me the answer for the second question. By this, chapter 4, unit 2 comes to an end. We will go with consumer behavior. That will also take hardly 20 minutes. Yes. Nine. He said 7. You are saying 9. See, for this graph, you need to answer from this graph point of view. This graph numericals. See there. We are analyzing the market for which good? Good Z. The price of the complementary good Y declines. When the price of complementary declines, complementaries are positive related or negative related? When good Y price declines, then demand for Z will increase. So demand is increasing. Now at the same time, there is a technological advancement in good Z. When technology gets advanced, we are also analyzing for good Z. Here also technology getting advanced for good Z. Supply will increase. So demand is also increasing. Supply is also increasing. Answer is 0.9. Clear? Got it? Understood? By this, chapter 4, unit 2 comes to an Khatam. Clear? See, only the biggest unit what we have done today is demand. So today we are covering up all small units of the micro. So that tomorrow we will go little detail, because you guys only said, sir, chapter 4 we want little in detail. So that is why we are covering all the small units today. Okay, let's go to the consumer behavior. Just 4 theories are there. How many theory? Anyone having conceptual clarity, doubt in consumer behavior, let me know. I will take up those topics little detailed. So total 4 theories are there. Which are those 4 theory? Consumer, surplus, LDMU. These two comes under cardinal. Who developed the cardinal approach? Alfred Marshall. Next, under ordinal also there are 2 theories. Indifference curve and see, in this now, most repeated question comes in ordinal only every time. And that too indifference curve. Which concept? Features of indifference curve. Kindly mark that as important. Features of indifference curve. That is where the question comes most of the times. And equilibrium conditions, that formulas, that is where the question, main concept. In consumer surplus, they will not revolve much. Straight away, main concepts, the questions will come. Okay, let's get started. Okay, first understand the difference. See, in this whole unit, we are going to understand from whose point of view. See, we need to understand the behavior of a customer. How customer behaves in a different conditions and different situation. Now, there are 2 approaches. In this particular unit, we are going to understand. And the whole unit is going to speak about equilibrium concept. Which concept? Equilibrium. That is consumer equilibrium. Which equilibrium? So there are mainly 2 conditions in consumer equilibrium: maximum satisfaction and no change. What is it? Maximum satisfaction and no change. Until customer achieves maximum satisfaction, he will not think of changing the commodity. That is the logic behind it. Now there are 2 methods to identify this consumer equilibrium. One is cardinal, second one is ordinal. So what is this? Let's assume tomorrow is my birthday. My parents have given 5,000 rupees to me, Shashikiran. First I will go and buy one clothes, because I need to look good. I will go and buy some clothes. And later, I will buy some nice shoes. And later, I will go with my friend's movie. Some good movie. Anyhow, Toxic is coming now. We'll think about it later. I know. Next, we'll go for a movie. After that, I will take my friends for a treat. So these 4 are the activities which I am doing with the 5,000 rupees. Now, someone will ask me, okay, Shashikiran, you have purchased the clothes, right? How much of satisfaction you got? I will say, how can I say that? But Alfred Marshall says, we can quantify. What is that? We can quantify. That is what Alfred Marshall says here. Cardinal measurability of dash is possible. That means satisfaction can be measured in terms of numbers. The tool to measure that is called as Utils. Now, okay, chalo, as per Alfred Marshall, we will quantify it. Let's say after buying clothes, I got some 80 utils of satisfaction. How much utils?
80 utils.
After buying shoes, I got 100 utils of satisfaction. After watching a movie, let's say I got some 50 utils of satisfaction. Giving treat to friends, stupid fellas, they will not give on their birthday. Only I should give just some 10 utils. How much? So this is as per which approach? So cardinal approach says that we can quantify, we can measure satisfaction in terms of numbers. But ordinal says that, see boss, this is practically not possible. We can only give a rank or preferences. Like what is your first preference or first rank, second rank, third rank. That is what you can do maximum. So we say you are getting more satisfaction by buying a shoe. That is your first preference. Second is buying a cloth. Third is going for a movie. Last is giving treat to your friends. So this is your first rank, second rank, third rank, first preference, second preference. So this is cardinal approach. Which approach? Sorry, not cardinal, ordinal. So you tell me, which is practically possible? Ordinal approach. Cardinal is not practically. Is it clear? Understood? Now, under cardinal, there are two theories. LD, MU and consumer surplus theory. Before that, TU, MU and AU. Basic concepts. Anyone having doubt? Formulas. AU formula. TU by Q. MU formula. There are two formula. Output continuous. Output is not continuous. TU n minus 1. Output is continuous. Change in TU by change in quantity. Output is. Anyone having doubt in this? YouTube online students, YouTube live students. Okay, consumer surplus, you feel difficult. That is easy. Chiller Lakshmi, I will teach you. Wait. None? Anyone having doubts with formula? Because entire concepts are based on this formulas only. Okay. Now, in LDMU, most important is this assumptions. We assume we are understanding this whole analysis with the rational consumer. Which consumer? That means he doesn't have over likingness or over dislikingness. He is a normal individual. We are considering him as a rational consumer, and product is given for a free of cost. And we are giving a product, he has to consume it continuously. What is it? He has to consume it? Continuously. Let's assume that Shiva likes jamun. I am giving him some 7 jamuns. I am bringing from his favorite shop and I am asking him to eat one after the other. All 7 jamuns. If you eat today, I am leaving you out of this room. If not, I will fail you in economics. Like this, I am blackmailing him. Full undue influence. Now with great difficulty, he is eating one by one. First sweet he will eat. Oh, he likes it because his favorite sweet. Now he will get 50 utils of satisfaction. Second sweet he will eat 75. Third sweet 95. Fourth sweet 110. Fifth sweet 120. After having fifth sweet, now his tummy got filled. Sixth one he didn't get any satisfaction at all. It was still the same. But seventh sweet after eating, he felt like puking. What was it? He felt like puking. See, this is how it looks when he is having one after the other. What is it? One after the. But in reality, he is not getting more satisfaction. He is actually getting lesser satisfaction from the very first unit itself. Now, what was the reaction after first sweet? 50. Second one? Third one? 95. Fourth one? 110. Fifth one? 110. It looks like he is getting more and more satisfaction now. Here in terms of numerical, let us identify MU. Now, output units are continuous. Which formula? First formula or second formula? First formula. So, first unit. Here also it will be how much? Next, 75 minus 50. 95 minus 75. 110 minus 95. Next, 120 minus 110. 120 minus 120. Next, that means first sweet alone is giving him how much satisfaction? Second sweet alone. Third sweet alone. Fourth sweet alone. Fifth sweet alone. Sixth sweet alone. It is not at all giving any satisfaction. See, it felt like first one was 50, second one 75, third one 95, fourth one 110. Reality is from the first unit itself satisfaction is. That is what concept name is also. Law of diminishing marginal utility. Marginal utility is diminishing. And in this whole concept, we want to identify equilibrium. Equilibrium is existing whenever TU becomes maximum, MU becomes 0. Clear? And in this concept, relation between TU and MU is important. What is important? Relation between? Observe. 50, 75, 95, 110, 120. TU is increasing. What is happening to MU? When TU is increasing, MU is, can I say, TU is increasing at a decreasing rate. TU is increasing at a, that means, see, observe, 50 plus 25 is 50, 25 plus 20, all three put together is. That means whatever the value of TU we are explaining, by adding MU only we are getting TU. That means there is one more formula of TU. What is it? Summation of MU. We will add all the MU to derive TU. What is it? We will add all the to derive. That is summation of MU. Clear? Huh? That's the reason we will say TU is no doubt increasing, but TU is increasing at dash rate. Diminishing. Next, observe, when TU is maximum, what is MU? When TU is maximum, MU is, and this is what the condition of LDMU equilibrium. What is it? LDMU. Clear? This is where the exam question comes. And there is one more way of asking question. They have asked it once. I will show the exam question. Observe, whenever TU is increasing, MU is MU positive or negative? MU is question number 39. When total utility is a dash rate, just now I explained now first stage, TU increases at dash rate, diminishing rate. MU is decreasing, but MU is dash. MU is no doubt decreasing, but MU remains. So the question will also come from relationship between TU and even the small information they may ask, but only two questions will come. From any nook and corner, from any of the topic they may ask. Just two questions. Okay, last one. Observe. When TU is decreasing, MU becomes, when TU decreases, MU is, any doubts for anyone in this LDMU? This is the main LDMU logic. See, when you keep on consuming same commodity again and again, that means your favorite sweet, whatever it is, when you keep on consuming same product again and again, it looks like you are getting more satisfaction, but the reality is from the very first unit, satisfaction is decreasing. That is what the heading also, law of diminishing marginal utility. Marginal utility keeps on decreasing or diminishing. Is that clear? Yes, understood? And there is exception to this LDMU also, where LDMU concept will not work. See, graph also speaks about the same. When TU is maximum, MU is 0. Clear? So exceptions to LDMU, rare collections. That means some old antique collections are there now. Now coins, stamps, all this. Next, money and wealth. If someone gives you a free 100 rupee note, will you say no? After some point of time, you will be like, let's see your capacity give. You will never say no. So in case of harmful drugs and drunkards, cigarettes, alcohol, prestigious goods, you already have one gold jewelry, you want one more jewelry, female will never say no. They will be always like this. It will never become like this. For boys also, you have one super bike, you want one more. You have one bungalow, you want one more. You have one car, you want one more. Yes, prestigious goods. They will never say no. In case of very small units of consumption, very small units. Next comes, in case of, in these 6 scenarios, LDMU will not work. Clear? By this, LDMU comes to an end. Clear? Next comes consumer surplus theory. One of the most easiest topic. See, simple. In class now, I will usually take up a movie example. Let's assume now Shiva is a very big fan of which is your favorite hero? Some good hero name you say next to who. That means who, I don't know who is that guy. I am from Karnataka. Some popular name you say. Ajit, which is the next movie of Ajit? Okay, leave. We'll consider. Next Ajit movie is called AJ only. Okay, Ajit. Ajit movie name is only Ajit. Now tomorrow Ajit movie is getting released. Who was that? Sir, consumer surplus. Lakshmi, this is for you especially. I'm giving this example. Now let's assume Shiva is a very big fan of Ajit. He wants to watch Ajit movie at any cost, first day, first show. Now tomorrow, let's assume tomorrow morning Ajit movie is getting released. Now Shiva is like, who will go to Shashikiran class? Always torture, assumption. Economics is full of assumption. He will bunk the class. He will go to the theater. He know it very well. On the theater, in the counter, first day, Ajit movie, tickets are not going to be available, but still he wants to take risk. He's ready to buy it at a black ticket also. He will go to the guy who's selling a black ticket. He will ask, how much is one ticket? He will say 500. He is ready to pay 500. What is it? He is ready to pay? 500 rupees. Clear? Huh? Then you will remember, I think Nitin sir said, our maths faculty, he owns one theater in Coimbatore. I think this is the theater. He will call Nitin sir. Hi Nitin sir, how are you? We are missing you so much. When are you coming sir? Full buttering. Buttering will start. Now Nitin sir will ask, why pa, what happened? Which class is going on? Sir, Shashikiran sir class are always assumption. You only said that sir, student life is golden life. Sir, one small help sir. Just one ticket needed sir, I have come to your theater sir. Nitin will be like, wait, I will call up ArivuPro. They will only personally come and give you the ticket. Sir, somehow you will balance it. Now Nitin will say, you should never repeat this once again. This should be the first and last time. Okay. Finally, Nitin sir will say, give that phone to the black ticket guy. He's our guy only. What, sir? You are the only selling black ticket. Huh? What to do? Side income. Okay. Now he is my student. Don't charge anything extra to him. Whatever the counter price is there, the MRP price is there. Give that price to him. That is who is my student. He was ready to pay how much first time? 500. But he got it. Let's assume counter price is 200 rupee. He was ready to pay. 500. He got it for 200. By just paying 200, he got 500 worth of satisfaction. He was ready to pay how much? 500. That is potential price. Price which he was ready to pay. Price which he was? Ready to pay. But how much he paid? 200. 500 minus 200. 300. That is the extra worth of satisfaction he got. That is called consumer surplus. Surplus means extra. Surplus means? This is how our normal class will be. Every topic. Since she said she didn't understand the topic, I brought back my classroom example here. So simple logic here. First time he went for a movie by bunking the class. He was ready to pay how much? But he got it for 400. After watching that movie, after Ajit Kumar hits a villain, he will go out of the earth and all competition to Balaya. Full Balaya movies are next level. If he hits a person, he will go out of the earth. And recently, Akanda 2 movie, I was like surprised. Other person. He will do Arati by making him upside down. That is next level crazy. Now he will come and influence all his friends. Movie was like that, you know, if Ajit Kumar hits like this, car will only fly like that, hero will go like that, villain will come like this and all, he will influence. Now next day, 3 of the friends are planning to bunk and go for same movie. Now, next day, he said, hello, I paid 500 rupees for ticket, movie super duper hit. At least we 3 are there, we will bargain little. At least bring 400. He can't say, na, he called up Nitin sir. If at all next day he calls, Pakka, TC will also come, not from ArivuPro, even from BCom college also. So he didn't reveal. Now 3 of the friends are bunking and going to the movie theater. After going to the theater, what's the name of the hero? Sajeev. Now Sajeev will say, hey Shiva, yesterday for this theater you paid 500 rupees. Stupid fellow, don't know. This theater belongs to Nitin sir, right? Now Sachin, what is the name? Sajeev. Now Sajeev will call Nitin sir. Hi sir, how are you? We are missing you so much sir. Sir, one small, same buttering. Same story continues there. Same, somehow they will balance student life, golden life, all same story. Somehow they managed to get the ticket this time for? They were ready to pay second time how much? Now Shiva's example, continuation. Now Shiva second time was ready to pay? Still they got it for? Got it? First time Shiva was ready to pay? 500. But he got it for? 200. Second time he was ready to pay? 400. He got it for? 200. Now let's say after 1 week. Now, boys have a major drawback. When they join new academy, new college, now they will get new set of friends. When they get new set of friends, when they start going to the movie with the new set of friends, nearby their home, they have old friends. Now the problem starts. Now they will be doing emotional drama. Now you are big fella, pa, why will you come for movie with us and all? You have got new friends now. You don't remember us. Full emotional aptachar is happening. Now they want to watch same movie with Shiva. Now Shiva wants to go third time. On that weekend, he knows it very well. If he call Nitin, Pakka, now my parents will only come and hit me. Somehow Nitin sir will straight away call my parents. He will somehow balance to go 1 day in advance to the theater. He will stand in the lane and he will get the tickets in the counter itself. What is it? Now third time, how much is he ready to pay? Also paid. But first time he was ready to pay. Second time, third time. That means his intention. That means his willingness to pay keeps on. That is also getting affected by LDMU. Potential price. Which price? See here, the concept of consumer surplus is also affected by LDMU. That means the price which we are ready to pay, potential price will reduce gradually when we go on consuming a. He is watching a same movie again and again, particular commodity. That means homogeneous goods and services. Clear? So what we are ready to pay is called as which price? What we actually pay is called as?
Actual price.
So potential price minus actual price is what we call. So he was ready to pay 500 first time, but he paid only how much extra satisfaction he got?
300.
That is what consumer surplus. Whatever extra worth of the customer enjoys is called. Lakshmi, clear? No reply at all. Lakshmi, maybe abscond. Person who asked a doubt only absconded. Okay, chalo, let's continue. See now, same example, I would have made it as little lower here. See, in this case, alarm, when potential price and actual price both are equal, that is where equilibrium happens. Let me say, for example, third time he went for a movie, right?
Yes.
200 rupees he is ready to pay. He also paid how much, sir?
200.
That is the level of equilibrium. And in exam, now this is where the question comes. See, in case of a single good, what is it in case of a?
Single.
The condition of equilibrium. That means, see, when potential price and actual price both are equal. What is it? Potential price and actual price both are?
Equal.
Or else when consumer surplus is becoming what? But life cannot be so simple with ICAI. Life has to get complicated. ICAI will say, hello, boss, surprise should be there in life. Your life cannot be so simple and easy to answer. They say, whatever you are ready to pay, Allah, that is also called as marginal utility. Which utility? Marginal utility. And the price what you pay, when it is equal to marginal utility. So when price paid is equal to MU, what is it? Price paid is equal to? This is equilibrium in case of a single good. Equilibrium in case of a which good? Suppose, sir, if I am consuming two commodity, what if it is complementary like bike and petrol? If it is a two commodity, MU of the first product divided by X, I will write it here. Price of X equals to divided by price of. This is the level of equilibrium. If it is greater than two commodities, same formula, copy paste. Until MU of N number of units divided by price paid for N number of units. This is where exam question is going to come. Clear? Understood? Now, question number 12. The condition of consumer is given by MU of X by price of X equals MU of Y by how many goods is this? Two goods. Clear?
Yes,
Even from the small, chota information, the questions are going to come. Is that clear, pa?
Yes, sir.
Understood. Now there is one more information other than this equilibrium condition, like whatever I've just written. It is also there in the material. I say material also, it is there. No worries. Clear up. Now there is one more small logic. See, when we represent this table in the form of graph. Now let's say, for example, now Shiva was ready to pay 500 rupees first time. Second time he was ready to pay.
400.
Third time he was ready to pay.
200.
But all the three times it doesn't matter. He paid only
200.
200 only. Next, let's assume after 1 week his cousins will come from native. Even they want to go for same movie. This time he is like, I'm not coming. I have test. I have to study. Shashikiran will scold if I score less marks. That means he's not willing to pay. Almost his intention to pay has become like zero. What is it? It has become
0.
See, initially his intention was to pay.
500.
Next,
400.
next,
200.
next. That means his intention to pay keeps on. Clear? This is potential price, also called as MU. Just I will erase it. Okay, I will consider. Next time he said I will put only half money. Okay, 100 rupee. So MU is also called as potential price, another name. And actual price is like horizontal curve. Every time the actual price remains same. And this particular shaded region, this is the region of consumer surplus. Consumer surplus looks like a triangle. Consumer surplus looks like a
Triangle.
henceforth, consumer surplus is also called as welfare triangle. Consumer surplus is also called as what? Clear? And remember, similar concept is also there. We can connect it with one more topic which we have already done. What is the general nature of demand curve? Supply. Point where demand and supply meets together is called as equilibrium. Clear up? Now, for a time being, I will just erase supply. Does this graph look similar to any other graph which we have discussed? Any similarities are there? Which graph? Left only it is there, na? Consumer. So remember, area below demand curve and above price line. What is it? Area and above price line is called consumer. Suppose if I also write supply curve now. So this is supply curve. Area above supply curve and below price line is called producer surplus. This is consumer. Clear? This can be also a question. I'm expecting this. Earlier, now before change in syllabus, they have asked this. And there is one more small topic is there. If you just write a demand curve, and if they ask you this, area below demand curve is called total utility. What is it? Area below demand curve is called?
Total utility.
Total utility. Sir, can you teach ISO quant and ISO cost? Tomorrow, pa, chapter 3 it will come. Because similar to indifference curve and budget line it is. Clear? That's it. This is consumer surplus theory. This is where the exam question will come from, consumer surplus theory. Anyone having doubt in consumer surplus theory? Done. Chalo, next indifference curve. Now we can't give it in terms of numbers. Rather we can give only rank or preferences. See in indifference curve now, most of the questions are going to come from its characteristic features. Which one? See indifference curve, bare minimum we should consider 2 commodities. How many commodities?
2 commodities.
Bare minimum 2 commodities. See, minimum 2 commodities and we have to completely spend our money on this 2 commodity. That means no concept of savings. First of all, limited income. Which income?
Limited income.
Within that limited income, I should buy combination of how many goods?
2 goods.
That means one in x-axis, another one in y-axis. Indifference curve will be like this. Downward sloping convex curve. What is it? Downward sloping?
Convex.
Let's say product A, product B. If I have to increase the one consumption, I have to sacrifice the another consumption. So it is a downward sloping convex curve. What is it? Downward sloping?
Convex.
Okay, sir, just assume I have 100 rupees with me. Within this 100 rupee, I will buy, let's say, tea and I will buy biscuits. But after buying tea and biscuit, let's assume I bought 1 packet of biscuit and 1 cup of tea. But now I am realizing I wanted more cup of tea and less of biscuits. I didn't wanted one whole packet of biscuit. What should I do? Barter system. What is it?
Barter system.
And you can't measure it in terms of numbers. We can only give rank or preferences. What is it? Rank or? Clear? Now comes the characteristic. See, this is the general nature. Downward sloping curve from left to right, convex to the origin. But this is where exam questions will start. There are 6 characteristic features. How many?
6.
All 6 are important. See, indifference curve is downward sloping. Why it is downward sloping? Because of limited income. To increase consumption of one commodity, you need to sacrifice the consumption of another commodity. That is the reason it is downward sloping. Okay, sir, downward sloping we understood. Why it is convex? Why can't it be concave like this? Because of diminishing rate of substitution. What is it?
Diminishing rate.
Or it is also called as diminishing marginal rate of. Let me continue my same example. I have 100 rupees with me. Within that 100 rupee, I bought 1 cup of tea and 1 packet of biscuit. In that 1 packet of biscuit, there are 12 biscuits. How many biscuits?
12 biscuits.
Now I feel like, I wanted more of tea, less of biscuit. I found, let's say for example, Mukta. She agreed to give me a cup of tea and accept a packet of biscuit or some biscuits. Now I asked, I need 1 cup of tea. She said, okay, 4 biscuit. Okay, I gave. I sacrificed 4 biscuit. Now I only have how many biscuit with me?
8 biscuits.
Now I have 2 cup of tea. Now I want 1 more cup of tea. Now Shashikiran is like a teaholic, like alcoholic, teaholic. Teetotaler, teaholic. Now this time I only have 5 biscuit with me. How many biscuit did I sacrifice now?
3.
Next I want 1 more cup of tea. Now how many biscuit did I sacrifice? 1 more cup of tea.
1.
That means see, initially I sacrificed how many biscuit? Next term. Next term. Next term. That means any person for it matter, whenever he is sacrificing, his intention to sacrifice will increase going further or will it decrease? It will decrease. That is why diminishing. What is it called? So every time whenever we are sacrificing something, it will be always and always diminishing. That's the reason indifference curve is dash to the origin. Convex to the origin. It can never be concave. If it has to be concave, rate of substitution should be increasing, and it will never happen. That means first I will sacrifice 4, next to 5, next to 6, next to 7. By the way, you don't have so much of biscuits only. 4 plus 5, 9. 9 plus 6, 15. Where did you have 15 biscuits? You only had a 12 biscuits. So remember, rate of substitution will always and always, what is it? Will be dash in nature. That's the reason indifference curve is also called as law of diminishing rate of substitution. Clear? And there are two scenarios. Only and only in these two scenarios, indifference curve will not be convex. What is it? Only in these two scenarios, indifference curve will not be convex. Which are those two scenarios? Number one, perfect substitutes. Which substitutes? Indifference curve will be downward sloping linear curve. Downward sloping? Linear. Perfect complementary, it will be L-shaped curve. Perfect complementary will be? Perfect substitutes will be? Downward sloping linear curve. But the general nature, always and always, the general nature of indifference curve will be downward sloping dash to the origin. Only in two scenarios it will not be convex. Which are those two scenarios? Number one. Perfect substitutes. Number two. Perfect complementary. In perfect complementary, what is the nature of indifference curve? L-shaped curve. In perfect substitutes, what is the nature of the curve? Downward sloping linear curve. What is the downward sloping? Understood? Clear? Only these are the two scenarios. Sir, I have difficulty in differentiating between indifference curve and budget line. Okay, don't worry, I will teach you now. Okay, done? Next, point number 3. See, point number 1, indifference curve is downward sloping from left to right. Indifference curve is dash to the origin, convex to the origin. Next, point number 3. There can be more than one indifference curve in the graph. If there is more than one indifference curve in the graph, we call it as a... And whichever indifference curve is away from the origin, what is it? Or completely towards which side? Right hand side. That will give higher level of satisfaction. That will give which level of satisfaction? Wait, the exam question has only come from that area. I will show. Same to same graph they have asked. Chapter 2. Question number 86. With reference to the following indifference map, which of the following curve represents the higher level of satisfaction? Whichever is away from the origin or whichever is completely towards the right hand side. Clear? Understood? Next. Even though there are more than one indifference curve, they should never intersect with each other. What is it? They should? Sir, why, sir? What happens if they intersect with each other? Just now we said, now whichever is away from the origin, that will give dash level of satisfaction. But observe here, before intersection, IC2 was giving higher satisfaction. Let's assume that IC2 is a 200 rupees of income. IC1 is a 100 rupees of income. But after the intersection, IC1 is giving more satisfaction. How come? Both the indifference curve are different income levels, right? How can an 100 rupee income level provide more satisfaction than the 200 rupee income level of combination of goods? This leads to misconception of point number 3. That's the reason indifference curve should never intersect. What is it? Indifference curve should? Recently, from this only the question was asked. The same graph was asked. Wait, I will show. I think Jan or May attempt. Any one it was asked. Jan attempt maybe. Yeah, Jan attempt. Consider the indifference curve given below. What you can infer about the relationship between good X and good Y. See, this is good Y, this is good X. Here, point A, intersection is happening. Should IC curve intersect with each other? No, sir. They are logically absurd. See, the relationship between good A and good Y is logically incorrect. Absurd is incorrect. So they cannot intersect like this. So from the characteristic features only, most of the questions will come from the indifference curve. Clear? So remember, indifference curve, whichever is away from the origin will give dash level of satisfaction. Higher level of satisfaction. Indifference curve should never intersect with each other. Clear? Next, indifference curve. Even though there are more than one, they may be parallel or they may. Sir, what if they are not parallel? At any one point or the other, at end they will intersect like this, na? No. Because to increase the consumption of one, you are sacrificing the consumption of point number one, limited income, na? That's the reason. It will not intersect even though if they are not parallel. See, first of all, there can be more than one. Yes, that is called indifference mark. Should they intersect? No. Should they be always parallel? No. They may be parallel or even though if they are not parallel, they will never intersect with each other. Next comes last but not the least. Indifference curve should never touch any of its axes because it is always a combination of how many good? If it is touching the y-axis, that means you are only and only consuming good B, you are not consuming. If it is touching the x-axis, you are only and only
consuming good.
We are only consuming the good B here, we are not consuming the good A. Here we are only consuming good A, we are not consuming the good B. Clear?
Yes, sir.
So it should be always combination of how many good?
2.
Is that clear? Understood? So this is indifference curve concept. And this is where characteristic feature is where we will get the most of the examination question from indifference curve. Clear? Till date 3 questions have come in past 6 attempts. In another 2 attempts, one already I showed na mu of x by mu of y, that question has come, and consumer surplus remaining questions have come. Budget line just 1 question. Till date just in the past 6 attempts just 1 question. So like this, from anywhere the questions can come. Clear? Let's go to the last topic of the day, budget. Let's continue the same example. 100 rupees I have. I need to buy product A and product B. Let's assume product A is 10 rupee, product B is 15 rupee. Now to consider what is my budget. Again, here also a combination of 2 goods, because when we are drawing a graph x-axis and y-axis, here we are not just speaking about satisfaction. So who was that? They were asking doubt here na. Shan Bhagavati. Yeah, please concentrate here. We are considering income level and price level. So in budget line, what are we considering? Income level and price level. So at the given income and at the given price of the goods and services, how much goods and services we can buy? In what combination we can buy? That means now I know that always a combination of how many commodity? But let's say extreme end we will identify. Suppose if I'm spending, 100 rupees becoming more, I will make it as 60 rupee for your better understanding. I will make it as 60 rupee. Let's assume I have 60 rupee. Product A is 10 rupee. How many units I can buy if I only spend on product A? 6 units. Do you agree? Next, if I buy only and only product B with the help of 60 rupees, how many units I can buy? 4 units. So I got to know the extreme end. 6 units, 4 units. Now I will connect this line. This is my budget line. Any point on this budget line, if I go and touch that will make me to spend my whole 60 rupees. Let's say I'm going and touching here. 3 units of A, 2 units of B. What is it? 3 units of A? 3 units of A. 3 into 10. How much I will spend? 30. 2 into 15. How much? 30 plus 30.
60.
Entire 60 rupees spent. Any point on the budget line, I will spend the complete money. Any point below the budget line, that means I'm also spending, I'm also saving. That is called underutilization. What is it?
Underutilization.
See, let's assume that 2 units of A, 1 unit of B. 2 unit of A, 20 rupee, 1 unit of B, 15 rupee. 20 plus 15, 35. Still 25 rupee savings, underutilization. But any point beyond budget line is not possible. What is it? Any point beyond budget line is? Is that clear? So, that is not possible with the given income level. Within that 60 rupee, let's assume I need 4 units of A and 3 units of B. 4 units of A, 40 rupee. 3 units of B is also. Do I have 85 rupees with me? That's not possible. Over exploitation, that is. Clear? Any point on the budget line. What is it? Any point?
On the budget line.
Will make me to spend the whole income. Any point below the budget line?
Save.
Any point beyond the budget line? Over exploitation. Clear? Now this budget line can also shift to RHS. It can also shift to. So what is the reason? Due to change in price, due to change in. Okay, reason for RHS. Either income of a consumer should increase, or if not, price of the product should decrease. Reason for LHS, reverse. Either income of a consumer should decrease, or else price of the product should increase. Now same to same, we have taken one example here in the class, how it will go to RHS, how it will come to LHS. But this logic is important. So when will budget line change? Due to change in price, or due to change in income, or due to change in both? What is it due to change in? See, sometimes there is no rule that prices of both the commodity has to change. Prices of any one commodity will change, other commodity will not at all change. See, in such a cases, there will be only one-sided shift. Which sided? One-sided. Now let's say product B prices are decreasing. What is it? Product B prices are? But A prices did not change. Now there is a RHS shift. Which side shift? RHS. Only and only towards the product B, not towards the product A. So this is also possible. Or sir, can it be opposite? One product price can go up, another product price can come down. Yes, possibilities are there. So let's assume this was the initial budget line. So here now, this product prices has gone down, this product prices have gone up. See, like this it can happen. So here there is a RHS shift, here there is a clear, understood. So this brings to the equilibrium concept of ordinal approach. And this first statement is actually wrong. IC curve should be tangent to budget line. It is not budget line tangent to IC. IC should be tangent to. That means there are more than one indifference curve. Na? That indifference curve should be tangent with budget line. Tangent means it should just touch. What is it? It should not cut. Here observe, in IC1 it is cutting. But in IC2 it is just touching. Can you observe here? And at the point of this equilibrium, MRS should be equal. That means both the commodities are having equal sacrificing ratio. Which ratio?
Equal sacrificing ratio.
This is ordinal approach equilibrium. From this also the question will come in exam. Clear? Understood? So now let me ask you the questions only from equilibrium concept. LDMU equilibrium. What is LDMU equilibrium? TU maximum MU. In consumer surplus theory, there are three equilibriums. Single goods, price equal to, in case of two commodity, MU of X by price of X equals MU of Y by price of Y. More than two commodities, same formula until MU of N by price of N. Clear? Now, in ordinal approach, we didn't have a separate equilibrium under the budget line, separate equilibrium under indifference curve, both put together. See here, IC should be tangent to budget line. It should be interchanged, these two. IC should be tangent to budget line. At the point of tangency, dash should be equal. MRS or ROS should be equal. Rate of substitution should be equal. We have to consume in the equal proportion. Which proportion? By this entire chapter 2 revision comes to an clear. So we'll go to the exam questions. Chapter 1 also will finish it off and then we'll wind up for the day. So tomorrow, still chapter 5 we could not able to finish off today. That's fine. So tomorrow we'll go with 3, 4 and 5. We'll finish it off. Clear? So revise and come. See what happens, when you're coming to this class, already your first round of revision is done. Whatever doubts you have, whatever you're unable to understand, whatever MCQs you have, let me say not having a clarity, that you should come up with. That you should be doing from tomorrow. Is that clear? Chalo, we will go to the MCQs. We will finish it off. Okay, when you find chapter 1 also, stop me there. Chapter 1 also we didn't do. Since it was easy questions. Already done, taken care. Income elasticity, taken care. Conspicuous, taken care. Which of the following feature does not relates to them? By the way, what are the central problems of economy? For whom to produce? What provision has to be made for growth and development? Did we had when to produce? No. Next, which of the following areas are related to consumer behavior, Factor pricing, behavior of the firm. These are micro. External value of currency, exchange rate, that belongs to macro. Consumer sovereignty is the feature. Which of the following economic system? That is capitalistic economy. Mixed economy in the real world comprises of both market as well as. Okay, the right to work is guaranteed, but the choice of occupation gets restricted. Select the correct option which relates to the above statement. Absence of customer choice. Where is that? Clear. See, 1, 2, 3, 4, 5. So, how many questions? So, 5 questions are going to come from the chapter 1. That's it. Next. We'll go from the first. Okay, arc method done, unitary done, point method done, this also done. Done, already taken care. Cross elasticity done. Chapter 1, laissez-faire approach. What do you mean by that? Very minimal intervention of the government or regulations of an economic activity. Done. Consumer surplus. What we are ready to pay over what we. Movie ticket example. Next, predominance of bureaucracy and resulting in inefficiency and delay. Bureaucracy, that means hierarchy system and all, MP, MLA, that comes in socialistic economy the most. Match the following. Capitalistic, high degree of socialistic economy, also called as command economy. Mixed economy encourages entrepreneurship and risk taking. Which of the following is a normative statement? Normative means which gives suggestions. In this here, the government, see, I said now every time the word should only is not a normative. It depends upon the statement. Whatever statement is given over their explanation here, government should provide health care for. This is a suggestion given. What is it? Next, which of the following is not covered in? That comes under macroeconomics. Next, precedent of property rights over human rights. We don't have human rights. What do we have? Right to property, property rights. Where is it? Capitalistic economy. This is one more question. See, I forgot to say this. Why I usually ask my students to read ICM material like a newspaper is, I said now some 5 questions in every paper from nook and corner they will pick questions. See, some economists now, they would have given their opinions. And it is there. For example, Schumpeter, in chapter 3 also there are some concepts like this relationship between input and output. See, like this, there are certain concepts. Some economists have given their point of view, their opinions. Even that is given in a bold letter. Which letter? Bold. In the ICM material, in bold letters, they would have given some information. Now, at least read that. From that, now, one or the other question in out of all the 10 chapters, now, any one question from that bold letters they are asking. And this is one such question. See, according to Pigu, modern business activities are based on anticipation and expectations of the, that means consumer sovereignty concept. Whatever they are expecting, whatever they are anticipating, we are going to perform as per that. That is modern economic system. Which economic system? Modern. This is as per AC Pigu. Clear up. And he was the person who also said that, not AC Pigu, Robertson, economists must be neutral between ends. What is it? Economists must be neutral. That's it. Next, September 25. See here. An ice cream shop is planning to expand its business. Which shop? Ice cream company. Only that one company, na? One company, micro or macro? Micro. Only that one company is planning to expand. Before making the decision, it studies various economic factors such as consumer preferences, pricing, employee wages, ideal location. See, after leaving all this pricing, employee wages, ideal location and all, now people gets confused. Or macro. By the way, for which company? Is it for whole ice cream industry? No. It is only for one. So, micro economics. Next up, which of the following statement is true in respect to the
Socialistic.
They are asking which is about which economy?
Socialistic.
Relatively inequality of income distribution. No, socialistic is equal distribution. Freedom from hunger is guaranteed, but consumer sovereignty gets. Yes. Next, market forces have a major role. Price mechanism, planning mechanism, nothing. Full CPA. Next, buyers will ultimately determine. Consumer sovereignty totally restricted. Option B is the answer. This one, statement 2 is the answer. Next, the important feature of.
Mixed economy, both private and public work.
See, I said now most question comes from unit 2, unit 2, unit 2. See, 1, 2, 3, 4. 4 questions. The consumer is in.
Equilibrium question.
At the point where price line, by the way, where did we study this price line? Budget line, budget line. Price line is also called as.
Budget line.
Price line is tangent with which curve?
Indifferent.
Budget line and price, that is by price line are one and the same. So do not get confused. Next up. How does the increase in income? Okay, already we have done this. Okay, taken care. The concept of consumer surplus is closely related to below the demand curve, above the price line. Which concept? The slope of the dash curve is determined by the of how many goods? Based on their dash ratio. See, 100 rupees I have, product A, product B, based on this price ratio, na? We have to mark, we have to decide the slope. That's it. Next, May 25. Taken care, taken care, taken care. The rate at which consumer is prepared to dash one commodity to another commodity. What is that rate of exchange? Rate of substitution, or also called as another name of rate of substitution. I said the indifference curve is dash to the origin, convex to the origin. Why it is always convex to the origin? Diminishing rate of, or also called as diminishing marginal rate of substitution. Done, taken care, taken care, taken care, taken care, taken care, taken care. Command economy, another name. Which of the following is not correct about the business economics with reference to the I said now, economics is a applied branch. Business economics is applied branch. Economics is a broader one. Inside that comes a business economics. This is not true. Next. Microeconomic theory does not include demand analysis, forecasting, product cost, inventory management. All three are micro, but stages of business cycle is macro. Scope of business economics, I have shown you now. I say material, that one. Which of the following is not a merit of a? They are asking not a. Is it collective ownership? Everyone is owning the property. Capitalistic economy, private people will own. Collective ownership comes in socialistic, where? So collective ownership is not the one. That's it. Buyers will ultimately determine which goods and services will be produced and in what quantity. That is called as. Which of the following is not one of the four basic problems? What to produce, for whom to produce, what provision? Did we had something called as where to produce? Next, normative statement. Once again, see, this is what my students now, full intelligent fellow, sir, whenever should comes, that is on, not every time. In my classroom discussion papers, I have given twisters there also. Next, which of the following does not describe the nature of? It is normative in nature. Yes, it gives suggestions, taking right decisions at right time. It is an art. Yes, it also incorporates element of macro. No, it doesn't incorporate macro. It incorporates micro, but it is abstract and only theoretical. No, both are answers actually. B as well as D, both are answers. But when you compare it, definitely that is not theoretical. It is pragmatic in approach. Which approach?
Pragmatic.
But here it incorporates elements of. They have given analysis, not economics. Microeconomics, macroeconomics is what we speak about. But here they have spoken about analysis. But we may consider the macroeconomic, but not for a decision making. What is it? Not for a? For a decision making, what do we consider? Micro. So that is why we are taking option B, not option D. Excess of price which customer is willing to pay rather than go. Consumer, already this taken care. Done. That's it. By this, we are done for the day. Clear? All chapters, but when I see the questions, I am unable to answer it. See, first when you are, let's say, who is that? Prime P3R2. Even names are weird, man. Here. See, first understand why you are making it wrong. See, don't go with impulsive answering and all. Only when you know the answer, you attend it. If at all you don't do this inky pinky ponky and all, it will not work. Many of them will do that. Even though if they don't know, they will try to attend it. That is the danger. That is the disaster. Don't do that. See, whenever you feel like that, Allah, before answering it, open your book, read the concept, refer which concept is that, and then mark the answer for initial few questions. Okay. Let's get started. Okay. So first we will go with the theory of cost and later we will get started with the theory of production. So in the theory of cost, there are mainly 12 types of cost, but out of the 12, 8 are most important. How many are most important? 8 are most important. The very first one is fixed cost, second one is variable cost, third one is total cost, fourth one is average cost, and this is the biggest one. This is where most of the exam questions are going to be asked. The numerical problem which you will be expecting, AFC, AVC calculation. This is where we are going to get the questions from, and also next we will discuss about marginal, opportunity and sunk, accounting and economic cost, and incremental cost. So these are the 8 important types. Along with that, another 4 more types, even I shall be discussing about them. Let us get started without wasting the time. Now let's say Shashikiran. Now I'm a bench manufacturer. Now I have taken this premises for a rent. Let's say every single month in this premises, let's say this is the space which I have taken for a rent. Assume I'm paying a rent of 10,000 rupees every single month. Now, whether I produce single unit, whether I produce 10 units, 100 units, 1000 units, 1 lakh unit, it doesn't matter. Or whether I produce or whether I don't produce, it doesn't matter. Every single month, don't you think I should pay this rent? Yes or no? I have to pay the rent. So, fixed expenses are unavoidable expenses. Which expenses? Unavoidable expenses which remains unchanged irrespective of output. Whether I am producing or not, it doesn't matter. Even though when my output is 0, still I have to pay the rent of how much? 10,000 rupees. When I produce more units or whether I produce less units, irrespective of output, fixed cost is going to remain same. Is that clear? And the fixed cost, the graph is going to be the horizontal curve. See, TFC, the horizontal curve, it is parallel to x-axis. Parallel to which axis? But the variable cost, we can take up an example of raw material. Let's say to produce one single bench, my raw material expenses is 100 rupees. What is it? Raw material expenses? Suppose if I'm producing 10 benches, my raw material expenses 1000. To produce 100 benches, raw material expenses is 10,000. To produce 1000 units, my raw material expenses are 1 lakh rupee. Like this. When I'm producing more units, my raw material expenses are also increasing. Those expenses which is dependent on output. What is it? Which is dependent on? That is called as variable cost. Which cost is that? So remember, whenever output is increasing, variable cost will also increase. Whenever output is decreasing, variable cost will also. In variable cost, there are 2 elements there. One is proportionate change equal. Second one is proportionate change unequal. That means for every additional unit, every extra unit, variable cost will always remain the same. Like the example which I just took it now. See, for 1 unit, how much is the raw material cost? 100. So for 10 units, it was 1000. That means for every single unit, 100, 100, 100 is getting added. So this proportionate changes is always equal. It doesn't mean that every time it should be always equal like this. It may be equal or it may not be equal also. See here, to produce one single unit, 100 rupee. 2 units, 200. 3 units, 4 units, 5 units, 500. That means every single time for one more extra unit what we are producing, 100 rupees is only the variable cost. But in general, every time it will not always be the same. Even it can be unequal. So the proportionate change is not equal. See, first unit 100, second unit 220, it is not 200. Third unit 380, it is not 300. Fourth unit It is not 400. So when proportionate change is not equal, remember variable cost will be inverted S in shape. What S in shape? The reason for this inverted S in shape is due to law of returns to scale. That is production function under long run. What is it? Production function under? And we will also connect this in theory of production. Production function has of two types, short run and long run. Production function is called as law of returns to scale. Short run production function is called as law of variable. And law of returns to scale, there are three stages. Which are those three stages? IRS, CRS, DRS. In IRS, output will increase more proportion. In CRS, output will increase same proportion. In DRS, output will increase. Here, the relationship is between input and output. So, in case of IRS, CRS and DRS, relation is always between input and output. Yesterday, if you remember, from customer point of view, we studied the same concept. More proportion means relatively elastic. Less proportion means relatively inelastic. Same proportion means unitary elastic. Now, same concept, but from the producer point of view, we are understanding from input and output perspective. When proportionate change is unequal, variable cost will be dash in shape, inverted S in shape. Suppose if proportionate change is equal, then it will be upward sloping straight line curve. The general nature of variable cost is inverted S in shape. What is the general nature? Is that clear? And remember, when we are not even producing anything, variable cost will be zero. Only and only when we produce a commodity, then only we will be having a variable cost. Clear? And other than this, there is one more area where usually the question keeps on appearing. That is types of variable cost. What is it? There are two types of variable cost. Semi-variable cost and stair-step variable cost. What are the two types? Semi-variable cost and stair-step variable cost. In case of semi-variable, up to some extent cost will be fixed. Like usually I will give an example of auto rickshaw in Bangalore. See, in Bangalore we had a culture earlier. Now even Bangalore auto rickshaw culture has been spoiled. Ola, Uber, Rapido. Before now they used to turn on the meter. According to the meter, let's say if you travel first to 2 kilometers, you should pay 35 rupees. How much you should pay? It doesn't matter whether you get down in one road, 1 kilometer, just half a kilometer, it does not matter. First to 2 kilometers, it is fixed, 35 rupees. If you travel beyond this 2 kilometers, then variable. Depending upon the distance traveled, there will be variable. Up to some extent, cost will be fixed, beyond which it will be variable. Beyond which it will be. That is called as semi-variable cost. Which variable cost? Is that clear? Next comes stair-step variable cost. From this, once the examination question has been asked, every additional expenditure is going to be uniform. So what is it? Let's say, for example, for every 40 students, what is it? For every, we will appoint one teacher. Suppose, sir, if we have 40 first student, do we need second teacher? Yes. As per your logic, for every 40 students, one teacher. Let's say for one teacher, we are paying 50,000 salary. That means once we get a 41st student, we need to appoint a second teacher for our 50 plus 50. Total how much now? 1 lakh. And there is one beautiful question here. Cost remains constant up to certain extent. Cost remains constant up to? Suddenly jumps to the new height. What is that? Suddenly jumps to the? Which type of cost is this? Stair-step variable cost. Which variable cost? See, you would have seen in advertisements and all. We have a limited number of seats only. We don't take more number of students. Like 40 students in one single batch. That's it. That means for every 40 students, we will appoint one teacher. If 41st student comes, second teacher. Sir, if 81st student comes, third teacher. That means for every 40 students, one teacher. Automatically, when you are appointing a second teacher salary will also come into picture. Na? So, every additional expenses, that means for every teacher, salary remains the same. That is 50,000. Let's assume 50,000 only. But for every time you appoint a teacher, that expenditure is going to remain uniform. Expenditure is going to remain. But all of a sudden cost will go up. See, up to 40 students, the cost was 50,000 for a teacher. Once 41st student was admitted, automatically teacher cost became 1 lakh. It became what? Up to certain extent cost was fixed. All of a sudden goes to new height. What is it? All of a sudden goes to? That is in case of stair-step variable cost. Which variable cost? Now, this is variable cost concept. Next comes total cost. And there is one beautiful logic here. This is where the exam questions will come from and usually students will go wrong. What did I say? Whether I produce or whether I don't produce, it doesn't matter. Fixed cost is going to remain same. It will be unchanged. See, whether I'm producing 0, 10, 20, 30, 40, 50, doesn't matter. Fixed cost is 100 rupee. How much is fixed cost? But see the variable cost. It is changing. Is proportionate change same? 10 units, 100, 20 units, 200. Is it like that? No, 220. 30 units, 380. It is not 300. 40 units, 550. It is not 400. Proportionate change equal or unequal? Unequal means variable cost curve is dash in shape. Inverted S in shape. But variable cost curve starts from the origin, because only when we produce something, that is when we will be having a variable cost. When we don't even produce anything, we don't have a variable cost. But fixed cost is going to start from the point where in the particular y-axis, that is going to remain fixed. Like rental expenditure, salary expenditure, whether we produce or don't produce, it doesn't matter. Every month we should pay the salary. Every month we should pay the rent to the landlord. So rental expenses will be horizontal curve. Variable cost starts from origin, but total cost starts from the point where TFC starts. What is it? Total cost starts from the point where TFC starts. Or why? How it is? Now observe. Total cost formula. Which cost formula? Total fixed cost plus total variable cost. This is the formula of total cost. As per the formula, when we are not even producing anything, fixed cost is 100 rupee plus variable cost is 0. 100 plus 0. Answer 100. So whenever output is 0, what is it? When output is output is 0, TFC is equal to TC. What is it? TFC is equal to? Is that clear? Sir, can you take classes in Hindi? If I teach in Hindi, you will forget your Hindi. I just know 2-3 words in Hindi, that's it. Nothing beyond that. Entire micro today. Yes, micro today it will get over. Wait, let me see the chat box here. Okay, chalo fine. Okay, fine. Have a look here. Next, 100 plus 100. Next up. Next up. Next up. Next up. Is that clear? So observe, even TC is not in an equal proportion. Why? Because we are just adding this fixed cost along with the variable cost, and fixed cost is remaining the same. That's the reason TC will also be inverted S in shape, but TC starts from where? TC starts from the point where TFC starts. So this logic is important. In numerical problem, this logic will be useful. They will not give you the variables of fixed cost. They will just give you the value of TC when output is 0. When output is 0, whatever is going to be the fixed cost, that itself is going to be the total cost. Is that clear? Understood? Okay. Next comes the most important element of your theory of cost, numerical problem. See, ICA, they have this one pattern. Usually they will ask numericals from this AFC and AVC. From where do they ask the question from? If not, if they want to donate your marks, donate marks for you guys, they will ask you to calculate TP, AP, MP. They will give one table. They will ask you to calculate what? TP, AP, MP. If not, if that numerical doesn't come, then the numerical comes for calculation of AFC and AVC. Now understand, what is average cost? Cost incurred to produce every single unit. What is it? Cost incurred to produce? Or per unit of output. Now let's say, for example, now Shashikiran, now I am manufacturing 100 benches. How many benches? 100 benches. Let's say, for example, to produce 100 benches, 100 rupee was one single unit raw material cost. Now for 100 benches, it will become 10,000 rupee. This is variable cost. What is it? And another 10,000 was fixed cost, rental expenses. In my example, this is TFC. So what is the total cost here? 20,000. So how many number of units am I producing? So average cost as per the formula, total cost divided by quantity. So this is going to be 20,000 divided by 100. So per unit production cost is how much? 200. This is called average cost. Now in this average cost, we will split that into two kinds. So average cost has been split into two elements or two kinds. One is average fixed cost. The second one is simple logic. In every single unit, we said now 200 rupees is my per unit production cost. In this 200, how much of fixed cost element is there and how much of variable cost element is there? Now what is the formula for the average cost? TC by Q. Same way, AFC will be TVC by Q. Sorry. 1 second. This will be TFC by Q, and AVC will be TVC by Q. Clear? That means we need to add up this both in order to get the AC. So there is one more formula for AC. AC will be AFC plus AVC. What is it? AFC plus? Clear? Now, most of the numericals are coming from this area. This is where the numerical comes. Let me show that. Chapter 3, 1 second. Wait. Have a look here. 17th question. A firm produces 5 units of output at an average fixed cost of 4 rupees per unit. What is it? Firm is producing how many units? 5 units. What is the average fixed cost? In per unit, fixed cost is 4 rupee. They are producing 5 units. So what is 5 into 4? 5 into 4, this is 20. What is this 20 value? This is called as TFC. What is the total fixed cost? Clear? Next up, for producing how many units? Their average cost, AC, they are speaking about the AC, average cost per unit cost is 7 rupees per unit. 7 rupees for how many units? 10. Now 7 rupee for 10 units. So this will become how much? So this is total cost. Now what are they asking us to calculate? They are asking us to calculate for producing. Now simple, we have total cost, we have fixed cost. Fixed cost remains the same whether you produce 5 units or whether you produce 10 units. Now simple, 20 rupees you have to remove from the 70 rupee. What is 70 minus 20? Divided by 10. What is 50 by 10? That's it. That is the answer. Got it? So most of the times the questions are going to come from AFC and AVC in the calculation part. Wait, I will show. See, if not like this. This is like jackpot.
Average cost is price everywhere.
Average selling price is different. Average cost is a cost of producing every single unit. Per unit cost. Clear? Selling price is called average revenue, AR curve. Chapter 4 it will come. Don't get confused. Average cost means what is the cost to produce every single unit. Average revenue, AR curve. That is referred as a selling price. AR is nothing but selling price. P. That comes in chapter 4. I will explain it today only. Clear? So remember, usually this is how from the theory of production also the question comes. Like this, if the question comes na jackpot 2 to 3 mark. See here, 1 mark jackpot. Here another 2 mark for jackpot. Literally donation of marks. This is how the numerical comes. I will show the next question paper. You only solve it. See here, TPAP, MP. See, either they will give TPAP, MP or if, this one. Solve this. Observe there. Output is what? 0. Okay. What are they asking us to calculate? Average fixed cost. Average fixed cost formula is in this, what is the total fixed cost? 200. How? When output is 0, dash is equals to dash. TC is equals to TFC. That means this 200 is not just a total cost. It is also called as a total fixed cost. Simple. 200 divided by 2. What is 200 by 2? And now this is interesting. Many of them will get confused here. Even after teaching, most of them, even before going to exam, one day before the exam, my students will call up, sir, what is that returns in the TVC calculation, sir? See, simple logic. Remember this tortoise shell. This is called returns. What is it called? And this is called as cost. Remember this logic. Whenever cost is decreasing, returns will be increasing. Cost is decreasing. Whenever cost is minimum, your benefits, that is returns, that will be maximum. When cost starts increasing, return starts decreasing. See this logic, one small common sense logic you should be remembering. Clear up? Now, look at this. Diminishing marginal returns. What is it? Diminishing? That means your marginal returns, when will it start diminishing? They are asking marginal concept. Marginal means one more extra, one more additional. For this, we should identify the marginal cost here. Which cost? Clear? And moreover, output is continuous. 0, 1, 2, 3, 4, 5. Total 2 formulas are there. Output continuous, and when output is not? When output is continuous, present minus Previous. Now calculate marginal cost here. 310 minus 200. 410 minus 310. 500 minus 410. Okay. 604 minus 500. Now observe. Here it was decreasing. Cost is decreasing. Here cost started to increase. Now same to same. Observe. When cost starts to increase, return starts to. They're asking question from returns. But question explanation is given in the cost. By explaining the cost, you should find the answer of returns. It's a reverse opposite there. When cost goes up, returns will come down. Is that clear?
Yes.
So automatically they are asking when will the returns decrease? When will the? You tell me when will the returns decrease? When cost starts increases. Now you tell me here where did the cost started increasing? See 110, 100, 90. Where did the cost increase? Between 3 and 4. Answer is 3 and 4. Got it? Understood? This is how literally the easy questions are. Wait, there is one more question in the same attempt only. You only calculate that. Marginal returns. I have done this in class. Tortoiseshell concept. Shortcut. You only solve this. Easy question this is. See here also easy. This is damn easy question. Appa, I hope I'm expecting that you guys have a conceptual knowledge in the theory of cost, and straight away I'm taking with the exam questions, and wherever the questions are going to come, I'm straight away hitting that area. If anyone has any particular concept as an issue, let me know. I will explain that concept and then I will go further. Please solve the sum. That is what I'm doing now. Which chapters did I take yesterday? Yesterday I finished with chapter 1 and chapter 2. Chapter 2 completely done. Demand, supply, consumer behavior. Such a silly question, man. They're asking us to calculate what? For which unit? 20th unit variable cost. 320 is the total cost. What is the fixed cost here? So 320 minus 100. 220. 220 divided by 20. How much is 220 by 20? Next, between 10 and 20, what will be the? By the way, output, is it continuous? No. If output is not continuous, now what is the formula? Delta TC by delta Q. So between these two, even quantity difference is 10. Here the unit difference is 100 by 10. 10. Got it? Okay, next attempt. See, in this attempt they have given TP, AP, MP. See, it is every alternative attempts. One attempt TP, AP, MP calculation. One attempt AFC, AVC calculation. One attempt TP, AP, MP calculation. One attempt AFC, AVC. Sometimes if you are lucky enough, they will ask both together. Last time I don't know whether they have asked that like that or not. TP, AP, MP has come. Chapter 3. Calculate. This is Jan 26 attempt paper. Average fixed cost of third unit. 540 is the total cost. They are asking fixed cost. Fixed cost is only. So 270 divided by 3. How much is 270 by 3? 90. Next, average variable cost. What are they asking? Of a fourth unit. 610 is the total cost. So 610 minus 270. How much? 340. So 340 divided by 4. 340 by 4. 85. Hardly it takes us 10 to 20 seconds to solve these questions. It will not take beyond that. That is what I'm saying. It's not about sitting and reading hours together. You should understand the question paper first. From which area the questions are coming. Repeatedly, where exactly the questions have been asked for. First, you should cover those things. Once you are automatically done with those areas most repeatedly as the common question area, automatically you know, okay boss, this is where 40 to 50 marks will be in your hand. See, repeatedly, if you analyze the question papers now, if you analyze the past 6 attempts, 5 attempts paper, if you properly analyze it, 40 to 50 marks is always in your hand. That is what I'm saying. In economics, passing is not at all difficult. Passing is damn easy. 50 scoring is damn easy. After that, your efforts matters, your preparation, MCQ, whatever you have done. That is where your capacity comes in. 60, 70, 80, 90, 95, 96, 98. That is your capacity. Okay, chalo, let's go to the next one. May attempt. I think in May attempt, TP, AP, MP calculation. But this question was beautiful in the recent attempt. This was little bouncer. They have merged the chapter 3 and chapter 4. Supernormal profit also they have merged here. That I will explain it anyhow. Two questions. See, both the questions they have asked, but both of them are common sense questions only. Chapter 3. No. Even they have asked, man, not TP, AP, MP. Even they have asked TFC, TVC is also there. Calculate. See, 41, 42, 43. 3 questions are there. See, every attempt you have a question, either TP, AP, MP calculation or either TFC, TVC calculation. That is a repeated question it is. In every attempt it is there. See there, what are they asking us to calculate? Calculate them of 5th unit. 5th unit. See, 0, 1, 2, 3, 4, 5. Output is continuous. So they're asking us to calculate what? One more common sense. MC changes due to change in dash. Variable cost. See, as per the formula, TCN minus TC. For that, I need not to identify TC also because marginal cost always changes only because of variable. Only because of. Okay, listen, 1 second. Let's take up this example. I'm producing, let's say for example, now 100 benches. How many benches? 100. Let's assume that I have an order size of producing 101 bench. What is it? Order size for producing? 101. Now let's say Shiva is my customer. He will come and say, Shashikiran sir, I need 101 benches. He's little senti about this number. Whenever he goes to temple, he will put 101 rupee to undi. Whenever he buys something, he will buy 101 units. Everywhere he will buy 101 units. He has ordered 101 units. But by mistake, my employees are producing 100 benches. So they have produced 100 benches. Total cost is 20,000. Per unit production cost is how much? 200. How much they have produced? 100. But actual order size is? Not 100. Now you tell me, to produce this one more extra bench. One more? Extra. What will be my cost? 200. Stupidity. Only 100. Why 200? 200 is average cost, na? Why will I pay rent once again? Now, what did I say? I have taken a premises for rent. What is my rental expenses every single month? 10,000. To produce one bench, what was my raw material cost? To produce 10 benches, what was my raw material cost? To produce 100 benches, what was my raw material cost? 10,000. See, already I have produced 100 benches. Now, 10,000 is a raw material expenses. Another 10,000 was the rental expenses. 10 plus 10. For how many? 100. So, 20 divided by 100, 200. This is AC. Now, when I am producing one more extra bench, what is it? One more? I will only incur this 100 rupee. Na? Why will I once again pay rent? I will not pay the rent once again. I will only just incur which cost? This is called marginal. One more extra, one more additional. So marginal cost changes only due to change in dash cost. That's it. Common sense. That is what I'm saying. Here I need not to add this both. They are asking for 5th, na? We will add this both. We will also add this both. Anyhow, fixed cost is same, na? Just the difference between these two is variable cost. What is difference between 110 and 118? Very difficult question this was. Very, very difficult question. Next, what is the average variable cost of? 3rd unit. Now, 3rd unit average variable cost. For me, I just need a total variable cost. What is the variable cost? 100. 100 divided by 3. This is the even more difficult question. Next, calculate the average total cost. ATC is nothing but AC only. Clear? Average total cost of 4th unit. So, 4th unit. Average total cost they are asking. AC. So, you should add this both. So, it is 200 and divided by 4. What is 210 by 4? Literally 3 marks for free of cost. Clear? Sir, can you explain the tortoiseshell concept once again? Okay, there are 2 tortoiseshell concepts. I will explain both together. Lakshi, wait, I will explain both together. Clear? Understood? But this is the most repeated question in your exam. AFC, AVC calculation. Which calculation? Anyone having any doubt in the conceptual clarity of AFC and conceptual clarity of AFC and AVC? Why AVC is J in shape? Due to law of variable proportion, that is production function under SIR, SDR, SNR. I hope you guys have studied this. Anyone having conceptual doubts in any of these main topics? Okay, here in one of the attempt, they have asked one beautiful question out of this graph. See, in this graph, MC curve is missing. MC curve will come like this. I haven't drawn the MC curve. In my class, usually I will keep it separate. If I mix everything together, full tarism in per. They don't understand. So MC curve, I have kept it separate. Here the MC curve should also come. Wait 1 second. Let me draw MC. Yeah. See, this is MC. MC curve will cut AVC and AC from below and minimum. What is it? MC curve will cut AVC and AC from below and minimum. That logic you should be knowing. MC will always cut dash and dash from below and minimum. AVC and AC from below and minimum. Clear? There is one more question. Beautiful question they have asked. Now let me show the question. Or let me say the question. You only answer me. At the higher level of output. Which level of output? Average variable cost and average total cost is coming closer. Why? At the higher level of output, average variable cost and average cost is coming closer. Why? At the higher level of output. Wait, let me show that question only. Where is that question? Yep. This is the question. See there? September 2024 attempt paper. At the higher level of average total cost and average variable cost curve are coming closer. Why? Why are they coming closer at the higher level of output? At this higher level of output, why is that AVC and AC coming closer? When we produce beyond this level, that is when AC is minimum. What is it? And AVC will become equal to AFC. This is what we call certain point. What do we call it as? Certain point. And this is where every manufacturer wishes to produce. He will never try to go beyond this level. If at all we try to produce beyond this Q1, that is beyond SDR level. Beyond which level? Yeah. SDR level. Now what happens is fixed cost will no doubt decrease, but it will decrease at a lesser proportion like decimal 0.1, 0.01. But variable cost starts increasing faster. In every single unit, that is in average cost, every single unit, I said 200 rupees is there. In this 200 rupee AFC component is also there. AVC component. Just assume AFC component is just 10 rupee. AVC component is 190. That means in this per unit, fixed cost proportion is very less. Variable cost proportion is very. That is the reason AVC is coming closer to AC. That is the answer there. See, average fixed cost accounts relatively smaller percentage of average total cost. This was little tricky. Not even tough. What is it? Little tricky. That's it. And there is one more type of question which gets repeatedly been asked. That is also from our tortoise shell. Relationship between AP, MP, AC, MC. What is it? Relationship between AP, MP, AC. I have taught one shortcut in the class. So this concept is called rate of increase and rate of decrease. What is it? Rate of increase and? Now remember, this below portion is a AC curve. Above portion is a AP curve. Clear? And we know that MC cuts AC from where? Below and minimum. So when AC is minimum, AC is equals to MC. We know the logic. Anyone having doubt in this? Next, observe. Whenever AC is decreasing, what is it? Whenever AC is? AC will decrease faster than MC. AC will decrease faster than? Next, whenever AC is increasing, MC will increase faster than AC. The rate of increase in marginal cost is greater than average cost whenever average cost is increasing. Let's take one fictitious example for your better understanding. AC curve and MC curve. See, whenever AC is decreasing, let's say 20, 16, 10, it will be 4. This will be like 20, 18, 14, 10. So which is decreasing faster? Which curve is decreasing faster here? AC is decreasing faster. Do you agree? See, that is what. Whenever AC is reducing, AC decreases faster than comparing to MC. That is what the logic here. Whenever AC is minimum, AC will be equal to. But when AC is increasing, dash increases faster. Clear? Now, let me go to AP curve, the above one. When AP is increasing, MP will increase faster than. Next, when AP is maximum, AP will be equal to MP. Next, this is where you will go wrong. When when AP is decreasing, what is it? AP is?
Decreasing.
MP will only decrease faster than AP. Only one place we should be careful. That is when AC decreasing. That's it. Only and only when AC decreasing, average is greater than marginal. What is greater than marginal? In remaining three corners, marginal is always greater than average. Marginal is always greater than. That's it. This is the shortcut. Remember, remaining three corners, marginal, whether product or cost, I'm just calling it as marginal. Marginal is greater than average in remaining three corners. Only one area we should be careful. Which is that one area? AC decreasing. Which decreasing?
AC decreasing.
Only that one area alone we have to be careful, and from this tortoise shell questions will come. See, there are two types of tortoise shell question. One, cost and returns tortoise shell. This is the question. Or else, relationship between APMP, relationship between ACMC. What is it? Relationship between AP and MP. That is above portion. Below portion is relationship between AC and MC. This is where the question will also come. Sir, is studying MCQ is enough, or students should get clarity about? First, you should have a conceptual clarity. Rajendra, we are assuming that, we are believing that you have a conceptual clarity. There is a revision going on here from exam perspective. Yesterday, the very first day, I asked the students, like whoever is attending in front of me, like how do you need? Even the online students and YouTube live. As per their recommendation, we are having main important concepts which comes repeatedly in the exam, and also main topics. We are brushing up everything with PYQs. Minimum 6 attempts. Past 6 attempts, PYPs. I have difficulty in understanding LAC and SAC. We will do that. Next, that is what we are going to do it. Clear? Any doubts in any of this? This is where the questions will come from the next area. I will show. When we are solving MCQ, you will also find the MCQs of this tortoise shell questions. Clear? Okay. Now, another confusing area where most of them will have is this LAC and. See, simple concept. Here, 90% of the chances the questions are going to come in the most easiest way. They don't complicate here. They will ask you the alternative names of LAC and alternative names of SAC. LAC curve is also called as planning curve, least cost combination curve, envelope curve. LAC curve has 3 names. SAC curve is just having 1 name. What is that SAC curve is also called? Most of the time this is the repeated question. Plant curve is also referred as SAC. Planning curve is referred as LAC or envelope curve. Clear up? Next, when we are combining both together, observe this LAC curve is always a tangent. This black color dotted lines are there now. This black color dots on the line. This is tangent point. LAC is always a tangent to all the SAC. That means infinite SAC. But initially, what is it? There will be economies of scale. What will be there? Economies of scale. That's the reason LAC is tangent to SAC towards left side or decreasing side. Left side or? That you should remember. That is initially. The questions will also come like this. Initially when output increases. What is it? Initially when? That means this level, na? Initially, this x-axis represents the quantity output. Initially when output increases, cost decreases. That is due to dash. Economies of scale. During economies of scale, LAC is tangent to SAC towards which side? Left side or decreasing side? Which side? Left side or decreasing side. And this economies of scale will exist until least cost combination or optimum scale of plant. See, this is the level, point M. At this point M, LAC, SAC, both are tangent at its minimum. What is it? Both are tangent at its. See, only and only at this SAC4. Even SAC4 minimum point and LAC curves minimum point. At the both minimum point, they are tangent with each other. And that is only and only happening in SAC4. It is not happening in 1, 2, 3, 5, 6, 7, anywhere. Only in SAC4. LAC, SAC, both are tangent at its minimum point. Both are tangent at its. And this is what we call as optimum scale of plant. What is it? Or least cost point. What is it? Until this least cost point, we have economies of scale. Beyond that, we will be having diseconomies of scale. What do we have? And the question will also come from this economies and diseconomies. There, operational economy, risk-bearing economy, technological economy. In ICA material also, in my material also, I have given the list with explanation, with examples. From there, one question. Which question? This entire LAC, SAC, whatever you are saying difficult, nah, one question will come. And that too, it may come or. But still, I recommend you to read it. That is most easiest question they will ask. Concept looks very tricky, but usually bachchu questions will come from there. What is another name for SAC? Another name for LAC? This is how the question comes. Initially, when output increases, cost decreases because of dash. After a certain point, when output increases at the higher level, cost increases because of dash. At diseconomy, when cost is increasing, LAC is tangent towards SAC towards increasing side or right side. Increasing side or? That's it. This is what you should remember. Nothing beyond that. Clear? Understood? Anyone having any conceptual doubt in any of this? Sir, can you do more numericals on AC? That is what now AFC, AVC, only those two numericals will come there. That is why straight away I took it from exam question. From past 6 attempts only I took it from the questions. Okay, next MC we spoke about. This is where another area the questions will come. Sunk cost and... See, sunk cost is very simple logic. Cost once incurred which cannot be recovered back. But the beauty is we can show them in books of accounts. What is it? But opportunity cost or next best opportunity foregone or also called as alternative cost. Which cost? Or foregone cost. Which cost? Foregone. Next comes, now kindly mark this as important. In recent attempt, the questions have come from this area only. But they have merged with chapter 4 little. Little common sense they are using. I know, commonly lacking with people like you and me. Okay, see what is this? Accounting cost is simple. Which can be recorded in books of accounts. Which can be shown from an accountant point of view, but economist point of view, which can be shown plus which cannot be. Both put together is from economist point of view, and especially these formulas are important. Accounting plus opportunity. Accounting can be shown in books of accounts. Opportunity cannot be shown in. Same way, explicit, that can be expressed. Implicit, which cannot be expressed. Which can be shown plus which cannot be. Put together is from whose point of view? Economist point of view, also called as indirect cost or implicit, that is economist. Direct cost or explicit, that is accounting point of view. Sometimes the question may also come from this explicit and implicit. See, explicit and implicit concept is very easy. Just two differences you should remember. Explicit means which can be expressed. Which can be? That means you are making a payment, money is going outside your business organization, so it is a dash concept. It is an actual monetary expenditure incurred. That is called explicit cost. Like for example, rent paid, salaries paid, wages paid, insurance paid. All of this money is going outside. But here, in implicit, these are not actual expenses. These are a receipt concept. Which concept? Now let's say for example, Shashikiran, in my own building, I am running my own business. And in my books of accounts, I am showing as rent paid. Same like Nityananda dialogues. Have you seen Nityananda speech? Me talking to outside me through inner me from the outer me. That means in my own building, I am running a business. In my books of accounts, I am showing as rent paid. Who is paying rent? Shashikiran. To whom? Shashikiran. That is implicit. These are the factors owned by the firm and factors used by the firm. What is it? These are the factors. Wait, not there. Here. These are the factors owned by the firm as well as factors
Used by.
in the production process. That is called implicit cost. Explicit, expressible. Implicit cannot be expressible. Both put together is called as an economic cost. With this, they have merged with the supernormal profit, normal profit and loss. Now you tell me, I know that it comes in chapter 4. What is the condition of supernormal profit? AR is greater than. This is supernormal profit. Normal profit,
AC.
AR is equal to
AC.
normal profit. Next, losses.
Greater than AR.
AC is greater than AR. Cost is greater than revenue. This is called as loss. Accepted? Now, observe here. Recently, they have played nicely with you guys. Assume the cost of producing 500 units to be 25,000. To produce 500 units, what is the cost to produce? Investment of the entrepreneur in this business is how much? 1,50,000. Rate of normal market returns is 10%. That means whatever money that you have invested into your business, allow 1,50,000. This money, rather than doing business, if you have invested somewhere in the market, at least how much returns you will get? That is opportunity foregone, na? Here, to produce 500 units, you are incurring how much?
25,000.
This is recordable expenses, accounting cost. This 25,000 is accounting cost. On this 1,50,000, 10%. How much is 1,50,000's 10%? 15,000. That you have foregone opportunity. So accounting cost 25, opportunity foregone 15,000, 25 plus 15.
40,000.
This is economic cost. Which cost?
Economic cost.
Now see there. Next, the selling price at which the firm will earn which profit? They're asking at what selling price a firm will earn supernormal profit. See, we know the common sense. AR should be greater than AC.
AC.
Now, when we calculate AC, average cost, this should be from economist point of view. Whose point of view?
Economics is point.
Now, what is my total cost of producing?
3,000.
40,000. Clear up? That means to produce how many units, sir? Take out calculator. 40,000 divided by 500. 80. That means if I have to make supernormal profit, I should sell more than 80 rupees. Sir. Clear? That's it. I should earn more than 80 rupees now. What is the only option of more than 80 there? That is the answer. That's it. Common sense. See, they merged chapter 3 and chapter 4 together here. Nothing big. They asked you to think from little common sense point of view.
For normal profit, you choose 8.
80. 80 is a normal profit level. This is.
Consider economic cost as building price.
Average cost AC. That is from always. See, in economics, whenever we are calculating, that is from economist point of view. Whose point of view? Clear, not from accountant point of view. Clear?
Yes.
International trade concept on last day. Chapter 9. Okay, let's go to the next topic. Anyone having doubt in this question? See, this is one question. Most of them got stuck in the recent attempt. Most of them are still wondering, sir, the question is related to accounting cost, opportunity cost. Why are they asking supernormal profit? That is what I'm saying. Your ICA can come with laddu. Anywhere. They love you the most. They want to gift you a sweets. But you should say you are on diet. I don't want your laddus and all. You should know the concept. See, simple common sense. Chapter 3, chapter 4 merged. That's it. Nothing big was there. Clear, huh?
But after reading, when I seeing supernormal profit, you got confused.
Now that is what. By seeing supernormal profit, everyone got confused. Incremental cost. See, simple. Extension of marginal. What is it? Extension of?
Margin.
What is marginal cost?
Tell you.
One additional, one extra unit. That is called as incremental cost. So here, one additional batch of output. Whenever you buy chips packet or any kind of FMCG commodity, backside when you see expiry date, manufacturing date, batch number. Have you seen that? In every batch, they will produce a certain number of volume of goods. Let's say, for example, Shashikiran, in my bench manufacturing unit, in every batch, I will produce 500 benches. Let's say to produce that 500 benches in the month of January, I have incurred, let's say, some 35,000 rupees. How much I have incurred a cost?
35.
Now, same 500 benches in the month of February, now I will incur 40,000 rupees as a cost. What I will incur as a cost?
40,000.
Sir, why is that 5,000 rupees extra? Because of change in business decision. Because of change in. So what kind of change in business decision? See, maybe I have bought a new production line or I'm replacing some old machinery to new machinery or I got a new production facility, or I got a new client, the new client has got a new requirement. Now, let me say, Shiva will say, sir, I don't need this plain finishing and all. I'm taking this for Montessori. I need Pokemon, Doraemon, Chota Beam, Tom and Jerry and all on this. Even if kid falls Allah, it should not hurt the kid. I need soft finishing. I'm incurring some special chemical to finish that soft and all. So extra cost. Whenever to produce the same amount of output, that means batch size, if you incur an extra cost, that is called as
Incremental cost.
marginal was changing only because of variable, but incremental can change because of fixed as well as variable.
Consider
Clear? Understood? And next comes one of the most favorite question and favorite area of ICI, that is shutdown point. Simple, you should remember two logic here. When a firm is unable to recover variable cost, firm is said to be in shutdown. That means when we are producing and selling the goods and services in the market, we should be able to recover our variable cost. Which cost?
Variable.
When a firm is unable to recover variable cost, the firm is said to be in shutdown. Firm is said to be in what?
Shut up.
Clear out. In shutdown also there are two types. One is temporary shutdown, short-term shutdown. Permanent shutdown is a
Long term. Shut.
long-term shutdown. In temporary shutdown, conditions are very beautiful. TR lesser or equal to TVC. That is for total. Sir, can we bring it down to just one single unit? Yes. That is AR lesser or equal to AVC. AR is also called as what? Selling price. This comes in chapter 4. AR curve is also called as what?
Selling price.
When your selling price is either lesser or either equal to your variable cost. Sir, even if it is equal to variable cost shutdown, yeah, that is what? Temporary shutdown. Which shutdown?
Temporary.
The whole economy is not running good, like COVID-19 situation has occurred. So better you also close down rather than producing and selling. You are only getting back your variable. Anyhow, fixed loss, na. Even if you produce or even if you don't produce, fixed is loss. So better temporary you close down. Long-term shutdown means loss, permanent. AR is always lesser than AC. And this is one of the most repeated questions. In past 6 attempts, now if I check now, minimum in 4 attempts questions are there. Shutdown point questions. Clear? Understood? I will show now. By this, cost comes to an end. There is one more small type of a cost that we will also study this in chapter 7. Private cost and now Shashikiran is a bench manufacturer. Shiva is my customer. Now whenever we are producing these goods, I will only consider my primary cost of production, land, labor, capital and I am using that special chemical now. Now this special chemical. Just a second. Yeah. Now I am using one special chemical. Now because of this special chemical, even if the kid falls on the bench, it will not hurt the kid. Now I am discharging that straight away into river water. Let's assume Dhoni uncle is a fisherman. Who is a fisherman? Now Dhoni uncle is an agriculturalist. After taking retirement from the cricket, he will take retirement is what we are expecting from 5 years. He may take it this year or maybe next year or maybe after that next year. He will take, don't worry. Assuming he is an agriculturalist and he is also a fisherman. Now Dhoni uncle is unable to catch the fish. Now because of Shashikiran, bench manufacturer, I am discharging the chemicals into a river water. Fishes are dying. Dhoni uncle is unable to catch the fish. Contract is between me and Shiva. But who is getting affected? Dhoni uncle. So third party will always get affected because of externality. Because of we should also consider that external cost, damaging cost, whatever we are creating to society along with your cost of production. Your cost incurred to produce primary cost. That is private cost. Along with that, your damages cost of damages. Both put together is the real cost to the society. That is called as social cost. That is a cost to the society on account of either production or either consumption. So private cost plus external cost, both put together is the cost to society. Is that clear? Understood? By this, theory of cost comes to an end. So let us go, let us check with the questions. Whatever the theory of cost questions are there, we will finish it off. Yeah. Already taken care. This is production, capital. Production. Yeah, see, this was one such question. This time there was a little confusion. According to the theory of production and theory of cost, in business economics, cost can be of following types. Usually we say fixed, variable, total. Na? So there is also something called a semi-variable. Semi-variable is a part of a variable only. So most of them were confused between A and C. But your ICA, na, it came out as a surprise. Even in answer key, they gave it as C. Rather than giving A, they have given it as. But semi-variable is a part of variable only. So sometimes ICI does ICI things. So I usually say that even if you're having a 0.1% doubt, Allah, don't take a risk, leave it. Don't lose your marks with negative. See, I understand. You may be knowing out of 100, you may be knowing some 85 questions in your exam. In this 85, for sure 85 on 85 you will not be knowing. Maybe some 80 you will be knowing for sure. Another 5 questions you may take risk. That's fine. In that 5, even if 1 correct, 4 wrong, set off. But still I suggest not to take that also sometime. But it's up to you. This is also again production function question. Incremental cost. See, whatever just now we said na examples. See, replacing of worn out machinery, buying new production facility, acquiring new set of client. This is an example of incremental cost. Chapter 3. Yeah, 3 stages of law of variable proportion. Variable proportion, which are those 3 stages? Increasing return, diminishing return, negative returns. Theory of production question only. See here. Complete the statement by selecting the correct option. A firm earns dash economic profit. 0 economic profit. That means normal profit level, na? Normal profit condition. Every manufacturer, his intention is to produce at the minimum level of AC, na? Minimum of ATC is equal to price. Price is nothing but AR. AR is equal to AC. Again, same concept only, they have just tweaked it little. Nothing big there. Next, Jan 26 attempt paper. We'll go from the first question. Yeah. Again, see, internal economies of scale, diseconomies of scale. I said now one question will come from that area. If not, they don't ask that silly question. Such question it is. Okay, theory of production, which is not true they are asking. What is it? Again, theory, point of inflection question I should explain still. Theory of production. Done, taken care. Relationship between input and output, where all inputs are changing in the dash proportion. Constant returns to scale. CRS concept. Returns to scale. Which of the following is regarding the it will be recorded in books of accounts. Opportunity cost can never be recorded in. And it reflects about the sacrificed alternative. Yes. It represents the value of foregone opportunity. Yes. It is useful in calculating long-term cost. Yes. It is useful in long-term cost. This one is not. The term entrepreneur in the economics. That means he is the one who will take the theory of production question. Factors of production, land, labor, capital, and see that right from your 11th and 12th standard you are studying. Same to same. Characteristic features, meaning. From there now 1 or 2 questions will always come. Easy question that is. Even this one, circulating capital question. One of the favorite question to ICI. I will explain there when I come to the theory of production. Next, that is what. After this we are doing theory of production only. It will not take much time. Hardly 30-35 minutes it will take. Land, labor, capital, that is factor market. Again, easy question. Theory of production questions are more here. Total supply of land is perfectly demand question. Actually, this is perfectly inelastic means vertical curve, na? That means supply gets unaffected even because of change in demand. This is not chapter 3. This is chapter 2. ISO quant, ISO cost, theory of production question. That is similar to indifference curve and budget line concept. Yeah. Tortoise shell. Which one? Just now we said now there is one area we have to be very careful. Clear? When average product rises, which product rises? This area. When AP is rising, dash is increasing faster than dash. MP increases faster than average product. See, when average product is rising as a result of increase in quantity of variable input, marginal product will be more than average product. See, I said now, Bachu questions will come from that area. LAC, SAC. What is another name of plant curve? TP, AP, MP. Again, free marks here. Again, theory of production question. Which of the following statement is correct? Again, theory of production question. This is. Which are the 4 factors of production? Very difficult question this was. Cobb Douglas, again, theory of production question. 4 P's of marketing, same 11th and 12th standard. Repeated questions. See, sometimes na, your evaluator, if he loves so much the theory of production chapter, na, more and more question comes from theory of production. Sometimes, na, usually, on an average, they have to mix combination, they have to ask 5 plus 5 questions. Sometimes they will ask 7 or 8 questions from production, just 3 or 4 questions from cost. Or sometimes they may ask more questions from cost and reduce it and ask only less questions from production. See, we can't actually predict every time. In every paper, na, if you see, you can't exactly identify, pinpoint. This is where the more question comes. In few attempts, cost questions are more. In few attempts, production questions are more. So it depends upon the evaluator. See, this is even more easy. Do it. Solve this. Solve this third question. What is the average variable cost when quantity produced is 100 units, total cost is 1000, fixed cost is? What are they asking us to identify? TC is given, FC is given, 1000 minus 200 is 800, that is total variable cost. 800 divided by 100 units, 800 by 100 is 8. Shutdown point. This attempt, na, they have given a grace marks actually. There is a wrong in the options. See there. A competitive firm should shut down. By the way, what is a shutdown point condition? Short-term shutdown and if it is a short-term shutdown, TR lesser or equal to or AR lesser or equal to. If it is a long-term shutdown, AR is lesser than. Clear? Now observe. TR is less than TC. Total revenue. No. Next, total revenue is less than marginal revenue. No. Next, total revenue is less than average variable cost. Yes, this could have been, suppose if they had given is less than average variable cost. This should be the answer. Clear? Or if not, if they have changed this into total variable cost. In any one place, either year or either year, if they have made a proper changes, na, C would be the answer. Total revenue is less than fixed cost. No. In this attempt, only in this one attempt, there was an error in the options. This was a grace mark. That's it. Again, circulating capital question. Law of returns to scale, homogeneous, minimum quantity, theory of production, theory. This is also theory of production, AP, MP. This graph related question it was. Budget line, isoquant line, this already taken care. See one more, shutdown point question. A firm should not produce at all. When? When they are unable to recover back their variable cost. Calculate this. Calculation of economic cost. Accounting cost, economic cost. Suppose the sole proprietor is earning total revenue of how much? That means that is a sales value. Which value is this? Sales value. And he is incurring an explicit cost which can be expressed. So this is accounting cost. Which cost? Accounting cost is 95. The owner could have worked in some other pottery factory, some other place. 30. So 95 plus 30. How much? 1 lakh. 25,000. So 1,25,000 is the economic cost. Which cost? Economic. Now observe. What is the sales value? Economic cost is how much? So he is unable to recover back his economic cost. So total there is a 5,000 minus 5,000. This is the economic loss. What is that economic? Loss. So, but here they are saying economic losses 30,000. Is it 30,000 or 5,000? So this is wrong. They are asking which among the following is false. See, a firm is having an accounting profit of 25. Yes. Recordable cost is 95. Sales is 120. 120 minus 95 is 25. Correct. That is accounting profit. A firm is having an economic loss. Amateur. Yes. Economic loss of 5,000. Next. A total economic cost is. No. Economic cost is 1,25,000. Next. Accounting cost is. Yes. Accounting cost is 95. So this is the wrong answer. Economic cost is not 30. Economic cost is 1,25,000. See, like this, even from economic cost, accounting profit, economic profit, the questions will come. Taken care already. Next. This is what I was supposed to explain. Yesterday I said, read from your ICA material once like a newspaper, especially that highlighted words. Which words? Some particular economist will come, they will interfere and they will provide their own their own opinions. So relation between input and output, this was actually given by Samuelson, but most of them in exam got confused and wrote it as, or by chance another 50% wrote as Cobb Douglas. But this was actually given by Samuelson. See, long run average cost, LAC curve is also called as envelope curve. See, economies of scale, diseconomies of scale. See, what are they asking? A firm from one individual firm perspective. Individual firm perspective means it is internal. What is it? Internal. See, initially a firm will enjoy internal economies and beyond a certain level it suffers an internal. And moreover, the whole question is dependent on this one word. What is it? Firm means single. That is internal. Industry is external. Clear? Here it is related to firm. Next. In short run, when average cost falls, tortoise shell question. Average cost. AC is decreasing faster than MC. 1 second. In short run, average cost falls as a result of increase in marginal cost will be less than average cost because AC is greater than. Clear? Got it? Next, TP, AP, MP calculation. That's it. See, these are the questions from theory of cost. Clear? By this, theory of cost comes to an end. Any doubts in theory of cost before moving to theory of production? See, in theory of production, two areas are most important. That is where most of the repeated questions are coming. Law of variable proportion, law of returns to scale. What is it? Law of variable proportion? Except this, all small questions will come. ISO quant will come. ISO cost will come. And factors of production question. Which question? And that is where usually the small, in theory of production, to be frank, scoring is easy. Concept is also small. And it is easy. In cost only half of the things are covered. So automatically production will become easy. Production function is of two types. Which are those two types of production function? Long run production function and straight away we'll go to production function concept. Yes. Short run production function. So short run production function is law of variable. Long run production function is law of returns to scale. In that variable proportion, in this stages, from the stages also questions will come. So mark this, entire law of variable proportion only important, mark it off. Sir, there is a concept of proportionate change in TVC unequal, right? Yes, then how in variable cost per unit value remains constant? That is when proportionate change is equal. Shanbaga Devi. Yeah, YouTube student. Shanbaga Devi, that is only when proportionate change is equal. Only when that proportion change becomes equal, per unit variable cost remains constant. Not when it is unequal. Done? Okay. See, in this case, point of inflection concept is important. See here, we will identify the AP and MP also. So it is 20. Yeah, 1 second. Take out calculator, everyone. Fast. Let me know the values here. 20, 50 by 2. 25, 90 by 3. 120 by 4. Next, 140 by 5.
28.
Next, 150 by 6. 25. 150 by 7.
21.4.
How much?
21.42.
21.42. 17 point. Okay, next year it will be 20, 30, 40, 30, 20, 10, 0, minus 10. Now here, this is the stage where every manufacturer prefers to operate. Whenever MP is 0, TP will be maximum. And stage 1 will come to an end whenever AP and MP both are equal. This is SI R, this is SD R, this is SN. But this particular one, this is called point of inflection. So until the point of inflection, TP will increase faster. After point of inflection, it will increase slower. So this is the one area where you will go wrong. Point of inflection condition. Until the point of inflection, TP will go up faster. What is it? TP will go up. After point of inflection, TP will no doubt increase. See, observe. 120, 140, 150. It is increasing, but TP will increase slower. Now, the question usually they will ask from here is either from the table they will ask about the positive value, negative value, or the same to same thing we can be represented in the form of graph. See here it is TP, AP, MP. Observe, which among the following curve will become negative? MP. Will AP become negative?
No.
When will MP become negative? When TP starts decreasing. Clear? Huh? Now, this is what I said. From the graph also, they will start asking questions. Where was that? Yeah, this is the question. See here. Which of the following is not true about the relationship between AP and AP curve will become? MP will become 0. Yes, MP will become 0, but AP will never become negative. See the graph? Is AP curve becoming negative? It will never go below x-axis. See, from the graph also, they may convert it into question. Or from the table also, they may convert it into a question. Relationship between TP, MP, or relationship between AP and MP. Now, just a few minutes back, we discussed a tortoise shell, if you remember. What did we said? Whenever TP is increasing, sorry, not TP, AP is, see 20, 25, 30, 20, 30, 40, which is increasing faster? MP is increasing faster than AP. Next, whenever AP is maximum, what is it? AP is?
Maximum.
AP is equal to? Logic satisfied? Next, when AP starts decreasing, observe 28, 25, 21, 17, 20, 10, 0, 10, minus 10, which is decreasing faster?
MP.
When AP decreases, MP decreases faster than AP. Is that clear? This is where the questions are going to come repeatedly. Understood? Next, law of returns to scale. Here na, concept is very simple. This is under long run. What is it? This is under wherein which more factors are variable, less factors are fixed. What is it? More factors are less factors are fixed. But in case of short run, more factors are fixed, less factors are variable. Clear? And now in this particular topic, only MP curve is given importance, and the questions will usually come from the stages. See, remember the logic. When MP rises, when MP IRS, in all the three stages, whether it is IRS, CRS or DRS, TP is increasing. See, observe, TP increases, TP increases, TP increases. In IRS, MP will rise. In CRS, MP remains. In DRS, MP starts falling rapidly. This is where the questions are. Clear? And from connecting to this, there is one more topic, Cobb-Douglas production function. Which function? From this formulas, the questions will come. They will ask the formula itself as a question. See, I will show the exam question also. This can also be written as Q is equals to K, L to the power of A, C to the power of 1 minus A. Instead of writing it as B, what it can be written as? 1 minus A. Now, in this case, that means the changes are happening in labor and capital. What is it? Labor and? And there is one more way of asking question in this. See, in law of returns to scale, what is it? Law of
Returns.
how many units of labor and how many units of capital? We were changing 2 units of labor and 1 unit of. But in Cobb Douglas, now that is 3:1. 3 units of labor. What is it?
3 units.
So this is 3/4. And capital is 1/4. So it is 3:1 ratio. Which ratio?
3.
Is that clear? Understood. This is the another area. Still the questions have never come. But they may ask you this question. Chances of asking it is very high. Clear? Understood. So this is where most of the question from theory of productions can be coming from short run production function and long run production function. After this, now all easy question. ISO quant, ISO cost. ISO quant is related to indifference curve. What is it? ISO quant is related to
Indifference.
whatever we studied yesterday. Indifference curve, combination of two goods, which gives dash level of satisfaction. Same level of satisfaction. Their customer point of view. Here, combination of two goods. What is it? Combination of which will make a manufacturer to spend equal amount of money. What is it? Equal amount of. Is it correct? Wrong. This is where the confusion comes. See, most of them will get confused with ISO quant and ISO cost. In ISO quant, what is it in?
ISO quant.
It is not equal amount of money. Relation is between input and output. What is it? Relation is between?
Input and output.
See, whenever you see this word called as quant, what is it? Remember input and output. Indifference curve. Two goods, same level of satisfaction. Here, two factor inputs. What is it? Two?
Factor.
Same level of output. What is it? Two factor inputs, dash level of output.
Same level of.
Is that clear? Understood? So, two factor inputs which are producing same level of output. Connected in the form of a curve is called as a isoquant curve. And remember, it is similar to which concept?
Indifference curve.
Of an, if you remember, decreasing rate of substitution, diminishing marginal rate of, same to same logic continues here also. Clear? There, two goods, same level of satisfaction. Here, two inputs. What is it? Same level of output. Next, ISO cost is similar to budget line concept. Which concept? Their budget line is also called as what? Price line or income line. Combination of two goods. Now, which a manufacturer will make them to spend dash amount of money. Whenever spending equal amount of money comes, that is called ISO cost. Relation between input and output, that is called quant. What is that called as? That's it. Relation between input and output, that is ISO quant. Spending equal amount of money, that is called as ISO cost. Clear? Understood? This is another small areas where the questions are going to come. Clear up? After this, the next major question what we are going to receive is from factors of production. See, meaning, characteristics. Meaning, characteristics. All of these are important. See, land. We are not understanding this from an accountant point of view. We are understanding this from an economist point of view. So, land means not an asset. In accountancy, land and building is an asset. What is it? Land and building is a. That is how we classify. But here, land is a free gift of nature. What is land?
Free gift of nature.
Which is not created by a human. So all the free gifts of nature is called as a land. And perfectly inelastic. By the way, what is that perfectly inelastic? E equal to 0. Quantity remains the same. Prices may go up or prices may come down. Clear up? So the available land space on the earth is always and always the same. And land is dash. A physical land can never be destroyed. Only the fertility of the soil can be destroyed. Physical land can never be. Land is immobile. We cannot move a land from one locality to the another locality. Differs in primary and passive factor of. And this is important one. See, anything and everything has to be created on a land only. That is why it is called primary factor. But what is this passive? Land will not create a matter on its own. Human effort is needed. Whose effort is needed?
Human effort.
That means land will not construct a building on its own. Human efforts are needed. Without human effort, building cannot be made by its own. Land will only create a building on its own. No, that's not possible. So land is not an active factor. Land is a dash factor. Is that clear? Next comes all kinds of dash efforts. Such human efforts can be either or it can be either, which results into dash. When it results to production, are we going to do it for free of cost? No. What are we expecting in return? All kinds of human effort. The first condition is human effort. Such human effort should result into what? And for that, in return, are we getting a? That is called labor. Shashikiran and his teaching skills. These two cannot be separated from each other. Shashikiran is a laborer. My teaching skill is a labor. What is it? Shashikiran is a? Laborer. Teaching skill is a? Labor. So Shashikiran and his teaching skills cannot be separated from each other. Labor and laborer are inseparable. If I'm teaching in ArivuPro for ArivuPro students, that means I'm not selling myself to ArivuPro. I'm selling my teaching skills in ArivuPro. So I'm only selling my labor is perishable. That means just assume tomorrow is Sunday. We will say why to have marathon class tomorrow Sunday. We will keep holiday. We'll do it on Monday. Suppose if I don't utilize the time on Sunday, can I utilize the same time once again on Monday? Oh, yesterday's time we didn't take now. We are taking it now. Can we do like that? No. If you don't work on that particular day, if the labor is not used on that one single day, that labor is perished. What is it? Labor is? Perished. Appa, don't consider, sir, labor means human. Human will also perish. He will die one day. No, that's wrong. Labor is perishable means if you don't work today. What is it if you don't? That labor hour is perished. Which hour is perished? You can't reutilize that labor hour once again. And they are dash in nature. We can't work like machine 24/7. Next differs in. That means the way Shashikiran teaches, the way Nitin sir teaches, the way Sai sir teaches, or the way Akhilesh sir teaches is not one and the same. It is different. Every individual labor has their own different way of providing a labor. Clear? So, next labor is. Yes, we are ready to move. Shashikiran, can you come to Coimbatore and do the marathon? Okay, I said, I am doing this time. Shashikiran, next, can you come to Delhi? Can you come to USA and do the marathon? I am like, hey, boss, no, I can't. I am ready to move from one place to another place, but not for a longer distance, only for a shorter distance. Next, labor has a less bargaining power. Whether you, let me say, do more work or less work, whatever is agreed remuneration is there, we are going to get you that agreed. And labor is inelastic. Even though price goes up very high of a labor, we can't all of a sudden remove most of them. I still need them to work. Only few of them will be removed from the job. Even if price drops very high extent, I cannot take more and more. Whatever is required, I will only take such kind of a labor. So inelastic, large change in price, small change in quantity. That is what we are saying. And also there is one more thing, supply of labor. What is it? In a very short period. What is it in a? Cannot be changed. What is it? That you have to keep it in mind. In a very short period means let's say for a week, let's say for 2 days, 3 days, that cannot be changed. Clear? So this is the concept of labor and characteristic features of labor. Next comes in this alarm, in types of capital especially, this is one of the most favorite question to ICI every time. Circulating capital, that means which is only and only used for one single time, single use, like raw material which cannot be further utilized. Seed, fuel, raw materials, that will come as a circulating capital. This is the most repeated question in your ICI. 2 times in the past 4 attempts they have asked. What is capital? All man-made goods. What is it? All man-made. Which can be used for? Except. What is free gift of nature? Land, water, air. These all are free gift of nature and even self-consumed goods and services. Let's say for example, I will construct a building. Ground floor, I am self-occupied. First and second floor, I have given for a rent. This first and second floor is leading to further productivity. Which productivity? But ground floor is not leading to. So this building is a partial capital. Ground floor is not a capital. First and second floor is a. Because unless and until if it is then lead to further productivity, it cannot be called as a capital. No doubt. This building is created by a man. But ground floor is self-occupied. Even self-consumed goods and services are not called as a capital. This differentiation you should be knowing. Clear? Next, in this you can just go through this like a newspaper once. Tangible capital, human capital, real capital, fixed capital, individual, social capital. You just have to go through this like a newspaper once. ROC concept. Read only concepts. Clear? Next comes capital formation. Now simple man. What is capital formation? Households. They are the one who is working in any business organization. They are earning salary. Whatever salary the household earns, will they completely spend that money? A yes or no? Will they completely spend that money? No. At least some small portion they will create as a. Where do they keep the savings? Banks. See, creation of savings. What is it?
Creation of it.
Is done by households. Whatever household creates the savings, that is mobilized. What is it? That is
Mobilize.
mobilized by banks and financial institutions. Which institutions? Banks and. Next comes utilization. What is it?
Utilization.
Business houses, corporates and governments will borrow from whom
Banks.
and utilize it for a for further generation of profits. Is that clear? Understood? So remember, creation, mobilization and
Utilization.
utilization. CMU is the shortcut. Who will create a savings? Households and individuals. Next, who will mobilize the savings? Banks and financial. Next, who will utilize the savings? Business houses, corporates, governments will borrow the goods, borrow it from banks and utilize it for an.
Further generating profits.
Clear? So the process of CMU, this is called as capital formation or circular flow of money. What is it? Circular flow of
Money.
or capital formation. Is that clear? Understood? Last but not the least, what is it?
Organization.
Organization or also called as organizer, the owner. The real owner of the organization, proprietor, is the one who will initiate the business by bringing all the resources together, resource coordination, by bringing land, labor and capital together. What is it? By bringing land, labor and capital together. Clear up? So remember, initiating the business enterprises and dash coordination
Resource coordination.
and to take advantages of change in dash environment. Dynamic economy or dynamic environment, because environment keeps on changing, economy keeps on changing. Today you guys might like cake, tomorrow you will like, I don't like cake at all, I like cupcakes. Next, I don't even like cake, I like only spicy items. Trends keeps on changing. We need to do a business as per the trends, and also we should try to come up with innovation. So innovation may work or innovation may. All those uncertainty belongs to whom? Business owner. So these are the characteristic features. See, without owner, you cannot bring other three factors of production into one common place. What is it? Without owner, you cannot bring other three factors of production into. It is highly impossible. What is that? Highly? Is that clear? Understood? So these are the characteristics of organizer, and this is just a read-only concept. Once, till date, only once the question has come, but very less chances. I am not saying that it will not come. It may come, but the probability of asking it is very less. Objectives and the problems of an entrepreneur. Clear? So by this theory of production, these are the main topics of theory of. But it looks very small. In exam, now sometimes they will ask more and more questions. Which questions? From the theory of production concept. Okay, let's go to the exam questions. Okay, already taken care. This already we did law of variable proportion, 3 stages. Which are those? IRS, DRS and NRS. SDR, SNR, SIR, SDR, SNR. Law of variable. How many stages? Which are those? SIR, SDR, SNR. Increasing return, diminishing return, negative return. See, increasing return, diminishing return. Next, which of the following represents dash cost in the short run? So they are asking which of the following is representing which cost? Variable cost only in the short run. Factory rent, fixed cost. Accountant salary, fixed cost every month. Factory insurance premium, every year you will pay that fixed cost. But wages based on the number of units produced. This is variable. Output produced. This is variable. Chapter 3. Yeah. Incremental done. What is the maximum amount of output that can be produced with the given quantity of input? That is relationship between input and output. Which function? Production. Taken care. To make the job content interesting and challenging, it should be dash objective of the organization. It is called as. Just now I said, they may ask you this question. But I said, nah, that doesn't mean that it will not at all come. It may come, but chances are very less. That one, human objective. See, objectives of entrepreneur. See, human objective, social objective, economic objective. Go through this like a newspaper one. See, in this attempt also one question has come here. Human objective. Next, which factors of production is that part of the wealth of the individuals or the community, which may be used for, which is used for further production of wealth. Capital, na? Capital. Taken care, all the three questions. That's it. Next, Jan 26 attempt paper. A curve which shows all the different combination of and the same level of, see, relation is between what? Input and ISO. Suppose if at all they have given spending equal amount of money, then answer will be ISO cost. Clear? So the curve here, what is the question is? The curve. That is why ISO quant and ISO cost curve. Next, total supply of a land is from the point of view of a, just now we discussed now, in case of land, characteristic features perfectly. That means supply is always perfectly inelastic. Demand may go up or demand may come down, but the land quantity always and always remains constant. That is what the supply is unaffected, even though when there is a change in demand. See, market where firms buy the resources they need, like land, labor, factors of production, land, labor, capital, organization. Which market is that? Okay. Dash capital performs the function of production in the dash use and which is not available for further circulating capital. This is one of the favorite question. One more attempt, the question has come, I will show. Next. What is the term? Entrepreneur in the economics refers to. He is the person who will combine. That means who will bring all the factors of production together. He is the one who takes them. He is the one who tries to come with them. Innovation. Okay, which of the, okay, opportunity cost already taken care. Relationship between where all inputs are changed in the dash proportion. Same proportion means constant returns, na? Constant returns to scale. I think we did this. Done, taken care. Which of the following is with regards to total product continues to decrease. Hello, by the way, total product will not decrease continuously. It will increase but at a lesser rate. Increase but at a dash rate. This one. See here 20, 50, 90, 120, 140, 150, 150. When it decreases, MP will become negative. But here the entire explanation itself is wrong. See, total product continues to decrease. No. And that too, they are saying that stage of diminishing return. Which return? Diminishing. See, which of the following is not true with respect to stage of diminishing return? Is total product decreasing or is total product increasing? Total product is, see from the table. Clear? Total product will decrease when it comes to which stage? SNR. Total product will not decrease in the first two stages. Is that clear? So answer is option A only. See here, next, both marginal product and average product of the variable factors are diminishing, but they are, yes, it is correct only. Next, a rational producer will seek to produce within the range of this. Yes, any manufacturer, for it matter, they always try to prefer to produce at SDR. By the end of this stage, total product will become, yes, total product will become maximum 150, correct? So only A is the wrong one. Next up, which of the following factors does not leads to internal economy. Internal means within the firm. Next, specialization of labor. Yes, any firm where it matter, they try to specialize their labor, they try to enhance their ability. Next, use of it to produce more and more output, efficiency. Next, use of byproducts. Yes, instead of let's say product one, they may use it as a product to supply of. Why will they supply to the market? It is inside. No, this is not. They are asking about not and this is external. Okay. Taken care. Identify the market. The entrepreneur has to decide regarding the 4 P's. By the way, what are the 4 P's of marketing? Product mix, promotion mix, price mix, place mix. Next, Cobb-Douglas production function to produce the output, that is manufacturing, producing, and inputs as dash. Labor and in what proportion is the labor and capital is used? Labor is 3/4, capital is. Which are the 4 factors of production? Land, labor, capital, and organization. Next, which of the following statements are correct? The period will be considered as a short period if the amount of at least one of the input remains unchanged during the period. Hello, not one. Many of the things will remain unchanged. But here, what are they saying? At least one. Yes, at least one they are saying. It is not say always one. Many elements will remain. See, understand this common sense. In short period, which period? Many things will be fixed. In long run, anything can be changed. Everything, land, labor, capital, organization, all 4 can be changed. What is it all? 4 can be. See, I usually give an example. I will create one whole story in the class. I will be explaining same bench manufacturing. Shiva gave me 100 benches for 1 month. That is short run. 1 lakh benches for 1 year. What is it? 1 lakh benches for? 1 year. And even the same example I have given in the May marathon as well as Jan marathon also. There I have explained it in detail. Who doesn't have a conceptual knowledge, there, at least to understand the whole concept, they can go and refer it over there. Anyone having confusion in the short run and long run, fixed factor and variable factor in production function? Okay, done. So, at least one they are saying, yes, correct it is. Next, the long run period is the period of time in which all the factors are variable. Yes, in long run, all the factors are variable. In short run, more elements are fixed. They are saying at least one element is fixed. Correct. Next, in short period, all inputs are, not all inputs are fixed. At least any one element will be variable. Next, in long run, all input except one is fixed. In long run, all can be variable. So 3 and 4 is clearly wrong. 2 is 100% correct. 1 is also kind of correct. So here only 2 is not there. So 1 and 2. What is it? Next. Next. If the firm adds more number of workers, but the total output starts, TP increases at dash rate. Decreasing rate. No doubt TP is increasing, but TP is increasing at a less proportion. Which proportion? That is in diminishing rate only. This one. This area. See, initially efficiency of the individual labor is high. First guy is contributing how much? Second guy? Third guy? But later it started to decrease. See, efficiency started to. See, same to same logic. Now, let's say in the classroom there are just 20 students. I can give individual concentration on each and every student. Possible, huh? Yes. 50 students are there. Can I give individual concentration? No. But still, somewhat I can give. 100 students are there. Highly impossible. So, whenever more and more workers are there in the organization, your individual capacity of controlling them starts decreasing. Output efficiency slowly starts decreasing. No doubt, you're producing more output. Your output capacity is increasing, but individual contribution. What is it? Individual? That is marginal contribution starts decreasing. Yes, that is correct. Hey, where is that? Here. The firm adds more number of workers, but output starts increasing at dash rate. Increasing at. This is diminishing marginal Returns. See, this concept is related to relationship between TP and MP. What is the relation between? See, better we will write relation between TP and MP. See, observe, initially TP will increase, MP is also, that is TP increases at increasing rate. Which rate? Until point of inflection. Next, TP will increase, but MP starts decreasing. See, this is the point of inflection now. Until this point of inflection, see here 20, 30, 40, MP started to rise. But after achieving this point of inflection, now see 40, 30, 20, 10, 0. So MP started to decrease. That is when after point of inflection. Before point of inflection, after point of inflection MP. Now when MP starts to decrease a lot, TP will increase at diminishing rate. Which rate? This was the question they are asking. That means this area, this region. Clear? Next, when TP becomes maximum, MP becomes 0. When MP is 0, what is it also called as? Optimum utilization of resources. What is it called as? In the last but not the least, when TP starts decreasing, MP will become negative. So this relationship, from this relationship only the question has been asked, especially this one they have asked. It is after point of inflection. What is it? So here the whole twister was a point of inflection concept. Is that clear? Understood? Okay. Next question. Already we have done this. Solve this. Calculate. 1 second, wait. I will erase this. Take out calculator. See, literally this questions now 2 to 3 marks will be free. See, when we are not even producing anything, even if we are not appointing anything, total product is also 0. AP will also be 0. But numerical divided by 0 is a math error. You will get it as E. What you will get it as? 0 by 0 is also error there. Next year it will be 0. Next, see, we appointed first labor. He is producing how much? So this will also be 20 by 1 is clear. Next, see, we got the value 20 here. Here 26 is there. So 20, 26 differences, or this two differences 6. We need to add marginal product. When we add MP, we will get TP. Total concept is cumulative of marginal. So we should add this 20 plus 26. How much? 46. Or else you can also do like this. 20 plus 26. Here also you can add it. Next, 46 by 2. 23. Next here. 66 and 46 differences. That is marginal product. Next, 46 by 3. 22. Next here, 19 is there. Average is given. 19 into 4. How much is 19 into 4? 76. Clear? 76 minus 66. 10. Next, observe. They have straight away given the 4. So 76 plus 4. 80. 80 divided by 5. 16. Clear? Literally 2 marks for free here. Not 2, 3. This attempt 3. See, they're asking what is the average product of the third unit of labor. Third unit of labor, average product 22. What will be the total product of the labor of the fifth unit? Okay, total product is 80. Next, marginal product of the fourth unit of labor. That is literally 3 marks for free of cost. Human wants topic in theory of production. Okay, I will cover that. That is a very small topic, chiller topic that is. Human wants are unlimited. Wants, all wants cannot be satisfied. Wants are of 3 types. Very basic. Till date, from that, not even a single question was asked. And that actually comes in consumer behavior. But in my syllabus, I have included that in theory of production. Okay. Plant curve already taken care. This already we took care. AP and MP relationship. See, when AP is rising, so whenever AP is rising, MP will be greater than AP. So marginal product will be more than average product. That's it. Okay. Next, May 25 attempt paper. The form of capital which performs its function only in the, see, second time in the, I said na, in the past 4 attempts, two times the question has come. Single use, which is that? Okay, survival, growth, expansion comes under organic objectives. Clear? That is an organic objective of an organization. Next, which two types of, okay, chapter 2 it is. Returns to scale. What is it? Law of returns to scale. Production function under short run or long run? In long run, all the factors are variable. See, change in output as a result of proportionate change in all the factors. Linear homogeneous, linear straight line, linear homogeneous comes under, see, upward homogeneous IRS, linear homogeneous CRS, downwards homogeneous DRS. So this is IRS, CRS, DRS. They are asking linear homogeneous, that is CRS, constant returns to scale. That is long run question, graph question this is. Next, the minimum quantity of variable input that are required to yield a given level of output, relation between input and output. This already I explained, graph question. AP will never become negative. Next, total product starts. Where will TP starts declining? Last stage, third stage. That is nothing but negative returns. Budget line or budget constraint line, which shows the various alternative combination of the firm that can be bought within the given output, and moreover connected to which concept? In connection to budget line concept, is it ISO quant or ISO cost? ISO cost. Budget line or budget constraint line. Taken care, taken care. Shutdown point already taken care. Taken care. That's it. That's it. Last one. Jan 25 attempt. See here, which of the following is not a characteristics of land? Land is heterogeneous. Yes, land is not one and the same. Land quality, land soil fertility differs from one place to another place. Supply of land is, yes, we cannot increase or decrease perfectly inelastic. Land as a multiple. Is land active factor or passive factor? So this is wrong. Next, Cobb-Douglas production function formula. I said na, straight away from formula also question will come. K L to the power of A C to the power of 1 minus A. Instead of 1 minus A, this can also be given as B. Next, this is very difficult question. Want a satisfying power of goods and services. Utility. Now, once again, free marks. 3 marks. See how many marks? 3 marks total free. Tortoise shell question. Already we discussed about this. When average cost falls, when AC is decreasing, that is where I asked you to be careful. Left side. AC will be greater than MC. Already we did this. Firm, internal, Kinkard demand curve. This also taken care. That's it. Clear? Okay, we'll take one more. September 24 attempt paper also for you. Just now I explained this. Why average cost and average variable cost is coming closer? Because fixed cost proportion is decreasing. This already we did. Okay. How is production from the economist sense distinguished from the non-market? Same like economic and non-economic perspective. See, involvement in love and affection, non-economic, exchanging in the market, economic, voluntary nature, non-economic, intangible outputs, non-economic. This is the only economic. Odd one out of this. It is. Next, solve this. Again, 2 marks, free. Solve this, solve this, solve this. So first one is 0. So here answer will also be, this is infinite, this will be 0, this will be 20, 50 divided by 2, 50 minus 20, next 90 by 3, 90 minus 50, 40, next 30 into 4, 120 minus 90, 30. That's it. Clear? Okay. What is the marginal product for second hour of labor? Sorry, marginal product they're asking. Marginal product of second hour of labor, 30. Next, what is the average product of third hour of labor? Third of labor, average product, 30. So both the answers were 30 and 30. Next, when does the law of variable proportion or law of diminishing return becomes relevant? By the way, variable proportion is short run or long run? Short run, that's it. Next, what is the primary characteristics of diminishing returns to scale, where output increases but increases at dash rate? Decreasing rate. Just now we decided the relationship. Where is that? One second. This one, relationship. Output will increase but increases at dash rate, diminishing rate. That is what SDR concept is. Clear? Next, what term is used to describe the cost which remains fixed over a certain range and all of a sudden jumps to the new height? Stair step variable cost. Which of the following expenses is incurred in the cost of production and termed as an accounting cost? Wages paid to workers employed in the factory. Yes, we will record it in the books of accounts. Expenditures incurred on research and development, sunk cost. What is it? Advertisement, sunk cost. Common cost incurred in general operations of a business. This is indirect expenditure, indirect cost. What is it? But here directly involved in the production of the cost. This is the first one, wages paid. And this one such question they have asked in September 24. Calculation of previously, see, they have only given R&D and advertisement is sunk cost. When you have a knowledge, you just have to add this two. Research and development 150, advertisement 5, fuel and power variable cost, rent fixed cost, wages variable cost, research and development is sunk cost, advertisement is, see, total amount of sunk cost 150 plus 5, that is sunk cost. That's it. By this, one more shutdown point questions here. When should the competitive firm consider shutting down? When the firm is unable to recover back, or when their revenue price is nothing but what? AR. When AR is below the AVC. Is that clear? So that's it. By this, the entire chapter 3 comes to an end. Clear? Okay, chalo, fine. We will also take up that human wants topic also. They are asking, sir, human wants. That is very easy topic. The human wants, desire, taste and motives of a human. DTM. What is it? DT. Human wants is of 3 types. Necessary, comfort and luxury. Under necessary, basic necessary. That is food, clothing and shelter. Necessaries of efficiency are nothing but tools and equipment which will make our work more and more efficient. Social necessaries for the sake of comfort, which gives better level of satisfaction. Luxury means all unwanted spendings. In that 3 types, harmful luxury, harmless luxury, defense luxury. In this, this can be a question. Defense luxury means not your CCTV, camera, gun and all, which can be readily convertible into liquid cash like stocks, shares, bonds, golds, bullions, which can be converted into its fullest value into a cash. That is called as defense luxury. Which luxury? And characteristic features of human wants. Human wants are, all wants cannot be. Wants are competitive as well as. We will use everything together and after that, one after the other, it keeps on coming. That is recurring in. Want also varies with the time, place and want has become habits and see, if anyone comes to your home, they will ask, coffee, tea, now habits and customs. Next, want also gets affected because of when Katrina Kaif comes and holds mango, when droplet starts falling, then you feel like drinking sliced mango juice. Advertisement is instigating it. Clear? So by this, entire chapter number 3 comes to an khatam. Clear? So it looked like it's taking more toll on my health to take the class and as well as marathon. From tomorrow, we'll do one thing. We'll take just 2 hours. Anyhow, macro is more of speaking only. So today we'll finish micro. Tomorrow we'll take only 2 hours. Next 4 days. Because morning 6 hours class. After that, now again I'm taking another 4, 10 hours in a day. So already like little health is getting upset. Okay, chalo, we'll take a break now. Now the time is considered 6 only. 6:30 we will start.
Yes, sir.
So we'll start with chapter 4. What do we start with?
Chapter 4.
So from tomorrow, what time we will start? 4 o'clock or 6 o'clock? 2 hours I will take. 4 days. Like for example, tomorrow if at all I start, another 4 days. Tomorrow is Saturday, right? Saturday, Sunday, Monday, Tuesday. 4 days I may have to take. If anyone is coming from far distance or just for 2 hours should I come, better stay it in online. Even in YouTube live you can attend, not a problem. You can do like that also. Clear up? So better from tomorrow we'll take it to 2 hours. Not beyond 2 hours. 6 o'clock. 6 o'clock to 8 o'clock. Huh? 4 to 6 o'clock. Chalo, we'll take from 4 to 6 only. Okay. So from tomorrow, we will start macro from tomorrow. So from tomorrow, we will just take 2 hours. Clear? Already I'm feeling like fully exhausted for the day today. But still we'll do it. At least micro will finish it off. Sir, how to identify the question related to relationship between AP and MP, tortoise shell? Whether they are asking with respect to rate of increase or decrease or with respect to value. See, when you are reading the question, you will automatically come across like which is increasing faster, which is increasing, going up faster. Like you have seen the question here, na? Where I will show the question and I will explain it. Wait. Where is that question? Yeah, see here. When average product rises, rises as a result of increase in quantity of variable inputs, what will happen to marginal product? Now, see the relation will be given like AP and MP. Most of the time, it is going to be rate of increase and rate of decrease. Not even a single time the question has come from value. If it is value, they will let you know. Like for example, value of average product, value of marginal product. They will give it like this. Shanbaga Devi. Yeah. Little very difficult for me to pronounce the name. Hope it is clear. Show your offline students. I have to turn the camera again. We have to readjust the camera. Okay. Chalo, take a break. We'll start back at 6:30. But from tomorrow, we'll only take 2 hours. 4 o'clock to 6 o'clock. So we completed with the chapter 3. Now we shall get started with the concepts of chapter 4. One of the most interesting in that already unit 2 is done. We have to just do with the unit 1 and unit 3. See, it completely speaks about the concepts of market. See, when we speak about market, the market based on competition. What is it market based on? See, we are not understanding here market based on area, market based on time, market based on nature of transaction, or based on regulation, or based on volume of business or types of competition. Here, we are only covering based on types of competition. We are not covering based on these parameters. Clear? So, in this whole unit, market is mainly classified or based on what? Based on competition. Clear? So, market based on competition is mainly divided into 2 kinds. How many kinds? Number 1, perfect competition. Number 2, imperfect competition. See, under the perfect competition, there is only one single type that is called as pure competition. But under imperfect, actually there are 6 types. How many types are there? Monopoly, duopoly, oligopoly, monopsony, diopsony, oligopsony, and there is one more type of a market, that is monopolistic competition. So that is a combination of perfect and monopoly market. So in your syllabus, we are not going to speak about all this imperfect 6 elements. You only speak about monopoly and oligopoly market. But there can also be a questions that is related to the other parameters. For example, monopsony, that means single buyer. Which buyer? Diopsony, 2 buyers. Oligopsony, few buyers. What is it? Few buyers. Same way, poly refers to seller, sine refers to buyer. Monopoly, single seller. Which seller? Duopoly, that means there are dominant 2 sellers. That means there are other few more people. Like for example, Ola, Uber, Swiggy, Zomato. It is a part of oligopoly. What is it? Duopoly is a part of But there are predominantly, how many players are there? Two players are there in the market. They are dominated. Two players are dominated in the market. Clear up? So there is a realistic market today which we, let me say, come under the category of, that is called as monopolistic competition market. Is that clear? So we have to speak about perfect, we have to speak about monopoly, oligopoly and monopolistic competition market. So it will take maximum 1 hour to revise quickly and most important parameters, and later that we will take with the chapter 5, and if still time permits, maybe today I will take up chapter 10. I will instruct you like where exactly is the important element. Usually 10 marks will come from that particular chapter, and especially second half of the chapter is most important. That is where the question comes from. Clear? Okay. Let us get started without wasting the time. So perfect competition market. This market is totally myth. What is it? Totally? There is no real life example at all, because none of the countries are following this perfect competition market. Every market is following which kind of competition? Imperfect competition or monopolistic competition. Why do we say this market as myth? See, point number one, there are large number of buyers and large number of sellers. Who are there in this market? Large number of buyers and large number of sellers. Clear up? And manufacturer is only and only just a price taker. Manufacturer is only and only a and not a price. Then who will decide the selling price? Demand and supply. That is market forces. Which forces?
Market forces.
Clear up? And throughout this economy, prices are going to remain uniform. Prices are going to remain. That means the entire industry is always operating at equilibrium level. Total demand is always equal to total. And not just that, all the manufacturers are producing homogeneous goods and services, that is identical goods and. So remember point number one, large number of buyers and sellers. See, that is not a concern for us, but the concern starts from point number two. Manufacturer is only and only, not a price. Who will decide the price? Market forces, that is demand and supply. In throughout this economy, let's assume by chance, if India is following perfect competition market, wherever you buy the product, whether it is Coimbatore, Bangalore, Tamil Nadu, Gujarat, Jammu Kashmir, anywhere, uniform pricing. Each and every nook and corner of the nation, the price remains uniform. And dash goods and services are sold. All the manufacturers are producing same type of goods and homogeneous goods. Now you tell me, is this practically possible in real life?
No.
Highly impossible. And in this type of a market, there is one more beautiful logic. P is equals to AR is equals to MR. So for that, this particular table, see, output is given, price is given, and we are also calculating MR. When output is not continuous, what is the second formula of MR? Change in TR by change in quantity. So in this case, this will be 5 into 2, 10. Next year it will be 30, 40, 50. So here it will be 5, 5, 5, 5. This will also be 5, 5, 5, 5, 5. So in this case, price, average revenue, marginal revenue, all the three are one and the same. Okay. Okay. So only and only in case of a perfect competition market, P is equals to AR is equals to MR. And the graph will be like this. So P is equals to AR is equals to MR. Is that clear? So only and only in perfect competition market, all the revenue curve will be horizontal. What is it? All the revenue curve will be? And even selling price will be horizontal or parallel to which axis? X-axis. And this is totally unrealistic. There is no real life example. And point number 5, free entry and free exit of firm into industry. What is it? Free entry and? See, a firm will exit when they are incurring a loss. A firm will enter during supernormal profit and a normal profit. So in case of a supernormal profit, AR is greater than AC. Normal profit is AR is equal to AC. Loss is AR is lesser than. Already we spoke about this, and there was one numerical problem now, which they played around with chapter 3. They merged it, same, from this area. And point number 6, buyers and sellers have a dash knowledge about the. Henceforth, we don't even need any kind of advertisement expenses. So we don't need no advertisement. What is it? No kind of. Because every manufacturer is selling the same good. Clear up? All the manufacturers are producing homogeneous goods and product price also remains. Manufacturer is only just a price taker, not a price maker. Is that clear? Tomorrow's class timing. Actually, we are changing Lakshman Balachandra. We'll make it 4:30 better, 4:30 to 6:30, just half an hour. Because my other class ends at 2 o'clock. At least I will have some better 2.5 hours of break. Okay. From tomorrow, another 4 days. See, we are supposed to finish it in 2 days. Rather than taking 4 days, we are splitting it into 2 days into 4 days. Okay. 4:30 to 6:30. We'll make it like that. Better. And I will also text here. Oh, even I can't type here. Huh? Okay, chalo. Okay, 4:30 to 6:30. I will inform to the team. So 2 hours will take for next 4 days. Okay, buyers and sellers have a dash knowledge. Buyers and sellers have a complete knowledge. So there is no requirement of an advertisement cost. Not just advertisement, there is also no transportation cost. So even though if you are incurring transportation cost, you can't charge it to the end customer because you are just a price taker, not a price maker. That's the reason. Even though if you are incurring a transportation cost, it's of no use. You can't charge it to the end customer. So remember, in case of perfect competition market, there is no advertisement cost and there is no transportation cost. See, advertisement and transportation both put together. What is it? Advertisement and transportation both put together is called as carrying cost or selling cost. What is it? Carrying cost or selling cost. So this carrying cost or selling cost is absent in perfect competition market, and there is a perfect mobility of factors of production. It can move from the hands of one person to the another person without any kind of interruptions, without any kind of disturbances. Now, out of this 8 points, if first 5 points are satisfied, that is called as a pure competition. That is point number 1. Existence of large number of buyers and sellers. Manufacturer is only a price. There is a dash pricing. Homogeneous or identical goods in and free entry and free exit. When will the firm enter? During supernormal profit, and when will the firm exit? During the loss. Clear? Only when this first 5 points are satisfied, then we call it as a pure competition. And when all the 8 points are satisfied, and remember, in this word, there is no country which is following it. But the elements of pure competition, what is it? Elements of? Like agricultural sector, clear up, stock markets. There are few examples wherein which still a pure competition policies are followed. But there is no country on earth which is having completely perfect competition market. Clear? So these are the characteristic features. But most common question that will be asked is from firm equilibrium. Which equilibrium? Like generally we don't write MC curve as complete U in shape. We only write it as the second part of the graph, only this J shape curve. The reason behind that is MC curve should cut MR curve from. That means we don't stop producing initially, because initially we might have only and only incurred a losses. What is it? We might have only and only incurred a. So this entire topic in detail we have done in the previous marathons. Anyone having doubt in firm equilibrium concepts? MC equal to MR. MC should cut MR from below. I hope you guys know this. Do you guys know this? Even YouTube students. So go in detail with revenue curve in monopoly and oligopoly. Okay, fine. Chalo. See there are two conditions. Condition number 1. MC should be equal to, and MC should cut MR from where? Not from. See, observe, here it is cutting from above. So we don't consider this point as equilibrium. When MC cuts MR from below, this is what we consider it as a. So point Y is considered as equilibrium. Point X is not considered as. So we ignore the first half of the graph. We only consider the. So that's the reason when we are writing MC curve, we don't consider entire U-shaped curve. We only consider second half of the graph and we just write it as dash shape curve. J-shape curve. Which shape curve? And there is one more beautiful question, not just about firm equilibrium. They will also give a relation with output. What is the relation with? Output. What is it? Now, when should we produce and when we should not produce? Simple logic. Whenever MC is greater, MR is lesser. What is it? MC is greater. Okay, consider this point C. This is MC curve. This is MR curve. point C is greater, point D is lesser. That is, revenue is lesser, cost is greater. You will be in loss. At that point of time, we should decrease output. What we should do? Suppose point A you consider and this is point B. Now point A is the MR curve. Point B is the MC curve. Which curve? MR is greater, MC is lesser. When revenue is greater than cost, we will increase output. What do we do? See here, revenue is greater than cost, output will. When revenue is lesser than cost, output will. But if revenue and cost both are equal, these 2 points, point X and point Y, deciding factor is MC curve. If MC cuts from above, MC cuts from, output will increase. If MC cuts from below, output will decrease. Clear? So the questions will also come from this area. Clear? Understood? Now, there is one more. Behavioral principle. Which principle? That comes in unit 1. Wait, I will go back to unit 1. That is the last topic in the unit 1. So, behavioral principle 2. Behavioral principle 1 is a shutdown point. When a firm is unable to recover back their dash cost, the firm is said to be in shutdown. Now, behavioral principle 2 is by expanding output. What is it by? See, this word expanding output is important. By expanding the output, what is the level you are going to produce? That is the maximum profit ability to earn. What is it? Maximum profit? Until when MC becomes equal to MR. And MC should cut MR from where? Below or above? That we know it. So when MC is equal to MR, we are going to produce it until MC cuts MR from where? Below. Until then, we are going to expand our output. Until then, we are going to earn dash profit. Clear? From this now, this is the area most commonly the questions are going to come. Behavioral principle 2. This is related to firm equilibrium. Simple to logic. MC should be equal to, MC should cut MR from, and that is called as what? By expanding our output, what is that maximum profit a firm can achieve? That means maximum profit level of the firm. Which profit level? What is the level of the maximum profit level of the firm? MC equals to, and MC should cut MR from where? Below. Clear? And behavioral principle 1 is related to shutdown point. Which concept? Shutdown point. Clear? This is the concept of perfect competition market. Which competition market? So in the perfect competition now, in case of short run, if at all we are trying to operate in short run, all the 3 possibilities are there. Supernormal profit, normal profit, and especially this normal profit conditions are important. See, this is how the graph will be for normal profit. In normal profit now, P equals, AR equals, MR equals, AC equals. At this point of equilibrium, all the curves are equal. Not just P, AR and MR is equal. Even that is equal to AC, even that is equal to. So this logic alone you have to remember. Hey, where did that go? P equals, AR equals, MR equals, AC equals. So you should remember this logic. Same to same. If they ask it from long term, from which term? In long term, only and only normal profit is available. Which profit is available? They say that even though we can earn supernormal profit, now, if any one firm does that, it will attract competition. What it will do? No. We don't want to do that. So better we don't want competition only. By the way, boss, in this market, manufacturer is just a price taker, not a price. Where is the concept of competition? There is no concept of competition. They say that we will only and only earn which profit? Same graph, once again repeat the repeat. Same condition everywhere, prefix as L. What is it prefix as? LAR equals LMR equals LAC equals LMC. All these curves are equal to price. This condition alone you should remember. Clear? This is short run. What is it? And long run. In short run, that alphabet L will not come. In long run, alphabet. See, in short run, 3 possibilities. Supernormal profit, normal profit, loss. In long run, only and only which profit? Normal profit. And this entire market is unrealistic. Entire market is myth. What is it? Entire market is? Is that clear? Understood? By this, perfect competition market comes to an. Perfect competition market doesn't have much complication. It is easy. Clear? Now let's go to the realistic markets. That is monopoly. What is it? Always and always remember, whenever you see the word monopoly, this has to come to your mind. Firm equal to industry. What is it? That one single firm, whoever is selling in that industry, that one firm itself is called as an industry. So firm equal to industry logic is applied in which market? Firm equal to industry logic is applied in monopoly market. You are the only seller, except you, no one else is there in the whole market. You are the person who is selling it. You tell me, will you decide the price or demand and supply will decide? We will decide. So in monopoly market, we are a, and you tell me, when you are a price maker, would you like to earn profit or incur loss? Normal profit or supernormal? Yeah, see, we want to earn supernormal, and supernormal profit is also called as abnormal profit. That is another name of supernormal profit. Clear? And there is no concept of substitutes at all, boss. You are the only person, except you, no one else is there in this economy to produce. You are the only one single firm considered as a whole industry. What is it considered as a? There is no concept of competition. Leave about competition. Even if anyone tries to enter this industry, they are not allowed. There is an entry barrier. What is there? There are 4 types of barrier. First one, law of a nation itself will restrict. Second one, climatic conditions of different localities will act as a barrier. Third one, we will create a cartel. That means our own organization, our own corporations. Only corporation members can sell. Others cannot sell. Next term, even though if government provides a permission, investing huge money and becoming monopoly is not an easy task. So these are the 4 types of entry barrier: legal entry, natural entry, business formation, and that business formation is also called as cartels. That means association, groups, corporations. Clear? And most important characteristic feature of monopoly is price discrimination. What is it? Charging different prices to different customers for the same type of goods and services. What is it? Charging different prices to different for the same type of. Best example, your local vegetable market. When your mom goes for vegetable shopping, she will bargain it crazily. If we say 80 rupee, what 80 rupee? Next door they are selling at 50 rupee. Are you giving it or not? Finally, you will agree for 50. If your dad go, he will bring for 70. If you go, 80 only. He will say, if you want, take. If not, get lost. You will be like, okay, give it at 80 only. See, same tomato. For your mom, that guy sold it for 50. For your dad, 70. For you, 80. Same commodity or same goods and services sold at different prices to different customers. Sir, why do we do this? To earn supernormal profit. To earn which profit? The main intention of a monopolist is to earn which profit? Supernormal profit. So in order to earn the supernormal profit, we discriminate price. What do we do? And such discrimination, there are 4 types. How many types? First one, personal price discrimination. Let's assume Shashikiran has a cloth shop. If my regular student, if my student comes to my shop, 10% discount. If my regular customer comes, 15% discount. If my relative comes, 20% premium. No discount and all. Premium for them, because they scolded me throughout my student career. He will not do anything. His marks is low. That is why. Pay the penalty. No, my wish, my shop. I will charge the way I want. Personal price discrimination. Next, geographical. I will intensely charge more price in North India and less price in South India. It's my wish. Next, geographical price discrimination is the next. According to use. Best example, man. LPG cylinder. Commercial use, different price. Residential use, different price. Next, price discrimination according to time. If you buy raincoat in summer, full cheap price. Raincoat in rainy season, full high price. Like this, it's up to us. See, either we can do personal discrimination, geographical discrimination, according to usage or according to the time. These are the 4 types of discrimination, and there are 3 degrees. How many degrees? 3 degrees of price discrimination. First degree price discrimination is based on consumer surplus. Which surplus? Yesterday we studied now extra worth of satisfaction. Whatever customer is ready to pay in excess, I will try to extract as much as possible. I know that if Shiva comes to my cloth shop now, he will ask discount. I know it very well. Instead of saying 500 rupee intentionally, I will say 700 rupee. I know later he will come down to 500 because his intention to pay is only. Or else he doesn't have that bargaining ability, but he is ready to pay extra up to 1000 rupee. I got to know. Intentionally, I will try to extract 1000. How much ever you are ready to pay, I will try to extract that. That is called as first degree. That is based on which surplus? Second degree is based on. Now let's say Shiva is getting married For his marriage invitation, he has called 1,000 people. He is getting all the catering works done. He needs some, let's say, 200 kgs of onion. How much? 200 kg onion he will get at wholesale price. Just 2 kg onion for his home regular consumption he will get at wholesale price, no retail price. So depending upon volume which you are buying, if you are buying bulk volume you will get for a lesser price, that is at wholesale market price. If not, you will get at a retail price. Next, third degree discrimination. Which degree? Third degree discrimination is based on different attributes. Based on what? Different? See, based on the different attributes, the different attributes are divided into a sub-market. Now let's say, for example, assume my attribute is based on society, Hindu, Muslim, Christian, or else elite class, middle class, lower class. Or let's say in aviation they will do now business class customers and economic class customers. Like this, it's up to me. I can divide it based on any category. It's up to my wish that based on different attributes, the different attribute is a different sub-market. That is called as which degree? Third degree price discrimination. Is that clear? So these are the characteristic features of monopoly. What do you mean by monopoly? In the whole, but dash buyers are there. Large number of buyers are there, but how many sellers are there? Only one single seller is there. So firm equal to condition is satisfied in which market? And a monopolist is always there. He always enjoys. That means is always and always revenue curve is greater than the cost curve. Next up, there is no close, no substitute at all, no concept of substitute. You are the only seller and there is a dash barrier. Either new company or any similar business trying to enter this industry, not at all allowed. There are 4 types of barrier. Which are the 4 types? Legal entry barrier, natural entry barrier, business formation and investment factors. Clear? And most important characteristic feature is what? Charging different prices from different for the same type of goods and services. That is called as price discrimination. Is that clear? Understood? Next. In price discrimination, there are 4 types. Personal discrimination, geographical discrimination, according to use discrimination, according to. There are 3 degrees. First degree is based on. Second degree is based on. Third degree is based on. And we are dividing that attributes into different. Clear? Now, kindly solve this. Now, this is the most important. Solve this. Revenue concept. TR is P into Q. 20 into 1. How much? Next up. 56, 48, 36, 20. Here it will be 20, 18, 16, 14, 12, 10, 8, 6, 4, 2. Now observe. AR column and selling price. Both are one and the. That is why I kept on saying AR is also called as selling price. AR is also called as what? Next comes the MR concept. Now observe, output continuous or not continuous? So first formula, TR n minus TR n minus 1. If output is not continuous, change in TR by change in quantity. Is that clear? Now this will be 20, 16, 12, 8, 4, 0, minus 4, minus 8, minus 12, minus 16. Clear? You got these values? Now observe this carefully. Only and only observe the AR and MR column. Just observe the AR and MR column. This should be sufficient. Now observe 20, 20. From 20 reduce it to 16. What is the difference between these two? Here what is the difference? Again 16 to 12 difference. 4. Here 18 and 16 difference. Again 12 and 8 difference. Here 16 and 14 difference. Here again 8 and 4 difference. Here 14 and 12 difference. Can I say MR is always and always decreasing double than AR? Marginal revenue is decreasing. And not just that, whenever TR is maximum, MR is. TR is maximum, MR is. And when we represent the same table in the form of graph, this is how the graph looks like. Initially, whenever TR is increasing, see TR increases, becomes maximum, again it goes back to same level. See, it started from 20, na? It went to 60, again it went back to It is like inverted U. Increased, became maximum, then again it started to decrease. Clear? But AR curve is also called as selling price. Henceforth, selling price will never become zero. Selling price will? Is that clear? Okay. Now have clear. Initially, whenever TR is increasing, no doubt MR is decreasing, but MR is still positive. And this point, E is greater than 1. Point elasticity method yesterday. Middle portion of the demand curve is unitary. Upper portion is relatively. Lower portion is relatively inelastic. Already we have done this. Clear? And whenever TR is becoming maximum, what is it? TR is becoming? MR will be 0. AR will be E is equal to 1. AR is also called as demand curve. Which curve? The another name of AR curve is demand curve, not just selling price. AR curve is also called as what? Clear? You should also keep this in mind. Now observe. Whenever TR is maximum, MR is E will be. Next, when TR is increasing, MR is no doubt decreasing, but MR is positive. E will be greater than 1. Next, when TR is decreasing, MR has already become negative. It is decreasing, but it has become what? And E will be. Now all this three relationship is extremely important. The questions will also come from this area. Relation between TR and AR, relation between MR and AR, relation between TR and MR. Any mixed combination, permutation combination question can come. You need to remember all the three. And most important, this is AR curve. AR curve is flatter. What is it? AR curve is? But MR curve is steeper. MR curve is? Is that clear? AR is flatter, MR is steeper. Okay, now there were two formulas to calculate MR. Which are those two formulas? First one, when output is continuous. What is it? TRN minus. Okay, next, when output is not continuous, change in TR by. Clear? Now there is one more formula. There is a third formula. We need to use this whenever there is a information given about selling price and elasticity. What is it? So when the information is given about selling price and elasticity, we need to use a third formula, that is AR E minus 1 by E. What is it? AR E minus 1 by. Clear? So from this, numerical problems have also been asked. They will give us silly problems. 1 mark simply free you will get. Is that clear? Understood. So when will you use this third formula? When there is information given about selling price is also called as, and elasticity is nothing but this, E. When there is information given about selling price and elasticity, we need to use this third formula. Is that clear? Wait, let me show the exam question only. Recently they have asked. Chapter 4. See, May 2026 attempt. Question number 69. Solve it. Calculate AR when MR is a price elasticity of demand is. Now literally you need to find missing figure. They have only given the value of MR. They have only given the value of elasticity. Now you should identify the AR. So as per the formula, MR is AR E minus 1 by E. They have given MR value. They have given E value. Missing figure is. You need to identify missing figure, AR value. Solve it. $14. 45. Able to get the answer? 45. Here option given is 45 only. No? Got it? Anyone finding it difficult how to solve this? Here. Okay, let's go back. See, in case of monopoly, if it is a short run, what is it if it is a? See, there are two possibilities, supernormal profit and loss. What is it, supernormal profit and? But in case of long run, only and only supernormal profit. What is it, only and only? But the most important topic of monopoly is this price discrimination. Kink demand curve concepts will come. Which concept? This is what is most important. Clear? So remember, we already know the meaning of price discrimination. What do you mean by price discrimination? Charging different prices from different customers for the same type of goods. And so why do you want to charge price discrimination? In order to earn supernormal profit, or also called as a. So in order to follow this price discrimination, there are 4 essential conditions. How many essential conditions? First and foremost, existence of dash power. Monopoly power. You should really have a monopoly power. Except you, no one else is there in the economy. Only you are the person who is selling this goods and services. You should have that monopoly power. Second one, you should be able to separate the market. That means whatever that you are able to divide, you should be able to separate that market in your own wish, based on any attributes, your wish. And in that separated market, there should be different. Elasticity should be different. Relatively elastic, relatively inelastic, unitary elastic, like that. Most important, no possibility of resell. Now let's say Shashikiran is a chocolate seller. I'm selling chocolate in Delhi and I'm also selling chocolate in Coimbatore. In Coimbatore, I'm selling at less price. In Delhi, I'm selling at more price. All the way from Delhi, person should not come to Coimbatore, buy the chocolate at less price, go back and sell it in Delhi at a high price. That resale is not possible. You are the only seller. You are the only seller. Clear? That is what? In monopoly, single seller, right? Except you, no one else is going to sell. You are the only seller. That is why we are saying, in order to follow this price discrimination, these 4 conditions should be satisfied. That means no one can be able to come and resell your own commodity by buying at a lower price area and go and sell it at a higher price. Only you are the seller, and there is a different elasticity in different market. You are differentiating the market, and in reality, there is an existence of a dash power. Monopoly power. Is that clear? Understood? Chalo. Now, I had also given one numerical problem. In the class, I will make them to solve full in detailed explanation. We will give it here. So, this is market B. I will scratch it off here. So, here elasticity is 2. This is elasticity is 5. So, this is more elastic. This is less elastic. Clear? So, in this case, we are using the third formula. See, they have given a numerical problem. In this numerical problem, we are identifying MR. What are we identifying? See, MR means one more extra unit. By selling one more extra unit in market A, I will get 15 rupees. Same one more extra unit in market B, I will earn 24 rupees. How much I will earn? 24. Now you tell me, where should I sell more units? In market B or market A? Because 24 rupees I will earn. Here I will only earn. So where am I interested to sell more? So I will shift my supply. I don't want to sell more units in market A, so I will shift my from market A to market. In market B, what happens? Supply will become more, but demand is not so much. This leads to excess. When there is excess supply, price will. But here there was a demand, demand was existing, but stupid fellow, you shifted the supply. In this market, supply will be lesser, but demand will be more. This will lead to excess demand. Because of excess demand, price will. See, in one market, prices are increasing. Another market, prices are. Now we discriminated the price. What did we do? Discriminated the. And where did we discriminated the price? See, the market where there is more elastic. Which elastic? That is market B. There we decreased the price. Market where there is less elastic. Which elastic? There we increased price. This is the conclusion. This you need to remember. In which market there is more and more elasticity, in that market we will decrease price. In which market there is less elasticity, there we will. Now same to same, whatever we are writing here, if we put it across in the form of graph, this is how the graph looks like. Market A, market B. Market A, 2 was the value. Market B, 5 was the value. It was more elastic, that is flatter demand curve. Here it is steeper demand curve. In aggregate market, when we combine both, what is it when we? So there is a kink. Kink refers to bend. What does it kink refers to? So there is a kink demand curve. The below portion is relatively elastic. Above portion is relatively. The reason for this kink, what is it reason for this? Is price discrimination. And this kink demand curve is dashed to the origin. Which to the origin it is? Convex to the origin. Is that clear? Understood? So this is the main concepts of monopoly. Any doubts in the monopoly concept? This is the main. Whatever important is there, I covered the important areas. Clear? What is the reason for a kinked demand curve in monopoly? Price discrimination. That price discrimination is a combination of the relatively elastic and and it is dashed to the origin. Lower portion is relatively elastic, upper portion is relatively inelastic. Is that clear? Understood. Now, oligopoly concept also has a kinked demand curve. Now, this is what makes it more interesting than monopoly concept. Because this concept of oligopoly kinked demand was introduced by Sweezy. Who introduced it? Paul Sweezy. And it is also called as Sweezy's model. Which model? In exam, kinked demand curve hypothesis was introduced by Paul Sweezy. In which concept? Oligopoly. That is where first it was introduced. Later it came to monopoly. Clear? Understood? So, Sweezy's model refers to kinked demand curve of oligopoly. What is it? Kinked demand curve of? Like how in monopoly, price discrimination is important. In oligopoly, price rigidity is important. So, what is rigidity? By the way, first let us understand what is oligopoly. Oligopoly means which sellers are there? But there are dash number of buyers. See, between all these few sellers, there is a close interdependency. By one or the other way, we are interdependent. One will come and say, do you have salt in your toothpaste? One will come and ask, do you have chakke, lavanga, pudina, all, palav, masala items, dabur red. So one will come and say, my shampoo if you use, you will get silkier hair. One will say, my shampoo will remove dandruff. One will say scalp problem. One will say whitening of teeth. One will say stronger teeth. End of the day, we are similar, not same. What is it? Similar. By and large, we all are selling a similar commodity, highly interdependent with each other. We want same set of customers and we have a price rigidity. That means, out of this few people, if any one guy reduces price, others will also reduce. But if any one guy increases the price, others will not increase. Others will think before increasing. Why, sir? Because for everyone, customers are important, especially a country like India, price sensitive customers. If you increase price, others will not increase. But if you decrease the price, automatically prices will become lesser, competition will increase, so others will also decrease. If they don't decrease now, they will lose customer. This is called price rigidity. If any one fellow decreases, others will also. If any one fellow increases, others will not increase. They will not compete in increasing price, but they will decrease the prices. That is price rigidity concept. And we have an existence of dash cost. What is that selling cost? Clear? And kindly mark this topic as important. One question will be always and always there from types of oligopoly. This is one common area. One question will always and always be there here. In types of oligopoly. See, total there are 5 types of oligopoly. How many types are there? First one, pure oligopoly, differentiated. Pure oligopoly means homogeneous goods like cement industry, iron and steel industry. In that I don't have in cement, pudina flavor, mint flavor, lime flavor and all. Same, plain cement. Everyone is selling the same commodity, homogeneous goods by all the manufacturer. But in differentiated, heterogeneous goods, it is not same, similar. Like toothpaste example, which I gave. Like shampoo example, which is similar. Next comes open oligopoly. Any new firm can enter. There is no restriction. But in closed oligopoly, new firm cannot enter. Restriction is there. Like aviation sector. Government is not issuing license so easily for any new person coming inside. Only few players are there. Whoever is there, only they will be operating. Closed oligopoly. Next, collusive oligopoly. Which oligopoly? All these few people will come under one roof and they will decide a common selling price. Which selling price? Common selling price, how much quantity to sell. All these petrol bunks, everyone are selling at one common price only. Whether you go to Indian petrol bunk, Bharat petrol bunk, HP petrol bunk. But sir, Shell petrol bunk, stupid fellow, he will charge 1 or 2 rupee extra. That guy is called competitive guy. I am not ready to sell at common price and all. We guys will sell at our own price. We guys will sell at our own. That is called as competitive oligopoly. Next comes full oligopoly. Out of this few people, any one stupid fellow will be called as price leader. He is like a dominated player. And whenever this dominated guy changes price, others will also. He is like a leader, like Jio in the present telecommunication market. If Jio changes, Airtel will also change. VI will also change. Next, BSNL will also change. If Airtel doesn't, if Jio doesn't changes, Airtel will also not change. VI will also not change. So, market leader. Which leader? Or also called as a That comes where? But in full oligopoly, no market leader, nothing. Everyone will fix our own selling price. That is called as full oligopoly. Next comes Pushpa movie. Syndicate oligopoly. Proper Pushpa movie example. All red sandal smugglers, they will create their own syndicate, their own group. Everyone sells through the common syndicate. Everyone sells through the. That is called syndicate oligopoly. In organized, now full match fixing, we will only decide how much to produce, what to sell, where to sell, how much you sell, how much I should sell. That is called as. This is proper match fixing. These are the 5 types of oligopoly. First and foremost, what is pure oligopoly? Homogeneous goods. Differentiated. Open oligopoly. Entry is not restricted. Closed oligopoly. Entry is restricted. Collusive oligopoly. Everyone sells at common selling price. Competitive. Not ready to sell at common selling price. Partial oligopoly. We will become price leader and he fixes them. Others will follow. But in full oligopoly, not ready to go with the leader price and all. We will fix our own. Syndicate. Pushpa movie example. Everyone are selling through the common syndicate. Centralized syndicate. In organized, it is where firm organizes themselves. In what? Central association to fix the price, output and quota, everything. Clear? And most important topic. Kinked demand curve of oligopoly, which is concave to the origin. What is it? But in monopoly it was convex to the origin. Here it is concave. See, if any one reduces, everyone will reduce. But if any one guy increases, only you will increase, others will not. See, below the kink, here it is relatively inelastic. Above the kink is relatively elastic. But in monopoly, opposite, na? Below was relatively elastic, above was relatively inelastic. See, this difference you should be knowing. And kinked demand curve of oligopoly was introduced by. It is also called as Sweezy's model. Which model? Paul Sweezy. He was the person who introduced it. This is the concept of oligopoly. Which concept? Oligopoly. Clear? Understood? Flip back the page. Have a look. Before going to monopolistic competition. That is also very easy. Only that long run alone you should remember. Let's continue. Okay. Today, the markets which we are witnessing in the real life, the real market scenarios are monopolistic competition. There are large number of buyers as well as large number of, and manufacturer has a full control. You can bring any type of changes, any kind of modifications in your product. Like for example, Dettol. It was just an antiseptic liquid. Now Dettol soap, Dettol hand wash. Tomorrow they may come up with Dettol toothpaste. Kills 99.99% germs. People will buy. You can come with any modification to compete with others because you are not the only seller. Along with you, there are also other sellers. You need to compete with them. What you should do? Clear? See, it is a combination of perfect market and the manufacturer will have a complete control, but the manufacturer will not only be the person. Instead, he has to compete with in order to sell this. And he can bring any changes and any modifications in their product. So there are large number of buyers, large number of. There is free entry and free. When will we enter? Supernormal profit and normal profit. When do we exit? Product differentiation. That means we always try to say that we are best, we are superior than our competitor. You have seen that now. Ariel advertisement. Ariel, other detergent. Surf Excel, other detergents. We try to differentiate. We are best, we are superior. We will always and always say that we are different, competitors are different. Next, there is an existence of advertisement and transportation cost, and there is an existence of dash loyalty. Best example, see your mom. Assume your mom has asked you to get a cooking oil, sunflower cooking oil. By mistake, you took Sun Pure. You took? Now your mom is like, hello, stupid fellow, what did I say? Sunflower. What have you bought? She will be like, get lost. Go exchange it. And you are like, no, both are one and the same. Hello, don't argue with me. I said sunflower. I want sunflower only. See, your mom is more brand loyal in kitchen ingredients. Even though better quality is available, superior product. No. I want Anil Sevai only. There are many families now. Anil Sevai only. We want the same brand. Even though some Gopal Sevai, Chennappa Sevai, every other brand is good. Anil only we want. Like this, they are more loyal towards that particular one brand. Like Apple users, na? Apple iPhone users, like that. See, brand loyalty. Which loyalty? Brand loyalty. Clear up. So these are the characteristic features. Now, in case of a short run, in perfect monopolistic competition market, we have supernormal profit or loss. Somewhere we saw the same thing now, supernormal profit or loss in short run, monopoly. And this monopolistic competition is a combination of perfect and monopoly. But long run, now this long run is most important because you need to remember this buffer stock concept. Which concept? That means we can, let me say for example, operate at supernormal profit, but still we don't do it. We will only and only operate at normal profit level. Which profit level? Let's say I have a capacity of producing 1000 units in a month and we can sell it at supernormal profit. No. I will intentionally produce only 800 units and I will hold back this 200 units. Why? Suppose tomorrow if any strong competitor enters the market, any strong competitors like our Geo, then I will utilize this buffer stock. See, I will utilize this buffer stock between these two areas. And then I will reduce my cost of production from point A to point B. When cost of production decreases, even my selling price can be decreased. So in long run, in monopolistic competition, remember we have a dash stock. Clear? And we can make supernormal profit, but we will not. We will intentionally earn which profit? Normal profit. Now let me compare with all the four. This is where you guys will go wrong. So be careful. See, the most common mistake you will do is with monopolistic competition and perfect competition. In both the places, large number of buyer, large number of. But in perfect competition market, homogeneous goods. But in monopolistic competition, heterogeneous goods. Goods are not one and the between the manufacturers. Is that clear? In monopolistic competition, now, wherein which it is a realistic market. Which market? But perfect competition is not a. And monopoly, which concept?
Monopoly.
That is a unique good. Which good? Except you, no one else is there. Only you are the seller of that particular good in the whole country or in the whole industry. You are the only person. So it is a unique good. Which good? But in oligopoly, there are competitors. We all have a close interdependency. What is that? We are producing similar products. Which products? Similar product means oligopoly or duopoly. Even in duopoly also a part of oligopoly only. Two predominant sellers. What is it? Two? If there is a single seller, single buyer, single seller and single buyer, bilateral monopoly. What is it called? If there is a single seller and single buyer in the industry, that is called as bilateral monopoly. Which concept is that? Is that clear? So this is what the main crux of the chapter 4 is all about. So remember, in case of chapter 4, in the unit 1, there is one table. Even in the ICA material, it is given. This table is what makes it different, and especially this price elasticity column. Now, this is important. In monopoly, especially instead of small, you can write it as highly inelastic. What is it? Highly inelastic. Sir, difference between collusive and syndicate and organized oligopoly. Okay, I will do it. Shen Bhagavati, we went in detail with revenue curve of monopoly and oligopoly. Clear or still you have a doubt? Okay. Done with this? Okay. In oligopoly, okay, which are the one? Okay, collusive, syndicate and organized. See, in case of collusive, everyone are selling at a common price. Common selling price. Okay, we will also decide the quantity, everything. But everyone are selling at a one common price. But here, in case of syndicate, everyone are selling through the syndicate, not at common price. What is it? Everyone are selling through syndicate. Like Pushpa movie example, everyone are selling through that group. But here, in organized, either price, either quantity, either whatever it is, we all are deciding between each other. We are fixing between each other and then we will sell. That is called as match fixing here. See, where firm will organize themselves. That means all the competitors will come. They will sit. They will organize themselves. But here they don't organize, na. Like best example, petrol bunk, gold rate, demand and supply variation it is. That same rate will be there in every gold price. Making charges, wastages and all, that is different. But the main base price of the gold remains the same. Like petrol bunk, 1 liter petrol price remains the same. Any petrol bunk you go, it remains the same. Yup. Chalo. So this was the main topics of chapter 4. Usually in chapter 4, people will make a mistake for the very reason conceptual knowledge will not be there. Especially in perfect competition market. Now, whenever you are reading a question from perfect competition market, keep this in mind. P is equals to, all the three will be equal. Demand curve, price, both are one and the. And moreover, this market is unrealistic in nature. What is it? Clear? Okay, let's go to the MCQs so that you will understand. Chapter 4 will be slightly tricky every single time. Wait, I will go from the start. A group of which explicitly collude to coordinate their activities. That means they will come together, they will coordinate their activities in the industry, whereas there are only just all of them are either similar in size or maybe in the referrals. They are called as cartels. Everyone are coming together, everyone are forming a group, everyone are forming a, they are called as cartels. Next, choose the correct statement about the duopoly. Duopoly is a part of oligopoly, but predominantly how many sellers are there? See there, it is a special case of a oligopoly market situation. Next, when goods are sold based on their, it is known as an imperfect oligopoly. In perfect oligopoly, all of them are selling the same type of goods, and pure oligopoly, differentiated, we said, same that, perfect and imperfect. What is it? Perfect and? They are just changing a word as perfect and imperfect instead of pure and differentiated. Next. This is another area. I said, from nook and corner of the material, sometimes they will ask one question. Game theory. This was introduced by Vaughan and Oscar. What is it? Vaughan and? That was introduced by them. Chapter 4. Usually some 3-4 questions or sometimes up to 5 questions they will ask from nook and corner of the material. The factors which determines the types of a market. That means factors. That means the determinants. What all factors will make us to understand the types of market? One, extent of what kind of demand is there and nature of the and size of the population. This is also there. It is there in one of the nook and corner of the material. Now they have given that statement. They have picked up this time 2 questions from chapter 4 nook and corner. They have picked. This is much more easiest question. See, they are asking you to calculate of the 4th unit. They are just asking marginal revenue. See, average revenue is given, total revenue is given. See, we know that to identify marginal revenue, we just have to come with a difference between the total revenue, 4th and 3rd. See, 300 and 240. Difference is how much? That's it. And just now we did this in the class. Already taken care. Next, market dealing with lash products. And which are? They are called as which form of the following forms essential elements of them? There should be buyers and sellers. Yes. Products and services. Yes. Knowledge of the market condition, whether it is monopoly, monopolistic, perfect, oligopoly. Yes. Multiple prices for the products and services at a given time. We never spoke about dual price, multiple price and all. We spoke about the first three characters. So it is only 1, 2 and 3. What is it? 1, 2 and 3. Next. Select the correct options from the following with represents market classification based on. See, based on volume of business, they are asking. Volume means wholesale and retail market. Which market? Spot market and future market. That is based on nature of transaction. See, initially I said, in this chapter, we are not interested to understand on various other classifications. Wait, I will go to that. See this one. Based on area, local market, regional market, national market, international market. That comes under area. Time. Spot market, future market. Clear? Or short market, long market, and also nature of transaction, cash transaction, credit transactions. Next comes regulated, unregulated. SEBI regulates the securities market. IRDAI regulates the insurance market. Like this. What regulates that? Regulated, unregulated. Next, volume of wholesale market, retail market. That is the question here. They are asking from the volume of business. That is called as a. It is not local, regulated or spot. Based on volume of business, it is retail market. Next, the industry and the firm are in dash type of a market. Both are one and the same. Industry is equals to firm. Where is that? Next, government needs to take steps to regulate and prevent formation of certain market forms that are exploitative and creating a undesirable outcomes in the economy. Actually, this is having a connection with macroeconomics. Chapter 10. This has a connection with chapter 10. See, in India, earlier, we had something called as MRTP Act of 1969. What is it? MRTP Act of? We never allowed any private firms to become dominant in the industry or to become number one in the whole country and they will be controlling everyone. That is creation of monopoly. What is it? Let's say, for example, whichever private firms who has investments greater than 100 crore. What is it? Investment greater than? They will come under MRTP Act. Even if you want to start a new small business also, you need government permission. Without government permission, you can't start or you can't expand your capacity. You can't do something new without government permission. Why did government do that? We didn't wanted someone else to become a monopoly and he will control the whole industry. See, now read it. Government needs to regulate and prevent formation of certain market forms. That means creation of monopoly that are exploitative and creating undesirable outcomes in the economy. Earlier, this is reference to MRTP Act. That is monopoly. Actually, this is not chapter 4. This is chapter 10. This is chapter 10. Which of the following is not a characteristics of a strategic interdependency is there? Almost one and the same similarities are there. Group behavior, everyone behaves in the same manner. Importance of will bring Virat Kohli, Sunny Leon, everyone to brand endorse everyone and also will influence people. Next, no importance to advertisement. High importance. Do you have salt in your toothpaste? One will come and say Chakke Lavanga Pudina items. All this. See, they will never and ever ignore this advertisement. Option C. Okay. Next. Cross elasticity of demand. Which elasticity? Chapter 2 related cross elasticity. Cross elasticity of demand for a monopolist product and any other product is. Now, first question in monopoly. What is it? You are the single seller. Except you, no one else is there. There is no concept of substitutes at all. What is it? No concept of. But cross elasticity speaks about substitutes and complementary. Close substitute means greater than one. Not close substitute means. By the way, monopoly means not at all a substitute. That means even lesser than one. Na? Even lesser than not close substitutes it will be. Because there is no concept of a substitute. See, like this, they are merging two chapters here. So, in this case, monopoly means you are the only seller. There is no concept of. You cannot call it zero because in cross elasticity, zero means unrelated. What is it? So, most of them made with that answer, sir. Zero is there, na? But along with zero, it is very. Answer is very small, not actually zero. Zero means unrelated. In cross elasticity, lesser than one. Yes, very small. What is it? Very small, not even a substitute. So option D. This was little tricky in this attempt. Only there's one question. Next. In a monopoly market, ATC, that means AC is lesser than AR. Leave about monopoly. AC lesser than AR. What is it called as? Loss. AC lesser than AR, a firm is incurring a. Next, which of the following is not true on the long run equilibrium of a? By the way, in perfect competition market, long run equilibrium, normal profit. Which profit? And they say that even though we can make supernormal profit, we will not. If at all we try to do that, others will also follow the same and we will have a competition. But in reality, perfect competition, everyone is selling same goods. And moreover, price taker, not a price. No advertisement, no transportation. Is there any competition in real life? No, there is no existence of competition. And they're asking which is? All firms in the industry will be in equilibrium. They will always operate at TD is equals to. Yes, correct. All firms will be earning which profit? No way. They will not even earn supernormal. They will only earn. This is only wrong. Next, the price of the product is in such that quantity supplied by the industry is equal to quantity demanded by them. Yes, they operate at equilibrium. The plants are used at a. Yes, but where we don't use at full capacity in long run? Monopolistic competition. We use buffer stock. Which stock? But here they're asking about. Yes, in perfect competition, we use to the full capacity. By the way, it is unrealistic market. There is no real life example for that. Clear? Next. Market characterized by small number of large buyers and it is mostly relevant to factor market. Here, they played nicely. There are small number of buyers, but they buy at large quantity. What is that? They buy at small number of buyers only, but they are buying at large volumes. What is it? They are buying at. So, ignore this word. There's just a small number of buyers. What is that small number of buyers are called as? Buyers. Poly or cine? Oligopsony. Got it? See, they're just confused with this word large. That means small number of buyers. They're buying at a dash quantity. Large quantity. See, chapter 4 shall be little tricky. Which characteristics is shared by the monopoly and monopolistic competition in common, but not in. This was also slightly tricky. See, here it is price higher than their marginal cost. See, usually marginal cost is also called as a supply curve. Their selling price will be always and always higher than their supply curve. That is the marginal cost. See, the graph will be like this now. This is MC curve, selling price. AR curve is the selling price. This is equilibrium point. At the level of equilibrium, this level of selling price is always and always higher. See, wait, let me draw that. AR curve, MR curve, MC curve. This is the equilibrium level. Clear? Now, at the equilibrium level, we will extend the curve like this now. Now, that extended line, this is the selling price. See, at this level, selling price is higher than the MC. That is what is correct in both monopoly and monopolistic. But in perfect competition, P is equals to AR is equals to. So the graph will be equal only. P is equals to AR is equals to MR is equals to AC is equals to MC, equilibrium level. So option C. This one was most easiest. Considering a monopolist selling two markets at the price of rupees and the elasticity of demand in market A is 5 and market B is, calculate of both the market and decide in which market he should sell. Price discrimination concept, shifting of supply from one market to another market, that one. So which formula should we use now to calculate MR? Selling price and elasticity is given. AR E minus 1 by AR is 60 and market A is 5. 5 minus 1 is 4. So answer is 48 in market A. Market B is 50. So where we should sell? Market B or market A? Market B, because we are earning 50 rupees. Market A we are only earning. So we should sell more units where? In market. See there, option A. Market A, MR is 48, correct. Market B, MR is 50, correct. So we should sell more units in market B. Market B output should be increased. Clear? Same price discrimination. Wait. Just now we did now. This one. This concept. Here it was 15 rupee. Here it was. So where did we decided to sell more units in? Market B. So we shifted the supply from market A to same question here also they are asking. Clear? We solved MR. MR in B was 50 rupee. MR in A was. So I will earn 50 rupee if I sell extra unit in B. I will earn 48 rupees if I sell one more extra unit in A. So I will better sell it in where? Clear? What is it? Of a demand is price elasticity. That means this was AR curve. AR curve E is equals to middle portion na. At the middle portion, what will be the MR? MR will be E is equals to 1. MR will be TR will be. I said na relation between all the three are important. The question can come from any of this parameter. Next, first degree price discrimination in a monopolist is based on consumer surplus, based on each individual, that is consumer surplus. Next, in the kinked demand curve scenario for what happens when firm rises its price above the prevailing level. See which concept? Kinked. In concept of which one? Go to oligopoly. If you rise, only you are the one who is going to lose the customer. See, your quantity will decrease. Your other, let me say for example, manufacturers, your competitors will not increase the price. Only you have increased. What is it only? So you will end up losing more customers. What is it you will end up losing? See, you increased it by small extent, but you lost more and more customers. See here, the firm loses market share as competitors do not follow. Only you are increasing the price. Your competitors are not increasing the price. Which of the following is the core characteristics of an interdependency between the firm? That is the main core characteristics. It is not about effective allocation or lesser advertisement or unique product. Where do we have a unique product? Monopoly. Where do we have a lesser advertisement? Perfect competition. No advertisement at all. Leave about lesser. Effective allocation of resources. That is also in perfect competition market. Solve this. This is most easiest question. They are asking you to solve what? And 60 and 70 output is not continuous. So second formula. Done. So difference between these two is 10. Difference between these two is 20. So 20 divided by 10 is already done. Equilibrium concept. Under which of the following forms of market structure firm cannot influence the price? Firm cannot influence. They are just a price taker. Where? Next. An increase. Okay. Equilibrium question. Okay. Already taken care. This is also done. Demand curve shifting. Aluminium industry is an example of. See this na. I usually ask students to go write their RTP before even going to the exam, because this question straight away is coming from the RTPs. Copy paste from RTP, no changes at all. See here, they can also tweak their options. See in RTP, for example, aluminium industry is an example of perfect competition, monopoly, monopolistic competition, oligopoly. They may give options like this. But in exam, same question will come. They will give option in terms of types of oligopoly. That means in aluminium industry, same like iron and steel, cement, everyone is selling a same type of goods and that is homogeneous goods. Which goods? Perfect or pure oligopoly. Pure oligopoly is called as a perfect oligopoly. Next, kinked demand curve is found in which model is that? Okay. Which one of the following is not the objectives of the They are asking which is not the objective of price discrimination. To earn maximum profit, yes, that is the main motive, to enjoy. Next, to hold them. Not to hold them. Excessive stock. And to secure equity through. After discrimination, it will happen. But before discrimination, there won't be equity. So, answer is C. Next. Which of the following is? Which cause? Of creation of entry barriers. We will not allow anyone to start either a same business or a similar. Only we are going to sell that. Now, a fast food chain introduces a with a dash sauce. When you see this word, your mind automatically strikes monopoly. But read the full question. See, they are coming with a unique sauce to differentiate itself with. Then not monopoly. Competitor is there. Although there are similar burger option exist in the market, customer perceives that the prices. Customer perceives the product as. There are many people, different product. That means differentiation. Many sellers means monopolistic competition. Which competition? Just assume if this word is not there. Monopoly, na? Unique. What is it? Unique it is. Next, what is the correct formula? This is very difficult question. This is the very difficult question it is. TRN minus TR. Already we have done this graph question. Okay, which type of a firm has the market power to charge the prices over and above there and still earn a supernormal profits every time? That is, that's it. So this was the questions from the September 25. Next, May 25 attempt paper. Which of the following is of the monopoly? Barriers to entry, is it there in monopoly? Yes. No close substitutes? Yes. Is there having a market power? Yes. Single buyer or single seller? But single buyer comes under. This is not a characteristics. Next, already we did. No. Which of the following is not a condition of? The seller should be able to divide the markets into two sub-markets. Yes. They should have a price setting power. Yes. The price elasticity should be different in the different sub-markets. Yes. And it should be possible for the buyer of lower price market to come and resell the products at the high price. Is it possible or not possible? Option D is not a condition. It should be not possible. Clear up? Next. Under second degree price discrimination. By the way, what is second degree? Volume of transaction. First degree. Third degree. Attributes. Based on different submarkets to attributes. So first degree is based on consumer surplus. Second degree is based on different quantities of goods bought or sold. Kink demand curve model of oligopoly was given by Paul Sweezy. It is also called as a. This is very difficult question. Very difficult question. 20th unit minus 19th unit. Marginal concept. See, they are asking marginal revenue. 30 into 19, 570. 28 into 20, 560. So 560 minus 570. Present minus previous. 560 minus 570. Next. The oligopoly market in which few firms comes to a with each other on fixing the output and both. Everyone comes under a common selling price. Everyone sells at a common price. Where? That's it. Next, Jan 25 attempt, last paper. Chapter 4. In oligopoly, when the industry is dominated by, that means price leader. Where was the price leader? Industry is dominated by one large firm. Partial oligopoly. Next, in a perfect competition firm, average revenue is more than average cost. AR greater than AC. What is that? Already we did this. Average revenue curve is also called as, or one more name is there. What is that? Selling price. This is again same question repeated. Identify them. 20 rupees 9th unit, 19 rupees 10 unit. So 10 minus 9th unit. 10th is the present, 9th is the previous. So 10 into 19, 190. 20 into 9. So 190 minus 180, positive 10. See there. Market characterized by single buyer of the products or services and mostly applicable to which market? In which single firm is also the only single buyer. What is it? Only single? Buyer means sell. Buyer means sini. Seller means poly. So single buyer means single buyer and single seller means bilateral monopoly. Clear? Huh? Next. Downward sloping. Highly inelastic. Just a few minutes back, I asked you to write that word. Highly inelastic. The table. Just a few minutes back. I will go back. Yeah, see here. Monopoly market. Highly inelastic. So downward sloping, highly inelastic demand. Which market? Market for soaps and detergents. Many sellers, many buyer. Monopolistic competition. So identify the correct below mentioned condition for the equilibrium under the perfect. MC should be equal to. MC should cut MR from below. Below means it is upward sloping like this, na? So positive sloping. Which sloping? So MC should cut MR from below and MC should cut MR from below. That means positive slope. First one and the fourth one. Done. So when TR will be maximum, what is it? What will be the elasticity? Already we have done this. When TR is maximum, elasticity will be equal to 1. Elasticity will be equal to 1. And again, once again, the same formula question. See, such a silly questions will come. Which is the correct relationship? The third formula, correct formula. MR is equals to AR E minus 1 by. Next, many sellers offering dash product. How many sellers? But same product or different product? If it was same product, perfect competition. Since it is a different product, it isn't. So price elasticity of a demand for the firm under the perfect competition. Price elasticity they are asking. P is equals to AR is equals to. So it is E is equals to infinite. Horizontal na. It is infinite. Clear? By this past 5 attempts paper of chapter 4 comes to an. Clear? Flip back your page. Have a look. Any doubt? Let me know before moving into chapter 5. Chapter 5, just 5 topics are there. And all the topics, one question will come. Total 5 questions will come in the exam. Hardly it will take us some 30 minutes to finish. Chapter 5. Four 30 to 6. Save 6:30. I will start with 6. Tomorrow we'll finish 6. Both national income and Keynesian theory. Okay, let us start. Chapter 5. Okay, one of the easiest chapter. Weightage 45 to 50 marks. But usually consider chapter 5 also has micro, then proper 50 marks. See, chapter 1, you can expect 5 marks. Huh? Chapter 1 is also 5 marks. Chapter 5 is also 5 marks. Now chapter 2, chapter 3 and chapter 4 put together 40 marks will come. in this 40 marks, average will be any one chapter they will go beyond 10 marks. Any one chapter they will go beyond. Or else they may give it like this, 12, 13, sorry, not 12, 12, 13. Total 40 marks has to come, na? So here it will be like, for example, 12, 14, 14. They may go like this, or they may also come like this. They will ask 15, 15, and they may ask the remaining another questions here. For example, just 10. Any mixed combination can happen from these three chapters put together. There will be 40 marks, and this will be just 5 marks and 5 marks. Okay, let's continue. The last and the final chapter for the day, chapter 5, business. See, any economy for it matter that will undergo fluctuations. What is it? That will undergo in their economic activity. Sir, how to make 75 above in economics? By understanding the concepts. Yeah, that is what they want to score above 75. But start solving more MCQs, man. See, the biggest problem with you guys is you will be reading. Start solving as many MCQs as possible. Once you're getting stuck with any MCQ, now automatically revision will also happen. You will open the book and you will start referring to that particular topic. So don't just sit and read. Reading alone will not serve the purpose. You should solve more and more MCQs. So still having confusion between collusive and organized. See, in collusive, everyone comes and sells at a common price. That's it. In organized, not just a price. They will fix the price. They will fix the quota. Everything. Quantity restriction, everything will come. Okay. Let's get started. Okay, listen. So business cycle is also called as economic cycle or a trade cycle. See, there will be fluctuations in the economic activity of every nation. It will not always remain the same. It will be upward trend, downward trend, upward trend, downward trend. So like this upward, downward is recurrent. What is it? It occurs periodically. When I say periodically, not always at regular interval. What is it? Not always at. That means one after the other. See, every business cycle starts from where? Trough. From the trough, it will start, it will come to recovery. And recovery is not a stage. What is it? Recovery is not a. And after the recovery, it will come to expansion. Now, during the time of expansion, all these parameters, that means the factors which will affect every parameter will be seeing an upwards trend. Which trend? Everything will be seeing upwards. And this is when the economy will also face inflation. What is it? Economy will face? Clear. And finally, the economy reaches the peak, the topmost position. Usually, this peak will be for a shorter duration of time. What is it? Peak will be for? And after reaching the peak, again, it will see the downward trend. The downward trend is called as? Actually, in your syllabus, they have not mentioned. There is one more level called as depression. But as per your syllabus, depression and trough is considered as one and the in chapter 5. Clear? So again from contraction it will go to depression, again it will come to the complete bottom, again it will come to recovery, expansion, peak, contraction, trough, recovery, expansion, peak, contraction, trough, like this ups and down keeps on continuing. So it is recurrent. What is it? Recurrent. That means it happens again and again, but not always at regular interval. Now I can't say in January will be in February, in in January will be in expansion. In peak, we are going to be in February. In March, we will be in contraction. No, we can't predict like this. It is highly impossible to predict business cycle. What is it? Highly impossible to? Even before they occur. Is that clear? So, business cycle, how many stages are there in total? 4 stages. As per your syllabus, stage number 1, stage number 2, stage number 3, stage number 4 is trough. That is depression and trough is together. Now, remember, in an expansion phase, every economic activity is increasing and moreover economy is facing, we will appoint, there will be almost full employment. Which employment? Unemployment, that too involuntary unemployment. Which unemployment? See, involuntary unemployment will be almost zero and the economy will be facing inflation. There will be a full employment and also there is a rise in GDP. And also interest rates will rise, output will increase, demand will increase, income will increase, employment will increase, effective use of capital will happen, optimum utilization of business resources, everything will happen. So entire economy is getting boosted. Entire economy is getting. And finally economy reaches its dash position, peak. At the peak is a topmost position, and usually it will be for a shorter period of time. There is a high level of economic activity. From there is a downward trend. Whatever we said increasing, now it will be decreasing. Now economy will enter into a deflation. What is it? Economy will enter into a, and not just deflation, manufacturer will become negative mindset. Which mindset? Pessimistic. What is it? Manufacturer will become, he will not be interested to invest, because further there is something called as periapei, big devil, depression. They will not be interested to pump in new money now, because the economy may enter into a worst phase. So they will be becoming negative mindset. Now government has to spend more money to bounce back the economy. Whatever we said positive words in expansion, the same negative words will come in contraction. See here, same to same. There is a steady decline in output, income, employment. Bank reduces the credit. Investment opportunities are given up because manufacturer has become a pessimistic. That is negative mindset. Which mindset? And stock markets will also start to fall. Unemployment problem will increase. People starts losing the job. And next comes the deep trouble phase. Which is the trouble phase? Depression. In depression, all this problem will get aggregated. That means complete high volume of trouble will happen. People have lost jobs and people will start withdrawing money. They will try to hold a liquid money in the hand because interest rates are very low in the bank. What is it? Interest rates are very, and moreover, we are also facing a unemployment problem. Economy is also facing a deflation. So people start holding cash money. And that is when bank credits will decline and the banking crisis will start. What is it? Banking. And finally, economy will come back to its complete bottommost position called as a trough. That is the lowest position. Which position? And remember, recovery is not a phase. Recovery is just a particular situation where bounce back will happen. What will happen? That is when manufacturer will become dash mindset. Now stock market will become activated. Slowly, entire economic activity will start increasing. Employment opportunity will increase. So at which particular level manufacturer will become positive mindset? Recovery, or when they are seeing an upward trend. When they will become negative mindset? When they are seeing a downward trend. Economy will face inflation during the expansion, deflation during the contraction. Clear? These are the main elements of business cycle. Clear up? Now, it is highly impossible to predict business cycle even before they occur. What is it? Even before them? It is highly impossible to predict, but our business economists are there now. They will not sit silent. They will use statistical tools, not only just to predict. After predicting, they will also analyze it. What is going to happen in the future? And such stupid fellows are called as indicators. What are they called as? They are not always correct. They may be correct or. And such kind of indicators are of three types. And this is the most common question asked. Leading indicator, lagging indicator. Not just meaning. Along with meaning, you should also remember these examples. Questions will straight away come from this. See, leading indicator, as the name says, they will change even before economy starts to change. Suppose, let's say I will say from next week, COVID third wave will come. I will go in my cloth shop, I will bring mask, sanitizer, everything, and I will pile up. But nothing happened. It may happen or. So I will change much more before. I will only start, hello, maintain 6 feet distance, hey, don't touch me, please wear mask and all. I will giving full over build up and all. See, I will only change before economy starts to follow some change. Example, see, change in stock price, new order for capital, and these are the examples of lagging indicators. Like typical Indians, always late. We only decide only when already things have been affected us. See, many people are still thinking, should I remove money from stock market? Already worsted in India. Returns are hardly 1 or 2% from 2 years. Should I still put money on gold? Already gold has increased. Gold has already run for 20% returns already in this year. Now people will be thinking, wow, now marriage season is coming, gold will go up. Appa, not marriage season, even before only gold has gone up. We Indians like typically always late. See, we will change after economy starts to follow the change. What is it? After economy starts to. That is called as dash indicator. Example, unemployment, corporate profits, labor cost per unit. Next comes coincidental indicator. Neither we will change before nor we will change later. We will move along with the, we will only speak about the current state, where economy is at present, where exactly we are doing, what exactly we are performing. We will never say where we will go and all. We will only speak about the current state. Which state? We will only change along with the economy. Example, GDP, inflation, industrial production. What is the present GDP? What is the present inflation in the country? So present situations are called coincidental indicator. Which indicator? One of the most repeated question this is leading indicator, lagging indicator, and is that clear? So meaning is also important, example is also important. Like how we get a questions from types of oligopoly. 5 types were there na, like the types of indicators. We also get this question. Clear? Understood? Now features. Whatever we discussed, same to same holds good. Another 3 more points alone you need to remember. All this changes in the business cycle originates in free market economy. Which economy? What do you mean by free market economy? Private economy, that is capitalistic economy, laissez-faire economy, and it starts in one nation. It also affects the 1929 Great Depression of America, 2008 Lehman Brothers crisis, recently COVID-19 started in China, affected the entire globe. Whenever business cycle gets affected, more effect will be there for secondary and tertiary sector, very less effect will be there for only these 3 points you should remember. Other than that, see, it will occur periodically again and again. It has different stages like expansion peak, contraction trough. It is difficult to predict the dash cycle. It will affect dash economic activity, all the kinds of economic activity. It will also affect them. Okay, sir, why should we learn about this business cycle? What is the use of learning this business cycle? For a purpose of decision making. Which making? Chapter 1, business economics, taking right decisions at right time. Rational business decision making. Why, sir? Why? What kind of decision? Profit maximization, wealth maximization, what to do, what not to do, when to invest money, when not to invest money, when to expand business, when not to expand. For all that business decision making, we need to understand business cycle, and there are certain business. They are highly dependent on business cycle. See, they are closely linked to the rate of economic growth rate. They are called as which business? Like for example, construction equipment, bricks, cement and all. Have you seen anyone constructing their dream home during COVID? When economy performs well, these business will perform well. If not, they don't perform. Construction industries are one beautiful example there. Clear? Next comes causes of business cycle. Last topic, internal cause, external. Exam na, usually the question comes like this. Which among the following is not an internal cause? Which among the following is not an? See, internal cause means what happens inside the nation. External cause means what happens. Is that clear? Internal cause, fluctuations in the, whenever demand changes, business cycle change. Whenever investment changes, business cycle change. Sir, why this investment changes? Because of the pessimistic and optimistic mindset. Next, due to change in government spendings, and this is nothing but fiscal policy. Which policy? To control inflation and deflation. Whenever money supply changes, these all are the internal cause. Which cause? Next comes external cause, between the nations. When the war is going on, automatically concentration is winning the war. For example, Russia, Ukraine, US and Iran. Now, if suppose Ukraine will come and say, India, come, let's do business. Hey, stupid, what to do business? First go win the war. Okay, after the war, what way to do business? Your country has been devastated. Rebuild your economy, rebuild your nation. Post-war, business cycle gets affected. Next, whenever there is any nook and corner, if the population is growing, demand for goods and services will increase. And also because of technological, in exam now they don't use a word called as change. They will call it as shocks. Technological. That means technological advancement. All of a sudden, like chat GPT, artificial intelligence and all has come now. Technological shock, technological upgradation. Next, due to like drought, tsunami, earthquake, all this. Whenever the natural disaster happens, business cycle will get affected. Business cannot be performed well. All of these are the causes. Internal cause and external. So total 5 topics are there. From 5 topics, 5 questions will come. See, this is topic number 1. This is topic number 2. And this is topic number 3. And the explanations of the stages. Topic number 4. And the intro about the particular topic. These statements. Intro. This is topic number 5. Just 5 topics are there, 5 questions. Each question from each topic is going to come from the business cycle. That's it. We'll do the MCQs and then we'll wind up for the day. Before going to MCQs, any doubt in business cycle or any of the micro topics? Let's go to MCQs. Okay. See there. A fall in the level of and the supply exceeding demand. Supply is more than demand to a great extent is predominance in the dash phase of business cycle. Recession. People are not buying goods. That is why supply has become more, demand has become lesser. Recession phase. So you just calculate how many questions are there. Total 5 questions should be there. One is done. Sometimes they will ask 4 questions. Which of the following is of a coincidental inflation, personal income, industrial production? Yes, but change in stock price is a leading indicator. Next, which of the following is not an psychological factor? Internal changes in government spendings, internal macroeconomic policies. Natural factors are the external. Even this is not an internal factor. Macroeconomic policies. But this policies is a part of the government's fiscal policy. Which policy? Government expenditure and tax will come now. That was under the internal factors. So natural factors is clearly an external. So option A. Next. Which phase of business cycle is characterized by the rapid rise? Which rise? In the output prices, leading to increase in the cost of living and greater pressure on the fixed income earners. Prosperity. That is nothing but another name of peak is a prosperity. Next. Unemployment, corporate profits, labor cost per unit is an example of lagging indicator. So 4 questions done. One more should be there somewhere. Or if not, just 4. That's it. Next. Which phase of business cycle is also called as a downswing? Is contraction. In which phase of business cycle actual demand stagnates? That means it becomes stagnated. That means that's it. That is peak. When we come to peak, that is the highest level that will become stagnated there. Peak. After that, it is going to fall actually. Which of the following is not a characteristics of falling in the level of investment? Yes. Fall in employment? Yes. Decrease in demand pull? Yes. Bank credit expands? Bank credit will fall. This is not. Which of the following is not a lagging economic? Unemployment lagging, labor cost lagging, corporate profit lagging, but change in stock prices. That's it. Next, September 25. The advancement of mobile phones, which led to the boom in the telecom industry, exemplifies the external cause. Which external cause? That is technological. I said, they don't give it as technological changes. They use a word called as technological. Next, which of the following best describes the economic condition during the bad trade? What is it? During the falling price and higher contraction phase. Next, business cycle typically consists of which phases? Expansion, peak, contraction. This is the stages as per your syllabus. Next, which of the following is true about the duration and Business cycle varies with their duration and intensity, but they share a common that primary sector will not get much affected. Secondary, it starts in one nation, affects the another nation. That features are same, but duration and intensity will vary. It will not remain the. That's it. 4 questions. Next, may attempt. There is a war going on between country A and country B from the last 2 years. Now, in the current year, both the countries have signed a dash agreement and the war has come to an end. Now, both the countries have started to rebuild the losses due to the war in their own funds. Which type of causes is this? Post-war reconstruction. Where will it come? Next, an indicator which gives information about the rate of change in the expansion and contraction, present changes which is happening, that is coincidental. In all types of businesses, the different phases of business cycle generally occurs at no fixed time or regularity. Next, the level of national income and expenditure declines. Rapidly means trough and depression. Rapidly they are saying. Next up, due to upswing phase of business cycle, involuntary unemployment will be almost 0. That's it. So the last paper, Jan 25 attempt paper. When enterprises are pessimistic, that means business owner is pessimistic. Pessimistic means what? About the future market condition. It means economy is going to face the in the economic activities. Next, which of the following is not an internal cause? What is it? Not an changes in demand, internal changes in investment, internal changes in government spendings, internal technological. That is external. Change in stock price, new order for capital and consumer good is an example of variable that changes after the economy changes. Lagging indicator. Next, which of the following is not a characteristics of a? It occurs periodically, they are recurrent, it occurs at a regular interval. Is it regular? Not always at a. It has a different phases like expansion peak, contraction trough. Yes. So option C is not the answer. Clear? So by this, entire chapter 5 also comes to an clear. So we are done with the entire micro. Even chapter 5 is a part of a macro, but we are still done with the. So tomorrow we'll take up with chapter 6. So every day we'll take up one chapter. Tomorrow I will take with 6. Sunday I will take with 7. Monday I will take with 8. And Tuesday I will take with and 10. So 10 will not take much time. Okay, I will do one thing. 10 I will instruct you. Before coming to class, follow that instructions and come. See, in the chapter 10, usually the most important topic is second half of the chapter. Especially from 1991 and onwards. What is it? Liberalization, privatization, globalization, new economic reforms. See, before that, first we will understand about the pre-independence era. What is it? In this pre-independence, there are 2 classifications. One is ancient India. Second one is India under the British rule. What is it? India under the British rule and ancient India. See, this also you will not find much question. So after this, post-independence. What is it? Post-independence, that is from 1947 to 1980. What is it? 1947 to? Sir, 1980. Because 1980 and onwards, this is called early liberalization. What is it called? Early liberalization. So until this portion, it is not important, but just a read-only concept until this. Because if you want, you observe. See, anyhow, I will share you the question papers. You will get to know. Most of the questions, see from the chapter 10, we will get usually 9 to 10 questions. How many questions? Hardly some 1 or 2 questions will come from this area. Either 1 or sometimes till date not even 2. Only single question has been asked from this first half. Rest remaining 9 questions or 8 questions, whatever is coming from the chapter 10, that is from 1991 and onwards. What is it? New economic reforms. What is it? New economic reforms. And in this entire chapter full of information, full of data. And everything is important. Now after new economic reforms, we also have Niti Ayog. What is it? Now after Niti Aayog, we have primary sector, secondary sector, and this is where most of the question comes. All this Prime Minister dash 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 Yojana, Prime Minister Awas Yojana, per drop, more crop. In that, any nook and corner, the questions can be pulled. Even before preparing, first take out the question paper. See, when you take out the question paper, for example, I will show it. Wait. Like this, read questions. When you are reading question, you will get to know most of the question, like what I have said, that is only and only coming from the second half. You should give more focus on the second half, especially from 1991 and onwards. What is it? 1991 and? That is where you should read and come. So, you still have 3-4 days time until I do this chapter 10. Read that. 1991 and later, read like a newspaper once and come to the class. I will give you the entire background of the chapter. Clear? Understood? Chalo, then we will wind up for the day. Clear? So in the previous class, we finished with the concepts of microeconomics as well as we started with the national income. Did we start? No. Business cycle we finished. So in today's class, we are going to start with the concepts of national income. So total there are 2 units. Unit number 1 is national income accounting and unit number 2 is Keynesian theory. So today we'll quickly revise the national income and Keynesian theory. So in the chapter 6, unit 1, there are totally 8 concepts and 3 methods. How many concepts? And 3 methods of calculating national income. Which are those 3 methods? Number 1, value added method, or also called as a product method. Second one is income method. And the third one is expenditure method. So in total, there are 3 methods of calculating national income, and to understand the concept of national income, total there are 8 concepts. The very first concept is what? GDP, gross domestic product. So the GDP meaning, so there are 3 important elements in the definition. Sum total value added, final goods and services, and domestic territory. So these are the 3 elements which we have to keep it in mind. Sum total value added, also called as gross value added. What is it? So the very first term is gross. So gross means including depreciation. Same like our accounts concept. Gross profit, net profit. See, when we speak about the gross concept, this includes depreciation. If at all we subtract depreciation, this will become net. So net means gross minus depreciation. Gross means it is an inclusive of depreciation, and it is always and always a calculation of dash value, market value. That means it is nothing but GDP, MP. And GDP also includes foreign companies earning goods and services where? In India. That is inside India. What is it? Inside India. Okay, let's take up an example. Assuming this is India. Now, inside India, there are 2 categories. Let's say Indians producing goods and services in India, as well as foreign multinational companies producing goods and services where? In India, inside India. Even that will be a part of GDP. Clear? And GDP can be understood in 2 different ways. GDP based on expression and GDP based on calculation. So GDP based on expression is of 2 kinds. Nominal GDP and real GDP. GDP based on calculation is GDP at the factor cost and GDP at the market price. So these are the main 2 classifications. GDP based on expression, GDP based on calculation. Based on expression, nominal GDP, real GDP. Based on calculation, GDP factor cost and GDP market price. And most of the numerical questions will come from this area. Nominal GDP and real GDP calculations. Is that clear? And especially there is one of the favorite question to ICI, inflation calculation. So that also comes under this expression. So first let us understand the expression, later we'll go with the calculation. See, when we understand the concept from GDP based on expression, the very first one is nominal and real GDP. For that, first we should understand the concept of GDP deflator. So GDP deflator is a measurement of inflation. So the formula of GDP deflator nominal by real into 100. So in this entire chapter, most important thing is we have to remember the formulas. When we know the formulas, easily 4 to 5 marks of numerical problems will come, and that is easy. You can crack it off. So what is GDP deflator formula? Nominal GDP divided by real GDP into 100. And this GDP deflator is also referred as price index. Which index? And the most important, for the base year, which year? This price index is going to be 100. Price index will be, and for the subsequent years, nominal GDP will be greater than real GDP. What is it? Nominal GDP will be greater than real GDP. Clear? And what is the formula for nominal GDP calculation? Real GDP into price index by 100. And real GDP formula, nominal into 100 by price index. See here now, I usually say students to just remember denominator. Either for nominal or either for real. Any one concept you remember denominator, automatically you will remember the other one. Let's assume nominal GDP denominator is divided by 100. So real GDP denominator will be divided by price index. Clear? So total 4 formulas you have to remember in GDP based on expression. First one is GDP deflator. What is GDP deflator formula? Nominal by real into 100. And deflator is also called as, say this what? The price index is nothing but a deflator value. And nominal GDP calculation is real GDP into price index by 100. And real GDP is nominal into 100 divided by price index. Is that clear? And there is also the inflation formula. One of the most repeated questions in the exam. Deflator of the present year minus deflator of the previous year. Year 2 means present. Year 1 means previous. So present minus previous divided by previous into 100. What is it? Present year deflator minus previous year deflator divided by previous year deflator into 100. So most of the times the questions have come from the inflation. I will show the exam question. Clear? Okay, first let us calculate GDP deflator. Now, GDP deflator formula, nominal by real into 100. See, 500 by 500 into 100. When the value is 100, that means this is which year? Base year. Is that clear? So this is a base year. And remember, 500 and 500, real GDP, nominal GDP, both are one and the same. And next, 800 by 650 into 100, 123.08. 1500 divided by 800 into 100, 143.75. See, subsequently, after the base year, nominal GDP will be greater than real GDP. Which GDP? Nominal will be greater than real. In such a case also, deflator will be greater than 100. What is it? Deflator will be? Only for the base year, deflator value will be what? And observe, especially in the year 2017 and 2018, deflator values are going down. See, 100, 123, 143. From 143, it has reduced to. That means there won't be inflation, there will be deflation. What will be there? And even in 2018, from 136, it has gone down to 130. That means there will be deflation. What will be there? Okay, now let us calculate the inflation. So for the very first year, that is base year, you can't calculate the inflation. That is undefined. Next, deflator of the present year. That is 123.08 minus deflator of the previous divided by previous deflator into 100. How much is that? 23.08. Next, take out calculator. Now, 143.75 minus 123.08 divided by 123.08 into 100. 16.79. Okay, next up. 136.84 minus 143.75 divided by 143.75 into 100 minus
4.8.
minus 4.81 or what is it? 81. Okay, next up 130.25 minus 136.84 divided by 136.84 into 100.
4.8
minus 4.8. So both the years we have a deflation. There won't be inflation. Next again, it increased 137. Clear up? Okay. 137.10 minus 130.25 divided by 130.25 into 100.
5.2.
5.26. Clear? So most repeated questions in the exam will be from inflation, if not calculation of real GDP. Which GDP? Real GDP. Let me show the exam questions for you guys. Chapter 6. Okay, this is from Keynesian theory. Keynesian theory question it is. Have a look here. Question number 18. Consider real GDP is how much? 4,500. Nominal GDP is how much? 6,750. Calculate what? GDP. Deflator. One of the most silliest question. Deflator formula is nominal by real into 100. So 6,750 divided by 4,500 into 100. How much is that? 150. Is that clear? Okay, next we will calculate this. I will keep this open. In the next attempt, almost in every attempt, either nominal, either real, or either there will be from the inflation calculation. In this question, calculation of real GDP. Which GDP? Real GDP. How much is nominal value? 450. Price index is 120. By the way, what is real GDP formula? Nominal into 100 by price index. What is it? Nominal into 100 by 450 into 100 by 120. Answer 375. See, either the question will come from nominal GDP calculation or real GDP or deflator, any one. If not, from inflation calculation. Next, September 25. See here. 3 question. Jackpot here. They have only given the deflator value. See, 2020-21 is 100. That means this is base year. Which year? 2020-21 is base year. Next, 154, 168. Next, after observe, 168. It has reduced it to. That means in this 2023 and 24, there is a deflation. There is no inflation. Clear? Okay, what will be the inflation rate for 2022-23 comparing to 2021 and 22? So simple, 168.4 minus 154.25 divided by 154.25 into 100. Okay, in which year nominal and real GDP is same? That is in base year. Which year is that? 2020. 21. And in which year price level has fallen? That means deflation will happen 2023 and 24. 3 marks free of cost. Got it? Such a silly questions these all are, and still people will say national income is tricky. National income is very difficult. Most easiest 15 marks from entire chapter 6 today. Whatever we do in next 2 hours, 15 marks in exam. Next attempt. I am not going to help. You should only solve and let me know the answer now. Chapter 6. Yeah. Calculate inflation. This is May 2025 attempt paper. Considering the data given in the table, calculate inflation rate for year 3. Year 3, they have only given deflator 144 minus 125 divided by 125 into 100. 15.2. Clear? Okay, next, Jan 25 attempt paper. Chapter 6. See here. Calculate real GDP. Real GDP formula. Nominal into 100 by price index. So, nominal is 720 into 100 divided by price index 120. How much is that? 600. Got it? Next, September 24 attempt paper. If the GDP deflator of the country in the year 2020 is 140.75, in the year 2021 is 157.33, what will be the inflation rate in the year 2021? See, again, inflation calculation. So, simple, 157.33 minus 140.75 divided by 140.75 into 100. 11.78. Clear? That's it. See, one or the other question, either from inflation will come, or if not from real GDP, nominal GDP. Till date, only once they have asked deflator. That too recently, May 2026 attempt. Most commonly repeated question is inflation question. If not, real GDP calculation. Which GDP? That is what I'm saying. You should just remember the formula. If you remember formula, done. That's it. GDP, nothing big there. Clear? So first one, GDP understanding based on expression. So based on expression, there are two kinds I said, nominal GDP and real. In that how many formula? 4 formula. Deflator, real, nominal, inflation. Clear? And real GDP changes because of change in productivity, only because of production, but nominal can change because of price as well as production. Where inflation is controlled, real GDP. Where inflation is not controlled, nominal GDP. The difference between real GDP and nominal GDP alone, you should remember. See this chart. Mark it as important. From this also theoretical questions will come. Sir, today I finished Jan 26 marathon video. Thank you so much for such a resourceful video. It helped me a lot, especially chapter 6. I actually skipped it, but okay. Today we are doing a chapter 6 only, Rachana. Yeah, I'm teaching with the same shortcuts, everything. Yeah. Okay, let's go. Let's continue. Okay. So this difference is important. Clear? Next, let us go with GDP based on calculation. This even more easiest. FC and MP calculation. See, factor cost. What are the factors of production? Land, labor, capital and organization. What does land expects in return? What does labor expects in return? What does capital expects in return? What does organization expects in return? Profit. See, simple summation of all rewards paid to factors of production. Rewards paid to? That is called as GDP FC. Nothing big in life. GDP FC is nothing but rewards paid to the factors of rent plus wages plus interest plus. But life cannot be so simple with ICAI. ICAI wants to complicate your life. So what ICAI will do, we will not give it in such a simplified manner of a formula. Same formula, whenever there is a FC formula, kindly remember this, compensation of employee. What is it? Compensation of? That means wages or salary. What is it? Wages or? If both are given, add both. Plus operating surplus, remaining three things, rent, interest, profit. What is operating surplus? Rent plus interest plus profit plus mixed income of self-employed. Which income? Mixed income of self-employed. And since first alphabet is G, we will add depreciation. That's it. This is the FC formula. Is that clear? If not, this, they will ask you to convert the MP into FC. What is it? MP into? I will teach that after I explain MP formula. Okay, first let me come to MP formula. GDP at market price. Simple. First and foremost, will produce goods and services. That is GDP at factor cost. What is it? GDP at? For this, whenever you are selling in the market, Nirmala aunty will come into picture. She will ask our share. Hello, excuse me, my share GST. She will ask. That is indirect tax. Which tax? So you should add indirect tax, IDT, and subtract subsidy. Subtract what? Simple. If you are adding Nirmala aunty, you should subtract Modi uncle. Modi uncle is a subsidy. Clear? So sometimes they will give a net effect of both. That is called as NIT, net indirect taxes. Which taxes? So that NIT should be added. For that, Nirmala aunty symbol is important whenever you are considering NIT. Is it clear? Now this is MP formula. Which formula? Now by using the same MP formula, we can convert it to FC formula also. Simple, same to same logic. GDP MP minus Nirmala aunty plus Modi uncle. That's it. This can be called as NIT. Here NIT, Nirmala aunty symbol is important. See, this is which formula? FC formula. This is the second FC formula. Clear? Whenever we ask for an FC formula, this is what you should remember always, first and foremost. And later you have to remember this. Clear? So shortcut to remember in life. So there is one beautiful shortcut in national income. First and foremost, anywhere we go and solve, we will start with GDP MP. Always go alphabet by alphabet. How do we convert this first alphabet G into N? Simple. Minus depreciation. First alphabet got converted. Okay, now let's convert second alphabet. Let's say GDP MP is there, but we want GNP MP. What do we want? See, simple. D has to be converted into N plus NFIA. What is this NFIA? Simple component. Let me continue the same example. Assuming this is India, there are two kinds of income earned inside India. One, Indians earning goods and services value addition inside India. Second one, foreign multinational companies. Same way, an Indian multinational companies has gone outside, na? These are Indian MNCs. What is it? These are Indian who has gone outside India. Now, these people, let's assume that we are producing some 50,000 crore rupees worth of value addition. They have produced some 40,000 crore worth of value addition. We inside India, we have produced some 1 lakh crore worth of value addition. Simple logic. Now, this money will go outside. This money will come inside. So, this is factor income receivable from abroad. This is factor income payable. What is it? Payable to abroad. So net effect of this is called as NFIA. One, factor income receivable. What is it? Factor income
Receivable.
minus factor income payable. So net effect of this is called as NFIA. So simple. For a GDP, if you add NFIA, we will get GNP, and this is also MP outcome. Which outcome? So always and always it will be market price initially. Sir, what if, sir, anyhow this is just a receivable and payable now? If these value turns out to be negative, suppose this is 40,000, this is 50,000, this will become minus 10,000. Simple. Instead of plus NFIA, now it will become minus NFIA. That's it. If NFIA becomes negative, what is it? NFIA becomes domestic income will become greater than national income. That's it. So the logic is very simple. If NFIA is positive, GNP will be greater than GDP. If NFIA is negative, GNP will be lesser than GDP. Common sense it is. Clear? Today money market is there or not? No, today we are not taking money market. Today I am only doing just chapter 6. Okay. Let's continue. So this is the concept of GNP. What is it? Suppose if at all we have to write GNP FC formula. What is it? GNP FC formula. I said na, FC formula has 3 components. Which are those components? Compensation of plus operating plus mixed income of self-employed. Which employed? Mixed income of self-employed. Here first alphabet is G. So plus depreciation. Now second alphabet is N. Plus NFIA. What is it? Plus. So since first alphabet was G, we have added depreciation. Second alphabet is N, we have added NFIA. That's it. Clear? Understood? So this was the second concept. That is GNP. So we did with GDP, we have done with GNP. Okay, now let us go with NDP. What is it? Simple logic. From the GDP, just a subtracting depreciation, nothing else. Just a subtracting. Depreciation is also called as what? CCA, capital consumption allowances. Which allowances? Or they will also give it as fixed capital consumption. Which capital consumption? Is that clear? Simple logic. Whole national income is just a 3 differences. How many differences? So which are those 3 differences? The entire national income. Now simple logic. First and foremost, we will always and always start from where? We will go alphabet by alphabet. We will convert first alphabet. So minus depreciation. What do we get now? NDP, MP. Now we will convert second alphabet. What do we do? Add NFIA. So this will become NNP, MP. But national income is nothing but NNP, FC. What is it? NNP? FC is called as national income, not MP. So we should convert this MP to FC. How do we do? Minus Nirmala and T. Plus Modi uncle. That's it. Wherever you go, end of the day, you have to start from where, end where. There is only just three differences. Difference between gross and net is depreciation. Difference between domestic and national is NFIA. Difference between market price and factor cost is indirect tax and subsidies. What is it? Indirect tax and? Is that clear? So this is the end shortcut. When you know this shortcut, life is simple. And in detail we have done, full entire explanation we have done in previous two marathon. Step by step, how this concept will derive, how one by one, word by word. We have done it in detail there in the previous marathons also. Clear? Anyone having doubt in the shortcuts or any conceptual difficulties? So these are the main first four concepts. See, first concept is GDP. What is it? First concept is? Second concept was GNP. Already I did. Third concept is NDP. Next, last one is, this is the fourth concept. First alphabet is N after depreciation. Second alphabet is N adding NFIA. That's it. End of the day, whatever we do, outcome will be always and always market price. That we have to at last convert it into factor cost, because national income is factor income, NNP-FC. What is it, NNP? Or else another shortest way of understanding national income by using FC formula. By using which formula? Just understand. Suppose if at all you add compensation of employee. What is it? Compensation of plus operating surplus plus mixed income of self-employed. See, if you add only and only these three things, this will become NDPFC. What is it? But what is national income? NNPFC. So second alphabet D has to be converted into N. So what you should do now? Plus NFIA. For this, you just have to add what? That's it. Now this is national income. By using FC formulas, write only one step answer. This is what we call national income calculation under income method. Which method? That's it. Nothing big. That's it. If you know three differences, national income comes to an end. There is nothing beyond this three differences in national income. Clear? Understood? YouTube live students, clear? Shall I go further? Okay. So numerical problems, I will ask them to do it in the class. So all these numerical problems will do it in the class. This is my main material which I'm using. Clear? Anyone having doubt with GDP, GNP, NDP, NNP? Let me know. Before moving into the personal income concept, any specific doubt in any of this? Let me know. Any doubts in this? GNP, FC. GNP, FC. What is the first alphabet here? G. What does G stands for? Gross. Gross means including depreciation, and moreover, what is this? That means same to same. These three elements will come into a picture. Same to same. Clear? For this, we should just add depreciation here, because this is the first element called as G. And your second element is what? N. So what do we need to add? That's it. Life is simple. Got it? Go alphabet by alphabet. You will only get the answer. Understood? Let's go to the personal income. Okay. The fifth concept is personal income. See, in case of national income, what is it in case of? Or in terms of GDP calculation, there is something called as transfer payments. Which payments? Incomes received but not earned. That will never be included. Why? Because that is not leading to any production of goods or services. What is it? Production of? And there is one more topic, a small topic. Let's say, for example, while calculating GDP, what to be included, what not to be included. That also applies exactly same for national income calculation also. Here, inclusion list is easy. Exclusion list is where you will get confused. See, first and foremost, what is it? Production will not happen. Just money is getting transferred from one person to other. Like for example, scholarship paid to students, pension funds. Money is just getting transferred. Production is not happening. But in non-economic activity, production will happen. Market price cannot be decided. What is it? Market price. For example, your mom is preparing breakfast at home. Will you say, buy mom's breakfast 50 rupees, lunch 80 rupees, dinner 120 rupees? No, you can't. So market price cannot be decided, so we can't include it. And even second-hand goods transaction, because it is not produced in this year. Na? Suppose I'm selling my car manufactured in 2020, selling in 2026. Already it was a part of 2020 GDP, right? Why will I take it once again? Suppose if any commission, royalty, margins earned, that is generated this year. Only that royalty, commissions, margin, extra profits made by the dealer, second-hand car dealer, that will be included. Same way, intermediate goods, that is semi-finished goods are not included. Illegal transaction which are called as economic bads, they are not included. Here transfer payment is not included, but transfer payment gets included in personal income. Which income? That is individual person's income. Wait, one second. Yeah, what is happening? Oi, what is this? Personal income. See, it is an income earned by an household. What is it? Income earned by an household sector, including non-profit institution who are serving whom? Household. Here you need to remember the formula. All the adjustment starts from where? National income. All the adjustment starts from where? Plus incomes received but not earned. That is nothing but whatever money comes to your hand, add it. Whatever money you are not receiving but you are earning it. Like for example, PF contribution. From your salary only they will deduct. But you will not receive it your hand at the moment. So that should be subtracted. Incomes earned but not subtracted. Incomes received but not added. That's it. This is the concept of personal income. From this numericals may also come. End of the day, money received to the hands of whom has to be added. That's it. Is it clear? Understood? Next. Disposable personal income. Whatever personal income you earn after the payment of direct taxes. Which taxes? See, after the payment of taxes, this disposable income, what you will do, either you will consume or either you will save. This is also the formula of disposable income. We use this in Keynesian theory. Which theory? So, YD is C plus S. What is it? Clear? So, next comes private income. From this till date, only one question has been asked. It is an income earned by which sector? Private sector from dash sources. Inside the country as well as. It includes both factor income as well as transfer income. It is an income earned by which sector? Clear? Next comes per capita income. That is the average income of a population. Total income of the nation. NNPFC divided by total population of the nation. It represents dash of the country. Standard of living. And also you should remember one more topic here. Real GDP per capita. So real GDP divided by population, that is called real GDP per capita, and real GDP represents economic well-being. What is it? Economic well-being in the economy. What measures the standard of living in the country? Per capita income. Dash measures the economic well-being in the economy. Real GDP. This differentiation you should be knowing. Is it clear? So these are the 8 concepts under national income. Next comes 3 methods. Before that, we need to understand the concept of circular flow of income. What is it? That is connected to 3 methods only. Which are the 3 methods of calculating national income? Product method, that is value added method, income method and expenditure method. See, when we are producing goods and services, what is it? When we are producing, we add value. What is it? We add. So value gets added. We add value. That is value added method. Next, in order to produce goods and services and add value, now we need factors of production. They are not available for free. For using that factors, you will pay the income to the factors of production. That is called as income method. Which method? That is income is earned by factors of production. So that will act as an income method. Which method? And end of the day, all these factors of production, land, labor, capital, organization, This is owned by households. Owned by whom? That belongs to household income. Once household gets the money in their hand, will they sit silent? No, they will spend. That is what is expenditure method. When you are spending, once again you are creating a demand, production happens. Because production is happening, we are paying money to factors of production. Income is generating. Because income is generating, again expenditure is happening. Because of expenditure, again demand is getting created. So this is the circular process. Which process? Of production, distribution, disposition. What is it? Production, distribution, disposition. Production takes places in the process of value addition, and distribution of factor income happens because we are producing goods with the help of factors of production. And once we earn income, what is it? Once we spend that money, we dispose that money, that is called disposition. We are making expenditure. When we are expenditures are incurred, that means again demand is created. What is it again? Demand is created. So this is circular flow of income. What is it? Circular flow of? Also called as production, distribution and disposition. Clear up? Now let us get started. The very first one, value added method. Which method? See, in this now, we will divide the entire economy into 3 sectors. How many sectors? Primary sector is agriculture and allied activity. Secondary sector is industry and manufacturing. Tertiary sector is a service sector. Is that clear? Now, in primary, we will further divide them into subsectors. And such subsectors are further divided into units. Like this, every sector is divided into subsector. Every subsector is divided into... Like this, we will make a bifurcations. In every bifurcations, we just need a value added. What do we need? Value added by all the units put together. We get to know value added by individual subsector. Like this, value added by all the subsectors. We get to know value added by them individual sector. Like this, value added by all the 3 sectors in the economy. What is it? Value added by all the... We will get to know the gross value added in the entire economy. Which value added? In the entire. That is called as gross value added at market price. That is nothing but GDP MP. Gross value added is nothing but what? So there are 2 different ways of identifying this gross value added. The very first method, like this, how I explained, like this, they will give you information about primary sector, secondary sector, tertiary sector. They may give you output value and input value. Which value? Output minus input. That is called as change in stock. That is what? So, another way, they have asked a question. I will show you the question. In recent attempt also, they have done it. See there, gross value added. What is it? At market price. This is also called as dash. Gross domestic product at. So, how do we identify this? Simple. Value of output minus value of input. What is it? Value of output minus? How to identify this value of output? Now, this is more interesting. Value of output is sales plus change in stock. What is it? Sales plus? How to identify change in stock? Closing stock minus opening stock. Closing stock minus? So, instead of giving the word value of input, they will give you a word called as intermediate consumption. Which consumption? Intermediate. Is that clear? Understood. So end of the day, how to identify this GDP MP? That is nothing but gross value added. Simple. Value of output minus value of. How to identify value of output? Sales plus change in stock. Clear. How to identify change in stock? Closing stock minus opening stock. Clear? Solve this. Question number 27. Calculate gross value added at market price. When sales is 750, opening stock is 300, closing stock is 200, intermediate consumption is 250. Okay, Manushree wants 3 sector model in brief. Okay. But hardly few questions will come from there. Most questions comes from 2 sector and investment multiplier. Done. Answer 400. Clear? So this is the first way of asking question. Okay, even in the recent attempt, they have asked a question from this change in stock. Wait, let me open it. I think May attempt only, if I'm not wrong. No, got it. See, 30th question, January 26 attempt also, one more similar question. Sales value is given, depreciation is given, opening stock, closing stock, GST is given. Do we need GST here? No, not at all required. Intermediate consumption is required, opening, closing is required, sales is required. So calculate gross value added at the market price. Calculate this once again. I know I have given answer here, but you also do it once. See, if anyone is lacking with the conceptual knowledge in this alarm, I don't recommend you to watch this video. Better you can go with my previous marathons. There we have done it little in detail. Like Jan 26 attempt marathon and May 26 attempt marathon. Especially Jan 26, 20 hours it is. Full detailed marathon we have done there. Done? Able to get the answer? Finding it easy or difficult? Okay, chalo. Let's continue. Now see there. End of the day, once we get this GDP MP, our shortcut remains the same. We will start with GDP. What is it we will start with? End result. That's it. For that, just three differences. Gross and net differences. Domestic and national differences. And MP and FC difference. Clear? So this is how we will calculate value added method. Which method? And income method already I spoke. This is what is income method. Nothing big. Straight away NNP FC. All three components of FC formula. For that just add NFIA. That's it. That is what is income method. See here. Three elements of FC. For that if you just add NFIA, that will become income method. Which method? Next comes expenditure method. Connection is there with Keynesian theory. Simple logic. First step is GDP MP. What is it? GDP? C plus I plus G plus X minus M. So these are the four components we should add. C stands for consumption expenditure made by households. I stands for business investments made by the private businesses. G stands for government expenditures incurred. X minus M, international trade, exports minus. Anyone having doubt with this? Or you want me to explain this expenditure method detailed? Okay. See, in this expenditures, C stands for private final consumption expenditure. Which expenditure? That means whatever expenditure that as an household we are incurring. What is it? Household. We are spending it on goods and services, value of any primary commodity, foreign investments made, all this. But any kind of construction made, any kind of that is not considered as a consumption, that is considered as a investments made. What made? See, exclusion. Land and residential building purchase or construction, because that comes under expenditures on construction, that comes under I. Where does it comes under? Same way, government will also make an expenditure. Government final consumption expenditure. To run a normal day-to-day government affairs, government expenditures are there. And there are certain expenses of government that is not a part of national income, like transfer payments. Which payments? Money is just getting transferred from one person to another person. That we will never include. This we will exclude, like scholarship, pension, unemployment allowances. But any kind of normal expenses of government, like defense expenses, education expenses, healthcare expenses, all these are included in G. Only transfer payment alone is excluded in G. Clear up? Next comes I, business investments. All investment made by the business on plant, machinery, equipment, constructions, and even any kind of purchasing of jewelry and work of art. We call it as valuables. That will also come under I. Last but not the least, net exports. X minus exports minus imports. International trade. All these four components put together is what we call GDP MP. What is it? GDP? Under expenditure method. Same to same shortcut here also. Starts from GDP, end is NNP FC. Clear? So this is the major component of national income accounting. And there is one small topic called as regional accounts. Which accounts? In this repeatedly the questions are coming up. What is it? Like how we calculate the entire nation's income. What is it? Entire? Like that, we will also calculate state-wise and district-wise. What is it? State-wise and See, district level income also will calculate, state level income also we will calculate, even with union territories. And we also calculate per capita income. Which income? Of every state, per capita state income. Now, this is not the question which comes in the exam. Now, this informations are important after this. Who will prepare that state income? State Directorate of Economics and Statistics. Who will prepare that? Of Economics and Statistics. Who will assist them? That means who will guide them to prepare? CSO, Central Statistical Organization. This is repeated question. And there are certain activities which cuts the state borders. What is it? Which cuts the? For example, banking, railway, communication. There are certain kind of activity where contribution cannot be just given to one single state. Now, let's say, for example, there is a railway transport services between Karnataka and Tamil Nadu. Now, Vande Bharat train, which is coming from Bangalore to Coimbatore, which is traveling from Karnataka state to Tamil Nadu state. So, benefit should be divided between two states. Such kind of central government services. See, while preparing the state income estimate, there are certain activities such as railways, communication, banking, insurance, central government administration, which cuts the state borders, and economic contribution cannot be assigned directly to one such state. They are called as supra-regional sectors. Which sectors? And they are allocated based on relevant indicators. Which indicators? Now, this information is important. This is one of the repeated question in the exam. In the past 6 attempts, if you see, in 4 attempts, you will find question. Clear? And after this, this theory part, whatever theory part is there, go through it like a newspaper once. You may get one question. I'm not saying that you will not get. You may. But chances are very less. Very lesser side. Year after, whatever theories are there, just go through it like a newspaper once. Clear? Limitations. And usually question comes like this. Which among the following is not a significance of national income? Which among the following is the limitation of national income? You just have to go through it like a newspaper once over there. Is it clear? We'll go to exam questions. Chapter 6, Unit 1. Okay. We'll solve all the questions related to Chapter 6, Unit 1. Okay, see there. From the given options, select the method that measures national income through summation of factor income. Land, labor, capital, organization, whatever income we earn, we are adding that. Summation of national income is which method? Compensation of employee, operating, surplus, mixed income of self-employed, those things. That is which method? Okay, next, calculate the amount of subsidies when national income is 4,500 crore, net national product at market price is 4,800 crore, indirect taxes 350. My first question, where will subsidy come? In MP to FC conversion or FC to MP conversion? Here, what is the information given? We also know national income is nothing but NNP FC, and they have also given NNP. Easy, na? NNP MP is also there. NNP FC is also there. Now, common sense it is. See, NNP FC is given. We also have NNP MP. So, how do we convert FC to MP? Plus Nirmala aunty and minus subsidy. See, already national income is given 4,500. Here 4,800. How much is indirect tax? Plus 350. So, simple. Add this to 4,500 plus 350. 4,850. Here NNP MP is 4,000. So, 4,850 minus 4,800. 50. That's it. Such a easy question. That is what I'm saying. Beat any numerical problem. If you want to solve, first you should know the concept. When you know the concept, you will do it. Even though if you don't know the formula, if you know the concept, you will still do it. Next. Already we did this. Calculation of. See, in every particular attempt, in national income calculation, chapter 6, minimum 6 to 8 numerical problems will come. Minimum 6 to 8. Both the units put together I'm speaking about. And most numericals from the national income accounting, unit 1 comes from GDP concept. Which concept? GDP concept. Next, see there. Calculate what? When NNP FC is given, 15,000. Indirect tax, 450. Direct tax, 175. We don't need direct tax at all. Subsidy is given. They have only given all the information. Simple. Convert FC to FC to MP. How? Plus indirect tax minus subsidy. Simple. 15,000 plus indirect tax. How much is indirect tax? So 15,000 plus 450 minus 250. We don't want this 175. Direct tax is not required. Extra information. Simple. Take out calculator. 15,000 plus 450 minus 250. End answer. 15,200. Done. Next. Chapter 6. See there. What is the difference between market price and factor cost? Just now we said indirect tax and subsidy. That is also called NIT. Net indirect. This Keynesian theory question. See, what is the difference between national and domestic? Net factor income from abroad. Next, national income is calculated as the contribution of the production of each industry minus intermediate purchase. Output minus intermediate. Each industry output value minus intermediate. Where did we do that? Value added method, na? That is also called as industrial origin method. What is another name of value added method? Industrial origin method. Okay, this is Keynesian theory. See here. Which of the following pair of components is common of all the three? Okay, three models. Okay, Keynesian theory, three models. Government spendings that does not contribute to GDP calculation. Transfer payments, na? They are just incomes received but not earned. See here, government spendings that does not contribute to GDP because income is only just redistributed from one group of people to without any direct contribution by the recipient. They are not contributing in production, just money is getting transferred from one person to another person. So that is which income? Transfer incomes. That's it. Next. Jan 26 attempt paper. This already we took care. Okay. Which item is not included in calculation of national income using the income method? Compensation of employee. Is it included? Yes. FC formula. Mixed income. FC formula. Rent. FC formula. Interest paid on consumption loans. No. This is the answer. These three were a components of FC formula. In national accounts, which of the following is considered as an economic bad? Again, the theory part. Traffic congestion is an economic bad. Calculate this. This is much more easiest question. What are they asking us to calculate? GDP MP and GDP FC. Now see the given information. Operating surplus, mixed income of self-employed. Where do we use mixed income of self-employed, operating surplus in which formula? FC formula. Which formula? Okay, we also need GDP FC na. First and foremost, let us identify GDP FC. So what are the three components of FC formula? Compensation of employee, mixed income of self-employed. Next operating surplus. Along with that, first alphabet is G. G stands for. That's it. Add this 4. 1, 2, 3, 4. See, don't take rent to interest to profit, because rent, interest and profit put together is what we call it as an operating surplus. So don't double count it. Don't double add it. So 1, 2, 3, 4. Add this 4. How much is that? 5,000. GDP FC. Already we got na. Now FC to MP conversion. How do you convert FC to MP? Add NIT. Clear? So simple. The NIT only they have given. Just add 400. How much is 5,300 plus 400? That's it. That is what I'm saying. When you know concept, hardly takes is 30 seconds. It will not take beyond 30 seconds to 1 minute to solve the questions. Clear? Understood? Next. Operating surplus. What does operating surplus includes? Rent, interest and profits. That's it. Next. Already we did this 3 problems. Keynesian theory. This is much more easiest question. Calculate depreciation. What is the information given? GDP MP. Year. Simple, na? Yes, ma. In income method. Only in income method. Because profits, royalty, commissions, that comes under FC formula in income method. Next here, they're asking us to calculate what? Depreciation. So simple. See the difference between these two. Year first alphabet G, year first alphabet N. That is only depreciation difference, na? Year second alphabet is D. Year second alphabet is N. Simple. Convert this into common values. Either for this add NFIA or either from this subtract NFIA. Do any one thing. Either for this add NFIA or either from this you subtract NFIA. Have they given NFIA? Yes. How much is NFIA? 200. Simple. Add NFIA to GDP MP. So here 8,000 plus 200. So it is total value how much? 8,200. Simple. Now 8,200 means it becomes GNP MP now. What is it? GNP MP, NNP MP. What is the difference between these two is called as depreciation. Simple. 8,200 minus 5,600. How much is the answer? 2,000. Got it? See, that is what, when you know a logic, even if you don't remember formula, you can still solve it. Clear, huh? Next. What are the 3 different interlinking phases of circular flow of income? Production, distribution, disposition. Calculate. This is much more difficult question. What are they asking us to calculate? See, observe here. Year also N, year also N. Year also MP, year also MP. Year domestic, year. Difference between these two is only called NFIN, huh? Only these two difference. How much is the difference between 12 and 10? Very difficult question this was. Very difficult question. Next. If GDP deflator is greater than 100, base year is 100. Anything above base year will be, nominal will be greater than real. That's it. Nominal GDP is greater than real GDP. Now see here. Gamma Limited is a South Korean company earning profits and manufacturing where? In India, inside India. That means this Gamma Limited, whatever they are producing, that is part of India's GDP. India's. Because where are they producing? But that money will go outside. Now, NFIA component, factor income payable to abroad. That will become GNP of South Korea. What is it? GNP of? So, that will be included in GDP of India. But South Korea's GNP. That's it. This was one question. I said, read ICA material, sometimes highlighted words. Simon Kuznets and Richard Stone, they were pioneered in national income accounting. Next, see, calculations only. This attempt full of calculation. They've given more than 10 questions in calculation in almost September 25 attempt. If a country has a following data, GDP MP is 2000 billion, indirect tax is 250, subsidy is 100, what will be GDP? Simple, MP to FC conversion. How do you convert MP to FC? FC means we don't want to sell in the market. Wapas back to factory. Minus Nirmala aunty plus. So 2000 minus 250 plus 100. That's it. How much? 2000 minus 250 plus 100. 1850. That's it. Next, May 25 attempt paper. Okay, which of the following is not a significance of national income estimate? Theory part, I said go through it like a newspaper. Here answer is to assist making policy related to population growth. In national income, we never come up with any policy based on national income to grow population. This is wrong. But these 3 were correct. I said regional income calculation questions are coming. See here, which of the following organization is for compilation, just to put the information together? But who is responsible to prepare? Directorate of Economics and Statistics. Already we did inflation calculation. GNP meaning they have asked here. Nothing. What is GNP? GDP plus NFIA. See, market value of all final goods and services produced within the domestic territory, including net factor income from NFIA. Next, they have asked the GDPFC formula, correct formula of GDPFC, GDPMP, conversion of MP to FC, minus Nirmala aunty plus Modi uncle. Next, which of the following is included in the calculation of, under the concept of national income, unemployment compensation, there is transfer payments, that is included. Which of the following is true with respect to, it is an income earned by private sector from all the sources within the country as well as outside the country. Base price. Actually, in this attempt, they have made a mistake here. Simple logic here. Whatever market price and factor cost we calculated, that we will split that into two types of indirect tax. In indirect tax, there are two types. One is production tax, second one is a product tax. If we only and only take production tax, which tax? See, simple logic here. Factor cost plus production tax. Which tax? That is license fees. Plus production subsidy. Wait, sorry. Minus production subsidy. Minus production subsidy. This will give us base price. Which price? For this base price, when you add product tax, GST, and any subsidy, that is product subsidy, end result what we get is a market price. Clear? Now they are asking only and only what? Base price. Factor cost plus production tax minus production subsidy. See, factor cost plus production tax minus production subsidy. It is not plus production subsidy. This should be minus. Okay. Under which of the following we consider standard of living in the country? Per capita income. Amount which is in the hands of an individual. Either you will consume or either you will say YD is equals to C plus S. What does that YD stands for? Disposable personal income. That's it. Keynesian theory question. These all are. So last attempt, January 2025. Fifth attempt. Going backwards, 5 attempt. Which of the following is not true about the personal income? It measures the actual receipt of persons only from the production activity. No, even from transfer payments, not only from production. Personal income also includes transfer payments. Product method or value added method is also called as industrial origin method. This already we calculated. This also we calculated. Nominal GDP is also called as GDP at current price. Real GDP is called as GDP at constant price. While using income method, which of the following is included in calculating national income? All those brokerage, royalty, commissions, profits, margins earned. Only that is included. That's it. By this, unit 1 of chapter 6 comes to an end. Clear up? Any doubt for anyone in terms of concept, in terms of MCQs, let me know before moving into Keynesian theory. Because in Keynesian theory, it looks very vast. It looks very, but to be frank, chiller chapter. First two topics are extremely important. Majority question comes from 2-sector model, investment multiplier, leakages. 3-sector and 4-sector till date, hardly one question in 2 attempts. I will show the exam question paper. Hardly till date. If you take the past 6 attempts paper, only 2 times the questions have come. And once from multiplier calculation, once from concept. And that too silly question. From both. Clear? Let's continue. Okay. See, as I said, total there are 4 topics in Keynesian theory. Which theory? So, which are the 4 topics? First one, 2-sector model. Next, 3-sector model and 4-sector model. Connecting to 2-sector model, we have investment multiplier and leakages. And this is where the major question comes. 2-sector model, investment multiplier and leakages. In this entire unit, formulas are important. If you don't remember formula, again here also minimum 3 to 4 numerical problems gone. And concept also, major question comes from this 2-sector and investment multiplier and leakages. Is that clear? First understand the background. What is this two sector model? So by the way, two sector model has only C plus I. Okay, now in this two sector model, what is equilibrium concept? AD should be equal to, what is AD component? What is AS component? CC gets cancelled. So finally I is equals to, clear? So this is equilibrium concept. National income equation, Y is equals to C plus I. In the place of C, we will write the equation of C. What is the equation of C? A plus B of Y plus I. That's it. This you need to remember. This you need to remember. And this you have to remember in the two sector model. And graph, don't break your head. Till date, not even a single question was asked from the graph in Keynesian theory. That will be little complicated. Usually they will not complicate so much at foundation level. Even if they try to ask one time, they may risk it, and they may, if they want to complicate your life, they may ask it. But you should know how to interpret the graph. When you know how to interpret the graph, you will crack it off. Is it clear? Okay, now in this area, anyone having doubt? Now I will straight away connect this to MPC, MPS. Remember, what is MPC formula? Next, APC formula. Consumption by. Same way, we also have MPS. What is it? Change in savings by change in income. What is APS formula? Savings by income. Is that clear? Now, MPC plus MPS. What is it? MPC plus put together is equal to value of MPC will be 0 and 1. Value of MPS will also be between 0 and 1. MPC plus MPS put together. Same way, APC plus APS put together is also 1. And the most important logic is the table. One second. This one. Observe. Whenever income increases, APC keeps on decreasing, but MPC will remain constant. And whenever output is 0, APC will be infinite. See, at the 0 income, APC will be. When income rises, APC will decrease. When income rises, MPC remains. This is important. Clear? Understood? Now, the second set of formulas which is important. Now, this is where questions will also come and you guys will go wrong. What is income formula? Consumption plus savings. What is consumption formula? Income minus savings. What is savings formula? Income minus consumption. This is easiest one. Now, change in income will be change in consumption plus change in savings. Do you agree? Same to same only. I am just including the word called as change. What is it? I am including a word called as. Is it clear? Next, there is one more formula connecting to investment multiplier. What is it? Change in income is multiplier into change in investments. This is where you will go wrong. This formula is important. Clear? Next, change in consumption. What is it? Change in consumption is change in income into MPC. What is it? Change in income into. Same way, change in savings is change in income into MPS. Change in income into. Clear? Now this set of formulas are important. This is where you will go wrong. This is where the exam questions are going to come up from. Clear? This is where you will be always and always making a blunder. And now comes investment multiplier. Investment multiplier is K. What is investment multiplier? Change in income because of change in, or simple logic, reciprocal of MPS. What is it? Reciprocal of MPS can also be written as what? 1 minus B. What is it? 1 minus B. Is that clear? So, these formulas are important. That means for us, MPC is important or MPS is important? C is important. That means we should spend more money. What we should do? We should not save more money because it is a reciprocal of MPS. If we save more, investment will not multiply more. Investment will multiply lesser number of times. Let's take up an example for your understanding. Let's say this is the column of MPC. This is the column of MPS. This is multiplier. Let's say MPC is 0.2. This is 0.8. This is 0.5. This is 0.5. This is 0.7. This is 0.3. 0.8. 0.2. 0.9. 0.1. Take out calculator. 1 divided by 0.8. 1 divided by 0.5, 1 divided by 0.3, 1 divided by 0.2, 1 divided by 0.1. Answers 1 divided by 0.8. 1.25 times. Money will multiply only by how many times? Why? Because we are spending just 20 percentage. Next, if at all we spend 50 percentage, how many times? 2 times. Okay. Next, if at all we spend 70 percentage, 3.33 times. Next, if at all we spend 80 percentage, how much ra? Pakkava? 5 times. Observe. If I spend 90 percentage of money, now you tell me, if multiplier should increase this 5 times, 10 times, should we spend more money or should we save more money? Spend more money. So MPC and multiplier has positive relation. What is it? MPC increases, multiplier also increases. MPC decreases, multiplier will also decreases. So MPC and multiplier has a dash relationship, positive relationship. MPS and multiplier has negative relation. If MPS goes up, multiplier will come down. If MPS goes down, multiplier will go up. So it will be having dash relationship, negative relationship. Is that clear? So for us, spending should be more. MPC should be more. MPC is the main determinant of multiplier. What is it? MPC is the main determinant of multiplier. In exam, now there are 2 types of questions which will come from multiplier. Wait, let me make you to solve that questions in the class. Not this. 1 second. Multiplier questions we will go. Multiplier. Have a look here. An increase in investment by how much has led to increase in national income by how much? Calculate marginal propensity to. Okay, what is it? Increase in investment. That means change in investment. Here, increase in national income means change in income. So, what is multiplier formula? Change in income because of change in investment. Change in income is how much? 1600 crore. Change in investment is how much? 400 crore. So how many times is this? 4 times. How many times? Clear up. Now, what are they asking us to calculate? They are asking us to calculate MPC. We also have one more formula. If you remember, 1 divided by 1 minus B. Just now we identified the multiplier. How many times is the multiplier? 4 times is equals to 1 divided by 1 minus B. Now this 1 minus B will go to LHS. 4 will come to RHS denominator. So this will become 1 minus B is equals to 1 by 4. By the way, what is 1 by 4? 0.25. So minus B will go to RHS. 0.25 will come to. So 1 minus 0.25 is equals to B. So finally, what is the B value? B is also called as dash. MPC. Clear? Shall I show exam question? Will you guys do it? Okay, solve this. Where is that? Just now we opened, na? 1 second. Okay, they have given I is equals to S in this. Question number 51. Solve it. If national income increases from 500 crore to 2500, what is the change in income? So change in income is 2000. Next, due to increase in investment of 200. So straight away 200. 2000 by 200. How many times? Again, same to same formula. 1 divided by 1 minus b, because they're asking us to calculate what? MPC. Solve it and let me know the end answer. I know I've given answer here. 0.9 is the answer, but I want you to solve it once. Try solving it. Clear? Got it? Got the answer? Okay, next. See, I asked you to remember S is equals to I, na? Equation problem. Do it. S is equals to I. This is one of the most easiest question. S will be equal to I. S is minus 20 plus 0.5I is equals to 100. Now minus 20 will go to RHS side. So this will become 0.5I is equals to 120. So 120 divided by 0.5. How much? But don't be excited in the exam. As soon as you get 240 as an answer. So option A, wrong. First understand the question. What are they asking? They are not asking national income. They are asking just a consumption. And we know that S is equals to I. Clear? That means whatever is the investment, that itself is a savings. This 100 is also the savings. You should remove 100 from 240 because they are asking consumption. Consumption is income minus savings. Income just now we identified 240 minus savings. Savings is how much? 100. So answer is 140, not 240. Most of them will get excited, but understand the question they are asking is consumption. Clear? Understood. So this is how the question comes from two sector model. Which sector model? Clear up. Now we will go to the leakages also. Now what is leakages? That means whenever the effect of multiplier is increasing, if the multiplier effect has to go down, leakages should become stronger. What should become stronger? Simple logic. If you don't spend money on present produced goods and services, what is it? If you don't spend money on already existing goods, if at all we purchase, or any imports or stock market, already if economy is in full employment, already economy is in, that will act as a leakage. Yeah, see here, when economy is already at dash employment, full employment, already achieving full employment equilibrium, if you pump in any new investment, that new investment will just act as a inflation. If you pay taxes, even tax is a leakage. If you simply keep idle cash in hand, that is also leakage. That will not go multiple expansion. If you buy goods from existing stock, already closing stock of last year only you are buying from that, or any shares and bonds, you have invested money, but company has not declared dividends, undistributed profits of corporate. What is it? Profits of corporate, debt repayment, these all will act as a leakage. The more stronger the leakages are, multiplier effects will decrease. So leakages and multiplier are negative relation. Which relation? So in short, what is leakages? If you don't spend, see, if we do not spend on current produced consumption of goods and services, then we have regarded as leaked out of an income system. What is it? Leaked out of a? Is that clear? Understood. So this is the concept of leakage. So usually the exam questions will come from this category. Two sector model and leakages, and hardly few questions will come from three sector and four sector. But most important area of three sector and four sector is multiplier calculation. Which calculation? Wait, let me write across the main formulas first and later we will go. Okay. You need to write this, you need to remember this. This is where exam question most of the time come. And recently they have asked a question from four sector model multiplier. Which sector model? That is called as foreign trade multiplier. Which trade multiplier? Okay, see, first and foremost, normal scenario. Which scenario? Normal scenario. What is multiplier formula? Change in income divided by change in investment, or in a very simple words, reciprocal of MPS. What is it? Reciprocal of? Clear up. Second one, when tax is given as a function. What is it? Tax is given as a That means tax value will not be given. Rather, they will give a tax itself as an equation. If that is the case, 1 divided by 1 minus b of 1 minus t. This is the multiplier formula, and tax capital T is equals to t dash plus small t y. This will be the equation. See, in this t dash is autonomous, small t is induced. For us, the small t, whatever here we are calling small t, this is the one. Induced portion of t is important. This formula is important. And next comes the third scenario, that is 4-sector model. And this applies in which sector model? 3-sector model. Next comes the 4-sector model multiplier. The third formula, when import is given as equation or function, it is also called as foreign trade multiplier. If this is the case, equation will be 1 divided by 1 minus b plus m. That's it. So here capital M is equals to capital M dash plus small m y. So whatever is the small m is there, this is the small m. This is the important formula. Normal formula, anyhow you know it already. Along with this, these two things you have to remember. Is that clear? Understood? Okay. Now, in a 3-sector model, which sector model? See, they have given 4 varieties of question there. How many varieties? 4 varieties. First, understand the equilibrium concept. AD should be equal to AS. AD component is C plus is equals to C plus S plus T. Now, C and C gets cancelled. So, finally, this will be I plus G is equals to S plus T. In that, the most important is G is equal to T. This is called as balanced budget. What is it? That means whatever money we collect in the form of tax, same to same money we are going to spend it in the form of government expenditure. This is the element. And national income equation. Y is equals to C plus I plus G. Now, in the place of C, we have to write down the equation. What we should write down? A plus B of YD. What is it? A plus B of? It is not just Y, because government is there now. Government will collect the taxes. Nirmala Aunty department is there. Clear? Plus G will also come. Now, in the place of YD, by the way, what is YD? Income minus tax. If there is a transfer payment plus TR. Only and only if transfer payment is existing. What is it? Only and only if transfer payment is? If not, you will not even mention this plus TR. Only when transfer payment is existing, you will add it as plus TR. If not, you will not even add this as plus TR. Is it clear? Now, observe. Final equation. This is how it will be. Y is equals to A plus B of Y minus T. If there is a transfer payment, then only we will add it as plus TR. If not, we don't add it as a plus TR plus I plus G. Clear? Understood? This is the first type of question. Now, in this, if tax component is given as an equation, what is it? Tax component is given as an? Now listen, if tax as equation, see, none of this will come in the exam. Derivations. Straight away numericals will be asked. Wait, I will show the numericals only. Why to confuse you people? Have a look here, pa. Question number 24. This is the only problem from 3-sector model till date. From the past 5 attempts, they have asked. What is it? In the 3-sector model, C is equals to 8 plus 0.6 YD. What is that YD? Income minus tax. Here G is equals to T. Balanced budget na? How much is that? 10. I is equals to 60. C stands for consumption. I investment. YD disposable income. G government expenditure. Calculate what? Equilibrium level of national income. We also know the equation C plus I plus G. In the place of C, what you will write? 8 plus 0.6 of y minus t. How much is the t value? 10 plus I value 60 plus G value 10. That's it. Nothing big here. Now what will happen? You need to multiply 0.6 with this both. Now simple, y is equals to 8 plus 0.6y minus 0.6 into 10 is 6 plus I will add this both together. This will become 70. Now 0.6 will come to LHS side. Y means 1y. 1y minus 0.65 will become 0.4y is equals to 70 plus 8. 78 minus 6. What is 78 minus 6? How much is that? 78 minus 6. 70. Final step. Y is equals to 72 divided by 0.4. End answer. That's it. This is the only question till date that they have asked. My expectation. Next now. They will not give it like this. G is equals to T. Rather, T will be given in the form of equation. What is it? That is what I am writing now. If tax is given as an equation. Now what will be the national income equation? A plus B of y minus T dash minus Ty. What is it? Minus? This is what? Plus I plus G. When this kind of equation comes along, this is when multiplier formula will change. Multiplier formula will be 1 divided by 1 minus B of 1 minus. This is the one thing which you should remember. Shall I slightly twist the question and give it as a taxes equation? Will you solve it? Okay, same to same question. Now let's say for example, I'm just taking a random example. C is equals to 0. Wait. I will take the same question for your reference. Just know what you solved. 8 plus 0.6y. Okay. C is equals to 8 plus 0.6yd. In this, for example, T is equals to 10 plus 0.2y. What is it? 10 plus 0.2y. Clear? Next, in this, I value is considered 20. G value, consider it as 15. Identify two things. Number one, national income. Number two, multiplier. What is it? Multiplier. Identify this. Now I will help you with national income equation. Y is equals to C. In the place of C, what should we write? 8 plus 0.6y, y minus 10 minus 0.2y, not plus, because when you are writing inside the bracket, the induced portion will become minus. That is where you will make mistake. Induced portion, Bodmer's rule. The induced part, decimal part, when you are writing inside the bracket, that will become minus. Clear up? Next, plus I. How much is I? 20 plus G. Solve it. Solve it and let me know the answer. So 0.6 should be multiplied with all those three now. So y is equals to 8 plus 0.6y minus 6 minus. What is 0.6 into 0.2? 0.12. Okay, 0.12y. Plus I will add this both together. This will become 35. Now 0 plus 0.6y minus 0.12y will come to LHS. So taking y as common, 1 minus 0.6 plus 0.12 is equals to 8 and 35 is positive. So how much is that? 43 minus 6. So what is the end value? 37 divided by 1 minus 0.6 is 0.4. So 0. Not 4 plus 1 2 is there, na? 0.52. So what is 37 divided by 0.52? 71.5. 15. This is the end answer. So my expectation is this time in an exam, they will give it like this, because till date they have never asked a tax as a equation. What is it? Tax as a? They have never asked. So there is a high chances of getting. What is it? High chances of getting. If at all they give, you already know what is that maximum. They will give it like this equation. When you're writing inside the brackets, this positive symbol should become. That's it. That one area you should be careful. Rest remaining everything else is same. Okay, now multiplier. Now calculate multiplier. So what is multiplier formula? 1 divided by 1 minus b of 1 minus t. In this 1 minus b, what is b value here? 0.6. Here another small t value is 0.2. So it will be 0.6 of 1 minus 0.2. So here now, biggest blunder, again BODMAS rule people will forget. They will not follow the BODMAS rule. First you need to subtract these two. How much is this? 0.8. Now the 0.8 you should multiply that with 0.6. Do it. 0.8 into 0.6. How much? 0.48. So 1 minus 0.48. What is 1 divided by 0.52? 1.9 times. This is the multiplier. Clear? So any one question, my expectation is either if the question comes, it will come from the multiplier, or if not, like this, tax as a equation. What is it? Tax as a? So till date the question has not come. So there is a high chances of getting such questions. Clear? Understood? Okay, the student who are asking, sir, explain little 3-sector model detailed. In brief, I have done it, madam. Manushri. Clear? So till date, tax as a equation they have not asked. In this, if they want to make your life more miserable, na, they can also add a transfer payment. Which payment? That means here if they give TR, na, transfer payment, let's say some 50. Here you should add that at this point. Inside the bracket, plus 50 it should come. Inside the bracket only. What is it? Inside the bracket, because it is always plus TR. Like this I said now, whenever they give TR, it is plus. That is inside the bracket only it should come. Clear? Understood? So these are the type of questions which can come in 3-sector model. Which sector model? Now comes last but not the least, 4-sector model. It is much more easier. In 4-sector model. See, in 4-sector model, AD should be equal to AS. A shortcut to remember, AD is an expenditure side, AS is an income side. What is it? AS is an? Or also leakages, expenditure or injection. What is it? Expenditure or injection side. So this will be C plus I plus G plus X minus M is equals to C plus S plus T. In this case, CC gets cancelled, and moreover, this minus M is a import. Import is a leakage. What is it? Import is a, which is at injection side. So it should transfer to the RHS. So finally, I plus G plus X is equals to S plus T plus M. That's it. Clear? And in this case, now, as I said, import can be given as a function. Import can be given as a equation. That is when recent attempt, they have asked a foreign trade multiplier. Which concept? Wait, I will show. Easy question that was also. See, AD is equals to ES concept, same to same 2-sector model. We will solve it. We will solve all the questions. First, I will show the foreign trade multiplier. Maybe in Jan attempt, if I'm not wrong. If not this attempt, yeah, Jan attempt only. Here only, we got it now. Question number 18. Have a look here. If marginal propensity to consume, MPC, this MPC is nothing but value of B, na? Value of B. And marginal propensity to import, that is value of small m. What is it? Value of? They have already given value of small m. They have already given value of small b. What are they asking us to calculate? They are asking us to calculate foreign trade multiplier. What is foreign trade multiplier? 1 divided by 1 minus b plus m. That's it. See, when you know the formula, you will calculate it. See, 1 minus 0.6 plus 0.04. So it is 1 divided by 1 minus 0.6 is 0.4 plus 0.04. So it will be 1 divided by 0.44. End answer is 2.27. Appa, these are the only two questions which has been asked till date from 3 sector and 4 sector. One 3 sector model equation question, C plus I plus G. And this is the another question. In the past 5 attempts, they haven't asked much questions from 3 sector and 4 sector. But my expectation in 3 sector, if they are asking next time any equation question, they may include tax as a function. What is it? Or else they may ask you the at least multiplier question from tax as a function. When tax as a function comes, what is multiplier formula? This one. 1 divided by 1 minus b of 1 minus. From this till date question was not asked. So my expectation is from this they may ask. Clear? Understood? This was the 4 sector model. Nothing big in the 4 sector model. End of the day, 4 sector model equation will be like this. Y is equals to C plus I plus G plus X minus M. If they give M as this equation, this will become M dash minus small my, because you are writing inside the bracket. Now, usually it will be plus my outside. When you are writing inside the bracket, it will become minus small my. So this is also an equation. This can also be given as an equation. Clear? When this is given as an equation, that is import, multiplier formula will be dash 1 divided by 1 minus b plus m. Clear? That's it. By this, Keynesian theory also comes to an end. This is the main concepts from examination point of view. Which point of view? Clear? Or else any specific topic, if you want me to explain from Keynesian theory or anything which you haven't understood in the Keynesian theory, let me know before going to MCQs. I will solve that. Or I will clarify that. Any specific topic in Keynesian theory, it can be any smallest of the smallest. Sir, this topic I didn't understand. Inflationary gap, deflationary gap, leakages, or any formula, numerical calculations, or 2 sector model equation, 3 sector model equation, 4 sector model equation, or any graph or flow chart. Whatever you feel, flip back your page, have a look. Any doubt before going to MCQs, I will clarify that. Let me know. Any specific doubt in any of the topic of Keynesian theory before going to MCQs? Okay. Chapter 6. Okay, look at the board. Which of the following pair of components is common to all the sectoral model? That means 3 sector, 2 sector, 4 sector. In all of this, which is the common? C and I. The C and I stands for households and business firms. Only these two are common for all the sectoral model 2, 3 and 4. Calculate this. Calculate average propensity to save. What is the formula for average propensity to save? Savings by income. Total savings by total income. Clear? So here. Okay, wait. This continuation. This is the table. From the table continuation it is. Okay. Calculate marginal propensity to consume when the income changes from 300 crores to. Okay, what is marginal propensity to consume formula? Change in consumption by change in income. See, consumption is changing by 75 crore, income is changing by 100 crore. So what is 75 by 100? 0.75. Next, what is average propensity to save when income is 500 crore? When income is 500 crore, consumption is 400. So savings is how much? 100. So they're asking average propensity to save. Savings by income. Savings is 100, income is 500. 100 by 500. 0.2. Clear? Next. Now solve this. Just now you also solved one of the similar question, but solve it once again. See, in national income has increased by how much? And there is an increase in investment by 600. So 2000 divided by 1000. 600. What is the number of times? Calculate. 1.25 times. But they are asking us to calculate what? Marginal propensity to. So again, K is equals to 1 divided by 1 minus B. 1.25 is equals to 1 divided by 1 minus B. Same calculation here. I have done it. End answer. B is 0. While determining national income, the income which is not spent on currently produced, that is recently produced goods and services, is considered as leakage. Which of the following statement correctly explains the relationship between MPS and MPS with the value of an investment multiplier? So for investment multiplier, do we need to spend more or spend less? Spend more. So higher the MPC, more will be the value of a investment multiplier. MPC and multiplier has a positive relationship. Next. The condition for national income equilibrium, AD should be equal to AS. AD component is C plus I. AS component is C plus. Yes. That already taken care. Already taken care. We did this. We also did this. Taken care. That's it. Next, Jan 26 attempt paper will come from first weight. Chapter 6. Yeah, we solved it in the class just now. Okay. National income. So income side is a AS side. National income of the economy, which is either consumed or either. That means income. Now income is either consumed or either. Income represents AS side. It is aggregate supply. Next, which of the following factor? Already we discussed this. Factor payment. This is transfer payment. See, which of the following factors of production is not included in the calculation of? Not included. Transfer payment. That is pension retired worker. Already we did this just now. If net factor income from abroad is negative, that means GNP will be smaller than GDP. This we did. Okay, this also we did. We took care. Chapter 6. Traffic congestion. We did economic bats. Leakage. See, which of the following is not an example of leakage from the income stream? Now, what were all the examples of leakages from the income stream? Number 1, payment of. Number 2, existing stocks and undistributed profits of. Debt repayment and full employment. Now they are asking which is not an example of leakages. Progressive rate of taxes. Payment of taxes is a leakage. High liquidity, holding more money in the cash. Yes. Demand for imported good is a leakage. Distributed profits. Here it was undistributed. What is it? But there they have given it as what? Distributed means already money is received. So distributed profit is not a leakage. Undistributed profit is a leakage. Clear? Already we did this. We did this. That's it. September 25 attempt paper. Already taken care with these three things. Solve this. Consumption function C is equals to 10 plus 0.5i and investment is 200. So this is the equation C plus I. Solve it. Solve it and let me know the answer. So 0.5 will come to LHS side. So it will be 0.5i and 210. So y is equals to 210 divided by 0.5. 400. The maximum value of investment multiplier is infinite. That is when we completely spend our money. That is MPC is equals to 1. Already we have done this similar kind of a question, but still solve it once again. See, this kind of questions now, MPC calculation repeatedly been asked. This is the third attempt you are seeing. Solve it, solve it. I think this only same question only we solved, na? Yes, this only we solved it. Now, what is the slope of the consumption function? That is MPC, value of B. That B is called as MPC. That is called as slope. Calculate AP. Yes, what is APS formula? Savings by income. Clear? Okay, here APS. Oh, they have only given APS value 0.4. Total increase in total income is 25. They're asking us to identify total savings. So simple, 0.4 TS by 25. So 25 into 0.4, 10,000. That's it. Next, May 25 attempt paper. Okay, this we did. Taken care, taken care, taken care. Personal income taken care. Private income taken care. Base price we did this. Per capita income we did. Disposable personal income. Now it comes. Under the Keynesian theory of determining the national income, the assumption is that consumption increases with an increase in, but increase in consumption will be less than increase in disposable. This is APC concept. Whenever income increases, APC keeps on less than. Next, MPC plus MPS put together should be equal to. This is chapter 6 only, supra-regional sector. See, while calculating state income, certain activities like railways, banking, insurance, which cuts the state borders and contribution cannot be assigned just for a one state. That is called as. And how are they allocated? Relevant indicators. Which indicators? Next up. Which of the following is not a sector included in the 3-sector model? So foreign sector comes in the 4th sector. It is not a part of a 3-sector model. Next, under Keynesian theory of national income determination, which of the following term is given for the demand for money? This is actually chapter 8, not chapter 6. Chapter 8, Keynesian theory, liquidity preference. This is chapter 8. Keynesian theory of demand for money, speculative money concept. That's it. Last paper, January 25. Personal income. Average propensity to save. Average propensity to save formula. What is APS formula? Savings by income. Clear. They have given consumption, they have given income. So income minus consumption is savings. So 900 divided by 1000. 200, 0.75. Marginal propensity to consume. Value will be always between 0 and 1. Greater than 0 but lesser than 1. Already we did this. See here. In an economy, investment expenditure has increased by 300 crore and marginal propensity to consume. They have only given MPC. Calculate total increase in income. So multiplier is equals to change in income divided by change in consumption by change in income. Clear up? So now reverse calculation has to be made because they're asking us to calculate change in income. Do it. And also I asked you to remember one more formula. Change in income. Where is that formulas? You wrote na here. What is the change in income formula? Multiplier into. And multiplier, there is one simple formula for multiplier. What is it? Reciprocal of MPS. We will get to know the. Automatically we'll get to know the multiplier. So change in investment. Okay, chalo. See here. We can also use that simple formula here. What are they asking us to calculate here? Total increase in income. That means change in income is multiplier into change in investment. See, they have only given investment expenditure. Now how much? 300. MPC is given. So reciprocal of MPS. Simple concept here. 1 divided by 0.4. How many times? 2.5 times. So 2.5 into 300. 2.5 into 300. 750. See, we got the answer. That is why I said formulas are important. When you remember formula, you will crack it off. Done. 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 Investment multiplier is a ratio of what? Change in income by change in investment. Change in national income by change in investment. Or one more formula is there. What is that? Reciprocal of ratio. Whenever you see this word ratio, ratio means formula. Total consumption by total income is APC. Average propensity to consume. Income method done. That's it. By this, even Keynesian theory also comes to an clear. So entire chapter 6, Damar, Katam. Clear? Understood? So tomorrow, same time we will start. Tomorrow Sunday, do you want me to take it or should I take it on Monday? Tomorrow or Monday? Let me know. Suppose if you are not coming tomorrow, I will take it on Monday. Tomorrow only, yeah. Majority wins. Now only I'm saying. Hello, YouTube live students. You want it tomorrow or you want it on Monday? So tomorrow Sunday. That's the reason I'm asking. Tomorrow it seems. Okay, so then we will take it tomorrow only. No issues then. Same time, huh? Tomorrow also. So tomorrow we'll do with chapter 7. You see, in chapter 7, na budget unit, I will just give you an outline. Because there is one superb topic in the budget that I will explain today itself. That one small topic, because that is where the most of the questions will come from. Calculations of deficit, all of this will come. I will just explain that one small topic of the budget and then we will wind up. See, budget is mainly classified into two kinds. How many kinds? Capital budget and revenue. So even in this capital budget also, we have capital receipts, capital expenditure. You have revenue receipt, revenue expenditure. So when we speak about receipts, it both the receipts put together. That means total receipts are capital receipt plus revenue receipts. Same way, when I speak about expenditure, that is total expenditure, that is capital expenditure plus revenue expenditure. Clear? So we should consider this. And there are mainly two types of budget. How many types of budget? So when we speak about types of budget, first one is balanced budget. What is it? So in balanced budget, total expenditure is always equals to total revenues. Clear? Second comes an imbalanced budget. What is it? Or unbalanced budget. So in this there are two things. Number one, surplus. Surplus budget. So what is surplus budget? Total receipts are greater than total expenditure. But unfortunately, in our country, we always have a deficit budget. Now, this deficit budget concept is most important. Under this, there are 4 kinds of deficits. How many kinds of deficits? First, understand what is deficit budget. When your total expenditures are greater than total receipts. Now, under this, there are 4 kinds. How many kinds are there? The very first one, budgetary deficit. When your total expenditure are always and always exceeding the total receipts. What is it? Total expenditures are always and always exceeding the total receipts. Clear? And the second one, in this, fiscal deficit. Same to same dialogue, but only one extra word should be added. Excluding borrowings. What is it? Excluding? That means in capital receipts. Which receipts? We should remove the borrowings part. From this entire budgetary deficit, if at all you just remove this word, whenever you find this word, excluding borrowings, that is called as which deficit? Fiscal deficit. Next, from this fiscal deficit, if you remove interest liability on old loan, like this year by year, we are keep on taking the loan. That will bring us a primary deficit. So simple concept, fiscal deficit minus net interest liability. Which interest liability? Net interest liability. This is called as a primary deficit. In this, first 3 are most important. This is where numerical questions will come from. Clear up? And every attempt, I will show now. Almost every random attempt, every now and then, these questions are going to come. Clear up? Now remember, first one is budgetary deficit. When total expenditure are exceeding the total receipts. Clear up? So that is called as a budgetary deficit. Fiscal means from the same concept, if you just exclude them. Now from the fiscal, if you exclude the interest liability, that is called as which deficit? So then which is the 4th type of a deficit? That is called revenue deficit. Which deficit? Revenue deficit. That means now I will only and only calculate this revenue budget. In this revenue budget, if revenue expenditures are greater than revenue, this is called as revenue deficit. Is this clear? So revenue deficit is the simplest one. Usually they will never ask a question. When revenue expenditure is greater than revenue receipt, that is called as revenue deficit. But the questions in an exam is going to come from these 3 areas. This is one of the most favorite question to ICAI, either in terms of theory or either in terms of numericals. Budgetary deficit, fiscal deficit, primary deficit. Wait, let me show the questions itself. Chapter 7. Yeah, see here. If the primary deficit is 20,500 crore and the net interest liability of the country is, what is fiscal means? It includes interest liabilities. Now, just we should add these two now. What is 20,500 plus 3,500? That's it. This was an exam question. And in the same attempt, they have also asked you to identify. How do you identify primary deficit? Fiscal deficit minus interest liability. That's it. We just have to subtract this. 24 minus 2 is. In the same attempt, reverse and straight, both questions were asked. Clear? Okay, next up. Chapter 7. See here. The excess of government total expenditure over total receipts. Whenever you see this word excluding borrowing, what does it mean? Just assume here the word excluding borrowings are missing. Then answer will be budgetary deficit. Just that word excluding borrowing. See, this is one of the most repeated favorite question of ICI. Every time, one or the other way, they will ask questions from that area. Next, May 25. I will show in every attempt you will find that question. One or the other way the question will come. See here. Now this I have to explain it. I will explain it tomorrow. Again, article numbers have been asked. In this concept as asked, they haven't asked them numericals or maybe from the deficit, only in this one attempt, I guess. Or if it will be there, we have to search nook and corner. Somewhere it will be. This is a superb question. This is September 25 attempt paper. See here, if the government revenue receipt, which receipt is 10,000 crore and capital receipt excluding borrowing is, and they are also asking us to calculate what? Good, now fiscal deficit doesn't includes borrowing. If at all it includes borrowing, we should only remove that. So they have only removed it. They have made our life only simple. Now simple concept. Revenue receipt is how much? Capital receipt is how much? So 10 plus 2. 12,000 is the total receipt. 12,000 is that is excluding. And next, revenue expenditure is how much? Capital expenditure is how much? Now 12 plus 5 is how much? So 17 minus 12 is how much? That is the deficit. Which deficit? Fiscal. Just assume, if this word excluding borrowings is not given, separately they had given excluding borrowing as 1,000 crore. Excluding borrowing as, what will you do? You should subtract this from the capital receipt. That means this 2 minus 1. Like this you should subtract. Already they have subtracted, so we are not removing it once again. Suppose instead of subtracting, if they had given a separate information. Which information? Because fiscal deficit always excludes borrowings. Is that clear? Okay, next. Chapter 7. They have asked one nice question recently. Same, revenue receipt, revenue expenditure, similar question only. Use the below mentioned data to answer the question number 73 and 74. Revenue receipt, how much? Expenditures on revenue account, how much? Clear out. Now they are also asking which deficit. Revenue receipt is how much? Revenue expenditure is how much? So 30 minus 25 is how much? Got it? Next, they are asking us to identify what? Budgetary means both revenue plus capital put together. Okay, revenue receipt is how much? 25. Expenditures on capital is given. Expenditure on revenue is given. Total expenditure is given. What is expenditure? That means revenue and capital put together. Same way, estimated total. Simple difference between these two. 60 and 54. Differences. Got it? Understood? Chapter 7. This was in the recent attempt question. They asked very nice question here. Observe. Calculate which deficit. Fiscal deficit means excluding. Clear? So revenue deficit is given. Which deficit? Revenue account shortage is given. Capital expenditure is there. Capital receipt is there. Already. They are only making our life simple every single time. They will only say fiscal and they will only exclude the borrowings. Now, capital expenditure is how much? Capital receipt is how much? So, difference is how much? 2,500. Now, this is only with respect to capital account. Which account? This is capital deficit. Which deficit? Capital deficit is 2,500. Revenue deficit is how much? So, 2,500 plus 5,000 is how much? That's it. Clear? See, almost in every attempt, in past 6 attempts I took, in 6 attempts, in 5 attempts, the questions are coming from deficit. Only in 1 attempt there was no question. That's it. That is one of the most favorite question of ICI whenever we study from the budget chapter. And along with that normal theory concepts, tomorrow I will do that. But this is one of the important areas. So I covered it off today itself. Clear? Understood? Chalo, we'll wind up for the day. We will be enough for the day. Tomorrow we'll be finishing the entire chapter 7. Clear up. And day after tomorrow, that is on Monday. Monday we'll be going with chapter 8. And Tuesday will be the last day. Tuesday will be chapter 9 and chapter 10. Clear? So chapter 9 and 10 most important areas I will cover. See, that is very vast. See what happens in 2 hours covering everything becomes challenging. Whatever is important. Like today how we did exam oriented. Like I have shown the question paper, we did all the questions from examination point of view. Whatever is most important, we are covering that. So in the previous class, we were discussing about the concepts of chapter 6 and I just gave an intro about the concept of chapter 7, especially budget. One small topic we covered. So total, there are 4 units in the chapter 7. So which are those 4 units? Unit number 1, fiscal functions as a overview. Unit number 2, market failure and government intervention to correct market failure. Unit 3 is about Indian Union budget. And the last one, 4th unit is about fiscal policy as an overview. Clear? So let us get started. First and foremost, the one of the smallest and the easiest unit, that is fiscal functions as an overview. So fiscal function. So first let us understand what exactly does this fiscal functions is all about. See, remember this whole unit is mainly based on this one single flowchart. Be it any nation for it matter, they will be having economic policy. Which policy? Such economic policies are divided into 2 kinds. First one, fiscal policy, and the second one is monetary policy. So under this fiscal policy, there are mainly 2 elements. One is government expenditure. The second one is tax. Under monetary policy, for a time being, we just consider it as an interest rates. Clear? So whenever the economy is not performing well, that is called as deflation. What is it called? Deflation. When economy is performing well, when it is overperforming, leave about performing, when it is overperforming, there will be inflation and people already have more money in its hand. Now, when there is an inflation problem, let's say that people already have more and more money in their hand. At that point of time, government expenditure should go down. Nirmala aunty will become more active. Tax rates will increase. Clear? And most importantly, there is one more component, that is a budget. Whenever you are collecting less money, but you are spending less money, but collecting more money. It's other way around. Taxes means you are getting money. Tax is the major source of income. We are collecting more money, but we are spending less money. So we will be having surplus budget. Which budget?
Surplus budget.
Surplus budget. Clear? And already people have more money in their hand. So at this point of time, government will start borrowing more. So public debts will increase. What will increase?
Public debts will increase.
Clear? And these are the 4 important instruments of fiscal policy. Mainly we consider the first 2. In unit number 4, we are going to also speak about the another 2. Clear? So total 4 instruments are there. Let me explain all the 4 together. When people already have more money in their hands, government has to spend less money. They have to collect more taxes. In order to cut down the performance of an economy, there will be surplus budget. Public debts are going to increase. And interest rates are also going to increase by monetary policy. Remember, always and always, tax rate and interest rate goes hand in hand. If tax increases, interest rate also increases. If tax decreases, interest rate will decrease. Clear? So when there is a deflation, when economy is not performing well, government has to spend more money. At this point of time, tax rates will decrease. There will be a deficit budget. At this point of time, public debts will decrease and interest rates will also decrease. So remember, tax and interest rate goes hand in hand. So there's one simple flow chart. This will summarize the whole chapter 7 and this is with respect to interest rate concept. Clear? And in this particular chapter, first we have to understand from the point of view of a classical economist, and next we will understand from the neoclassical. So what is this differentiation of classical and neoclassical? The economists who were supporting before 1929, the Great Depression of America, we call them as classical economists. And the classical economists said that economy will always be at full employment equilibrium. What is it? Full employment. So now x-axis represents both quantity as well as income. And at this level, there will be full employment level of equilibrium. And Keynes said this may happen or may not happen. So the demand can be less than full employment equilibrium, or even it can be a greater than full employment equilibrium. It can be, anything can happen, but there is no rule that every time it will be a full employment at the point of equilibrium. When we achieve underemployment equilibrium, there will be unemployment problem. When we achieve overemployment equilibrium, there will be inflation problem. Which problem? Clear? So this is one such basic concept which we have to understand. We also call it as a bottleneck. Clear? So in the unit 1, mainly we are going to speak about a concept of fiscal function. Simple concept. Why a government has to intervene? Fiscal is nothing but dealing with public money. What is it dealing with? So why government has to invariably perform? Why government has to intervene? See, I took an example of Shah Rukh Khan in my class. Like, let's assume he is earning 50 crore rupees money per year by a movie. Shashikiran is a poor farmer. I need to get operation. My operation cost is 1 lakh, but my yearly income is 2 lakh rupee. 50% of my annual income is operation cost. If government is not there, will Shah Rukh Khan come identify Shashikiran? Will he provide him with the operation expenses? No. That's why government will involve. Government collect taxes from rich people and give benefits to the poor people. So why government has to invariably perform? Why government has to intervene? Why can't it be just be dependent on capitalistic economy? Which economy? Free market economy, private dominated economy. The biggest problem with free dominated economy is these fellows will either overproduce certain things or underproduce certain things. They don't produce in a sufficient quantity. Which quantity? Clear. So a nation has to first decide what are all the basic problems of their economy. Already in unit 1 we have done this. What to produce, how to produce, for whom to produce, and what are the different systems are there in order to tackle that basic problems. So either capitalistic economy or socialistic economy or mixed economy. Clear? Now Adam Smith, the father of economics, said even I am a bold advocate of a free market economy, but when it comes to resource allocation, there are 3 areas. How many areas? The resource allocation role has to be compulsorily followed by the government only in this 3 areas. Number 1, national defense, maintenance and justice of rule of law, highly beneficial public institutions and public works. In these 3 areas, we want government intervention for distribution of resources. Rest in every other area, even Adam Smith said that we are following a free market economy or capitalistic economy. Especially after the 1930s, after the Great Depression, the government's role has become more and more important. But our classical economists before Great Depression, they followed capitalistic economy. They said government intervention is unnecessary. What is it? Government intervention is, we don't want any government interference at all. Economy will get self-adjusted on its own. But because of Great Depression, it didn't get self-adjusted. That is when John Maynard Keynes in the year 1936, he provided a solution in the form of counter-cyclical fiscal policy. This part. Counter-cyclical fiscal policies. Clear? So that was from the words of Adam Smith. Later, this entire unit 1 is mainly dependent from the words of Richard Musgrave. From the words of whom? Richard Musgrave has given a concept called as 3-branch taxonomy. What is the concept given by Richard Musgrave called as? So in the 3-branch taxonomy, the first branch taxonomy is allocation, that is resource allocation. Second one is income redistribution, and third one is macroeconomic stabilization. Allocation and redistribution is a microeconomic function. Stabilization is a macroeconomic function, wherein which in a country resources are not allocated in a proper manner. Government has to interfere. Government has to follow this resource allocation function in the most effective manner. We believe that effective allocation is only possible in perfect competition market. But in reality, our markets are never perfect. And moreover, the resource allocation will be always and always done in a sufficient manner for private goods, but for public goods, there won't be sufficiently allocated. Why? Because government operates based on budget, expenditure switching. So they don't allocate sufficiently. Approvals are being taken, all this nataks and all are there in case of government allocation. But private allocation happens based on demand and supply. That is private market forces. That is demand and supply. So that is the very first one. So government has to intervene. If government doesn't intervene, this private players now either they will overproduce or either they will never sufficiently produce. And because of also a imperfect competition and to some extent there is a dash power, monopoly power, markets are going to fail. And there is also problem of a externality, that is pollution, and also we are not ready to move the factors because of which unemployment and inefficiency will happen. We have imperfect information and unequal distribution of income, and well, for these many reasons the markets are going to fail. And we will study this once again. So by charts, now government has to intervene, government has to decide the resource allocation first and foremost. Like we have to frame our fiscal policies, that is government expenditure and tax policy. What is it? Government expenditure and
Tax policy.
so that is what we have to frame our fiscal policy in a better manner, and government has to decide who should be taxed and what will be, and whatever money that we received on what purpose we will spend our public revenue. And it is an optimum combination of public goods and merit goods should be provided. Everything is connecting to unit 2. Next. These are some examples. See, in this area, any nook and corner, anywhere the question comes. Now only I'm saying chapter 7, chapter 8, chapter 9. From any nook and corner of ICA material, they can frame a question. So we can't ignore anything. Like we have to read it once. Like even the examples that is government is doing in the name of allocation. See, government may directly provide the economic beneficial goods like electricity, public. Government will influence the private allocation by providing incentives or any kind of disincentives, and we will come up with a competition act controlling on mergers and acquisition, licensing, controlling, and government will set an administrative framework. All of this, everything is actually important here. From any nook and corner in 7, 8 and 9 they can ask a question. Next comes the first branch taxonomy, allocation is done. Second one is simple logic. This will be repeated in multiple places. Rich is becoming more richer and richer, poor is remaining. So government has to intervene, collect taxes from the rich people and give that benefits to the poor in the form of subsidies, welfare program, poverty alleviation program, gender sensitive budget, or any other format manner. We need to redistribute the income from the hands of rich to the poor, collect money from the rich in the name of tax and give benefit subsidies to the poor at the highly subsidized price, distribution of fair price shops, food grains, or any kind of unemployment benefit, pension, like this various different ways. See, in a country, income is not distributed properly. So these are the various ways. Government collects a progressive tax. If you are earning more, you should contribute more to the tax. From that money, government provides a food grains at highly subsidized price for below poverty people, employment reservation, and also regulations on certain manufacturing based on health hazards, special schemes for backward region. Like all this, government will come up with the measures. Next comes stabilization. This is macroeconomic stability. What is it?
Economic stability.
That means in an economy, we need to bring full employment, price stability. Prices should not all of a sudden increase, prices should not all of a sudden, and unemployment problem should not go up. If people are unemployed, they will be not earning money. If they don't earn money, where will they spend and buy goods and services? So all of a sudden price going up, all of a sudden price coming down, all of a sudden people losing jobs. This should not happen. Economy has to perform better. We need to bring with economic stability. Which stability?
Economic stability.
Is that clear? So for that, stabilization function is important. 1 second. Sir, I have complete ICA material but still feels like lagging in concepts, but when you teach I feel like I'm understanding, and also it is enough to get passing marks by watching marathon and taking this exam. To pass, definitely this is sufficient. If you really want to score well, that is what I'm saying. Just by reading alone, things will not serve purpose. First and foremost, understand the logic behind it. Why this concept is there? Like I said, redistribution of income, and the whole agenda is to collect money from more rich people and give benefits to the Poor people. Like this, understand the logic wise and solve as many MCQs as possible. Once you know the concept, you should not sit and read again and again. You have to solve more MCQs. And when you are solving 20 types of MCQs, when the 21st MCQ comes, you will start using your brain. Or at least you will open back, you will revise once again. That is how you have to do it. Just by reading alone, things will not be okay in macroeconomics. In macro, the more you solve MCQs, the better you will become. And first and foremost, you should understand the logic. Concept you should understand. By hearting will never work here. Sangeeta, I hope I answered your question. Sir, what marathon of yours covered full concepts? Jan 26. That is highest. 20 hours of marathon it is. Almost detailed explanation, everything I have given. Literally my regular class into 10x speed I have done it. Complete everything A to Z we have covered in that. And May is also kind of, but I have also included few exam questions, PYPs and all. Now mainly from exam oriented. What is where exam questions are mainly coming from? What utmost important you should cover before stepping inside the exam hall? That is what we are covering in this marathon, in the September 26 marathon. See this guy, my regular batch student. I'm watching your marathon because I missed your class. Enjoy. Hmm?
He's in Bangalore.
Bangalore branch. Okay. So, stabilization function. This is macroeconomic stability. See, why we should bring stability? Because of chapter 5, business cycle. It keeps on fluctuating every now and then. Because of which it brings lot of instability in the economy in the form of inflation or in the form of deflation. So, the nation's government job is to control it. So, we have to make sure that such instabilities will not get prolonged. If it gets prolonged, now poor people of the society gets affected. See, when the employment opportunity goes for toss, low level employment is the one which gets affected first. That will be the poor people, and they can't buy goods and services. And because of inflation, if price keeps on increasing, they can't afford the goods and services. Automatically their purchasing power will decreases. So we need to control either inflation or either deflation, which is created because of business cycle instability. Say business cycle is a natural phenomenon in any economy that tends to occur periodically. So stabilization function is performance of an aggregate economy to bring stability in the capital utilization, overall output income, income generation, balancing international trade, rate of economic growth. And this is what is majorly covered in stabilization function. If there is inflation, government has to cut down spending, increase the tax, follow surplus budget, increase the public debt because people have more money, so borrow more from the public only. Complete opposite is deflation. People don't have money, so government should spend more money and give back the money what you have taken as a loan from them when they had money. Reduce the tax so that they will spend more on goods and services. Have deficit budget. You are spending more, collecting less tax. So this is what technically we will be speaking here in stabilizations. Here, instability caused because of recession and inflation. There is also a problem of stagflation. That is inflation and unemployment both existing side by. Once they have asked this question of stagflation, there will be inflation. Prices will also be increasing. People will be losing their job. And contagion effect. COVID-19 is a one beautiful example. Starts at one nation, it affects the other nation. By one or the other way, we are interdependent on other nations, either for raw material, market access, or anything. One country getting affected, automatically that effect will pass on to the another country. That is called contagion effect, especially 2008 financial crisis, COVID-19. Recently, all of this has passed on the same contagion effect only. So what government policies has to come up with in the form of fiscal policy on the expenditure side, tax side. See, whenever economy is not performing well, government has to increase its expenditure or cut down its tax spending or adapt a combination of both. When there is inflation, complete opposite. Now government has to cut down its expenditure, raises the tax, and that is where we follow contractionary fiscal policy. Which fiscal policy? So at this particular place, one second, let me pull it down. So when the economy is overperforming, we follow contractionary fiscal policy. So contractionary fiscal policy is followed during the inflation. Complete opposite, expansionary fiscal policy. Which fiscal policy? Expansionary fiscal policy. We need to expand the policies in the economy that is followed during the deflation. See here, expansionary fiscal policy during recession, contractionary fiscal policy during inflation. See, we will be following a deficit budget in order to stimulate economy when economy is not performing well. We will cut down, that means to slow down the economic activity, we follow surplus budget. That's it. By this, unit 1 comes to an end. Nothing big in unit 1. Richard Musgrave, 3-branch taxonomy. That is the main topic. Adam Smith is a bold follower of which economy? Free market economy. But in 3 places alone, resource allocation should be done by the nation's government. Where is that? National defense, rule of justice, and highly beneficial public institutions and public works. In these 3 areas, exclusively government has to perform the resource allocation role. Sir, this is my 3rd attempt. At last time I got 39 only in economics, but aggregate in every subject. So I feel like I'm lagging in the theory. So I just want to get passed in economics. Passing in economics is always an easy task. See, 39 means conceptual knowledge is definitely missing. I would really recommend you to first have a proper conceptual knowledge. See, just by covering 2, 3, 4, 6, 7, 8, just the 6 chapters alone, bare minimal you will get 60 marks. 60 to 65 marks, so bare minimal you will get. So I did not have conceptual clarity in chapter 7, 8 and 9. Should I go through the Jan marathon for these chapters, or should I do MCQ practice for chapters which I have prepared? First, go with the marathon. At least understand the concept, have a clarity, Chaitra, and then solve the MCQs. Without having conceptual clarity, if you start solving MCQs, again that will be a same issue. First have a conceptual clarity, then go ahead with the MCQs. Straight away don't hit with the MCQs. This is my 3rd attempt, but I have tried the PYQs, but I'm lagging in exam. Maybe of fearing the exam. Exam is the always easiest part. To be frank, if I have to speak, RTP, MTP looks little difficult. PYPs are always easy. Not even equivalent extent of RTPs and MTPs. Chalo, we'll get started. So unit number 2, market failure and government intervention to correct market. So first and foremost, we should understand what is market failure. See, there are 2 things in market failure: complete market failure and partial market failure. So complete market failure means market itself is totally missing. Even though such goods and services are needed by the people, private market, which market? That is free market economy, will not at all produce that goods and services. Because see boss, as a free market economy, my intention is profit motive. But if at all I have to provide a public benefits, they expect it for free of cost. As a private player, I'm not ready to provide it for free. So I will completely come out of that market. I will make that market missing. We will not even produce, or we will produce that in the particular market, but intentionally either we underproduce it or either we produce at a wrong quantity. That is called as partial market failure. That means markets do exist, but either we produce at a wrong quantity or either we sell it at a wrong price. That is called as partial market failure. Now, market failure, there are 4 reasons. The very first one, monopoly power or market power. Second one is externality. Third one is public good. Fourth one is, in these 2 extremely important, public goods and incomplete information. Most repeated questions this area. First, let us understand monopoly power or market power. See, in monopoly market, you are a price maker. You are the single seller, except you, no one else is there. So you stupid fellow, intentionally you will produce lesser quantity and sell at high price. Quantity will be always lesser, price will be always. This leads to market failure. Second one is, externalities can either occur in consumption or either occur in production. Either it may bring a negativity or either it may bring a positivity. The beautiful example of externality is a pollution. And negative externality is also there, positive externality is also there. The another name of externality is also called as side effect, spillover effect, or neighborhood effect, or popularly called as third party effect. Because of externality, every single time third person gets affected. Who gets affected? Let's go back. In chapter number 3, Shashikiran bench manufacturer. I have a Shiva who is a customer who has given an order for all this Chotamon, Pokemon, Dora Beam, all this Tom and Jerry, all this cartoon has to be there, and soft finishing has to be required for a benches. Even if kid falls, it should not hurt. I'm using one chemical. That chemical I'm straight away discharging into river water. Now river waters are getting polluted. Dhoni uncle, fisherman, unable to catch the fish. Contract is between Shashikiran and Shiva. But fisherman, Dhoni uncle, third party, he is getting affected. In externality, either benefit or either cost, either advantage or either disadvantage, always and always goes to third party. Which goes to clear up. So externality can be either unidirectional or reciprocal. Only one person is affecting the other, or both each other affecting the each others. That is reciprocal. Clear. So mainly externalities of two kinds: positive and positive production externality, positive consumption externality. Best example of positive production. Now I will take, let's say, some 2-3 students in my market research firm. I will train them. I say them, after 3 months of training, I will only provide you full-time employment opportunity. I will pay 30,000 salary per month. Why don't you work with me? You will say, Shashikiran, your competitor is offering 50,000 salary. Why? Who will work with you? Bye-bye. Who trained you? Shashikiran. Now who is getting benefited? My competitor. Because of parties to the transaction, third party will always get affected, either good way or either bad way. Here, production is happening from Shashikiran to a student. After student goes and joins to the some other workplace or a competitor's workplace, now my competitor gets the benefit. Positive production. Positive consumption. You went to a gym class, you went to a yoga class, or you took a COVID vaccine. Sorry, that is a positive consumption. Yes, positive consumption externality. You went and got a COVID vaccine for yourself. Because of you, now the disease will not spread to other. Clear? That is positive consumption. What is it? Positive consumption. Same way. Let's say, for example, you went to a yoga class. You went to a gym class early in the morning, 6 o'clock. Your mind is fresh. You are active all day. You can able to perform better work, and work results are increasing because you took the gym class, because you took the yoga class. In your workplace, your boss is getting benefited. Next, negative production. Same bench example. Because of my bench manufacturing, river water getting affected, fishes are dying, Dhoni uncle is unable to catch the fish. Smoking. Passive smoking is an example of negative consumption. The person who is smoking will also get affected, but the person who stands next to him, he will get more affected. Passive smoking. Negative consumption externality. Because you are smoking a cigarette, the person who stands next to you, he will get more affected. Negative consumption. Because of your consumption, there is a negativity. So these are the 4 types of externalities. Is that clear? One second. Sir, when was the money demand chapter? Tomorrow I will be doing chapter 8. When will be that? It should be when was they have typed. Okay. Sir, I know all chapters. Then in which order I have to go on in revision? Then you can go on with your preferable way. But I will be following only for microeconomics. I have made it little jumble. Again, but at last time, left it okay to watch marathon and got 70 plus. You can watch marathon. If you are able to score 70 plus by watching marathon, you can actually go ahead. Should I do MCQs for other chapters which I have conceptual clarity? Yes, better go with which you have a conceptual clarity, start solving more MCQs. See, Sangeeta, you are saying that there is a very less time left. By just watching marathon, can I get 70 plus? Suppose if you have a proper conceptual clarity, if you have solved enough MCQs, definitely you can solve. You can get 70 plus. Without having a conceptual clarity, just with a marathon, I will go and I will score 70. I don't guarantee that. Anywhere 40 to 60 possible. I can really say up to 60 to possible because of marathon. 60 and above, definitely you should have your own practice, your own MCQs, PYPs, RTPs, MTPs, conceptual clarity, everything matters. Day before exam, shall I watch marathon for revision? Yes, you can. For a quick revision part at 1.5 or 1.25x speed, whichever is comfortable to you. But I recommend 1 day before exam, don't take any new experiments and all. In the 6 months or 3 months, whatever you have prepared, whatever you have marked important, you know that these questions are important, these concepts are important, first revise them. And even MCQs for it matter. When you are solving MCQs, certain MCQs you would have marked it important, that you have to go through it. And especially you should solve more numerical problems from chapter 2, chapter 4 and even chapter 3. Chapter 4, very less numericals will come. 3 will come, na. Chapter 3, theory of cost, numericals will come. Theory of production, the table will come. Chapter 2, demand will come. This is in micro. In macro, 6 and 8. This is where numericals comes. Where numerical comes, that you should sit and practice. Remaining, already you are marked important, important, important. Rest other things go like a newspaper, and important one, focus most. This is what last day you should do. See, the best thing is last day, the more you remain calm, you will do better. And at last moment, students will be there. Hey, my sir said this question is very important. It seems, have you studied? At last moment, if anything new, don't touch. If someone tries to come and scare you, say, no, I didn't study, I don't know. Have patience in life. Don't take your book at all to the exam center. That is what I usually instruct to my own students also. You had 6 months time, you had 3 months time, you had enough time, you have studied well. On the day of exam, 2 o'clock is an exam. Even they are going to exam center at 1 o'clock and standing at corner and seeing the book. Leave your mind free. Let it be free for 1.5 hours. Last 1.5, 2 hours before entering inside your exam hall, leave your mind free. Have peacefulness. The more you are calm, you will perform. If anyone comes at last moment and says, that is very much important, it's in last attempt they have asked, last 2 attempts they have asked, have you studied? Just with respect say, no, I haven't studied. Will you pass? No. Do you know this subject? No. Say this and remain calm. Last moment, don't take any tensions. The more you remain calm, you will perform better. You already had 6 months time. You already had 3 months time. You have done enough practice. Believe in your work. Believe in your practice. That is what I will say. At last moment, don't do any experiments and all. Macro part, which chapter is most important? Chapter 6 though, definitely 15 marks. That is the highest weightage. Rest remaining chapters will be 10 marks. Almost every other chapter is for average 10 marks. Only chapter 6 alone is 15 marks. Now, Bhuvanashri, you decide which chapter is most important to you now. Definitely 8 and 6 can be a banger. 8 and 6 is always a banger. Because you also get numericals. Numericals will be very easy. Aram se you will score. In that, 8 and 6 put together only 25 marks will come. In this 25, scoring 22 or 23 is damn easy from 8 and 6. Chalo, we'll continue. So these are the 4 types of externalities, and already private cost, social cost, we have done it. In theory of production, theory of cost also I explained it. Cost incurred to produce goods and services, direct cost involved is called as a private cost. Damage cost is called as a external cost. Cost incurred to produce plus damage created put together is called as a cost to the society. Clear? So end of the day for us, the biggest headache is positive externality is also leading to market failure, because if at all we don't consume them in a sufficient quantity. What does it consume them in? Clear? And public goods. Next one, the third reasons for a market failure. See, most important here is differentiating between public goods and private goods. See, both will create utility, no doubt. But private goods, you have to purchase them, you have to pay for them. But public goods, you will not purchase them. This is the major difference. And this concept of public good is introduced by Paul A. Samuelson in the book called as Pure Theory of Public Expenditure. Public goods are also called as collective consumption goods, or one which everyone enjoys in common. The main element is this characteristic features, differentiation between the public and private. See, both will create utility, public good as well as private good. But private good, you must purchase them. Since you have purchased, you can exercise them. Private property rights, only you can use it, others cannot use it. But in public good, you can't exercise private property right. They all are collective in. Even though if they haven't made any payment, they can still use it. Assume you are walking on a road, public road. You will say, hey, I'm walking, don't come. After I go, you come. You can't say like that. Even if 10 people are walking, 11th person can come and join. Next, public goods are non-rival. You cannot be excluded. You cannot be removed. You can also use it. But in public goods, that cannot be excluded. But in private goods, you can be excluded. Rivalrous in nature. And if you don't pay money, even they will stop you from consuming it. It can be excludable. But public good, non-rival, none. Private goods are rival and the biggest drawback of public good is a free rider problem. They are not willing to pay, but everyone wants to enjoy the benefit. But that free rider problem is not existing. See, they do not have a free rider problem. But the biggest drawback of private good is additional marginal cost is involved. If 10 people are getting the service, 11% means extra cost. But public good, 11% no extra cost. Additional resource cost is 0. These are the main differences between public goods and private goods. See, anyone who wants to consume private good, they must purchase. Here they need not to purchase. Private goods are rival, public goods are non-rival. Private goods are excludable, public goods are non-excludable. Private good do not have free rider, public goods have a problem, free rider. Private goods, additional resource cost is involved, public good, additional resource cost is zero. Public goods operates based on budget expenditure switching, but private goods operates based on demand and supply, private market forces. So this is the main difference, and the biggest drawback of the public good is we are not ready to pay, but we want to enjoy the benefit. If everyone plays the same strategy, automatically free rider problem will fail for everyone. So this is the problem of free rider. Next comes the most important area, incomplete. Almost in every attempt these questions will be there, and especially if you economists have defined particular concept in incomplete information, from that economist point of view also the questions will be asked. So first understand what is complete information. Buyer and seller both have a full knowledge. What does it both have a? About the transaction what we are entering. That is called as complete information. What is incomplete? One person has full knowledge, other person does not have a full knowledge. Now let's say for example, now Mukta, she wanted to buy a second-hand car. Assume Shashikiran is a second-hand car dealer. Now Mukta will come and ask me about the car. I will bluff about the car. Hey, this car is amazing. Just to put the start button, it will go like rocket. Yes, not car, our bank balance in repairs. Already the car is damaged. I know it very well, but I don't disclose. Car has met with an accident. 2 roller coaster ride has happened in that. Later we have repaired it. I don't disclose it at all. Shashikiran knows. Seller knows full information. Buyer doesn't know. Now because of this imbalance in information, markets are going to fail. And see the reasons for failure. See, the information what you are sometimes asking is highly complex. Now I will say to my students, don't keep money in FD, keep it in mutual fund. You will go and say to your parents will ask, okay, go and ask your sir and come next year by this time in mutual fund, how much returns we will get. How will I say? Depends upon market performance. Na? If market performs well, better return. If market doesn't perform well, no returns. But in bank, we can exactly say what is the return after 1 year. But in markets, you can't say that. So information what you are asking itself is highly complex. Sometimes you can't able to get the information quickly, cheaply, the sufficient information, and sometimes you will misunderstand its true cost, and customers are ignorant of many matters in the market. They don't have full information, and end of the day, because of incomplete data or incomplete information, you will end up making a wrong choice. And incomplete information is also of 2 types. This is where most of the question comes. The very first one, asymmetric information. Simple concept. Asymmetric information means imbalance in information. Say, second-hand car example only. Seller knows more information. Buyer doesn't know complete information. Because of that, now the buyer end up making a wrong choice. That wrong choice is what we call adverse selection. Which selection? See, in asymmetric information, we also derive that as a Lemon's problem. That means only defective goods will be flooded in the market. End of the day, because of this imbalance in information, whichever good you try to buy in that market, end of the day, you will buy the defective good only. Which good? Defective. Because of all this imbalance in information. And because of imbalance in information, your judgment basis will also be on the dash selection. Adverse selection, wrong selections. Insurance company example we took in the class. Healthy customer, unhealthy customer, both will apply insurance. Insurance company will quote same premium to both. For healthy customer also high premium, unhealthy customer also. Healthy customer will say, I don't want insurance only, bye-bye. Now unhealthy customer will take the insurance. End of the day, will one or the other day get hospitalized in the future. As expected, it happened. Now insurance company selected a good customer or bad customer? Bad customer. So insurance company selection is a adverse selection. Clear? Next comes moral hazard. Which hazard? Now Shashikiran, who took insurance, who is also unhealthy customer. I got hospitalized. Insurance company will pay the bill. Why should I take the headache? Yes, now I am least bothered whether doctor is using simple procedure or complicated procedure. Later, complicated procedure. My problem is in kidney. Doctor takes brain scanning. Insurance company will say, who are you? Bye-bye. I should only pay everything. No? I was not morally correct. I was not moral hazard. When moral hazard occurs, automatically because of...
But it's not up to you, right?
Who said? I should have been morally aware, right? I should have asked doctor, why are you doing this? I should have intimated the insurance company regarding few things. I didn't do because insurance company will pay the risk. Let them only take care of things. Why should I be? Clear. Now your mom has said, I have kept milk on the stove. I am going outside to get some grocery item. Kindly look into it. But you are watching WWE match on the TV. You forgot that. Next your mom comes. milk is spoiled out. Later she will take one stick, hit you. You could have been morally responsible, na? Because you are not morally responsible, effect is stick beating. Same thing in life also. Clear? So here, in case of adverse selection, there is one more important example in exam they have given. So I will take a car insurance. Because I have an insurance, I will drive very reckless. I will drive very reckless, and multiple times I will meet up into accident. Insurance company, once they give money, second time also they give money, third time accident happens. Now insurance company said bye-bye. That means I should have been morally responsible, right? Because I have a car insurance, I am driving careless. I'm, let me say, meeting into accidents multiple number of times.
That really happens. How would they?
In a year, there is a limit even for that insurance claim. If at all you are doing it again and again, multiple number of times, things happens, they will reject it later.
It should have been mentioned for.
Not mentioned. That is moral hazard, no? Terms and special terms and conditions.
Like how many times?
Not about the times. It depends upon scenarios and circumstances. Self-fit, for example, self-fit. How many times will you go and make a self-fit? Clear? So those are the 4 reasons. Sir, please teach crowding out in detail because I was absent when you taught in our class. Nice. People will bunk. Sir, give some precautions to students who are writing first time. Simple. Don't over attempt. With emotional, I think, is it answer A or B? If you are doubtful, leave it and come. Don't do inky pinky ponky. On the result day, you will become monkey. Your friend is Venky then. That will happen. That is the only suggestion I can give it to the first timers. Full emotional decisions on the exam hall also. If you know 70 questions, shut and attend 70 questions and come. Don't take that risk of another 10, another 15 extra. You another 2-3 marks extra will come. 2-3 marks extra will also go later. Negative marking. Every mark counts. All inky pinky ponkies and all will not work. That is what we say now. On the result day, you are monkey, your friend is Venky. 2 white, 1 red fix. If you do inky pinky ponkies and all. Okay, chalo. Now markets have failed. Now why government has to intervene to correct that market failure? See boss, when market failure occurs, that problem gets prolonged. Now government's responsibility is to correct the problems. So government will interfere. Why? To minimize that monopoly power. How do they minimize that monopoly power? By coming up with the Competition Act in India earlier. Before this Competition Act, in chapter 10 also this information is there. We had MRTP Act. Which act was there?
MRTP.
Of 1969. Later we scrapped it and we replaced it with Competition Act of 2002. It is not just in India. It is also there in the other nations. Like for example, in USA it is called antitrust law. In UK also it is called Competition Act of 1998. We don't provide any kind of exclusive rights and all. Everyone should get the fair chance, equal chance to participate in the market. And we will avoid any kind of contracts, combinations, collusions, mergers, acquisition unnecessary to create monopoly or unnecessarily fighting between each others and all. Only if you have invented something, inventions and innovations, only under the patents and copyrights law, intellectual property rights, IPRs, we will give you exclusive rights. Except in this one scenario. In any of the other scenarios, no exclusive rights, nothing. Everyone should get the fair chance and equal chance. Other measures like slowly we will liberalize the market. Slowly we will remove the controls on mergers and acquisition. We will only decide the price cap, what should be the highest price and price ceiling and all. Profit, how much you should make out of a rate of returns. We'll give more importance to consumer association. Any customer complaints coming from consumer associations, very tough investigation we will do. Just some 10-15 years it will take to come with decision. Next, restriction on monopoly power. That means only single buyer. You should also sell it to others if they're ready to buy. You cannot just sell it for one single buyer. Reduction in the import control. Final Brahmastra. If you don't listen, nationalization. Taking the full control to the hands of government. But sometimes government will only protect a natural monopoly. Which monopoly?
Natural.
For the very reason is, see, sometimes if it is left to the private people, they are profit motive, stupid fellows. Intentionally they will sell it at high price, but it is an essential good. Government will only provide, government will only enter, they will only become an entrepreneur. They produce at bulk quantity, they produce at very least cost, and they surpass that surplus of whatever they have been benefit as a lesser selling price to general public. That is why government will only protect a position of it, like electricity, water supply, gas. In these cases, government tries to hold a natural monopoly. So this is the first area where government intervenes to protect the monopoly power or natural power. Next comes government intervention to correct the all that Shashikiran bench manufacturer discharging straight away into river water, fishes are dying, Dhoni uncle fisherman unable to catch fish, all the side effects. What is it called? So for us, biggest drawback is negative externality. Even positive externality will lead to market failure if at all we underconsume them. But for us, biggest headache is. So how does government will control through negative externality? Mark this both as important. Both are important. Direct control, market-based control, both are important. Direct control, government straight away comes and prohibits something like smoking is banned in public places. Have you ever seen anyone in India smoking in public place? No. Have you ever seen anyone outside tea shop and all smoking? No, in India, smoking is prohibited. Smoking is completely banned in many Indian public places. And government will also pass some law for providing negative advertisements. And we protect environment. We have a special act for it. And we have our own emission standards. Government will only say how much you should emit, how much you should pollute. Government will only fix a emission fees. We will create a special body like Pollution Control Board of India, Ministry of Environment and Forest. What they should do, protect environment and forest. When are they doing it? Only under the table if it doesn't comes. All this Pollution Control Board of India, State Pollution Control Board. There are also certain pollutants released into water and air. They will only limit that. And they will ask them to install pollution abatement mechanism. Like this, one list of procedure is there. Government straight away involves through their rules and regulation. That is called direct control. Second one is market based. Under market based control also two types. One, Pigouvian tax. That is pollution tax. Second one is cap and trade system. IPL example. Cap and trade system. In class we spoke about this. So in Pigouvian tax, AC Pigu was the person who introduced this. They said, see boss, government, if you call upon these polluters and try to contractually negotiate in front of you, they will say, okay, we will not pollute, and they will show their heads like this. Later, they will do the same story. So do one thing, levy taxes. By the time he comes to take license, heavy tax. After that, to sell the product also, heavy tax. If he doesn't want to pay more taxes, he has to reduce the pollution. If he has to pollute more, he has to pay more taxes. Place an externality on tax on externality itself. Don't wait until he sell the goods in the market. When he thinks of producing, only levy the tax. That is first option. But the tax is also having a lot of problems. See, if the demand for the good is inelastic, that is socially undesirable good. Which good socially? Like alcohol, cigarettes and all. Even though tax rate makes the selling price to be very high, instead of buying 5 beer bottle, he will come and buy 4. Demand will be there. They will not lose the customers. Whatever tax burden is there, end of the day, they will pass it on to the end customer. If you keep on putting more and more tax, foreign companies will say Tata bye bye to India and they will go out of India. Employment opportunity damar, GDP of the country damar. This is the problem, and tax will not provide a permanent solution. That also increases the administrative cost. Which cost? You should come up with CBDC, Central Board of Direct Tax, Central Board of Indirect Tax and Customs, CBIC. All the stupid fellows, for them one Jeep, vehicle law, for them pension. Afterwards, they will also give some tension for taxpayers. All this administrative taxes will be, administrative cost becomes very high. It is not a genuine solution. So if demand is inelastic, tax will not have any significant effect. It will be insignificant effect. All this, even tax is also having a lot of troubles. What is it? Lot of? Clear? Next. Cap and trade system. Simple. Rather than having high administrative cost by setting up with a tax, give a tradable license. Which license? Tradable. Intentionally give lesser license. They will, let me say, if a person comes and asks for 100 license, give him 50 license. If another person asks for 300 license, give him just 180 license. And say them, you can either use it or either you can sell it to others. Now automatically opportunity cost will come into picture. If he only uses that, he could have sold this license and made profit, that he will forego. And if any person who has to pollute more, he should get more license. Government is not giving more license, means he has to buy from outside, from other person. When other person is selling, he has to buy for higher price. When he bought license at high price, he can't sell his products in the market for lower price. Automatically, customers will also not come and buy the product from him. So this is administratively cheaper, but it will not also provide a genuine solution. For a temporary purpose, in some areas, pollution gets controlled. But the person who is buying the license and polluting more and more, in only one single area, pollution will be increasing. So this is cap and trade system, also called as tradable emission permits. Same thing we connected in IPL case in the class. All this, one dot ball, 18 trees, in playoff, one dot ball, 100 trees or some 500 trees will plant, all because of this carbon trading concept I explained in the class. And also Anant Ambani's that mango archeries in Jamnagar refinery, Gujarat, all of this are connected to carbon trading. Clear up. This is cap and trade system. Which system? Clear up. So these are the ways through which we are going to control the externality, especially which externality? Negative externality. Then how to promote positive externality? Brahmastra, giving subsidy to whom? Subsidy to directly producer. When government gives subsidy to the producer, cost of production will decrease. When cost of production goes down, selling price will automatically go down. And moreover, positive externality, that will encourage people to come and buy more and more. Or straight away government, you only come and you only start producing the goods and services. Direct control by the market. Market directly, you only come, you only produce it. Or you only provide that positive externalities in the society. So these are the ways through which government straight away interferes and government will control. Government will direct control of the government, indirect control through market base, that is Pigouvian tax and cap and trade system. Clear? So negative externality is the biggest headache that has to be controlled. Positive externality has to be encouraged. Next, market important, full topic important, merit goods and demerit goods. See, public goods we discussed now, but now we are discussing about merit good means socially desirable. What is it? Demerit good means socially undesirable. Alcohol, cigarettes and all. Merit goods as the features of private goods. See, rival excludable. They are just limited in number. If you are not ready to pay, we will be rejecting you from using it. So because of which positive demand curve will not get established properly. So government has to interfere. Government has to promote more and more consumption of merit goods. How? See, government may directly provide the private activity through any conducting or any prohibitions of certain goods and services. They will set a standard. Like for example, Tamil Nadu TASMAC cannot be opened every day or every time in the day. Only during particular time it has to be opened. Free and compulsory education for age group of 6 to 14 years of age. Free and compulsory. Right to Education Act to compulsory. You should wear seat belt, helmet. You should have a vehicle license, vehicle insurance while driving, like this. Whatever brings benefit to the society, government makes it mandatory. Government makes it. Or government will only provide that services because they all are merit goods which brings benefit to society. See, the problem is they are rival and they can be rejectable. These have a substantial dash externality in the consumption of a merit goods. Clear? Next, government intervention in case of a socially undesirable goods. Which goods these all are? Socially discourage has to be made. Alcohol, cigarettes, all this negative advertisements has to be made. We have to completely ban them. See, all this drugs and all in India is completely banned through negative advertisement, persuasion, creating negative intention. See, when you go for a movie, initially I was Mukesh, I was smoking, unfortunately doctors are able to save me, not able to save me. All that, like negative advertisement should be given. Legislatively, we should ban certain things. Promotion should never be encouraged, like alcohol, cigarettes and all. But Vijay Mallya cracked it. Next, strict regulations to limit access on vulnerable people like children and adolescents between 12 to 16 years of age group, and regulating on certain spatial restriction, where to advertise, where not to advertise, imposing high taxes. Nirmala Department now 40% higher tax slab system, and fixing the minimum price below which, what is it? Below which demerit goods should never be exchanged. So all this price control measures, fixing the minimum price below which it should never be exchanged. This is how government controls the demerit goods. Government controls them. Next, how government is going to interfere in case of public goods failure. Free rider problem is there now. Because of that, public goods will also fail. See, government cannot charge an entry fee because they are non-excludable. What is it? So what government will do? Simple. They will give license to private people to provide public benefit. National highway is one best example. Pay entry toll and get lost. And government is not collecting. Private is collecting that. Who's collecting? For private got license from whom? Government only. You build public facility. For that you collect the entry charges. I will only give a permission to that. I will only keep a strict watch on how much to collect entry charges. Because if everyone makes a free rider becomes impossible for everyone. So free rider problem can only be solved by having excludable public goods, and that too by financing that too through private firms. See, a common measure followed is by granting license to private firms to build a dash facility, public facility. Under this method, goods are provided through a public on the payment of an In such a case, government regulates the level of entry fee that can be chargeable by keeping a strict watch on the functioning of that licensing. But still, even though there are certain goods, they will never allow it to private. They will only provide like airport security, scientific approval of drugs, strategic concerns like atomic energy generation. Private people, they are never involved. Only and only government will take care. And this is most important. Price control measure, price floor and price ceiling. What is it? Price floor and? See, price floor means minimum price. Usually on agricultural crops in India, in chapter 3, this information will come. MSP, minimum support price. In India on 23 crops. How many crops?
23 crores.
1.5 times. What is it? 1.
5.
Of their average cost of production is given as a minimum support price in agricultural goods. This information comes in chapter 10. On 23 crops in India, there is a minimum support price. 1.5 times of their average cost of production is given as a minimum support price. Now, for example, tomato growers, or let's assume why tomato, some food grains. Let's assume pulses, lentils. Government will say, don't worry farmer, in market, if the market price goes below what I have guaranteed. Now government has guaranteed, let's assume 150 rupee. Market price, demand and supply has become 75 rupees. How much it has become?
75.
Government will say, don't sell in market, you give it to me. My government agencies will buy at as agreed at 150. See, my own government agencies. Which agencies? Government agencies will come and procure. When there is a good harvest, the objective is to guarantee the steady and assured income to the farmers.
Is that happening?
In real life also it is happening. And don't say how effectively it is happening and all. Don't go and search. You will get shocked. Next, price ceiling. Ceiling means maximum price beyond which it can never be sold. Suppose for example, this year rain only doesn't happen. Rice crops were unable to be grown. In market, 1 kg rice will become 150 rupee. Can everyone afford? Government will enter. Government may come and interfere and say, in India, no one should sell the rice beyond 75 rupee per kg. That is the maximum price. Because it is essential good, na? Everyone should have the access to that. If it becomes 150 rupee per kg, everyone can't afford it. So government may restrict. Government,
Yes.
by setting the price above which it should never be sold. Only when there is a crisis kind of a situation. Which kind of? So government will interfere and set up the price ceiling. That is the maximum price. Beyond which, even though market price goes, you cannot sell. Clear? So minimum support price is price floor. Minimum price, that is. Bare minimum, government will give it. Even if the price goes below this minimum support price, government will give this minimum price. Especially in India, for agricultural goods, it is provided. Is it clear? Next, government intervention in case of information failure. We said now, incomplete information, asymmetric information, moral hazard. Now government has made it mandatory disclosure. Which disclosure?
Mandatory disclosure.
So on every food articles backside, if you see labeling, every content disclosure is mandatory. And also when you see this mutual fund advertisement, like center for advertisement, it will come now. Mutual fund investment are subject to market risk. Please read all scheme related documents carefully before investing. Blah, 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 like this, it will come now. Complete disclosure of information. What is it called?
Complete disclosure.
That means government has made it mandatory. See, government makes it mandatory to have an accurate labeling and content disclosure on all your nutritional information on food packets, on labeling on cigarette packets about dangers associated with it, and mandatory disclosure of information from SEBI side about for investors in the prospectus, why you are taking this money, for what purpose you are taking. Every information should be disclosed. And public dissemination. That means public awareness. When you call now, caller tune will come now. If someone calls you as a judge, police officer, don't get offended. They are scamsters. They are trying to digitally arrest you. Like this public awareness program. Or we will only regulate the advertisements. Advertisement should not be misleading. It should be just less misleading, less persuasive. Yes, Horlicks. Taller, stronger, sharper. Bullshit. Tayari jeet ki. Thyroid diabetes ki. But still, jeet ki. Less misleading. See, they are only saying advertisement should be more responsible, more informative, less misleading. Little in India, it will be normal, misleading, like Complan boy. As if you drink Complan, you will become like a taller fellow. I have never seen in my life. I have drank Complan in my childhood. Nothing, not even single half inch also I have grown. What to do? Misleading advertisement. Clear? Last, already we have done this. Government intervention for equitable distribution of income and collect more from rich people in the name of tax. Give benefits to the whom? Poor people. In the name of all this subsidy, progressive tax system, transfer payment, subsidy, job reservation, land reform, gender sensitive budget, all this blah 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 blah. See, every time when government intervenes, problem will not solve. Sometimes because of government intervention only, a new problem will create. That is called government So as a policy maker, you should understand both cost as well as of any government intervention in the market. Sometimes because of government intervention only, misallocation of resources will happen. Clear? This was the unit 2 summarization of entire unit. Straight away we'll go to unit 3 because continuation is there in unit 3. So unit 4 we will go, not 3. Unit 4 we will go, continuation is there. Unit 3 budget chapter. Hardly it takes 15-20 minutes to do that. We'll go to unit 3. Yesterday only I have given the, unit 4. Fiscal policy, yeah. In this already we have done it up. Nothing big here to do it, new things. See, fiscal policy is always a demand-sided policy. Which policy? So what is this demand-sided policy? C plus I plus G plus X minus M. That means we will identify GDP concept, expenditure method of national income. What is it? C plus G plus X minus M. Clear up? That is a demand-sided policy. Suppose, as I explained now, as our classical economist said, if economy is already operating at full employment, what is it? Already operating at? We don't want any kind of fiscal policy. Deliberate actions by government is unnecessary. That means, like how our classical economist said, already there is a full employment at the level of equilibrium. Any new money coming inside, that will create unnecessary inflation. So, if economy is already at full employment, what is it? Already at full employment equilibrium, then we don't want any government intervention in the name of fiscal policy. What did classical economists said? Economy will always and always achieve full employment equilibrium. Government intervention is unnecessary. Inflation and deflation is controlled automatically on its own. What is it?
Automatically.
Suppose like that, if it is happening, then government intervention not required. In the deliberate form of fiscal policy unnecessary. These two basic information you should keep it in mind. Fiscal policy is always, and if economy is already operating at, it not needed, not required any government actions in the form of a, and see, classical economists already explained now, economy will get self-adjusted, economy will always be at full employment, there is no unemployment problem at all, same blah 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 story. But in 1930 Great Depression happened, no answer was there. Later John Maynard Keynes came into picture at 1936 in his book General Theory of Employment, Interest and Money. To combat this fiscal policy, he gave a counter-cyclical fiscal policy. Same, this is only, same story, repeat the repeat. This is what he explained. Clear? So main objectives of fiscal policy. Mainly, there are 4 objectives. Number 1, achieving economic growth and development. That means accelerating, improving the economic growth and development. Equitable distribution of. But the problem is we can't achieve all the 4 together. Let's assume that if you want to have a accelerating the economic growth rate, then equitable distribution of income and wealth is not possible. So all 4 at a time, it is not compatible. So developed countries have a different pattern. Developing countries have a, see, for a developed country, first and foremost, their priority is bringing stability. Next, equity. But for a developing nation, still nation itself is not developed now. First and foremost, their economy should grow. Later, full employment. Next, equity. Like this, different countries have their different priority. What is it? Different nations have a priority is not always the same. Clear? Next, automatic stabilizer versus discretionary fiscal policy. What is it? Automatic stabilizer means, now as I said, economy will self-adjust on its own. Government intervention is unnecessary. Same like our classical economists, what they said, same to same. See, they are built-in fiscal mechanism which tends to operate automatically. Government intervention is unnecessary. Automatically, tax rate, government expenditure will automatically adjust on its own to control inflation and deflation. What classical economists said, that is what we call automatic stabilizer. But after Great Depression, what our John Maynard Keynes and his followers, neoclassical people said, that is called as discretionary. No boss, automatically things will not get adjusted. Government deliberate policy action. Which policy action? What is the deliberate policy action? Same thing, this one. Either following contractionary fiscal policy or either following contractionary fiscal policy means government expenditure should cut down, tax rate should go up. Either any one out of the two or combination of both. That is called contractionary. Expansionary means government expenditure should go up or tax rate should come down. Any one or combination of both is called as an expansionary fiscal policy. That is what we should do. They are speaking about the instruments of fiscal policy. Again, it is a demand-sided policy. GDP, C plus, I plus, G plus, X minus M. That is what we are speaking about. The right side of the equation that speaks about the different source. Expansionary, contractionary. Same to same. Repeat the repeat. Nothing new there. Expansionary means what? Government expenditure should, or tax rate should, or combination of both. When economy is not performing well, we should boost the performance. That is expansionary. When economy is already overperforming, cut down the expenses, increase the tax. Any one out of these two or combination of both. That is called as contractionary fiscal policy. Clear? Read it once. Any doubt, let me know before moving to instruments. Even in instruments also, I just have to explain that multiplier effect of government expenditure and crowding out concept here. Nothing big here also. Read it once. Read it once. Yes, I will solve the MCQ, Kushbu. First, let us finish this. After completing this theory part, once every theory is done, then we can go to the MCQs of PYPs. Any doubts? No, today we are not doing chapter 9. Today, if time permits, if I still have a time after completing this chapter, I may go with 10. Tomorrow is 8. Day after tomorrow will be 9. Last day I will take up 9. We are going in the order. Later the same chapters will be merged and will be given as one single long video. Even this, whatever we are doing. So we are going in the order. Okay, let's continue. See, instruments of fiscal policy. How many instruments are there? 4 instruments. The very first one, government expenditure. Second one, tax. Third one, budget. Fourth one, public debt. Same things here. Explain now. At inflation, what we should do? At deflation. That's it. This one single flowchart is the main summary. What we are supposed to do there. And only government expenditure we have to little understand here. See, when we speak about government expenditure, there are 3 types of expenditure. One, current expenditure for day-to-day running of the government. Second one, capital expenditure for infrastructure, equipments, all this. Next comes transfer payment, just money getting transferred, not production of goods and services. So usually this is also the expenditure made by government, but this one comes under a national income. Only these 2 comes under the national income calculation. But here we will also consider all the 3 because spendings made by the government. See, whenever government directly spends money, end of the day, factors of productions are owned by household. Money will go to household. When government spends money, government will also buy goods and services in the market, right? Automatically, money will go straight away into the hands of a household. See, that is, it appoints the laborers. Salary will go, it also purchases multiple goods and services. So, expenditure, whenever government directly incurs an expenditure, that generates income directly to whom? And supply of materials and indirect effect. Even government money will also work as a, just assume in an economy there is a requirement for 1000 crore. What is it requirement for? And in economy the money is getting multiplied by 5 times. How many times? So government knows that 5 times money is getting multiplied. So they will not bring 1000 crore. They will bring 200 crore that gets multiplied 5 times and ultimately this will become money supply of total 1000 crore. Even government, whatever they spend, that money will undergo a circulation. And multiplier effect will happen. And for multiplier effect to be effective, MPC should be more. What is it? So this multiplier effect is mainly dependent on marginal propensity to consume. Marginal propensity to consume. Clear? And see, at the time of inflation,
Inflation.
Already we have spoken. Government expenditure should decrease. At the time of deflation, increase. And inflation and deflation, government expenditures will work. But by mistake, if economy enters into, nothing is going to work about this all. Expansionary policy, contractionary policy. At that point of time, pump pricing and compensatory spending. Pump pricing means one shot injecting of huge money. Government will borrow from outside or it will print its own currency. It will bring huge money into the system. It is like a shock treatment to the system. Just assume tomorrow you are walking on a road. You got one gunny bag full of money. Some 10 crore rupees of money. First you will take that money abscond. Then you will buy new car, new bungalow, full your neighbors change, new home. Everything will happen like that. If everyone gets more money in that, sir, how will everyone get more money? That is what. Government borrows huge money from outside or it will print its own currency. It will pump more money to the system. It's like electric shock. When a person is about to die in the ICU, when they give that electric shock treatment equipment on the chest like this, he will bounce back. Like that, we are giving shock to the economy. That is called pump pricing. What is it called? Pump pricing. One shot injection of huge money into the system. See, one shot injection of huge government expenditure to boost the economy, which is in deep recession. It will also have a dash effect. Multiplier effect. Clear? Next comes compensatory spending. What is compensatory? Now these two people have lost confidence. C and I has lost confidence. They are not at all spending money. Now including these two people, what the stupid fellows were supposed to spend, including that, now government will only spend. It is like taking treatment in government hospital. You will get cure, not immediately, definitely. Slowly economy will bounce back. It may take little more time. Yes, that means whatever these two were supposed to spend, including that, who is spending now? After one point of time, when economy reaches a certain level, these two will get confidence and then these two will spend. But initially, majority of the lag, who is spending money? Only government is spending. But here, one shot injection, one huge money pumps inside, automatically demand will skyrocket. To meet the demand, production should increase, employment should increase, economy bounce backs. Here, shock treatment, here, slow treatment. Clear? Understood? So this will happen during the time of a depression. So in depression, fiscal policy will not work. Fiscal policy will clear. Next, tax as an instrument. Same thing I have explained here. How money you will get. One, either you should increase the tax. That is not possible. Economy is not performing well. So either you borrow from outside or print your own currency. Now tax. Already we have spoken. Same thing once again. Tax rate should go up. Tax rate should decrease. See, simple. If tax rate goes up, disposable income will decrease. If tax rate decreases, disposable income will increase. People will be left out more money in the hand. Same. Corporation tax. Even companies will not be paying more tax if tax rate goes down. They will reinvest money. All kinds of taxes. What is it? All different types of. And its workings. As explained here. Next, budget. See, already we spoke about this. Surplus budget.
Deficit.
Inflation means. Deflation means. Deficit budget. Same to same. See, inflation, surplus budget. Recession, deficit budget. Or if not, we try to always have a balanced budget. Clear? Next, public debt. In public debt, there are two kinds. One, place of borrowing. Second one is form of borrowing. Place of borrowing means either inside your country or either from outside the country. Inside your country means from your own people. Outside means from any international agency, World Bank, Asian Developmental Bank or some other country. Next, forms of borrowing. Market loan and small saving. Market loan means by issuing all this treasury bills, capital project bonds, that is called negotiable instruments. You can also further sell it in the market. Small savings means general public small saving, post office savings bank, NSC, National Savings Certificate. That is non-negotiable because the lender's name will be there on the bill. Only he will get back the money at the time of maturity. So these are the two types of loans. One is market loan, second one is small savings. Clear? So these are the four instruments of fiscal policy. Clear? See, for economy to grow in the long run, we should focus on sustainable development, infrastructure spending, on education, research and development, proper tax rate, well-designed tax structure should be there. Tax and spending policy should be proper. Environment tax has to be provided. Proper subsidy should be provided. Any economy, not just India, be it any country has to grow and develop. This is what they have to focus on. Clear? Again, redistribution of income and wealth. Take money from rich people, give benefit to the poor people. Same to same drama once again. So next comes the most important topic, crowding out. Someone was asking, sir, little do it in detail. Simple logic here, crowding out. See, when economy is not performing well, what is it? When economy is, focus here. Who should spend more money?
Government.
Government is also not collecting tax. So there is a dash budget.
Deficit budget.
So they have to spend more money, but they are not receiving more money. Shortage is there. So what they should do now? Borrow. From where? Inside or outside?
Outside.
Outside. But stupid fellows, our thumbs up fellows, they will borrow from inside. To borrow from inside, now you tell me, you are a general public. If you have to give loan to the government, when interest rate is more, will you give loan, or when interest rate is less, will you give more loan? But in reality, when economy is not performing well, when there is a deflation, interest rate should decrease, But this thumbs up fellow, our politicians, they will increase interest rates. What they will do? That is a mistake what they did. See, when economy is not performing well, interest rate should not go up. But these stupid fellows will increase. Why? Because they are borrowing from inside the country. What is it borrowing from? Now, in order to borrow inside the country, they will increase interest rate. General public will buy the bonds of the government. They will give loan to government. Why government took loan? Because economy is not performing well. If I spend money, government, money will go to hands of public. Now, public gets money means they will buy more goods and when they buy more goods and services, demand will, production should, employment will, overall economic activity will. That is what government thought. That is what government assumed. So government started borrowing more money from you people by increasing interest rate. After borrowing money, now government also spent more money. When government spent more money, general public, C got more money in the hands. But C, rather than spending on goods and services, he will save more money. Why? Interest rates are
High.
with the assumption that government thought, if I spend money, people will also spend. When people spend more money, demand will,
Increase.
production should,
Increase.
employment should,
Increase.
overall economic activity should, businessman will also become positive mindset. But laddu will happen. Nothing is going to happen. Why? Interest rates are.
High. So we suffer.
People, rather than spending more money, see, consumption will go down, savings will.
Go.
Again, people will give loan to government. Now you spend. Only government will be spending like mad fellow. People will not at all spend. That is what? Crowded out, opted out. What is it called? Opted out. That means C and I will opt out. They will not at all spend. Household consumption, business investments, both will decrease. Both will. First of all, economy is not performing well. Because you did one small mistake like this, these people will not at all spend now. And this will make an economy to enter into depression. Enter into. From the contraction, this will make that to go to depression. That is what? Crowded out. Limitation of fiscal policy. Limitation of. See, when economy is not performing well, when we are fighting recession, what is it when we are? Contraction phase of business cycle, we should never increase interest rate. But our thumbs up fellows will increase. See there, it is a limitation of discretionary fiscal policy while fighting a recession. Recessionary gap, where government decides to follow which fiscal policy? Expansionary fiscal. That means government expenditure should increase, tax rate should decrease. Okay, fine. Now government should spend more money. Government expenditure should increase. But government doesn't have money. What to do? Government should borrow loan from where? Outside. But stupid fellows, where are they borrowing? Due to which there will be increase in aggregate demand. That means if government spends more money, that will increase the aggregate demand in the. However, sometimes this will fail because of. Why did crowding out happen? Because of increase in consumption of household will go down, business investment will go down. Government started issuing bonds. That means public. Government is selling bonds to public and borrowing loan. In order to sell more bonds, the stupid fellows increased interest rate. So government will spend money. Public borrowings will increase. Because of that, interest rates will. When interest rate goes up, people will start saving more. People will start consuming. Aggregate demand, rather than increasing in the economy, aggregate demand decreased. It is like already there is a fire. Rather than pouring water to the fire, you are pouring petrol. That petrol is increasing interest rates. So automatically this will have a long-term effect. Which term effect? See, however, when there is a deep recession, that means already if the economy is in deep recession, this crowding out is less likely to happen. If not, this crowding out will have a long-term effect. Which term effect? Clear. This is the concept of crowding out and limitation. Just now we discussed crowding out. Government deciding always and always late. Now leave about recognition. Decision making is also late. Impact is also late. Implementation is also late. Every time lack of information, of uncertainty, of inflation and recession, integrity issues. See, political standards are more important than public interest, social interest. All this, there is a cost involved. Whenever government wants to do something, there is a huge cost. We can't reduce government expenditures like this, research and development, defense expenses. Because there is inflation in the economy, we can't cut down some projects. Some big infrastructure projects will be going on. It will take 7 years, 8 years, 10 years to complete some dam construction. We can't cut down in the middle. All this are the limitations of fiscal policy. In that, crowding out is important. Soumya, clear? So she was the one who asked, sir, crowding out, little detail. Okay. Simple logic. When economy is not performing well, we should not increase interest rate. But the stupid fellows increased to borrow loan inside the country rather than borrowing outside the country. That led to crowding out. Have a look, flip back. Any doubts, let me know before going to budget chapter. After completing budget chapter, we will go with the MCQs and then we'll wind up for the day. Any doubts there? Okay, then let's go ahead. Budget chapter. So already yesterday I gave you an outline. Budget is mainly classified into two kinds. Capital budget. Under that, capital receipt and capital expenditure. Revenue receipt, revenue expenditure. When we say total receipt, capital receipt plus revenue receipt. Next, total expenditure is capital expenditure plus. Budget is mainly of two types. Balanced budget, imbalanced. Balance means total expenditure is equal to total receipts. In balance, two types. Surplus means revenues are greater than expenditure. In deficit is greater than. Under the deficit, there are four types of deficit. First one. Second one. Always remember the word excluding. And if you also remove the net interest liability from fiscal deficit, becomes primary and revenue. Any doubt in this part? Yesterday, did you went through it? I also asked you to solve the other numerical problems and come. Okay. So other than this, so remember, budget is an anticipation of income and anticipation of expenses. What is it? Just it is an anticipation, not an actual values. Next upcoming financial year, how much total money that we are going to receive in the country? How much money are we going to spend? And this whole unit, we are only speaking from central government's point of view, not from the state government or any local body point of view. Even state government and local bodies will have their own budget. Clear up? So budgetary period. Which period? 1st of April to 31st of March. Every year, budget is announced on 1st of February. Clear up? But before 2017, last day of February, last working day of February, it was announced. But from 2017 and 18 onwards, budget is announced on earlier, na? After the union budget, last day of February, 1st of March, railway budget used to be announced. But from 2017, both union budget and railway budget has been merged. Only and only during the election year, central election year. Recently, 2024 happened, next 2029. Only during the central election year, budget will be presented twice. As planned on 1st of February, we call it as interim budget. Once the election is over and the new government is formed, then actual budget. Which budget? Once the election is done, government is formed, again they will present a budget. Only during the election year, budget is presented twice. The process of budget making has 3 steps. One, preparation. Second, presentation. Third one, execution. Who will prepare the budget? Budget division. Under the Ministry of Finance. What is it under the? We have budget division. Now this budget division will issue circular to all the central government, state governments, authorities, union territories, everyone. They will collect the information. What is your anticipated receipt and anticipated expenditure and how much money you need for any government project executions and all. Give me the information. After collecting that, they will do something called as pre-budget consultation. They will meet experts. They will meet all the chief ministers of the state, other stakeholders, interest group people. That can be industry associate. representatives of agriculture, people from social and welfare sector, labor law, experts of Niti Ayog, economists, and other elect people, and they will take their suggestions if any. And finally, they will prepare the budget and they will present it on 1st of February. Who will present? Nirmala Aunty, Finance Minister. See, presentation. So budget will be presented always on 1st of February. When budget is presented, there will be two informations. How many information? Okay, let's say the next upcoming budget is going to come on 1st of February 2027. And that will be for the upcoming financial year. Starting from 1st of April 2027, it goes up to 31st of March 2028. About the upcoming financial year's anticipation. What is it? See, when budget is presented on 1st of February, still February and March, 2 months is remaining in the present financial year. For that present financial year, they may come up with a revision. What is it? They may come up with a revision. So that is already started on 1st of April 2026. It is going to come to an end on 31st of March 2027. So these two are the main information which will be provided. Along with this, there is one more information called as actual value. Which value? Actual values of the previous financial year. See, this is present ongoing financial year. This is upcoming financial year for which budget is presented. Already completed previous year, that means already finished financial year, that is which was started on 1st of April 2025 to 31st of March 2026. For this, they will give the report card, that is called actual value. Which value? See, there can be revision even on this also. Suppose on 1st of February we presented something. Before 1st of April we can bring any changes to this also. Revision and anticipation. But here only and only revision. So about these two informations, the budget will be containing. Upcoming financial year, ongoing financial year. Clear? This is just the actual values of the previous year. So this is not much given importance. Only these two are given more and more importance. Clear? See, that is what here. See, budgetary estimates for the ensuring financial year, current year's revised estimates, actual values of the year preceding the current year, year previous to the current year, preceding the current year. Is that clear? So, union budget is called as a policy document. Budget speech is of two types. One, macroeconomic situation. Second one, related to all the. Now, kindly mark this as important. This is where the most exam question comes. And remember the article numbers also. Including article numbers, we have to remember. Including article numbers. Straight away in exam, the question comes from the article numbers only. See, there are mainly 4 budget documents. Very first one, AFS, Annual Financial Statement. These are further classified into 3 things: consolidated, contingent, and public account. It has another 3 more elements into it. So, Annual Financial Statement is Article 112. In that consolidated, contingent, public account. Consolidated, this is the most important account of the government funds. Even 1 single rupee to be withdrawn, 1 single rupee to be parked inside parliament approval is needed. See here, all revenues raised by government, money borrowed, received, everything will come under this consolidated fund. Government expenditures are also made through this funds. No money can be withdrawn with the funds without the approval of the contingent. As the name says, emergency fund. 500 crore rupee will be set aside with the president. After using them, subsequently we need a parliament approval and we should give back the money from consolidated. And public account. Public account, Article 266, subsection 1. See, as the name says, public money this is. It is not a government's money. Government is just acting as a banker. Government is just holding. Best example, PF money. Which money? PF, Provident Fund. All those money belongs to general public. We have to give it back to the rightful owner at the right time. So it is not a government's money, so parliament approval is not required. So these are the 3 accounts: consolidated, contingent, public account. These 3 will come under the annual financial statement under Article 112. That is the very first document of the budget. The second one is demand for, and the third one is finance bill. So demand for grants, for which department, for which ministry, how much of money they are demanding for, what are they asking for. That is called demand for grants. And Nirmala Aunty, this time how much tax, new tax she is coming with or modification, that comes under finance bill. So yesterday we discussed this, all this, I'm not touching this, whatever we have discussed here. Demand for. So demand for grants will be in the form of of expenditures from the consolidated fund which has to be met in the present annual year according to Article 113. And demand for grant includes all those provisions, revenue expenditure, capital expenditure made by the government, and also union territory expenditures, any loans and advances given to state governments and union territory. Finance bill, see, this is a money bill. Any kind of levying of new tax or modification of existing tax, continuation of existing tax structure, every information will be given in which bill? Finance bill. So all the information comes under the finance bill. Next comes appropriation bill. See, once the demand for a grant has been submitted, approval letter, which letter? That approval letter is what we call as appropriation bill. Approval to withdraw funds from consolidated funds to meet the expenditure during the financial year. See, every funds, whatever it is given in the demand for grants, this has to be discussed and this has to be voted. Parliament has a very limited time. Once that prescribed time limit exceeds, Speaker of the Parliament puts all the outstanding bill together and they will pass it once. That is called Gumpal Govinda concept. So that procedure is what we call Gulaitin. See, Parliament has very limited time for discussion. Once the prescribed time period for discussion for the grant is over, Speaker of Lok Sabha puts all the outstanding bill, whether they are discussed or whether not, for the vote of the House, and that is popularly called as Gulaitin. Suppose, sir, in that discussion, anyone having a confusion, they don't want to allocate more money, can they reduce the money sorted? Yes, that is what we call cut motion, reducing the money which has been asked for any kind of grievances or voice raised. That is called cut motion. Which motion? And there is one more type of a question which comes in exam. So remember, revenue receipt meaning, revenue expenditure meaning, capital receipt meaning, capital expenditure meaning. See, revenue receipt, which neither creates any liability nor causes reduction in the assets. The biggest revenue receipt to the government is a tax revenue. Which revenue? In tax revenue, the biggest income is where the indirect tax, GSTs, customs duties, all this union territory incomes, all of these are the biggest receipts. So tax receipts, non-tax receipt, there are two kinds in the revenue receipt also. Clear up? And again, revenue expenditure, on a regular basis, whatever we will spend. Capital receipts, like for example, any loans borrowed, capital receipt, huge money coming inside, sale of assets, all this. Even in the capital receipt also, two classifications are there. In class I have given a proper bifurcation. In capital receipts also, there are two kinds of, one is debt capital receipt, second one is non-debt capital receipt. What are the examples of non-debt capital receipt? Recoveries of loans and advances, sale of government assets, divestment, that is selling up of PSU stakes. These are the three examples, non-debt capital receipt. What is it, non-debt? From these areas also the exam questions will come. Meaning example, same like leading indicator, lagging indicator, coincidental indicator. Clear up? Already we did this balanced, imbalanced budget, revenue deficit, budgetary deficit, fiscal deficit, and fiscal deficit is always calculated as a percentage of GDP. Clear? And primary deficit, see, non-debt capital receipt examples. Recoveries of loans and advances, sale of government assets, divestment of PSU stakes. Outcome budget, that is just a report card. I said nala, previous years. Clear? Until this level pa important. This is where exam question comes. Year after na, just a read only concept. What are all the sources of revenue? So Department of Revenue, that will be the department which comes under the Ministry of Finance, that is responsible for revenue in the country. In India, direct tax is controlled by CBDC, indirect tax, CBIC. See, I said na, revenue is of two types. One is tax revenue, second one is examples of tax revenue, non-tax revenue. And next, sources of capital receipt, debt capital receipt, non-debt capital receipt, public expenditure, we should control the expenditure. All of these are just a read-only concept. See, until this part, until this outcome budget is important. After outcome budget, it is just a read-only concept. Which concept? Clear? So this is your budget chapter. Year after budget, you don't have much. What happened to this? Wait, 1 second. So all this are just a read-only concept. FRBM Act, all of this, just a read-only topic. I'm not saying that questions will never come. Chances of asking questions are very limited from this area. Only that first half of the area, the more and more questions are going to come from the budget chapter. Clear? So by this, the entire chapter number 7 comes to an. Before going through MCQs, any doubt in the any topic of chapter 7, let me know before starting with MCQs. If you have any specific doubt in any particular topic of chapter 7, I will take that and then I will go to MCQs. Any particular topic to be done again or any specific doubt, let me know. Any doubts? Okay, see, usually from chapter 7, some GK questions will also come, some article numbers. See, there is one more kind of a question connecting to chapter 10. That will be asked multiple times. Even now, GK questions are coming. Central list, state list, and concurrent list. See, there are certain activities which is at the responsibility of the state government. Like, for example, police protection, which comes under state government. Central government, defense of the country, that comes under the central government. Concurrent means the responsibility of both, GST. Like this state list, central list, concurrent list. That alone, when you are free, a GK question, just go through it and go to the exam. Such examples, for example, levying of taxes on agriculture related, state list it is. What is it? State list. It's up to the state government. Vehicle tax, state list. Like this, small questions have come in the exam. I will show now. Okay. Which constitutional body mainly or maintains the fiscal federalism? That means fiscal balances, fiscal commission, progressive tax. That means if you are earning more, you should contribute more to the. See, one who has a greater ability to pay contributes more to the tax burden. Next, the receipt which neither creates any liability nor any reduction in the assets is called as a revenue receipts. Now, the excess of government expenditures over the total receipt excluding borrowing, fiscal deficit. Which of the outcome of the policy is not visible? After implementing the policy, outcome is not visible. That is called impact lag. Next, non-debt capital receipt of the government. Just now I said, there are 3 non-debt capital receipt. Which are those? Recoveries of loans and advances and divestment. What is it? Divestment and one more. Sale of government assets. Recoveries of loans and advances is a non-debt capital receipt. Next, government directly produces the economic goods like electricity, public services, natural monopoly. I said, allocating. Government will only come and allocate the resources. Taxes on agriculture is a state list, central list, concurrent list, that question. That's it, I guess. Yeah. Let's check. Is there any other question from chapter 7? Here it is there. 1 second. Cap and trade system. That licensing, you can sell the license, all that. Government intervention to correct the externalities. Minimum support price, MSP, is fixed by the government in India 1.5 times. How many times? On how many crops? 23 crops. There's actually chapter 10 question, not chapter 7. Chapter 10 question it is. May 25. Which of the following is not true regarding an economy which is already producing at full employment does not require government actions in the form of fiscal policy? Yes, correct. I said, like our classical economist, if we are already operating at the full employment, yes, it is correct. See here. An economy which is producing at full employment does not require in the form of fiscal. Yes, it was correct only. Next, it is a deliberate policy. Fiscal policy says deliberate policy of the government, and tax policy is a part of a. Is it demand side or supply side?
Demand side.
Fiscal policy is not a supply side. During the budgeting process, the Speaker of Lok Sabha puts all the outstanding bill, whether discussed or not. That procedure is called as bulletin. Which of the following information regarding the receipt and expenditures of government is not present in the budget? Estimates of the ensuing year, yes. Estimates of the current financial year, yes. Revised estimates of the ensuing, yes. They may revise it. That means they can bring it changes. Actual expenses and incomes of the current. Here only not complete. How will I give actuals? Wrong. Article 112 of the Constitution. AFS. Next, the statutory disclaimer. Mutual fund investment. Just now I said in the class. Complete disclosure of information. Government intervention for correcting information failure. Next, which of the following is the nodal department for overseeing the public debt management in the central department? Department of expenditures under the Ministry of Finance. See, in that also there is one more information. Internal debt and external debt. Which debt? 1 second. Wait, let me explain it off. In budget chapter only it will come. See, internal debts, domestic market loans, RBI is responsible. For external debt, Ministry of Finance, especially under the Ministry of Finance, Department of Economic Affairs, they are responsible for external debts. Even this once they have asked a question. See, which of the following is not a characteristics of a public good are non-excludable, but here they have given it as social cost is private cost plus external cost. Which of the following is one of the key functions of a fiscal policy aiming for eliminating macroeconomic fluctuation? Stabilization is a macro, redistribution, allocation is a micro. Next, this is as per George Ackliff, Lemon's problem, that means defective goods. So that is based on both poor quality and the good quality of a used car. This as per this particular person, it is there in the ICA material. Even I have marked actually as an average quality of a used car, but in the ICA material it is given. This statement is given. This is as per this particular economist. Okay, already we have done. This is chapter 6, not chapter 7. Supra-regional sector, railway services, central government administrative services. That question. Okay, next, September 25. What is it? Okay. Which of the following is an anti-inflationary measure? That means when there is a inflation, what do we take a measures? That is called anti-inflationary. When there is inflation in the economy, what is there? Inflation in the economy. What do we do? Government expenditure, surplus budget, public debt will be clear. Okay. What do we do now? Reduce the chapter 7. Where is it? Article 275 of the Indian Constitution. See, this is also there in the ICA material. Sometimes they said, nook and corner, they will ask one such question. It speaks about statutory grants given by the union government to state governments. Okay, who introduced the concept of public good? Collective consumption good is public good. Paul A. Samuelson. Yesterday we did this. Contractionary fiscal policy means economy is overperforming. We need to reduce the government and increase the tax. Okay, government is used to proceeds of the public revenue. That means progressive tax, collecting of rich people's money and give benefit. That is called as redistribution. Free and free and compulsory education is a merit good. See, most of them got confused with public good. Free and compulsory education, RTE, Right to Education Act, that comes under the merit goods. Next, I said, I have a car insurance. I will do a reckless driving. See, reckless driving. Multiple times I will end up into an accident because there is an insurance. It is called moral. Article 266 subsection 1, public good, and dash is defined as the excess of total expenditure over estimated receipts. Difference between receipt and expense. Excluding borrowing word is not there. Budgetary deficit. If excluding borrowing word was there. Next, the situation where markets does not supply products at all despite the fact such products are needed. Complete market failure. Chapter 7. GST is a consumption based taxation system. When we buy the goods, when we consume the goods, that is when we pay. Stagflation, when there is inflation and unemployment exists side by side. Next, which of the following is not one of the three main macroeconomic goals? By the way, what are the macroeconomic goals? High level of employment, price stability, economic growth rate. Next, universal education for all. Was it there? No. Next, government redistribution function leads to deadweight losses. Why? Because it acts as a disincentive for enterprises, and that means if government is collecting more and more taxes, then I will not be interested to produce more and save more money because I should pay more and more taxes. That will have a disincentive. That is called deadweight losses. During recession, government increases its expenditure and cut down the taxes. Correct? Deficit budget is expected to stimulate economy. Correct? Yes, both the statements are correct. Chapter 7. Yes, net dividend pool. Again, it is from the budget chapter only. That is a portion of gross tax revenue distributed between the central and that CGST, SGST part comes now. That dividend distribution pool. This we did it yesterday in the class. Budget deficit, revenue deficit, and budgetary deficit. See, some 2-3 questions will be there from always chapter 7 from nook and corner of the material. Even chapter 8, once they have asked such like the 2-3 questions. Okay, leakage is chapter 6, not chapter 7. Already we did this. Which of the following are included in the government? Hey, this is also chapter 6. Government final consumption expenditure. C plus I plus G. G component. Which is included in the government final consumption expenditure. Defense, education, healthcare. Yes, but pension is not included because that is transfer payment. Okay. An autonomous increase in imports as a dash effect on equilibrium income contraction. When imports are more, we should pay money, X minus M. This is also chapter 6. Which of the following is not listed under the common objectives of fiscal policy? Establishing equitable distribution of income and wealth, maintaining price stability, achieving full. Yes, promoting export and import was not there. That's it. Last recent attempt, May 2026 attempt. Which of the following area is related to macroeconomics? Consumer behavior, micro, factor pricing, land labor capital organization, micro, behavior of one individual firm, micro, external value of currency, exchange rate, that comes under macro. This is chapter 1, sorry, not 7, chapter 1 it is. See, I said central list, state list, that GK question, same, two questions have come. Next, which of the following taxes does the state government levy? Taxes on, again, central list, state list question only. During the phase of business cycle, expansionary fiscal policy is most appropriate. When do we follow expansionary fiscal policy? When there is a contraction phase. Chapter 5 question it is actually, chapter 5. Which of the following is not the responsibility of a central government but associated with the... See, once again, one more question. This also, central government, state government levies. Here, responsibility of a central government in association with the state government. Concurrent list. Police, product, sorry, not a responsibility. What is it? Only a state government's responsibility. Police protection. See, central government, central list, state list, two questions. This we did yesterday. The act of undisciplined students shouting and making a nuisance. Same to same in ICM material is there, word to word. This is negative consumption externality. Wait, I will show. Even in my material I have given it. Positive, negative, production, negative. See here. Negative consumption. The act of undisciplined students talking and creating disturbance in the class, preventing teachers from making an effective instruction. Same to same question. See here. An act of undisciplined student shouting and making nuisance during the lecture sessions in the class and disturbing the teacher from delivering their lecture. Negative consumption. Next, which of the following institution is not responsible for public debt management in India? SEBI is a security exchange management. RBI for internal loans. Department of Economic Affairs, external. Ministry of Finance, external only. Which of the following is not a non-tax revenue? Interest rate, interest receipts, non-tax, dividends, non-tax, receipt of union territory, non-tax, but GST is a tax receipts. That's it, I guess. Yes, that's it. By this, chapter 7 comes to an. Did you went through the chapter 10, which I said yesterday? First half of the chapter, you will not get much information. Second half, especially 1991 and later, na? That is where most of the questions will come. Did you went through it? Yes or no, da? Tomorrow, before coming to class, at least make sure that that second part of the chapter 10 is there, na? Read it and come. See, especially from this area, era of reforms, 1980, early liberalization. See, let me give a background story first. I will say the background story and I will wind it up. See, what happened after the independence of India? See, 1947, during those time, in the entire world, there were two most powerful countries. One is USSR, Russia, which was following a socialistic economy. Which economy? And second one is USA, that was following a capitalistic economy, and USSR was following a socialist. And whichever nations they were developed at that point of time, they all were developed because of industrialization. What is it? Even India wanted to grow and develop in the path of industry. So in 1947, right immediately after the independence of India, we adapted mixed economy system. Which economy? For a namesake, it was mixed economy, but most of our policies were socialistic. In the namesake of mixed economy, we were following which economy? Socialistic economy. Clear up? Strict rules and regulations was there. Private people were never given a freedom. Complete freedom goes to PSU. In 1948, which year? Industrial Policy Resolution. What is it? Industrial Policy was brought in. That means predominance of PSU. PSUs was given more and more importance. Later, in 1956, much more powers was given. Industrial Policy Statement. What is it? Industrial Policy Statement was created. And again, much more powers was given to PSU. And next comes 1991, New Economic Reforms. What is it? New economic reforms. So this is Industrial Resolution 1.0, 2.0, 3.0. Now recently Industrial Resolution 4.0, 2025. We said we will contribute 25% of GDP by manufacturing sector. Which sector? Now don't ask, did we achieve this? Definitely no. Make in India, all that will make big achievement and all. We never did this. So these 4 dates we need to remember. 1948, 1956, 1991, 2025. Industrial Resolution 4.0. On this recently the questions has come. 25% of GDP contribution in India by 2025 in the manufacturing unit. Which unit? Which didn't happen actually. Unfortunately, you asked them why COVID. That in 2019, 2021, 25 you said, but still prolonged effect was there. Not even a single thing we have achieved it. Only bluffing. Right immediately after independence also same story. For namesake, we said mixed economy, but most of our policies were socialistic, and India was a closed economy. Which economy? We never allowed foreign companies nor foreign goods to enter India. Already for trading spices, only 200 years gone. If we allow some other foreign company, again predominance will happen. So we completely closed our doors. We were giving only importance to our own PSUs. Our own. And in 1950, we started 5-year plan, Planning Commission of India. 1951, first 5-year plan started. So whatever we did from 1950s to 1980s, growth rate of India was hardly 3.5%. And per capita income was less than 1%. This is referred as a Hindu growth rate. Which growth rate? I will show it, wait. See here. For the first 3 decades after the Indian independence, 1950 to 1980, India's average annual rate of GDP growth rate is referred as Hindu growth rate. It was how much? Neither we gave importance to agriculture nor we ignored it. India started facing a major agricultural trouble, and see, agricultural sector recorded a substantially negative growth rate. India faced a serious food problems in the 1966 and 1967, and we were dependent on United States for the food aid. And at the time of independence in India, more than half of the country's population, leave about half, almost 73. How much? 73% of India's population was depending upon agriculture. Even today, as per the 2011 census data, 47%. How much? See there, after the independence of India, India was rural inhabited. We were illiterate in terms of our education system, and we were having a poverty. Almost 49% of India's population was poor. And India was not deeply satisfied just with the problems of other things. We were also divided based on heterogeneity like caste, creed, race, community. Even today, same story. Literacy rate was 18%, and life expectancy at the time of birth was only. India's poverty was not just with terms of income alone, even in terms of a skilled capital was not there. And after the independence, we wanted to grow and develop in the path of industry. So Nehruvian model was followed. Big industrial was established, and predominance of, see, just immediately after the independence, Industrial Policy Resolution 1948, Industrial Policy Resolution, that is Industrial Policy Statement 1956. We gave more and more importance. See, state monopoly, that means state here refers to government. Government monopoly in the strategic areas, and private people were positively discouraged. See here, private investments were positively. We never gave importance to private people at all. Full on disasters we have done. Read that, what all disaster we have done, and see, read this heading. Just, I don't want to say anything, just read this heading. Economic performance during this period between 1965 to 1981, Indira Gandhi time, was worst in Indian independence history. And what all we did, what all maha great achievements we did. MRTP Act was there, I said, 1969. We never allowed a private firms to grow big. We were restricting them, no monopoly power, nothing. We reserved 800 plus of items only and only for small scale industry. Only they can produce, no others can produce, and these people didn't have capability of producing at very high volume. Even though they had high export potentiality, we were unable to tap them. All these parameters, and finally there was a growing realization. What was there? See, there was a growing realization among our policy makers and industrialists that the prevailing strategic regimes, whatever strict regimes we have, they were invariably counterproductive. That means nothing is working for us, full counterproductive, and the most of the controls and regulations had not delivered in the absence of adequate incentives and openness, which were condition for sustainable rapid. Finally, happy realization when after 1980s, precisely speaking 1985. That is why 1980s and after it is called as a early liberalization. What is it? Year after is what is most important. This was something, a reforms which was stilt. That means never to be seen or never to be heard. It was quite and unheard. And the economic growth rate, see, 1980, 85, 85, 99. It increased from 3.5 to 5.7, 5.8. The biggest disaster awaited. See, all these examples are important. From this also exam questions will come. The biggest disaster happened in 1991. That is new economic reforms. The reason is our balance of trade crisis created. Only $1.2 billion was existing for imports. That was sufficient hardly for 2 weeks. This was the background of Great Depression of India, 1991. New economic reform. This was the background story. See, simple. After independence of India, we adapted mixed economy for namesake. But we were following socialistic practice. We followed closed economy. Which economy? We never allowed any foreign companies or foreign brands to enter inside India. Upon that, we never gave importance to our own private people. Everything was dominated by PSU. Growth rate was hampered till 1985, almost for more than 40 years. More than 40 years. We have played test match. That is what. India might have got independence in 1947, but the real economic independence is in 1991. Until then, we were, for a namesake, India was independent. Economic independence was not at all there. India was a closed economy. Everything was controlled by PSU, completely dominated by license Raj concept. Everything. Private people were never given freedom at all. Neither foreign goods comes inside, neither private was given importance. Every control to government. And these lazy, stupid, lethargic fellows. Even today, same story. SBI, come after lunch break. Same story. So this was the background after independence. But whatever topic we read from 1991 and onwards, this is important from exam perspective. Clear? So in the previous video, we finished with the concepts of chapter 7. So in the today's class, we are going to start with the concepts of chapter 8. So one of the important chapter from the exam perspective, we also have a numerical problems here, and we will also get a conceptual questions here. Okay, totally there are 3 units in the chapter 8. So unit number 1 speaks about the money demand, unit number 2 speaks about money supply, and unit number 3 speaks about monetary policy. So without wasting the time, let us get started. So unit 1, money demand. So why do we need to demand for money, or what exactly does money refers to? See, as a policy purpose, money is called as a set of liquid financial assets. Any variation in the stock of money will always impact on the nation's economic performance. So when we speak about the money, we also call it as a legal tender. Money is nothing but what? Legal tender, which is generally used as a means of payment, store of value, medium of exchange, medium of transferring the purchasing power. So these all are the characteristics of the money actually. But whenever we ask students, what do you mean by money? Sir, money is a standard payment, money is a store of value, medium of exchange. These all are characteristics. So what is money? Money is a set of liquid financial asset. So if we go back in the earlier days, we had a barter system. From the barter system, we came into a coin system. That means gold coins, silver coins. From that, it was heavy. Like we were, let me say, not able to carry every single place. And that had a very inconvenient way of like carrying every single time. So they deposited those, let's say for example, coins, golds, everything in the bank, and the acknowledgement letter that which is backing that gold. Now we started trading with that. That is when eventually the paper currency came up into a picture. That is what we call fiat money. In short, fiat money is nothing but materially worthless, which is considered as a legal tender. That means whatever the currency note today that we are using, that is called as a fiat money. Materially worthless. That is just a sheet of paper. Law recognizes that as a legal tender from the eyes of law. If law stops recognizing this as a legal tender, it is no more considered to be a money. And this is where usually in your exams, the questions will come. So from the nature of money and the general characteristics of money, which among the following is not a general characteristics of money? They will give a, this is one of the most repeated question. Easily reproducible, but it is not easily reproducible. See, it is difficult to counterfeit. That means you can't easily duplicate it. It is generally accepted as money within the political boundaries of the nation, which is durable, long lasting, effortlessly recognizable. Every 100 rupee note looks the same, difficult to duplicate it, and it is relatively scarce, portable, easily transportable. It is possessing uniformity. All 100 rupee note looks the same, and it can be divided into a smaller parts without losing any kind of a value. So this is where usually the general exam questions about the money is going to come. General characteristics and as well as the nature, which is generally accepted, holding in the form of money. It has got purchasing power, one of the most highly liquid asset. Money has no internal value. That is what we call fiat money. It is acting as a legal tender. Money need not be always a physical item, and role of money is used in an economic transaction. Okay, so today I solved PYPs, only few. Some I was unable to solve. I got some fear. What I have to do, sir? Last 10 days, what should I do? So no new experiments and all. First have a conceptual clarity. That is most important there. See why you went wrong. Like, was it concept or was it silly mistake? Just identify that, Raj. That is most important. Okay, chalo. So in that, functions of money, same 11th and 12th standard topics. So this is where you have to just go through like a read-only concept. But these two, as I said, this is where exam questions will be coming up the most. Nature of money and general characteristics of money. Okay, chalo. Now, why do we need to demand money? See, demand for money is basically for two kinds. One, liquidity preference, in order to hold a liquid money in hand. Second one is a derived demand. So that means we need to buy goods and services for which we need money. So we are deriving the goods and services demand. For that we have a derived demand. Second one, liquidity for emergency purposes. So these are the two main demands for money. One is demand for liquidity. Second one is demand for goods and services, that is storing the value. So for a day-to-day transaction and determinants of money, money will be in the form of, let's say for example, when you earn more income, you need more money to buy more goods and services. Higher your income, higher will be your expenditure. You need more money in your hand. And it acts as a general level of price. Everything is quantified in terms of price. Rate of interest will affect on the holding of money. That is what Keynesian theory is all about. I will explain about this. It acts as a degree of financial innovations. That means if new, let me say innovations like UPI payment, internet banking, if these things are in day by day increasing, people don't like to hold money in cash. Rather, they will deposit in the bank and they will like to do the online transaction, and that forms part of a real GDP. So these are the determinants of money. Now let us go to the heart of the chapter. Theories of demand for money. So there are 3 plus 3 theories. Total 6 theories are there. So 3 plus 3. So total 6 theory. These 6 theories are most important. Okay, no sir, I got correct answers, but able to solve only few. Like that, when you practice it, eventually you will increase, Raj. No worries. Like, don't get like offended over there. Like, slowly you will improve it over there. Sir, I finished Jan 26 marathon today. What should I do next to score at least 65? Okay, Sanya, Banu, start solving more and more MCQs. RTP, MTP and PYPs. These are the main priority, and even ICA material we have a mock papers. There are 9 mock papers. You can cover those 9 mock papers. Okay, Sudarshan. Okay. So 3 plus 3. So total 6 theories are there. So first three theories are extremely important. First one, QTM, quantity theory of money. This was followed by classical economists, the one who was before 1929, who said that government intervention is not required, economy will self-adjust. Even that was also supported. Even this QTM was also supported by the neoclassicals. That is after the Great Depression of America, one who spoke about the government intervention is necessary, all those. So let us get started. So very first one is a QTM, quantity theory of money. See here now, one of the most important and the simple topic here is MV is equals to PT. See, let's say money supply and the price of goods, number of transaction and velocity. See, this is on the demand side, price into transaction. This is on the AD side. Let's say I'm buying a chocolate to give it to my wife. Let's say the price of a chocolate is 100 rupee. I'm buying 5 times in a week. So 100 into 5, rupees 500. So this is the total demand. But QTM never focuses on demand side much. It will focus on the supply side. See, this M stands for the money which is in the circulation. Money supply. Consider it as money supply. That P is a price over there. This is the price. We also call it as P. Here it is a transaction. This is called T. So the money supply, whatever is available in the economy, that has a direct connection with the price level. Let's assume that in an economy, there is only and only 80 rupees available. If the product price is 100 rupee, where will they buy the product? So even money supply should also become 100. Only if this is also 100, if price is 100, demand gets generated. And number of times we are buying, that is equal proportionate to velocity. Even this is called velocity. V. So even this will be like 5 times. So totally the aggregate supply will also become rupees 500. So this is AS side. So MV is equal to PT. MV is equal to PT. This is with respect to actual money. Now we don't just keep money in our hand. We also keep it in bank. So for this we have a credit money. Credit money, we call it as M dash. And even that credit money will also have a credit velocity. Even that money will undergo a circulation, the money which is in bank, in the form of loans and advances. So this is V dash. So the actual formula is not just about MV. So it is MV plus M dash V dash is equals to P into T. So this is actual and credit money. So this is the formula. So entire QTM is focusing on the supply side. It is not focusing on the demand side. It is completely focusing on which side? Supply side. So that is the concept of QTM, quantity theory of money, which is one of the oldest theory, which was published in 1911 by Irving Fisher of Yale University. And the book written by Irving Fisher is a purchasing power of money. And it is supported by whom? Classical economist, and also supported by neoclassical economists. Even neoclassical supported. Later they came up with their own theory. So this is QTM theory. See, MV is equals to PT. Later actual money, credit money, both put together. MV plus M dash V dash is equals to PT. And with respect to just actual money, MV is equals to PT. Clear? So this is the theory. You need to understand this formula. This formula, they may also give you numerical problems from this area. Let me show one of the numerical problem, how exactly the questions are going to come. This is how. Observe. See, in an economy, the money supply M is 500 crores and the velocity of money is 5. So write down, you already know the equation. So money supply and price level is directly connected. Transaction is collected with velocity. These two are interconnected. Now the money which is available, which is 500 crores, and the velocity of money is 5 times. So 500 into 5, 2500 crores. That means even this transaction that is on the AS side, if it is AS is 2500, AD should also be 2500 crore. So see there, the total number of transaction is 10,000. So they have given this total number of transaction 10,000. Now they are asking us to identify this price level. Very simple logic it is. 2500, we already know this, that is MV. So price level will be MV divided by T. That means 2500 divided by 10,000. So in this case, the answer is 0.25. Now 0.25, and observe, in the question they have given in terms of crores, but options is in thousands and lakh. We need to reduce it to the decimal value. From crore, the very first decimal value will be lakh. So 0.25 is 25 lakh is the answer. So like this, the numerical questions will also come from MV is equals to PT. Is that clear? So next theory is a neoclassical approach, wherein which now money, they said, is not only just used for a transaction purpose. See, in case of QTM, here money is only and only used for a transaction purpose. Other than transaction purpose, money is not used for anything else. But in case of classical approach, neoclassical approach or Cambridge approach, which is also supported by, say, Alfred Marshall, A.C. Pigou, Robertson, John Maynard Keynes, they say money is used for both transaction purpose as well as precautionary purpose for some unexpected emergency, or tomorrow price may increase for the goods. I have to buy the goods, right? If price goes up, I need more money to buy the same goods. So I will use it as a temporary abort of wealth, that is temporary store of wealth. So money is used for both the purpose, transaction as well as precautionary. So money demand is the proportion of nominal income. So here the formulas are important. You need to know what is that K, what is P, what is PY, and what is only Y. All this MD, money demand, is a proportion of PY. PY stands for nominal income. Only and only Y is a real national income. Once in an exam they have asked from the question, only and only from this Y, not PY. Y stands for real national income, but PY stands for nominal income. So money is used for both the purpose, transaction purpose as well as precautionary purpose. So this is neoclassical approach. Next comes the difference between QTM and Cambridge. See, QTM focuses on supply side, but Cambridge focuses on demand side. QTM money is only used as a transaction, that is flow, but here along with transaction, precautionary, along with flow, stock concept. Money is only used for a medium of exchange, that is only transaction purpose in QTM, but here transaction as well as precautionary purpose. We are also storing it. Is that clear? So this was the first two theories. Sir, how many attempts should I solve? At least past 5 attempts, past 5 RTPs, past 5 MTPs, and past 5 PYPs. That is recommended. Sania Banu. Yes. Chalo, let's continue. So the third and the most important theory, that is Keynesian theory. See, in case of a Keynesian theory, there are 3 main purposes: transaction, precautionary, speculative. And the first two, that is transaction and precautionary purpose, is dependent on income. If you earn more income, you will spend more money to buy more goods and services. If you are earning less income, you will spend less money on goods and services. But the speculative money, this is what is dependent on interest rates. Speculative money is dependent on interest rates. Clear? So now, how exactly the speculative money is dependent on interest rate? And moreover, this is negative relation. Interest rate and speculative demand for money. But income and transaction precautionary motive, it has positive relation. For us, the speculative demand for money is most important. See, John Maynard Keynes, the speculative demand for money, this is also called as liquidity preference theory. This liquidity preference is a term coined by John Maynard Keynes. And this is what the exam question once they have asked. Clear. So the term coined by John Maynard Keynes, that is a demand for money from Keynes' perspective, is called as liquidity preference. And money is used for a transaction, precautionary and speculation. Transaction means to buy goods and services. Precautionary, to keep aside for some emergencies. Speculative, for the investment purpose. So for investment purpose, interest rate is the main determinant factor. Let's take up one example. Assuming I'm investing on a bond market. So the returns on bond is interest. Let's say the bond price on 1st of January 2027, consider 2027, which is 100 rupee. The interest rates in the market assume 10% high interest rate. Now when interest rate is high, you tell me speculative demand, will you keep money in your hand? Simply that money in your hand? No, because interest rate is high, opportunity cost will be high. So you will keep less money in your hand. Speculative money will become less when interest rates are more. See, this is what we said, inverse relation. Now only consider these two. Interest rate and speculative demand. Same way, after 6 months, let's assume on 1st of July 2027, bond price will become 500 rupee and interest rates will become 4%. Interest rate is low. At that point of time, you will convert back whatever you invested at 100 rupee. Now it is 500 rupee. You will convert that back into your cash. That means now speculative demand for money will go up. So these two, speculative demand and interest rates, are inversely related. When interest rates are high, you will not keep cash in hand, you will convert that into bond. Same way, when interest rates are low, bond prices will be high. So you will convert that back into speculative demand in your hand. So will you keep money in hand or not? That is what speculative demand for money in your hand or not. When will you keep money in hand? When interest rate is low. When you will not keep money in hand? When interest rate is high. So interest rate and speculative demand for money is negative related. Same way, bond price and interest rate is also negatively related. If bond prices are less, interest rate will be more. If bond prices are more, interest rate will also be less. But in speculative demand, this is to what we will compare as a negative relationship. So this is what a speculative demand for money overall all about. See, transaction already we spoke, but remember the formula. From this formulas also the questions will come, the components of formula and precaution. But now for us important is speculative motive. Speculative motive refers to people's desire to hold cash in order to equip themselves to attract a investment opportunity for which they need a cash expenditure. What is that investment opportunity? Now I am on 1st of January. Presently the bond price is 100 rupee. In future it will become 500, or in future the interest rate, which is 10%, will become lesser. Present investment is to take advantage of future changes in bond price or future change in interest rate. I am investing at present to take advantage in future. What is that? Future change in bond price or future change in interest rate. That is what is speculative demand for money. See here, according to Keynes, people will hold money balance to take advantages of dash change, future change in rate of interest, same as future change in bond price. This implies Keynesian theory, rate of interest is the real returns on the bond. Yes, when we are investing on the bond, returns what we are expecting on that is a interest. See there, if you simply keep money in your hand, that money will not give extra money. So the returns on them simply holding money is zero. But if you invest it on bond, now you will get interest, or else you can also get capital gain. Suppose if you sell it, when you invested 100, now it is 500. When you sell this, 400 rupee capital gains will be getting. Or you will get a 10%, 4% as a returns on your investment on bond. Either interest returns or capital gains. See there, speculative demand for money and interest rate is inversely related. Same way, bond price and interest rate is also inversely related. See, when the current rate of interest is higher, present rate of interest, let's assume it is 10%, but you expected it to be 6% critical. But present rate of interest is high now. Will you keep money in hand? No, convert it into bond. See, at the high rate of interest will convert our cash into bond. Now reverse. If the current rate of interest is low, suppose if the current rate of interest is only 4%, but you expected that to be 6%, but interest rate is low now, you will convert back bond into cash. See, at the lower interest rate, you will convert the bonds back into a liquid cash. So when the high interest rate is there, you will not keep money in your hand, rather you will invest. See, higher the interest rate, lower will be the demand for speculative money. And increase in income will also increase transaction and precautionary, first two purpose, which is dependent on income. When your income goes up, transaction purpose, precautionary purpose will also go up. But speculative motive is dependent on interest rate, not on the income. Clear? So this is speculative demand for money. See, when interest rates are high, automatically your money holding will be zero. See, x-axis is money holding, demand for money. When interest rate drops down, you will hold money in hand. If interest rate keeps on decreasing, you will keep more money in your hand. Suppose, let's assume if interest rate is 10% in the market, you will not at all keep cash. You will completely hold it in bond. If interest rate becomes, just assume 7%, you will invest more money and you will keep less money in your hand. Suppose if interest rate becomes 5%, like 50-50 you will do. If interest rate becomes just 2%, you will keep more cash in hand and very less investments into the bond market. So that is what is a depiction. Connecting to this, there is one more topic called as liquidity trap. As the name says, liquidity trap. Money is getting trapped into the hands of people. Liquid money is getting trapped when interest rate is almost to zero. See, when interest rate becomes almost to zero, 0% interest rate, whatever money that has been pumped into by a system for a purpose of investment purpose, that will become perfectly elastic. It will become E is equals to infinite. So the money which is pumped into the system for the purpose of boosting the investments, that will not work now because interest rate is almost zero, like 0.5%. Like it is almost 0%. At that point of time, better rather than investing money, you will keep it in hand only. So speculative demand will become perfectly elastic. The third purpose, speculative demand. See, the speculative demand will become perfectly elastic or parallel to which axis? Parallel to x-axis. So this parallel to x-axis, speculative demand for money will become perfectly elastic with respect to the interest rate. That interest rate is almost zero. And this situation is what we call liquidity trap. In real life, Japan has experienced this Keynesian liquidity trap. Even today, interest rate is hardly 1% here. If you observe 6 months back, it was hardly 0.7. Another 3 months back before, that means, let me say totally 9 months back, it was hardly 0.5% in Japan. The bond yielding rates, everything, see, for a 10 years, Japan's 10 years yielding dropped to record dropping 0.2%. Who will invest, man, if it is just 0.2%? This is the concept of liquidity trap. So these are the first three theory. QTM focuses on supply side. Second one, what is it? Cambridge approach, focusing on demand side. But Keynes is most important. Liquidity preference for money, wherein which money is used for all the three purpose: transaction purpose, precautionary purpose, and speculative purpose. Clear? So flip back, have a look. Any doubts? Let me know. So YouTube live students, any doubts in this? Sir, I attended ArivuPro quiz. I got 60 to 70%. Is it good or not? It's good, but you have to improve. Slowly you will improve. Take up more MCQs like that. Yeah. Okay. So post-Keynesian theory. See, after Keynes, the speculative demand concept was further elaborated and explained by another three more persons. So in that inventory approach, Friedman's restatement theory, demand as a money towards behavior as a risk. These are the three theory. This is continuation from the Keynesian speculative demand for money. The first and foremost, inventory theory approach. Here, Baumol and Tobin said money is like any other inventory, like closing stock in a business, like how we have an inventory, like that money is also like an inventory. But every time when you convert it into cash to bond, let's say for example, cash into bond or bond back into cash, there is a brokerage charges. So make sure that you are not converting more times and end up paying more and more brokerage charges. So you have to make sure that your investments from the bond should be higher
rather than paying brokerage charge. See, without converting this, if you simply keep money in your hand, opportunity cost is there. Your money will be eaten by inflation, opportunity cost is there. But when you are converting cash to bond and bond to cash, that is when brokerage charge. So don't convert more times. Whatever is needed for your entire month, sufficient money, you hold it aside. Anything over and above that, you convert it into bond. And once you get a better returns from bond, then you convert back into cash. So you will only pay brokerage charge at one cycle. Suppose if you convert this more number of times, you will end up paying more and more brokerage charges. Whatever money you are earning in the bond market, most of things you will lose it in paying brokerage charge. Without doing that, if you simply silently keep money in your hand, you have an opportunity cost by simply holding money. That is what is explained by Baumol and Tobin. They said money is like any other inventory. See there, in this approach, money is like a real cash balance. It is viewed as an inventory held as a transaction purpose. Money is like an inventory, closing stock, held for a transaction purpose. The transaction is converting money to bond, bond back to money. And there is a fixed cost for making that asset into alternative investment, that is called as a brokerage charge. The most liquid asset is money, but it is also having a trouble. If you simply keep opportunity cost is there. Sir, can I keep it in bank account? Yes, safe asset, bank account, you will get some interest. If you keep it in demand deposit, you don't get anything, current account. Only when you keep it in savings account or bank FD, you will earn money there. So application of Baumol theory, same, just like how I explained, the opportunity cost is there. Either you can keep currency in your hand or demand deposit, you will not get any interest. But if you keep it in savings account, you will get some interest. If you want good returns, bond market or stock market, you should put, but that is also risky. You may also lose up your invested money. So risk is more, reward is more. Same thing is explained here in detail. So every time when the brokerage charges increases, number of times your conversion will go down because you will end up paying more brokerage charges. So that is inventory approach. Okay. Let's go to the next one. So Friedman's restatement of quantity theory. Very simple topic here. Milton Friedman said we should consider future income's present value, not present income. Now let's say for example, now Shashikiran said 1 plate pani puri today. Assume in 2026. 1 plate pani puri, let's assume it is 40 rupees. In 2030, same 1 plate pani puri will be 100 rupee. That means in future, what is 100 rupee? That is today 40 rupees. Same way, let's assume in 2030, you are going to earn 1 lakh rupee. That is in 2030, right? But present value in 2026, how much is that? Now, let's say, for example, this is 40,000 rupees. Like this, whatever you are going to earn in the future, we need to bring it down into its present value. And then we should decide, should we invest it or not? Is it good investment or not? Let's assume I want to buy a land. I want to invest it on a property. Presently, the land value, let's say I'm getting this land for some 50 lakh rupees. In future, by 2030, this will become 2 crores. You will be like, sir, amazing, sir. In just 4 years, your money has become 4 times multiplied. When I convert back this into present value, this 2 crore rupees of land worth in future, present value, let's assume its present value is 70 lakh rupees. Good, na? Present value is 70 lakh, but at present I'm getting this for how much? 50 lakh rupee. Good. This is called good investment. Suppose just assume this present value is 40 lakh, but presently you're buying it for 50 lakh, not a good investment. So like this, Milton Friedman considered the present income or future income. Future income's present value. But Keynes considered just a present income. That is the main difference here. See, we have to consider all our permanent income based on 5 asset class. Which are those 5 asset class? Money which is kept in hand, bond, equity, physical capital and human capital. And we need to bring it down to its present value. See, permanent income in future, whatever you will earn, divided by discounted rate. Same like our GDP deflator concept. So bring it down to its present value and then take a decision, because your money will be eaten up by inflation. There is a positive inflation rate year by year, because of which your money value will go down, and nominal demand for money has a positive relation with price. If price increases, value of that asset will also increases. Same way, there is an inverse relation with opportunity cost. The more the opportunity cost, lesser should be the money holding in your hand. You should invest more. So this is what is explained by Milton Friedman. So Milton Friedman said we should consider which income? Permanent income. But Keynes considered only present income. He analyzed only in the present scenario. Keynes never considered about a future scenario. But who is considering future scenario? Friedman. And that too in future, which income? Permanent. Whatever total income that we are going to earn in the near future. That is Milton Friedman's restatement of quantity theory. Last but not the least, behavior towards risk. James Tobin. See, James Tobin said, see boss, as an individual, what extent are you ready to take a risk? What is that risk taking ability that you have got? What all are the risks that you are planning to take? That he will be explaining upon. See, very simple concept here. Tobin said, see boss, as a risk averter, as a risk taker, you have four options. Either come up with your portfolio of asset in a combination of safe as well as risky asset. 50% safe, 50% risk. Or else slowly start taking risk, slowly start investing on bond equity, like this. Slowly start. First you keep money in hand, later keep money in bank account, later you invest it on gold, later you come to mutual fund, later you come to equity, like this. Slowly, step by step you take a risk. Low risk to high risk. This is what we call risk aversions. This is what is recommended for risk aversion. Get aware of it first and then slowly you invest. Later, there is one more category, high risk category, more risk to less risk. Straight away enter equity market, straight away enter bond market. Later, you will cut down things. That is more to less. Or I don't even want a risk at all. Zero risk. I know that if I simply keep money in hand, it will not put extra money. I will have high opportunity cost, but still I'm okay with that. I'm okay with opportunity cost. I don't even want any return. Everything I will keep it in my hand without taking any risk. That is zero risk. So four options are there. When you have money, whether to invest or not, what to invest, in which to invest, what kind of risk to be taken, four options. Combination of safe and risk, or low risk to high risk to low risk, or zero risk. So these are the four options given by the Tobin. See, an investor is going to face a problem within what proportion, that means in what combination of my portfolio in the financial asset should we keep it in the form of ready money and some other interest bearing alternative investments such as bond. How much should I invest? How much should I hold in hand? How much liquidity should be there? How much liquidity should not be there? In what combination? So four options are there. So this is a combination as per the Tobin. Clear? So by this, unit 1 comes to an end. That's it. This is unit 1. Nothing big or nothing much in the unit 1. So mainly first three theory. QTM is important. Cambridge approach is important. And Keynesian theory is important. See, in QTM, money is only used for a transaction purpose. In Cambridge, transaction and precautionary purpose. Precautionary means saving purpose for some emergency. In Keynes, transaction, precautionary and speculative. Speculative means for investment purposes. So speculative is mainly dependent on interest rate. But first two, transaction and precautionary is dependent on income. If income increases, those expense also increases. But interest rate is negatively related with speculative demand for money. So this alone logic you have to remember. Clear? So this is unit 1. So first I will finish the entire revision of the chapter and together I will go with MCQs rather than going unit wise one by one. Clear? So flip back the page. Our YouTube's live students, any doubt in this unit 1, let me know before moving to unit 2. Okay, I will help you. Don't worry. MCQs or MCQ PYP, right? I will help you out. Okay, then let's continue. So most of the numericals what we get will be from this particular unit in the chapter 8 actually. M1, M2, M3, M4 calculation, money multiplier calculation, credit multiplier calculation. All of this will come from the unit 2. One of the easiest unit. Okay. Then let's get started. Okay. Now unit 1 spoke about money demand. Now unit 2 speaks about money supply. So what is the supply of money? So there are mainly two sources of supply. Straight away let me go to supply sources. For a better understanding, I will come back to intro part. We should explain meaning of public, and from that public also numerical problems will come. Clear? Okay, so the primary source of money supply is always a central bank of the nation. The money which is issued by the central bank is called as fiat money or high powered money, or we can also refer it as monetary base. These are the three different names. And every money that is printed and circulated by, once again about inventory theory. See, in inventory theory, money is like an inventory. We are holding money like a closing balance. We are investing that. How much money to keep in hand, how much money to invest. Okay. Okay, Sankul, I will explain about it. First listen. Okay, so the money which is printed and circulated by RBI, that is the responsibility of an RBI and government, and that comes as a liability with them. And this money will always have a backup. Whatever, even a single rupee that is printed, that will have a gold reserves as a backup or forex reserves as a backup. But money which is created by the credit money, that is commercial bank money, now that doesn't have any kind of a backup. So this is given in the form of loans and advances. Now let's take up an example. See, let's assume Shashikiran. Now I will go and deposit some 1,000 rupees in my bank account. Let's say I will go and deposit 1,000 rupees. I deposited. Now out of this 1,000 rupee, now RBI might have instructed to every commercial bank, you need to keep a reserve. You can't give away the entire money what you guys receive as a deposit as a loan. Let's say reserve is 10%. That means in that 100 rupee bank will keep aside, and the remaining balance, that is 900 rupee, this can be given as loan. Just assume Mr. Dhoni uncle will come and borrow loan from the bank A. This is bank A. Now he got 900 rupee as a loan. Now Dhoni uncle can also withdraw 900 rupee. Now he has got a loan account. And Shashi uncle, even he has deposited 1,000 rupee. Now even I can withdraw 1,000 rupee at any point of time whenever I want. That means in reality, bank is only having this 1,000 rupee, but claim is 1,900. That means Shashikiran can also withdraw 1,000. Dhoni uncle can withdraw 900. But in reality, bank has only an asset of 1,000, but liability of 1,900. So 1,900 liability, 1,000 asset, extra 900. Where did this come from? That is what this is credit money. This doesn't have any kind of a backup or a reserve. This is what credit money created by the commercial bank in the process of lending and borrowing. Now let's say Dhoni uncle will go and buy some goods from Mr. A. Now Mr. A will go and deposit this 900 rupees in his bank B. So this is bank B, the second bank. Now again 10% reserves. 90 rupees is kept aside. Remaining 810 rupees will be given as a loan. Now let's assume Kohli uncle, for a shoe manufacturing business, he will come and borrow the loan. How much? 810 rupees. Same way, he will go and buy some goods from Mr. B, a raw material vendor. Now Mr. B will deposit this to bank C. How much? 810 rupees. Again from this 10% reserve, that is 81 rupee. Remaining money is 729. So the 729 is taken as a loan by Hardik Pandya uncle for his cricket practice for the upcoming World Cup loan. He wants to buy some cricket kit. Again, Hardik Pandya uncle will go and buy some goods from Mr. C. Now Mr. C will come and deposit this 729. Like this, the process keeps on continuing. So this is what the credit circulation will happen. We'll explain about this. This is what is called as a credit multiplier concept. At the moment, just understand the first two scenarios. Shashi uncle and Dhoni uncle example. At any point of time, bank's assets will be lesser, but bank's liability will be greater. So this is the credit money concept. Money created by the commercial bank. Clear? So there are mainly two sources of money supply. One, central bank source. Second one is a commercial bank source. Commercial bank source in the form of credit money in the process of borrowing and lending transaction to the public. Central bank by issuing a fiat money, that is high powered money, by printing the currency and circulating them. So with that respect, whatever the currency note that is printed and circulated into the system, that is what we call stock concept. Out of that, money which is available with the public, money which is available with the public in the public hands for their transaction purpose, that is flow variable or a flow concept. Now in an exam, they will ask you to find the numerical from the public. See, first understand who is called as a public. Rather than understanding who is called as public, it is easy to know who is not called as a public. Producers of money. In our country, there are two important producers of money. That is government and the banking system in the country. Except these two stupid fellows, now everyone else will come under the definition of public, including foreign central bank, foreign government, International Monetary Fund, World Bank or Asian Developmental Bank, who is keeping Indian money with the RBI, that is also public money, any non-banking financial institution, local authorities, all this non-departmental public sector, everyone will come under the definition of public except producers of money. In India, who are the producers of money? Government and the banking system. These two are the producers of money. Except these two people's money, like one bank keeping money with another bank, interbanking deposit, money held by the government, money belonging to the banking system are not included in public definition. So they are not a definition of public. So from that, usually numerical problems will come. Let me show that. Chapter 8. Yeah. See here. Calculate currency with whom? Currency with public from the following data. Simple. Whatever is in the money in the hands of public, add it. Whatever is belonging to the banking system and the government, subtract it. Simple. See, notes in circulation, add. Circulation of rupee coins, add. Small coins, add it. But cash on hand with whom? With the bank, subtract. Add the first three, subtract the last one. That's it. Simple. Next. One more I will show. See here. Calculate currency with public. Notes in circulation, add. Coins in circulation, add. Cash on hand with whom? Bank, subtract. Cash on hand with whom? Coins on hand with whom? Bank, subtract. So first two add, next two subtract. That's it. This is how easy it is. From this is how the questions repeatedly are coming. See, this calculation of public now repeatedly it is coming. And whom do we call as a government? Government, nothing but central government and state government and all local bodies. Banking system, Reserve Bank of India and all those banks which comes under Reserve Bank of India, one who accept CASA deposit, current account and savings account deposit. CASA stands for. They are coming under the definition of banking system. Clear? So now straight away we'll go to the concept of CBDC. See, CBDC is nothing but e-rupee. Now going further, we are not going to print currency in the form of paper currencies. Going further, we'll come with more of digital in form. Already that is legal tender from 2022, but most of them doesn't even know about it. See, CBDC of RBI. Second. See, this is the one. This is CBDC. Oh, LinkedIn is going. One second. Okay, we don't want you. Cancel. Just a second. I will just show you the image. Yeah. Yeah, see. This is CBDC, Central Bank Digital Currency. Rather than printing in the form of paper, we have issued in the form of digital way. So going further, this will be the legal tender in the country. Already it is a legal tender, but usage is very minimal. So up to 500 rupee notes, see 2 rupee, 5 rupee, 10, 20, 50, 100, 200, 500. Coins is 50 paisa and 1 rupee. This is CBDC, already a legal tender. Instead of printing in the form of a paper, we are issuing in the form of a digital way. And in India, remember, cryptocurrency is not a legal tender. That is not legally recognized as currency in India. So that is coming under the asset classification. So RBI has barred anyone from virtually dealing with the cryptocurrencies in India. So crypto does not have legally recognized as money. It has more uncertainty and that is not legally recognized as currency in India. It is an asset classification, like how we hold gold, silver, building, car, like that. Crypto is an asset classification. So that is related to CBDC and crypto. Next comes, this is where the most important topics are. Measurements of money supply, M1, M2, M3, M4. This formulas you have to remember. This is utmost important. From this, usually the exam questions are going to come. This is where the main exam questions will be. M1 as 3 component, currency, notes and coins with public, demand deposits with the banking system, that is CASA deposit, other deposits with RBI. When you add this 3, you will get M1. M1 is also called as a narrow money, or it is the most liquid. M1 is narrow money, or M1 is also called as a most liquid money. M3 is called as a broad money, and M4 is a least liquid. Clear? So M2 is M1 plus savings deposit with post office savings bank. All those money which is saved in a post office bank. M3 is M1 plus time deposit, net time deposit, whatever FDs that we keep it in the bank. M4 is M3 plus total deposit, including savings, time, whatever, certificate of deposits, total savings of the post office organization minus NSC, National Savings Certificate, NSC stands for. So what is this? General public money, government will issue as a bond or government will issue a certificate and they will raise the funds. Tax-free money, that is, whatever interest they earn from that. That money is not used by the public, that money is used by the government. So those money should be subtracted from M4. So M3 plus total deposit with Post Office Savings Organization minus NSC, National Savings Certificate. So this is the formula. From this, numericals will also come like this. I've given in the class like all 4 calculation, M1, M2, M3, M4, or just one calculation, M1. See, let me show the exam questions also for your better understanding. See here, calculate narrow money, M1, from the following data: currency notes and coins with public added, demand deposits with the banking system added, other deposits with RBI. Only 1, 2, 3. We only need these 3 things. You should know the formula. Here there is one more catch. In ICA material, in summary, they have also given information about the reserve money NM1, NM2, NM3, NM4, L1, L2. Till date, the questions have never come. But before going to exam, make sure that you are reading that and going. ICI BOS Knowledge Portal. One sec. Let me show that. Why I usually say students to read ICA material including summary is this is the reason. One second. Economics. Chapter 8. Unit 2. Concept of money supply. Wait. Let me show that. See here. They have just explained about M1, M2, M3, M4, right? Now, at last, when you come to the summary. Yeah. Can you see here? Following are the recommendations of the Working Group of Money 1998. The RBI has started publishing a set of 4 new monetary aggregates. In that, first and foremost, reserve money. That M1, only the second component changes. Here, currency notes in circulation plus bank deposits with RBI. Clear? Instead of CASA deposit part, bank deposits with RBI and other deposits, same to same. So you should remember this reserve money and also NM1, NM2, NM3 formula, L1 and L2 formula. Till date questions has not come, but the high chances are there of asking. Sometimes ICA does ICA things. From the main content, there won't be a question. From summary, they will ask you a question. In next unit, it is there. In chapter 9 also, cross rate, exchange rate mechanism, and the concept of CRR and SLR that was given by the Narasimhan committee. There was one question that is there in summary. So sometimes the question will be picked from summary. That's the reason after reading ICA material, once you have to read summary like a newspaper. So in this concept, NM1, NM2, NM3, L1, L2, along with reserve money, at least you should know the formula. What is it all about? So reserve money calculation, they may give it. So anything may ICA decides to screw up your happiness for just 1 or 2 marks, they may ask it from this area. So at least go through it like a newspaper once. Don't ignore this. Clear? So mainly from the exam perspective, M1, M2, M3, M4 is important. M1 is called as a narrow money. M3 is called as a broad money. Most liquid M1, least liquid M4. This at least small knowledge wise, you should be remembering this. Clear? So this is M1, M2, M3, M4 calculation. This is where most of the questions will be. And next, money multiplier and money supply. Now this is most interesting. Especially money supply, money multiplier. Repeatedly the questions will come in the exam. This is where the numericals will also come from. Let me make your life more simple, more simplified here. See, to understand the concept of multiplier and money supply, we need to understand the behavior of 3 elements. One, central bank behavior. Second one, commercial bank behavior. Third one is general public. That is why we call it as combined behavior to understand the money multiplier approach. That is behavior of central bank, behavior of commercial bank, behavior of general public. So what is this behavior? Now understand, we always expect central bank to print more currency and circulate it into the system. That means the very first one, central bank behavior in terms of printing and supplying high-powered money. We believe that central bank will print more money and that will circulate into the system. That money will get into a circulation, money supply will increase. Second one, to increase the money supply, even the behavior of a commercial bank is important. We believe whatever the central bank has instructed, like this in my previous example, keep a reserve of 10%. We believe commercial bank will only and only keep 10%. They will not show any extra talents like keeping another 2% extra, another 1% extra, excess reserves and all. We believe that they will not keep. They only and only maintain required reserve. Sometimes they may also keep an excess reserve. So this will become total reserves. Clear? So if I have to only identify excess reserve, Simple. Total reserves minus required reserve. Let's say total they had kept a 12% of reserve, but RBI asked them to keep only 10%. So our excess reserves is 2%. We believe that commercial banks are not going to keep excess reserve over and above what RBI has instructed them to keep as a required reserve. That is what we believe. But every time your belief will not work. Commercial bank will keep excess reserve. So that is what we calculate as small e. How do we calculate the small e? Excess reserves divided by deposits. This is the formula. And if you see ICA material, the small e instead they will give it as a small r only. R is equals to ER by D, but that is actually wrong. Here R means required reserve ratio, RRR. We believe that they don't keep excess reserve, but sometimes they will hold excess reserve. So I have to write it as E only. Next, the third behavior is a general public behavior. We believe general public will not keep more cash in hand. Rather than keeping money in hand, they will deposit in bank account, because if that money comes to bank, that will undergo a multiple circulation and expansion. But if you simply keep money in your hand, what will it put extra 10 rupee note for every 100 rupee note? No, it will not put the 10 rupee extra note. So we believe that general public is not maintaining excess cash in their hand. Cash to deposit ratio, we call it as, that should be always lesser. That is small c. The small c is capital C divided by capital D. Capital C is a cash in hand. Capital D is a deposit made by public in the bank. So the C by D ratio should be always and always lesser. We want people to deposit more money in the bank, hold less cash in the hand. So these are the three joint behavior. General behavior of all the three people is, we believe central bank will print more currency and they will circulate. Whatever they print more currency and circulate, commercial bank will not maintain this money printed and circulated as excess reserve. Public will not keep more money in their hands, whatever they are printing and circulating. If these two behavior assumption applies, that means they don't maintain excess reserve, they don't maintain excess cash, then automatically money supply will increase in the economy when they print more currency and circulate. So this is what is the belief. So the formula for money supply, total, there are two formulas. First and foremost, we call it as MS is equals to small m into MB. MB is a monetary base, high powered money. So multiples of monetary base. We call it as what? Multiples of monetary base. By using the same formula, we can identify multiplier also. See now, small m is equals to MS by MB. This is what you have to remember the most numerical problems, whatever comes in exam, this is from this MS by MB. Or else, if you are still keen on to understand from a very simplest perspective, remember reciprocal of RRR, required reserve ratio. That's it. Clear? There is one more formula, interesting formula. Money supply will be 1 plus small c divided by R plus small e plus c into H. H is high powered money. In the same formula, if you just eliminate H, that will become multiplier. Small m is equals to 1 plus c divided by R plus e plus c. That's it. These are the formulas which you have to remember. And especially from the exam perspective, this first formula, MS by MB, this is what you have to remember the most. Sir, I understand the concepts of all the lessons, but I fail to solve exam questions. I only get a few correct, even though I do very right even after the lessons. See, there are two problems in it. Number one, after knowing the concept before answering, you have to be 10% sure whether this option is an answer or not. Even if you have a slightest doubt, go back, open your book, read it, and then mark answer. After marking answer, see the answer key. Still, if you are wrong, see the explanations of the answer. Understand why you went wrong. Was your understanding capability wrong, or was the interpretation of question wrong? Usually, interpretation of question will be wrong. Sometimes options will be very close, very similar between each other. There, very minute details of understanding and eliminating the wrong one, that is where it takes little time. Over a practice. Harsha. Okay. Chalo. So this is the main formulas. Let me show the numerical problems for you so that you can solve it. Now, see here, question number 72. if the monetary base in an economy is 250 crore, through open market operations by the central bank, the money supply is 1000 crore. See, this is MB, na? Monetary base. This is money supply, yeah. This is MS and this is MB. And they're asking us to calculate what? Multiplier. MS by MB. Simple. 1000 divided by 250. 4 is the answer. Next, Jan 25 attempt paper. See here. Consider that with the money multiplier as 1.5. Already they have only given the money multiplier. There has been an increment. Okay, wait. Considering that the money multiplier is 1.5, there has been an increment of 600 crore in money supply. That means this is money supply. Find out monetary base. They are asking us to identify the MB here. It is much more simple. See, money multiplier. Small m is MS by MB. Already they have only given multiplier. 1.5 is equals to 600 divided by MB. Simple. MB will go to LHS. 1.5 will come to RHS denominator. So this will be finally MB will be 600 divided by 1.5. Answer is 400. See, most of the questions are coming from MS by MB only. Let me show. In every attempt, let me show. No. Here M1 calculation as there. To May 2025, there was no question. See here. If the money supply is 1000 billion and monetary base is 200 billion, what is money multiplier? MS by MB. Money supply is 1000. Monetary base is 200. 1000 by 200, answer is 5. Chapter 8. Jan 26 attempt. Okay, the money multiplier will be larger. Which of the following scenario? All those ratios, whatever I spoke, a small c is equals to capital C by capital D, or excess reserve 1, the small e is equals to ER by D. All these ratios are smaller. See, smaller the currency to deposit ratio. When ratios are smaller, money multiplier will be the larger. That is the main logic over there. So either theory questions will come and numerical questions will also come. Numericals are most easiest in chapter 8. All you need to know is a proper logic there. I'm just checking, is there any other question? This is credit multiplier question. We will do it. We will do this later. 1 second. See, MV is equals to PT, that MV plus M dash V dash, credit money and both actual money put together. Okay. This I will open and I will keep. Yeah. Recent one, May 26 attempt paper. Okay, this is required reserve ratio, credit multiplier question. This also will do it later. Credit multiplier, when I come, I will explain there. See there, if the money supply increases by 750 crore because of there is an injection of 250 crore through open market operation. Clear? This is monetary money supply increased and this is monetary base, MB. This is 250 crore. And calculate multiplier. You tell me, what is the formula of multiplier? Small m. Small m is MS by MB. Here MS, money supply 750 crore. Monetary base 250. 750 by 250. Answer is 3. Calculate currency with public. See, currency of rupee coins added. Currency of small coins added. Note in circulation added. Cash on hand with the bank. Subtracted. Add the first 3. Subtract the last one. Simple. See, to be frank, chapter 8 is one of the most easiest numerical questions what you will get. Chalo, fine. We'll go back. Okay, so this is related to money supply and money multiplier. There can be one more type of a question which will be asked in the exam. Let me explain it. Yes, this Grady's land, that 1 plus C divided by R plus E plus C. See, they have only given the R. R is 10%. Currency in hand 400 billion, deposit 800 billion, excess reserve 0.8 billion. Sometimes see, they may not give you the 0.8. They will just give it as 800 million. See, here it is in billion, here it is in million. You have to convert this million to billion. See, 100 crore is 1 billion. 10 lakh is 1 million. So you have to convert that. So 0.1 percentage, always remember this. 1 crore, if it is 100 percentage, 0.1 percentage is 1 million. See, one second, sorry, not 1 crore, 100 crore. 100 crore, this is called 1 billion, and 1 million is 10 lakh. That is 0.1 percentage out of 100 percentage. So 0.1 in the decimals, we will represent it as 0.01 into this 800. So this will become 0.8 billion. See, even you should be knowing how to convert it. 0.8 billion. They have only given it, but still they may not give it. You may have to convert it. Clear? And excess reserve is given 800 million. Money supply total, currency plus deposit put together 1200. Now they are asking us to identify money multiplier. So multiplier formula, small m is equals to 1 plus c divided by r plus e plus c. Now 1 plus c, currency, they have only given 400 billion, but we have to identify small c. That small c is capital C by capital D. This is capital C, capital D. So this is 400 by 800, 0.5 automatically. So this is 0.5 divided by, wait, I will take this aside. R, they have only given 10%, 0.1 plus E, C 0.8. Just now we identified, na? So that is excess reserve value. So excess reserve value, what did we say? E is equals to ER by D. So 0.8 divided by 800 billion. So this will be 0.001. So 0.001 plus C. Just now we identified, na? C 0.5. So that's it. This is the value. So this will be 1.5 divided by 0.601. So end result, this will be 2.5. 2.5 times. Clear? This is how the questions can be. And see, individual explanations may come. Like I explained a joint behavior of all the three. The very first one, behavior of central bank. We believe that central bank will print more currency and circulate. At that point of time, commercial bank behavior and general public behavior assumed to remain unchanged. Their behaviors will not change. Next, behavior of a commercial bank. We believe that they will not keep any kind of excess reserves. And central bank will always and always support for a commercial bank. And we believe that commercial bank always expects a people to hold more and more in the form of time deposits. See, this question is important. Once they have asked this question, why time deposits? See, if people come and keep money in time deposits, now, that means your next 1 year or 6 months, you will definitely not touch that money. So a bank will be using that as a free reserves to give it as a loan. See, remember these words. Same word to word it will be coming. See here, greater availability of a free reserve and consequently enlargement in the volume of a multiplier deposit expansion and monetary expansion. Now see here, same to same question. What is likely the impact of increase in time deposits to demand deposit ratio? Higher availability of a free reserve and consequently enlarging in the volume of a multiplier deposit expansion and monetary expansion. Word to word, you have to remember the keywords. That is what I'm saying. Concept is important there. Concept, word to word has come. When you keep more money in FD rather than your savings account, next 1 year or 6 months, you will not touch that money. That money will become a free reserve for a bank to give more and more loans to expand the deposits. That is the concept there. Last one, behavior of a general public. See, general public behavior, we think that their habits are more and more towards of banking, not towards of a keeping cash in the hand. So all three combined behavior put together, we identified the concept of money multiplier. So in this, there is one more question they have asked once. Change in money supply happens because of change in reserve. Let's assume earlier RBI asked them to keep a reserve of 10%, 1 by 10%. That is 1 by 0.1. Now RBI asked them to keep additional 1000 rupees as a reserve. That means there is a change in reserve. Whenever change in reserve happens, that will also lead to changes in money supply. Wait, I will show the question. Yeah, see here. If the reserve ratio was 10%, that is 0.1 is 10%. If there is an increase in reserve, that means change in reserves by how much? 1000 rupee. What will be the change in money supply? So same formula, just now I explained now. Change in money supply will be 1 by R into change in reserve. So this is 1 divided by 0.1 into 1000. 1 by 0.1 is 10. 10 times of 1000 is 10,000. That's it. Nothing big there. So this will bring to the last topic, that is credit multiplier. Very simple. See, there are two things to understand here. One, credit multiplier, 1 by RRR. Just you need to remember this. If they create credit money creation into initial deposit, ID, initial deposit, whatever the initial deposit is there, how many times that money is getting circulated. See, let's straight away, let me go to the problem. See here. In this, we are expecting you to identify the credit multiplier along with credit money created. See there, what will be the total credit created, that is credit money created by the commercial banking system with the initial deposit of 3,000. If required reserve ratio is 5% and 8%. So formula is 1 by RRR, 1 divided by 0.05, 1 divided by 0.08. So in this case, it is 20 times. In this case, it is 12.5 times. So into initial deposit, how much is initial deposit? 3,000. That means in the first scenario, if required reserve ratio is just 5%, money will multiply 20 times. What is the 20 times? Initial deposit. So 20 into 3,000, this will become 60,000. And here 12.5 into 3,000, this will become 37,500. So either they may just ask you to identify this multiplier or credit money creation. Anything can be asked. See, recently the question was asked in the reverse calculation. First let me give you the proper calculation. Next I will come to reverse calculation. Yes, here. Given required reserve ratio is 8% and 12.5% and initial deposit is 1 lakh in the banking system. Calculate credit multiplier. For credit multiplier, I don't need this initial deposit at all. Only credit creation means I should multiply that with initial deposit. See here, just 8%. Now 1 divided by 0.08. Answer is 12.5. And 12.5% is 1 divided by 0.125. This is 8 times. So answer is 12.5 and 8. Here also numbers are also same. Percentage outcome is also same. For 8% answer was 12.5. For 12.5% answer is 8. So be careful. Clear? And next, see there. If credit multiplier, they have only given the credit multiplier 4. End value is given. Required reserve ratio is given. 1 divided by RRR. That RRR below, they are asking you to calculate. And already you know the answer. 44 is equals to 1 by RRR. Simple. Now it will be 1 by 4. What is 1 by 4? 0.25. That is 25%. That's it. Clear. See, such a silly questions will come. Okay, I will show one more question. Now you only solve it. Credit creation question I will show. Yes, this is the credit creation question. See there. Credit multiplier required. Required reserve ratio is 10% and 12.5. Initial deposit is 1 lakh. Identify the total credit money created. Now first take the 1 divided by RRR of both this. 1 by 0.1. This will be 1 by 0.125. This will be 8 times. This will be 10 times. So multiply that with initial deposit into 1 lakh into 1 lakh. So this will become 10 lakh. This will become 8 lakh. That's it. This is the concept of credit multiplier. By this, unit number 2 also comes to an end. This is unit 2. Clear? For M3, it is M1 plus, not M2 plus. Shenmuga. See you. Yep. So M3 is M1 plus, not M2 plus. Open market sale and open market purchase. Okay, see, simple concept. Open market sale and open market purchase. See, on behalf of central government, RBI will buy and sell a government securities. Now, simple logic. When should RBI sell the security? When people have more money, people are ready to buy securities. That is when they will sell. That means during the time of inflation. At this time, yesterday we wrote on flow chart. Now, where is that? See, observe. When an economy is there with an inflation, public debts will increase. That means now RBI is also selling a treasury bills or government bonds. When people have more money with their hands, RBI will sell securities. So people will purchase security. Money will come inside the banking system from general public. That is when RBI will sell security. I will write here only. Sell securities. to absorb excess liquidity, whatever excess money was there along with the hands of a public, to absorb that excess liquidity. Now RBI is going to sell the securities. When economy is not performing well, when people don't have money, whatever you guys sold during good times, now RBI will come and buy that. Purchase back, buy securities. When RBI is only buying the security, money will go from RBI to general public. So buying and selling of securities. Selling will happen during inflation. Buying will happen during deflation. Clear? Sagar. Example, inflation rate. Yeah. So this flowchart, yesterday I explained it for fiscal. Monetary policy related comes in now. In unit 3, we will speak about this monetary policy, interest rate related examples. Clear? Okay. Let's go to the last unit. That is unit number 3, one of the smallest unit. Just 2 major topics are there, but in exam also from this 2 major topics only the questions will be asked the most. Okay, now monetary policy. Monetary policy is mainly classified into 2 major topics here. The topic number 1, monetary policy framework. Second one is organization structure for monetary policy decisions. So what is this monetary policy framework? See, in that framework, that means how the operations of central bank will happen, how exactly the transmission mechanism, interest rates and other asset prices will work, and what are the main objectives of monetary policy. So 3 topics are there under monetary policy framework. First one, objectives of monetary policy. Second one is analytics of monetary policy. Third one is operating procedure. This operating procedure is what is RBI concepts. Quantitative, qualitative concepts of RBI. And analytics is also called as transmission mechanism. Clear? So let us get started. The very first one, objective. Mainly there are 2 objectives, primary objective and other objective. Primary objectives are price stability and economic rate stability. See, we need to bring the price stability. All of a sudden prices should not go up. All of a sudden prices should not come down. Even the nation's performance like full employment, economic performance should be stable. It should not have fluctuation. Same way. There is a new addition to this. Third one, inflation targeting. And also now this exchange rate stability has been moved towards the primary. That is what I have given here as note. See here. Exchange rate stability, and considering financial and exchange rate stability reforms, now it is gaining more importance. See, more and more greater importance. But inflation targeting is the last topic. See, the second topic, that is based on the Ujit Patil committee recommendation. Now inflation is also considered as a primary objectives of monetary policy. But in exam, suppose if the question comes, what are all the primary objectives of monetary policy? Forget inflation targeting, only consider these 2 as per your syllabus part. And rapid economic growth, debt management, moderate long-term interest rate, adequate flow of credit to production sector, all these are other objectives. So this is the very first topic. Now comes transmission mechanism, one of the most easiest topic. Whenever interest rate changes in the economy, how it will affect on economic activity and inflation in the country. There are 4 channels here. You have to remember the headings of the channel. Sometimes they will give an odd one out. Which among the following is not a monetary policy transmission, they will ask. Out of the 4 options, see, first and foremost, savings and investment channel. Second one is cash flow channel. Third one is asset price and wealth channel. Fourth one is exchange rate channel. Only 4 channels are there. Very simplest way of understanding them. See, you tell me, when will you save more money? In bank, if interest rate is more or interest rate is less? Interest rate is more, you will keep money in bank. If interest rate is less, who will keep, sir? You will take out. Same way, if interest rate is less, will you borrow more money or will you save more money? We will borrow more money. We will not save more money. See, whenever interest rate decreases, see, lower rate of interest on the bank deposit, that reduces the incentives for the households to save money with the bank. But when there is a lower interest rate, now household people will come and borrow more money and they will go and invest it on their housing, their dream home, apartment, or building constructions and all. But businessman, when there is a lower interest rate, he will come forward to borrow loan and invest it on his capital projects. Whichever big project he was waiting for to buy land, machinery, equipments and all, he will rather using his own funds, he will use general public money to run a business now. That is what savings and investment channel is all about. Next comes cash flow channel. Very simple concept. When does the money will flow inside the banking system? When does the money will flow outside the banking system? That is also mainly dependent on interest rates. Interest rate high, banking flow inside. Interest rate low, from the bank going outside. And asset price channel. When the asset prices are increasing day by day, now people's wealth will also increase. Suppose I bought one property, I bought a land in 2022. Today in 2026, its value is 1 crore. When I bought, it was just 20 lakh. Wow, nice. Now I will take the document as a collateral. I will go pledge that and I will borrow more loan. The more the asset value, the people's income will going to increase and their lifestyle is also going to increase. You can use that same document as a collateral to borrow more and more loan. See, higher asset price increases their equity to borrow money from the bank as a collateral. Same way, lower interest rate is there in the bank. Asset prices are higher. People will come borrow loan and buy the asset. That is what our parents will do now. Dream home, let me say they want to construct, they want to buy some piece of land. All of this. Exchange rate channel. See, next in chapter 9, I will speak about this. At the moment, I will just give you the outline of exchange rate channel. See, simple concept. Let's assume $1 is 95 Indian rupee. Now this is becoming $1 90 rupees. This is called currency appreciation. That is domestic currency appreciation. When our domestic currency appreciates a lot, exports will fall, imports will increase. Complete opposite. When $1 becomes 100 rupee, this is called as domestic currency depreciation. When domestic currency depreciates a lot from India, exports will increase, imports will decrease. So this you need to remember, and here we are speaking about currency appreciation. Whenever in India interest rates are low comparing to rest of the world, in the entire world interest rates are high on investment, but in India interest rates are low. People will say tata bye bye to India. They will not invest in India. Whoever has invested, they will take back their money and they will say bye bye. They will go out. Now observe. Lower interest rate reduces the returns on investment from the assets in India. So lower rate of returns, demands for assets in India will go down, and reduce in the interest rates will be the lowest exchange rate. That means exchange rate will become lower now, making foreign goods and services more expensive comparing to produced in India. That means we will stop importing. Sorry, here. Sorry. We will stop importing. Foreign goods and services becomes more expensive, or Indian goods will become cheaper. Depreciation, sorry. We spoke about that. Clear? So this part. A lower exchange rate adds more and more inflation because imports are becoming more and more expensive in Indian rupees. So this is the concept. Again, once again, the same thing we will explain it in tomorrow's class. Exchange rate mechanism. Clear? So that is the third channel. That is fourth channel, exchange rate channel. So these are the four transmission mechanism. First, savings and investment channel. Second one, cash flow channel. Third one is asset price and wealth channel. Fourth one is exchange rate channel. Now comes, this is where the most exam questions are going to come. Sir, I already watched your last May attempt marathon, whole marathon just now. Sir, what should I do now? Should I watch this marathon or should I solve more MCQs? Better to go with more MCQs. If you have not done PYQ, then you can watch this. After every chapter, important topics I'm doing with PYPs, that is previous year papers. Past 5 attempts paper I'm doing, sometimes 6 also. Few questions are there in the September 24. So I'm solving from that. The more MCQs will help you, especially RTP, MTP, PYPs and 9 mock papers of ICI and ICI material questions. These is mandatory, you should finish. Still you need extra question. My material questions are there, backside around 1500 to 1800 questions. In micro alone, macro another 1500 to 1800. Okay, chalo, let's continue. Operating procedures and instruments. So this is related to RBI concept. See, in RBI concept, there are two things. One, quantitative measures, and second one is qualitative measures. Under quantitative, we have reserve ratio and open market. Already open market operation I explained. See, that is buying and selling of government securities. When will RBI purchase security? RBI will buy security whenever there is a liquidity constraint in the economy. Economy is in the deflation. When economy is in the deflation, RBI will buy back the security when there is a liquidity constraint. When will RBI sell security? When there is a excess liquidity in the economy. When there is an inflation. On behalf of government, they do it. And why does this open market operation has to be conducted? Because of temporary liquidity mismatch which has happened because of foreign capital inflow. This is important. And here CRR and SLR concept. See, whenever the deposits are coming inside the bank, this part, they ask to keep a reserves now. This money will go with the RBI. So let's take up one more example for your better understanding. Assuming 100 rupee is received into bank account in the name of deposits. This gets divided into three parts. Let's say the very first part is CRR, cash reserve ratio. Let's assume out of this 100 rupee, some 10 rupee. Now a commercial bank has to maintain with RBI. This is called as CRR, cash reserve ratio. And the second concept is SLR, statutory liquidity ratio. Assume some 40 rupees. They have to maintain it in the form of gold or RBI approved securities. Liquid money for their day-to-day operations, and also RBI, one second. RBI approved securities, that is usually government securities. This bank has to keep with themselves. This is called SLR. And remaining money can be utilized to give loans and advances. In the given scenario, another 50 rupees. If RBI doesn't want to give more loans, they will say, earlier you were keeping 10 rupee, now shut and come and keep 15 rupee. Earlier you were maintaining 40 rupee, now you maintain 50 rupee. 50 plus 15, 65. Now remaining loan money available is only 35. So like this, RBI can cut down that. So CRR, cash reserve ratio, portion of bank deposit which RBI should get the money from commercial bank, or commercial bank has to deposit with RBI, that is CRR. Portion of deposit which a commercial bank has to maintain with themselves in the form of gold or RBI approved security, that is called SLR. So this is required ratios, reserve ratios, CRR and SLR concept. Clear? And on this CRR, commercial banks will not earn any kind of interest. See, they will earn no kind of interest or profit, nothing. They don't earn. Clear? Next comes qualitative tools. Marginal requirement. Now let's say I have a property worth of 5 crore in corner site in Coimbatore. I will take that property papers. I will go to the banker. I will say the property is worth of 5 crore. Give me loan worth of 5 crore. Now bank manager will say we can't. What if like Vijay Mallya, you will take a loan and you will abscond? Possibilities are there, right? You are a stupid fellow. You may do this. So better we will only keep 80% as a loan. Another 20% will keep it as a safety stock. Who decides the 20%? RBI. RBI time to time they will be changing on your collaterals. That means whatever we are coming to pledge, how much of safety stock we have to keep aside while borrowing. See that RBI prescribes a certain margin. That means safety stock against collateral. Like for example, 20%, 15%, 25%, which in turn impacts the borrowing habit of a customer. That portion, whatever RBI decides, that you will not get as a loan. That means 20% you will not get as a loan. Only remaining 80% you will get as a loan. That is called marginal requirement. Moral suasion. Morally pressurizing. Morally persuading. See, recently I went to withdraw cash from my own account in Kotak Mahindra Bank. For withdrawing my own money, stupid fellow, they have levied charges. Withdrawal charges. I was like, stupidity. Yes. RBI is saying we don't want to encourage cash transaction. We want only online transaction. Even from your own account, if you withdraw money, we will levy the charges. Upon that charges, Nirmala Aunty share is also there, 18% GST. Everywhere Nirmala Aunty is looting. See, we know that people don't like it. Banks don't like it. But still you have to shut and follow that. Whatever I have saying, you have to follow that. That is called moral suasion. Morally persuading. Morally pressurizing commercial banks to follow instructions set by RBI. See, like for example, in this CRR concept, see, you have to keep it only in RBI approved securities only. That is government security, not in any other security. Even though it provides a better returns, you can't keep like this. Morally pressurizing. Selective credit control, for which business to give loan, for which business not to give loan. So go and take a loan for CA, CS and CMA coachings. You will never get. For engineering, be calm and all, you will get. Even though you are unemployed, you are going to get it. They know how to recover it back. But competitive exams and all, we don't give a loan. Like this. For what purpose loans to be given, for what purpose loans not to be given. Speculative purpose, gambling, betting purpose, loans cannot be given. So RBI will decide, select the credit term. That means for only selected industry and for specific business, not for every business. Speculative business and all, they don't give a loan. Next comes market stabilization scheme. See, earlier we had this concept of market stabilization, but presently we don't have. The concept name is called bank rate. See, earlier commercial banks could have borrowed a long-term loans from the RBI. Now this facility is scrapped. It is no more existing. Now, if at all you don't maintain this proper CRR and SLR, this proportion, for levying a penalty, we use this bank rate. This bank rate is now called as a penalty rate. Prescribed penalty for not maintaining proper CRR and SLR. Earlier, to borrow the long-term funds from the RBI, commercial bank used to get that through a bank rate, but now it is no more existing. Now everything is controlled only through LAF facility, liquidity adjustment facility. Kindly mark this as important. Under this, we have a repo concept and reverse repo rate. Repo rate means lending rate of RBI. When RBI lends loan to commercial bank at a specified interest rate that is only for a short term, that is called repo rate. Whenever RBI grants a loan to commercial bank for a shorter duration of time, usually 2 weeks, 14 working days, by accepting a collateral security as a repurchase agreement, that is called repo rate. Reverse repo rate, completely opposite. Borrowing, RBI will only borrow. Borrowing rate of RBI. When commercial banks have more money, excess liquidity, commercial banks can keep that funds with RBI. For that, RBI will only give an interest rate. In simple practical terms, if I have to call, RBI is only borrowing money from the commercial bank. That is called borrowing rate. That is called reverse repo. Reverse repo is always 1% lesser than repo rate. This is important. You need to remember. And this repo rate is a short term. Earlier, there was a long term facility, but now it has been scrapped. No more existing. That is called bank rate. Clear? Okay, sir. First time the bank will come, we will help under the concept of repo rate. Once again, if they come within that 14 days, even before giving back this money of repo, whatever they have taken, once again, if they come, will they help? Yes, but not under LA facility. This time under MSF facility, marginal standing facility, but not under this repo rate concept. 1% more than repo rate concept. Repo plus 1%, that is called MSF. And even that money, we will not give unlimited money and all. Maximum, whatever you are supposed to keep SLR, 1% of that SLR money. See, MSF rate can be a maximum of 1% of your SLR security. Now, these informations are important. This formula and this maximum of 1% of SLR security can be given as MSF rate. This is where exam questions will be asked. This is what is important. This is the concepts of RBI, qualitative and quantitative. Under quantitative, we have open market operation and required reserves. That is CRR and SLR. Under qualitative, we have moral suasion, we have marginal requirement, selective credit control, market stabilization scheme, liquidity adjustment facility. Under liquidity adjustment, repo rate and reverse repo rate. In this reverse repo rate formula is repo minus 1%, MSF rate, that is marginal standing facilities, repo plus 1, that is 1%, maximum of 1% of SLR security. This is the main important element of the chapter. Clear? So last topic of the chapter 8, that is inflation targeting concept, organization structure for monetary policy decisions. Clear? So now Reserve Bank of India and Government of India, both of them have entered into an agreement called as Monetary Policy Framework Agreement. As per this agreement, now they are trying to achieve a inflation rate, targeted inflation rate. See, once in 5 years, see, suppose if anyone is watching this marathon by chance, in 2027, after January, from May 2027 attempt, you have to go with the latest material because the datas and figures might have changed. So if anyone is watching this marathon, after January 2027, the exam which you are watching this for, suppose by chance if it is May 2027 exam, then the datas will change. Don't follow this blindly. Clear? Once in every 5 years, now RBI and Government of India has come up with the inflation targeting. Presently, as per the syllabus which is applicable for September 2026 attempt exam, is from the August 5th 2016 to 31st of March of 2021. They say we need to achieve a target of 4% consumer price index inflation, CPI inflation. 4% is a target with upper tolerable limit of 6%, lower tolerable limit of 2%. Suppose, sir, what if we don't achieve this 4% or achieving more than 6% if it goes or less than 2%, that is called as failure. Then how exactly we consider it as a failure? In any 3 consecutive quarters, boys, not the quarter what you are thinking. We are speaking about every 3 months, like April, May, June is quarter 1, July, August, September is quarter 2, October, November, December is quarter 3, January, February, March is quarter 4. In any 3 continuous quarters, see, average inflation, if it is more than upper tolerable limit in any 3 consecutive quarter, that is called as a failure. Same way, in any 3 consecutive quarter, if the inflation target is less than lower tolerable limit, it is called as a failure. So we try to achieve the target. And there is one more beautiful information. This will be an exam question. Once in every 6 months, RBI will publish a report called as Monetary Policy Report every 6 months. It speaks about sources of inflation, from where exactly we are getting the inflation for the next upcoming 6 to 18 months. This highlighted areas are important one. This inflation targeting is not just followed in India. This is also followed in other countries like New Zealand, USA, UK, European Union, and Brazil. Going further in future days, like how we are having a inflation targeting as a concept, in further days also we will come up with a nominal GDP targeting for growth rate. This was your chapter number 8. Clear? So inflation targeting concept under monetary policy framework agreement. There is also a committee called as Monetary Policy Committee, MPC, which has been set up. See, under that monetary policy committee, we are working, and this entire inflation targeting has to be considered as a primary objective. This was suggested by Ujit Patil committee. Which committee? Ujit Patil committee. And this concept of CRR and SLR was introduced by Narasimhan committee, which is given in the summary. In the same unit number 3, in summary it has been given that LAF facility, liquidity adjustment facilities, all that, repo rate, reverse repo rate, all of this was recommended by Narasimhan committee. Wait, let me show the question only. Once they have asked a question from this area, man. See here, question number 52. Liquidity adjustment facility, that LAF facility was introduced by RBI on the basis of recommendations of Narasimhan committee on the reforms of the banking sector. This information, this Narasimhan committee information is given in summary, not in the main content like that. Next, they may come up with a question about this Ujit Patil committee, who recommended to have inflation targeting as the primary objectives of monetary policy. That is by Ujit Patil committee. They may come up with a question like this. And what does RBI publish as a report once in 6 months called as Monetary Policy Report? That will have a source of inflation for the next upcoming 6 to 18 months. Clear? So this is the main information of chapter 8. By this, entire chapter 8 comes to an end. Any specific doubt in any of the topics of chapter 8 before moving into PYQs, previous year questions? Our YouTube live students. Okay. Chalo. Chapter 8. Already we solved this also. Which of the following is not a function of money? Easily reproducible. No, not easily reproducible. Who gave the concept of aversion of risk? James Tobin. What type of currency is issued by the central bank? Fiat money, materially worthless. What is the formula of excess reserve? Total reserves minus required reserves. What will RBI publish once in 6 months? Monetary policy report. Reverse repo rate is repo minus 1%. Real money, nominal money adjusted with the price level. Same like GDP deflator concept. Nominal GDP, real GDP. Clear? This is September 24. Next, Jan 25 term paper. Which of the following is not a characteristics of money? Easily reproducible. No, not easily reproducible. Currency issued by central bank is called fiat money, high powered money, monetary base. Next, already we did this numerical problem. M1 also we calculated this. Penalty rate. Just now I said the concept of penalty rate earlier. Bank rate has been now converted as a penalty rate. Under which facility? MSF facility, marginal standing facility. See, MSF is the penalty rate at which RBI lends banks over and above the concept of repo policy. Don't go and write answer as bank rate. Earlier it was existing, but now it is no more existing. This bank rate is only now called as a penalty rate under MSF facility. Next, LAF facility. I said Narasimhan committee. Money created by commercial bank is called as credit money. The term public does not include bank and governments. They are not the producers of money. Sorry, they are the producers of money. Producers of money is not under the definition of banking system. See, this is credit multiplier questions. Here, calculate the total credit money created. Leave out multiplier. Credit money, that means 1 by RRR into initial deposit. So we should make into initial deposit. Initial deposit is how much? 12 lakh. RRR is 15%. So simple. 1 divided by 0.15 into 12 lakh. 80 lakh is the answer. Next, currency with public, already we solved it. That's it. So, time deposits, already I spoke about. Liquidity trap, when interest rate becomes almost zero, people wants to hold cash in hand rather than over as a bond. M1 is not included. Which of the following is not included in M1? Time deposit, because that comes in M3. Next, I said what does the term Y represents in MD is equals to proportionate of PY. This comes in second theory, Cambridge theory. Y is a real national income, PY is a nominal income, K is a proportion. This already we did public definition. What is that maximum MSF rate? That is over and above repo rate. What is the maximum of MSF rate that we will provide? 1% of statutory liquidity ratio, 1%. That's it here. Chapter 8 here. Which monetary tool is used to check a temporary liquidity mismatch because of foreign capital inflow, open market operation? I just underlined that word. I asked you to remember. Be careful. Remember is what I said. See here. To keep a temporary liquidity mismatch in the market owing to foreign capital flow. See, owing temporary liquidity mismatch to market of capital, foreign capital flow, open market operations. M3 calculation. In M3, first M1 calculation, currency notes and coins, yes, added. Demand deposits, added. Total post office, no, it comes in M4, subtracted. We don't want it. We don't want to consider at all. Time deposit, yes, add it. M3, it comes under savings deposit of post office. No, that comes under M2. So we don't want this last one and this one. Only these three should be added. 1, 2, 3. Next. Speculative demand for money becomes perfectly elastic, liquidity trap, and it is parallel to x-axis. Next, according to Milton Friedman, how does the price level as a determinant affects the nominal demand for money? According to whom? Milton Friedman. What did Milton Friedman said? Future incomes, present value. When there is a rise in price level, that increases the demand for money. When price level of the asset goes up, demand for money will also go up to buy that asset. MSF rate, see, repo plus 1 MSF is also correct, repo plus 1 is also correct. Here instead of giving plus 1, if they have given properly MSF rate like this is only actual correct is option 1. Here only and only option 1 is not there. So along with 1, we should combine with 3 plus 1. So 1 and 3. What is the primary objective of monetary policy in most countries? Price stability and economic growth rate. Inflation targeting was added later. Next, already we did this. Which of the following statements are true with respect to cryptocurrency? Crypto, is it legally recognized in India? No. See here, they have achieved significant legislative recognition. No legislative recognition. They are not legally recognized in India as a currency. Yes, they are not legally. They are not classified as a money. No, they are not at all categorized. Correct. In India, that serves as a legitimate measure for payment. No, we can't accept it as a payment. 2 and 3 is correct. Yes, 2 and 3 is correct. Okay, which of the following is not a quantitative tools? By the way, what are the quantitative? Open market operation and required reserve ratio. CRR, SLR. See, CRR, SLR. Open market operation. Selective credit control is qualitative, not quantitative tools. We did this already. See, for the initial deposit of 6 lakh, credit creation is calculated as 50 lakh. They have only given the answer, credit creation. See, what was the formula? Credit creation is 1 by RRR into initial deposit. This was the formula. Credit creation, they have only given 50 lakh is equals to 1 by RRR. So, required reserve ratio is what we have to identify. RRR should be identified into initial deposit 6 lakh. So, simple. 1 into 6 lakh is 6 lakh only. So, this will become like this. 50 lakh is equals to 6 lakh divided by RRR. RRR will go to LHS. 50 lakh will come to denominator RHS. So, simple. RRR is equals to 6 lakh divided by 50 lakh. What is 6 by 50? 0.12. That 0.12 is nothing but 12%. That's it. January 2026 paper. Chapter 8. Which of the following is not a channels of monetary policy transmission? Savings and investment channel, yes. Exchange rate channel, yes. Cash flow channel, yes. Asset price channel was there, not open market channel, wrong. Next, speculative demand for money can closely link it to watch which of the following situation attractive investment opportunities in future. For that purpose, we need speculative demand for money. MV plus M dash V dash is equals to PT. Tobin, James Tobin, liquidity preference function framed a relationship between which of the following rate of interest and demand for money. That is continued by Keynes only. This already we solved. See, literally easy questions. There is no difficult questions at all. The optimal average money holding is negative function of which of the following? Nominal interest rate. If interest rate is more, you will not keep money in the hand. Opportunity cost will be there, na? When bank interest rates are high, bond market interest rates are high, are you mad fellow to simply keep money in your hand? So money holding, average money holding will become negative with interest rates. But transaction demand and precautionary demand has positive relation with income. When you earn more, you will save aside more. Next. When the RBI uses persuasive, that is morally persuasive measures to convince banks to hold only in government security, moral suasion. Same examples I give. Who is responsible for determining the inflation target for RBI under the monetary policy framework? Both central bank in collaboration with RBI. Which action does central bank performs during open market operations to introduce high liquidity? Introducing high liquidity, that means we are flowing money into the system. That means we are purchasing the securities. When we purchase security from RBI, money will go into the system. So purchasing of government security. When you sell security, people will buy. So money will come from people to bank inside. But here we are introducing high purchasing money into the economy. We are putting money into the system. That means we will purchase. RBI will purchase back. See, money multiplier would be larger in which of the following? When all that currency ratios are lesser, already I spoke about this. That's it, chapter 8, last paper, May 2026, the recent attempt paper. Okay. Controlling credit by not introducing any selective industry. That means for a particular industry, we should not give it all speculative business. Which is that? Selective credit control measures of RBI. Qualitative tools. Already we solved this. Okay, which of the following is the rate set by the monetary policy framework, and it should be a maximum tolerable, minimum tolerable, which rate? Inflation rate, na? Achievable inflation rate, target, maximum tolerable, lower tolerable. Next, this also we solved it already. This also we solved it already. The degree of adoption of banking habit by the public. Whether public is keeping money with the hands or money with the bank, that banking habit is calculated by currency to deposit ratio, that small c, capital C by capital D. If that ratio is more, that means people don't have more banking habit. If that ratio is less, that means people are not willing to keep cash in hand, rather they are willing to keep money with the bank. LR is equals to proportionate of income. This is Keynesian theory, transaction demand for money. Next. See, May 26 attempt paper, recent attempt paper. What is the target set by the Government of India and the RBI for achieving the inflation between August 5th, 2016 to 31st March 2021? 4%. Upper tolerable 6, lower tolerable 2, but achievable. CPI inflation is 4. Interest rate liberalization and reduction in the controls on the bank in India by the Reserve Bank of India with regards to interest rates chargeable on loans and payables on deposits are closely associated to which of the following economic reforms? This is monetary and financial as well as monetary reforms, both 1 as well as 2. Suppose in your example, if the financial is not given, most appropriate answer is monetary reforms. Which of the following is not a general characteristics of money? It is not perishable, but they have given perishable. So it is effortlessly recognizable, yes. Easily transportable, possess uniformity, yes. All these three are correct, but this is not a characteristics. That's it. Yep, by this, even previous year questions of entire chapter 8 comes to an end. Katam, clear? So every day, whenever we are getting time, we are also doing that chapter 10. If you remember, yesterday I did until the 1980s. If you remember, I spoke about this. I gave a background about till 1980 what happened. But 1980 and later is also important from the exam point of view. That is where most important point of it. So I will just give you the background. Like what all have to be studied. What all are the elements. See, era of reforms by Stilt. I explained this entire. See, anywhere the questions can come. All this. MRTP Act, Mod VAT, SEBI got its powers in 1992. But SEBI was established in 1988. After Arshad Mehta scandal, they got the powers. OGL, full form, Open General License. All of these are important. Private sector reforms underwent a resolutions and all the changes was made in 1991. So year after now, especially 1991, this is crucial in India. So this is where most of the things gets interesting. See, in India, we just had 1.2 billion of foreign exchange reserves for importing essential imports. That was only sufficient for 2 weeks. This is where the crucial turn happened. At that point of time, PV Narasimha Rao was the Prime Minister and Manmohan Singh was the Finance Minister. So they went and asked a loan with IMF. IMF agreed to give a loan, but 3 simple conditions. See, boss, in India, in your country, rules and regulations are very strict. For private people, you are not at all giving freedom. Everything is controlled by your PSU. Only if you liberalize your rules, I will give loan. And if your PSUs, whoever is not working well, Allah, sell them to private. Privatization has to be made more and more. I will give loan. And no more closing countries, doors and all. Full, you have to open up the gates of your country. You have to treat entire globe as a one single market. Globalization practices. So LPG. Liberalization, privatization, globalization. India didn't have an option. No other countries agreeing to give a loan. So we had to follow this. That is when we made a big changes into our financial reforms, monetary reforms, industrial reforms. Every reforms we started bringing in 1991. See, very first one, fiscal reforms. Whatever the deficits, what we had, whatever problems we had with finance, tax system, entire thing got re-changed in 1991. See, introduction of new slab rates, transparency in tax system, ensuring better tax compliances, and curbing all unnecessary government expenses, reducing subsidies and unwanted subsidies. And whatever the government assets, whatever the government, let me say PSUs which were not working well, OLX may bech do, disinvestment of PSU stakes, encouraging more and more private participation. All this we did, and RBI also started giving more private bank license only after 1991. See, monetary sector reforms. We liberalized and interest rates in India, and we also depreciated our Indian currency. And remember, this one point is most important. I will speak about this now. See, interest rate liberalization and reduction in the control of banks by Reserve Bank of India. We opened more and more private banks in India after 1991. We introduced this concept of CRR and SLR. We reduced the rates and liberalization to open more branch license. And also SEBI got the powers in 1992, even though it was established in 1988. But powers was given in 1992 after Arshad Mehta scandal. And new industrial policy reforms. So in this, we made a major changes in industry. Earlier, 18 plus, let me say majority, not even 18 plus, majority of the industries was only exclusively reserved for PSUs. First, we brought it down to 18 and we started ending that license raj. For earlier, each and everything you should take license. We ended that regime, and from 18, later we brought it down to 5. Now only presently 2 as per your syllabus. Railway and atomic energy. But railway is also open for privatization at the moment. In reality, it is only atomic energy. And public sector were limited just for 8 sector. Later it was brought down to just 2, railways and atomic energy. Earlier we had MRTP Act. We repealed it and we replaced it with Competition Act of 2002 for all these mergers, acquisition, takeovers, competition based policy for all of this. And small scale industry, we made 800 items reserved. Only and only small scale can produce now. But those stupid fellows, even though it was high export potentiality, they were unable to produce. Now we de-reserved. We don't want. Anyone can produce it. And also the number of areas reserved exclusively for public sector was brought down. Now it is only 2. As I said, earlier it was made it to 18 from 5 and again brought it to 2. Foreign investments was liberalized. Until 1991, we never allowed foreign companies nor the foreign funds to enter India. But only after 1991, external trade was further liberalized. Slowly, we started reducing rules. See, earlier, tariff rate was how much? 355 in 1991. Later, we bought down to 85, 50, and recently 2007 and 8 only we bought it down to 10, and we devalued our Indian currency by 18%. We reduced its value, and disinvestment, OLX may beach all the government holdings in PSU stakes, whichever is not performing well, even trade policy reforms, and also export duties and all. See, this highlighted one is important. Tomorrow we'll speak about this. In India, till 1991, we were following a fixed exchange rate regimes. But from 1993 and onwards, India started following a floating exchange rate, especially managed float. And after 1991 till now, what all we have done in this 30 plus years, this example, this is where exam questions will come. From any nook and corner from this area, they may pick up a question. All of this poverty was eradicated, blah, 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 full on. See, in this anywhere nook and corner questions can be asked. And we had something called as 5-year plans. We scrapped it. By scrapping that 5-year plans, we replaced it with Niti Aayog. Now, mid to long term projection, 15 to 20 years of long term planning, Niti Aayog was replaced. But the problem after replacing Planning Commission is Niti Aayog didn't get more powers. Nirmala Aunty Department got more powers. Finance Commission, all this Finance Ministry. Niti Aayog will be just acting as a think tank. They will be also a part of long term economic planning wherever earlier Planning Commission has not focused. Now it will focus not just on the country's level, even every state level, inside the district level, inside that village level. Wherever planning was not considered alarm, there Niti Aayog will consider it as acting as a think tank, and will also include state governments also. See all those highlighted words here. These highlighted words, go through it like a newspaper. From this area, from this topic only, questions will come in the exam. And these are the problems, counterparts of Niti. And especially this is where all this point, 13 points, what is given here, this is where exam questions are going to come. Clear? So this is related to Niti Aayog. Full, entire read-only concepts these topics are. Full on. Nook and corner, anywhere they will touch the questions. No, international trade, I will touch it in tomorrow's class. Chapter 2, tomorrow last day. Chapter 9, we will finish it off tomorrow. 5 units are there. Interesting units. Every unit may take 20 minutes to half an hour to finish it off. 5 units total, around 2.5 hours. We'll finish it off tomorrow. If I also do international trade today, it will be too much. So tomorrow is going to be the last class. Chapter 9, we'll wind it up. Clear? Okay, see here. In primary, secondary, tertiary sector. See, here contribution made to GDP, those informations are important, and almost everything is data and information here. Observe, primary and allied activities of primary. See, it contributes to 18.8% to India's GDP, and 47% of India's population is still dependent on agriculture for their livelihood in India. And all this, see, this index numbers and all, this is not required, leave it off. This informations are important. See, in India, I said now on 23 crops, 1.5 times minimum support price, price control measures, price cap, price ceiling, those topics. This is price floor, minimum support price. On 23 crops, 1.5 times, like this informations are important. What all India is trying to achieve with the agriculture, what all we have made a big changes, and especially this one, this is important. All this Pradhana Mantri dash 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 Yojana, per drop, more crop, Fasal Bima Yojana, crop insurance. From this is where exam question comes. This Inam, once they have asked a question, and problems faced by Indian agricultural sectors. Same logic here also. Secondary sector. What all are the contributions made? And secondary sector contributes for 12.1 crore people. 50% of gross value added comes from informal sectors who is not registered. And also whatever the contribution made by them. And DPIIT, Department of Promotion of Industry and Internal Trade, full form they have asked once. GST concept, Make in India, and ease of doing business. India's ranking presently 63rd in the world. These rankings are important. And one step window, National Logistics Program, Atmanirbhar Bharat, all this. And this electronic fame, electronic machines and all this. 100% FDI was introduced, foreign direct investment, and this one. Remission for duties and taxation of exporting procedures. These questions have come. National Logistics Policy. And I said the Industrial Resolution 4.0 yesterday. 1.0 1948. 2.0 1956, 3.0 1991, 4.0 2005. We have to contribute 25% by the manufacturing in the GDP of the country by 2025. Did they do that? God only knows. See here, I will show the question. From that also the questions have been asked. All the small informations. See here, question number 99. Which of the following aims for national manufacturing policy to increase the share of manufacturing in GDP by 25% by 2025? Like this question, small questions also they will ask. Total 10 marks will come. So second half is where the majority of the questions will come. So the industry contribution to the GDP of the country. Wait, 30%. Here, this is the one. Agriculture 18.8, secondary sector, industry is 30%, remaining 58% is something, 53 odd, service sector, and the fastest growing sector in the India, 53.89. See, usually any country for it matter, from agriculture they go to industry, but India that has bypassed the secondary and straight away from agriculture we have come to the trajectory. That means from primary we are coming to service sector. And these are the examples. See, what are all the achievements made in the service sector? Fastest growing sector in India. Even during COVID, we were booming like well. Top 10 service sector exports comes to India under WTO agreements. And all of this, just go through it like a newspaper. ROC concept. Read only concept. Sir, I omitted chapter 10. Can I omit this for exam? I recommend not to, because see, even if you just read it like a newspaper once, out of 10, easy to score 5 to 7 marks here. Just direct straight away, main questions only they will ask. Some twist and turns and all, some 2-3 questions they will do from nook and corner. Even if you have read like a newspaper, some 2-3 times you read it. Whenever you are free, whenever you feel bored, whenever you feel like throwing away the books of some particular chapters, take this up. Just read it like a newspaper. Full on data, full on information. For sure, 9 to 10 marks will come. So if you are okay to give back 9 to 10 marks to ICI, I don't want your donation, means you can skip this chapter. But I don't suggest you to skip 9 to 10 marks. And usually you know where exactly the question comes from. Second half of the chapter, that is where 7 to 8 questions will come. Hardly 1 or 2 questions will come from the first part. All that British India, ancient India, after independence of India, 1991 and later, that is where more than 7 to 8 questions will come. Sir, in which part micro, macro can be able to score more marks? See, to be frank, micro you can score really well. Macro, the biggest challenge is you have to go little in depth. You have to read ICA material from nook and corners also. Sometimes they will ask question. Sometimes some students, not for everyone, some students may find it little tricky for macro to score. But eventually, if you personally ask me, that trickiness is hardly 5 to 10 marks. So see, in micro, out of 50, scoring 40 is easy. In macro, out of 50, scoring 30 is easy. Definitely 80 to achievable if you have prepared well. Market, national income, Indian economy. National income to scoring paper, that is scoring subject, chapter 6, 15 marks. See, in micro, 2, 3 and 4. That is conceptually interesting and also high from exam perspective, more marks will come. Chapter 1, 5 marks, chapter 5, 5 marks. That 2 put together is just 10 marks. Remaining 40 marks in micro comes from 2, 3 and 4. And chapter 6 for sure 15 marks. 7, 8 and 9, 10. Remaining average 10, 10 marks, 10, 10 marks. That is how it will come. Chapter 6 though definitely 15 marks it will be. So sometimes they may pull it down like 7 marks or 8, 9 marks and they may increase it somewhere. That is how the questions will be. Clear? So tomorrow only and only one single chapter is pending, that is chapter number 9. So even before attending the class, read it once and then come to the class. Total there are 5 units. In that only unit 2 and unit 4 is slightly big. 1, 3 and 5 will get over very fast. It will not take much time over there. So tomorrow will be the last day of this marathon. Tomorrow also same time, 4:30 to 6:30 we will wind up. So by tomorrow the entire concepts will come to an end. Clear? So any other doubts? Your online live students. So you guys were asking, sir, chapter wise revision needed this time. That's why we are splitting and doing chapter wise this time. What is chapter 6? Hey, who is this? National income accounting and Keynesian theory. Clear? Chalo then. We'll wind up. Then we will catch up tomorrow if you guys don't have any doubts. Yes, national income is chapter 6. Unit 1 is national income accounting. Unit 2 is Keynesian theory. In the 2-sector model, investment multiplier, leakages. That is the most important area. 3-sector and 4-sector, very few questions will come. But you have to remember the formulas there. Sir, once kindly explain the fiscal. See that fiscal, just you need to remember this chart. This chart will summarize everything there in unit number 4 of chapter 7 and unit number 1 also. So when there is an inflation in the economy, already people have more money. So we follow contractionary fiscal policy. That means government will spend less money, collect more tax. And budget will be surplus. Since we are not spending more money, but we are receiving more taxes. And we borrow money from the public at that point of time. Complete opposite during deflation. Already when economy is not performing well. So automatically now government has to spend more money, collect lesser tax. So we are spending more, but collection of tax is less. So there is a shortage, deficit. So this two put together is what we call expansionary fiscal policy. Whatever we borrowed during inflation, we will give it back. Public debts will decrease. Sir, is that mandatory to write mocks conducted by ACI? Not mandatory, but I recommend you to write. See, the more new questions you solve, the more new varieties of questions you see. That is always good. And from mock paper, sometime RTP, MTP, straight away copy paste will happen in the main exam. Some 5 to 10 questions. That is one advantage. So that's why I recommend you to write it once. It's not mandatory, but recommended. For practice, is it compulsory? Yes. For practicing, I would definitely say compulsory, you should do it. Chalo then. Then tomorrow, sorry sir, fiscal deficit calculation. Fiscal deficit is simple. Budgetary deficit is there, na? Just remove that word. Only that one word you should remember. That is excluding borrowings. See, whatever the borrowings that we are making, that comes under the capital receipts. We have to just remove that one. See, shortcut. First, we will calculate budgetary deficit. Total expenditure is greater than total receipt. In this total receipts, now we will be having borrowings money. If at all we exclude that borrowings from total receipt, specifically from capital receipt, we will get fiscal deficit. Simple, same logic of budgetary deficit, just this one word gets extra added. We should remove that borrowings money. Sir, how to score marks in macro? For that, what all are the chapters to practice? 6, 7, 8, 9. 10 you can ignore, but I don't suggest you to ignore because equal weightage is there. 16 marks will come from the chapter 6. Sorry, 15 marks will come from the chapter 6. And most of them are numericals in chapter 6 and chapter 8. And easy numericals it is. Yes, in macro only. In micro, 2 and 4 is where numerical comes. Micro scoring, I don't think so anyone has an issue there. Microeconomics. Chapter 10, I'm explaining from 2-3 days, like what to be done, all those things. And tomorrow is the last day of the live, 4:30 to 6:30. Only chapter 9 alone is pending. Less of RTP, MTP. Start doing it. Still you have a time now, Team Guru. Start doing it. That will always benefit you. Chalo then, let's catch up tomorrow. Sir, this upcoming exam is my 3rd attempt so far. I have relied only on your marathon videos and class 12th basics without touching the ICA module. Can I clear the exam using just your study material? Clearing the exam, yes. I will only say yes. Up to 60 scoring, yes. With marathon and my material, up to 60 marks, even a fresher can crack it off. Provided if you have understood the syllabus, if you have understood the concept. If you're by-hearting and all, definitely that's not possible. Clearing is never difficult at all. See, that is when scoring above 60, scoring above 80 is where additional preparation needs. Just for clearing 40 above, 50 above, definitely sufficient. Mocks from our side, yes, it will be there. Arivu will conduct it. I hope it should be already done by now. Yep. Chalo then. Let's catch up tomorrow then. The last class tomorrow will be chapter 9. It will be done. So if anyone still doesn't have a conceptual clarity, if you are still finding it difficult with concept, better watch my Jan 26 marathon. That is 20 hours of marathon video is there. Sir, I have a conceptual clarity better with MCQs and marathon style I needed. Then May 26 marathon. Sir, only exam oriented, important topic and PYQs has to be covered. Then this marathon. Yes. Materials and mocks are enough. Yeah. Yeah, Muklin. Mukilen. Yeah. So in today's class, we shall be discussing about the chapter 9, that is international trade. So by today, we will be completing with our entire syllabus part, that is a revision of all the chapters in the micro as well as macro. So let us get started. So there are total 5 units in the chapter 9. So out of that 5, 2 and 4 is slightly bigger. 1, 3 and 5 is the smallest units. So unit number 1 speaks about theories of international trade. So first and foremost, we need to understand what do you mean by international trade. So international trade is not just exchange of goods and services. Along with goods and services, it is also an exchange of resources between the countries. So we consider it as it is much more complex than what we do in an internal trade. So international trade is not just exchange of goods and services. That is also an exchange of resources. And whenever we conduct an international trade, that involves greater complexities, multiple nations' currencies are involved, shipping business is involved, multiple documentation procedure is involved, multiple legal environment is involved, tariff that refers to taxes, visible measures are involved, non-tariff measures, that is other barriers, quota means quantity restrictions are involved. So because of all these multiple elements, international trade becomes much more complicated than domestic trade. And international trade is just an extension of a domestic trade. What we do inside the country, same we are doing outside the country, but more complications will come into picture. And international trade should always be mutually beneficial. That means it should not be a zero-sum game, which is not a zero-sum game. So it should not be a zero-sum game. That means it should be beneficial for both the nations who are involving in an international trade. So there are mainly 5 theories of international trade. The very first theory is a theory of mercantile view. Second one is theory of absolute advantage. Third one is theory of comparative advantage. Fourth one is HO theory, Eksha and Olin theory. Fifth one is new trade theory. So all these 5 theories are important. From any particular theory, the questions can come. Yeah, this unit is also important. 1 or 2 questions will come usually. See, in this entire units now, 2 and 4 is little bigger one. 2, 4 and 5 are the most important from exam perspective. And RTA unit 3, that one similar questions will come, easy questions will come over there. I will discuss about it. So the very first one, theory of mercantile view. What exactly is this theory of mercantile view? That means a nation will always try to only and only export. We don't want to import at all. We should impose a barriers on import. We have to only and only export goods and services. That is what we say. See, they say it is a zero-sum game, but international trade should not be a zero-sum game. But here it is a zero-sum game. One country will give, another country will gain. See, they say a country should export more and more. They should only export in order to earn specie, that is precious metals. Earlier days, we used to trade with gold and silver, and we should not import. We should impose barriers to import. So we are going to get more and more tariff whenever, let me say, for example, we export more rather than importing. See, this is mercantile view. A mercantile view always says that we should only and only export more. We should not at all import. So we have to impose barriers on imports. We should only and only export. That is mercantile view. But the very first economist who said international trade should be a mutually beneficial, it cannot be like the zero-sum game, as Adam Smith, the father of economics, he said, international trade is not a zero-sum game. That means it should be mutually beneficial. Mutually beneficial trade. So how, for example, now between 2 countries, let's say we have to take a comparison. Now let's take a comparison. India and USA. Between rice and wheat. Now I'm considering labor hours here. Lesser the labor hours is always a better. Now let's say USA to produce rice, to let's say to produce 1 unit of rice, they are taking 10 labor hours. But India is taking 2 labor hours. So who is better? India is better. In terms of wheat productivity, USA is taking 5 labor hours, but India is taking 20 labor hours. Who is better? USA is better. So India is better with rice productivity. USA is better with wheat productivity. So mutually benefiting trade is possible. Whichever country can produce at absolutely lower labor cost, that nation is better. So in this case, India is better with production of rice. See, India should produce only rice. USA should produce only wheat. We find India has an absolute advantage in rice productivity. USA has an absolute advantage in wheat productivity. So this was the theory which was given by Adam Smith, called as theory of absolute advantage. See, there should be unrestricted trade and free international competition. Absolute cost advantage is determined by mutually benefiting international trade. The absolute cost advantage theory points out that country will specialize in the production as well as in the export of the commodity in which they have an absolute cost advantage. In whichever country they can produce at a lower production cost in terms of a labor productivity, labor hours, they are better. In other words, exchanging a goods between these two nations will take place only if at least one out of these two countries can produce a commodity at an absolutely lower production cost than another country. Then mutually benefiting trade is possible. In our example, India has a benefit in rice productivity, USA has a benefit in wheat productivity. Sir, I just completed your May 26 marathon. Is it enough to September? Yes, that was little bit brief with exam questions. Yeah, that should be sufficient. Same thing now from exam perspective, exam oriented, we are doing here in the recent September marathon year. Okay, now what if, sir, one country is only specialized in production of both the commodity? Like you said here, India was good in rice, USA was good in wheat. What if one nation is only good in production of both? Now observe. India is only good in production of rice as well as wheat comparing to USA. Now, how come mutually benefiting trade is possible? So, in such a case, still mutually benefiting trade is possible. We should take out a ratio here. If I take out ratio, can I say this is 5:1? This is 4:1. No doubt, India has advantage in both the productivity. India has greater advantage in rice, also an advantage, lesser advantage in wheat. Comparing between rice and wheat, ratio is higher in rice, ratio is lower in wheat. So India has a comparative advantage with rice now. See, that means I have advantage with both. India is having advantage in rice productivity as well as wheat productivity. In both they have an advantage. More advantage in rice, less advantage in wheat. That is what I call more advantage as comparative advantage. So India, you select rice, you forego wheat. Let USA produce wheat in order to have this mutually benefiting trade or good international interrelationship. So why you should only produce both? And moreover, human wants are unlimited, but nations' resources are limited. You can't produce each and everything that you are desiring to have. So India, you select what you are really good at. Greater advantage at rice. You also have an advantage, but lesser advantage in wheat. If I compare the same with USA, USA has disadvantage in both. Lesser disadvantage in wheat, greater disadvantage in rice. So disadvantage country will select lesser disadvantage, advantage country will select greater advantage. Like this, still mutually benefiting trade is possible, and this concept is introduced by David Ricardo. He spoke about comparative advantage. That means in terms of absolute advantage of Adam Smith, greater advantage, lesser advantage, or greater disadvantage, lesser disadvantage. That is explained by David Ricardo. In the given case, India is having an advantage in both, but greater advantage with rice, lesser advantage with wheat. But USA has disadvantage in both, lesser disadvantage in wheat, greater disadvantage in rice. Same thing Heberler explained with the concept of opportunity cost. Identify opportunity cost inside the country and then compare it between the countries. Whichever has a lesser opportunity cost, that country is better. So that was also explained by Heberler, same concept. So this was the first three theory. First one, mercantile view. We should only and only export. We should not at all import. The second one, theory of absolute advantage given by Adam Smith. Whichever nation can produce at a lesser production cost comparing with the another country, they can produce and exchange it between the nation. What if one country is only specialized in production of both? In such a case, we should consider who is better in, let me say, in advantage country, both the advantages, greater advantage will be selected. lesser disadvantage will be selected between the comparative nation. Next comes HO theory, Eksha and Olin theory, also called as modern theory of trade or factor endowment theory. In this HO theory, we don't just consider labor. Along with labor, we also consider capital now. We consider both labor as well as capital. In the previous two theory, we were only considering labor. There are total 2 steps in this particular theory. First and foremost, production mobility happen. Later, factor mobility happens. Let's take India and USA as an example. India is a labor rich country. USA is a capital rich country. So India should produce labor intensive goods which they can produce at an absolutely cheaper cost comparing to USA in terms of labor. And we should export that to USA. USA will produce capital intensive good and they will export that to India. So this is how the trade activities will be happening between the countries. But now, in case of factor mobility, we don't produce goods and services and we will send. Rather, we will send our factors of production only. In step number 1, we used to produce the goods and we used to send the goods or services. In step number 2, we don't produce and send the goods. Rather, we send our factors of production only. In USA, labor was expensive. Since from India we sent labor, labor price will be reduced. In India, capital was not available. Interest rates were high in the bank loan. USA will come and invest in India. Automatically, interest rates will fall down. So in both the country, prices of factors will become equalized. So it is also called as factor price equalization theorem. So this is HO theory. We don't just consider labor. Along with labor, we also consider capital. And the fifth theory, globalization theory or new trade theory. Same product is exported as well as same product is imported. Sir, why are they mad enough? Same product is exported as well as imported. There are 2 reasons. One, we have produced at economies of scale. Large scale production we have made. Each and everything we are unable to sell inside our country. So we are also selling outside the country. And because of a popularity, I need Adidas shoes only, Puma shoes only, Nike shoes only. Because of its popularity, Onitsuka Tiger from Japan, we are importing. In India also we are manufacturing shoes, but still we are importing the shoes. So because of its popularity, bandwagon effect or network effect, same product is exported as well as same product is imported. So economies of scale and the network effect. So in globalization theory is an extension of HO theory. Same commodity is exported as well as same commodity is imported. So these are the 5 theories of international trade. The very first theory is mercantile view. The second theory is absolute advantage. Third one is comparative advantage. Fourth one is HO theory. Fifth one is new trade theory. Along with that, Paul Krugman has extended the same HO theory and he said there is no rule that only between capital country to labor country this exchange of HO should happen. No, by and large, capital to capital country, labor to labor countries only it is happening. For which in 2008 he identified the trade patterns of international trade and he got a Nobel Prize. Next, advantages and disadvantages. Just a generic topic here. Read only concept. Still, you may get a question from this areas. Advantages and disadvantages. So by this, unit 1 comes to an end. Unit 1 doesn't have much things over there. Very simple unit it is. Sir, you seem a little down with your energy. Is the whole class absent? Yes, I asked them to attend in online only. Because just for 2 hours, they also want to travel. That's the reason. Yep. Some people are saying September attempt will be tougher. What's your opinion, sir? It doesn't matter, tough or easy. Economics paper can never be tough. That I can say. Economics paper will usually be easy. If you have studied well, if you know the concept, definitely you can easily crack. Bare minimum in economics is 60 to 80. That is like average. That is bare minimum average it is. 60 to 80. De-reserving meaning. That is for small scale industries. In 1960s and 70s, they specifically reserved certain set of items for production. Later, they de-reserved it. That is called de-reserving. In 1991 and later, they de-reserved it. Okay, chalo, let's go to the unit number 2. So, unit number 2 speaks about instruments of trade policy. That means now when we are conducting an international trade, what are all the policies of international trade? Like what we allow for exports, what we don't allow for exports. When we are dealing with WTO members, what are the rules and regulation? When we are dealing with SARS nations, What is the rules and regulation, bilateral and multilateral approach of trade, and what all we allow, what all we don't allow for exports, and what all we allow for imports, and what all we don't allow, what all customs duty we charge. In short, rules and regulations of export and import is what we are going to study in this instruments of trade policies. Clear? So trade policies, those policies which are designed and implemented by a country in order to regulate an international trade. So policies related to export and import, what we do and what we don't do, and approaches of dealing with bilateral agreements and multilateral agreements. In this whole chapter, the main concepts are tariff measure, non-tariff measure, export related measures. These are the three measures. Tariff means taxes, visible measure. Non-tariff means rules and regulation, invisible measure. And export related measures. In that, the very first one, tariff measure, visible measure. There are 15 types of tariff. From this 15 types, anywhere the question can come, and all 15 are easy. And usually I will start with first one, bounded and applied. Later I will come to tariff as a response to trade distortion. Bounded tariff, what is that? Between WTO members, there are 164 WTO members. We have agreed, boss, this is the tariff that we are going to charge between each other. We are not going to charge beyond that. Once we are bound, once we have agreed, the tariff rate becomes permanent. That is a legal commitment not to raise it above the certain level between the WTO members. Sir, what if we have to raise? We have to sit, we have to negotiate with them. After negotiating, we have to compensate. See, after negotiating, we have to compensate with our trading partner for their possible losses, and then we have to increase the tariff rate. Sir, what if, sir, we have agreed to charge 10%? We will charge less than 10%. Is that okay? Yes. Charging less is never a trouble. If you charge lesser than what you have agreed, that is what we call applied tariff. But you can never go beyond what you have agreed. So bounded, once you are bound, the tariff becomes permanent. So between WTO members, that is called bounded tariff. And next comes applied if you charge lesser than what you have agreed, bounded. That is called applied tariff. Now, but sometimes some countries, maybe like China, they are producing at economies of scale. They are unable to sell everything in their country. They will be dumping, like a dustbin, they will be dumping to nearby countries intentionally at a lesser price. So at that point of time, the Indian government will stop that activity by imposing extra taxes over and above bounded tariff. See, legally what we are supposed to charge is only bounded tariff. But a country like China, if they start dumping their excessive produced goods and services in India, then to stop such disturbance happening in our country for the trade activity, Indian government may charge an additional taxes that is called anti-dumping duty over and above bounded tariff. When some countries like China dump their excessive produced and try to sell it at lesser than their average cost. So it creates an unfair advantage to them. My domestic players cannot compete with them. One fine day, my domestic people will close down. Later, China will increase the price. To stop this from happening, Indian government may charge anti-dumping duty. Same way, sometimes India does this to Bangladesh. When Indian government gives a subsidy to our own exporters, textile exporters. So because a cost of production goes down when government gives a subsidy, our own exporters, they are unable to sell everything inside India. They will dump it to nearby countries. We are also dumping. For that, government is giving subsidy. In such a case, the receiving nation, let's assume Bangladesh. Bangladesh government will get to know, okay boss, Indian government is giving subsidy to their textile exporters, because of which they are unable to sell everything. So whatever left out goods are there now, and moreover their cost of production has decreased because of subsidy component. They are dumping into Bangladeshi government. So whichever textile comes from India to Bangladesh, now Bangladeshi government imposes a over and above bounded tariff that is called as countervailing duty because of subsidy element. Without subsidy element, just a dumping activity, anti-dumping duty. With the subsidy element, countervailing duty. And WTO allows both anti-dumping duty and countervailing duty. Both is approved even if it is beyond bounded tariff, and only under the dumping. Only to stop the dumping activity, WTO guidelines will allow. So this is one of the important parameter. Clear? And specific tariff. It's a fixed monetary tax. Kindly remember these keywords. On every single unit, what is a fixed tax? And same way, fixed percentage, constant percentages ad valorem. Fixed monetary value is specific. Mixed tariff, you just need to remember this word or. That means we'll calculate both. Specific or we will calculate ad valorem. Whichever brings more revenue to the government, that is called as mixed tariff. Sir, what if we charge both like the name? That is called compounded tariff. It's not or, now it will become and. See, we are going to charge both A or B. A or B is mixed tariff. A and B is a compounded tariff. Same way, variable tariff. Suppose sometimes you will say to your friend now, one who is going to Dubai, US and all, say their iPhone is priced less. Get me one iPhone from there. Suppose Indian government decides, okay, how much is less? In India, it is 1,50,000. In Dubai, 1,20,000. Difference is 30,000. Nah, shut and pay that as a tax. That is called variable tariff. To make the domestic price and foreign price as equal. Suppose if foreign prices are lesser than domestic goods price. That is called variable tariff. Escalated tariff. If you are importing raw materials, lower tariff. If you are importing finished good, higher tariff. Next, MFN tariff. Between WTO members, whatever we have agreed, bounded. Non-WTO members, higher than what bounded is there. So that is called MFN. Between WTO agreed, between non-WTO member, higher tariff. Next comes preferential tariff. Nearby countries will form their own small friendship group. And between themselves, they will charge much more lesser taxes. That nearby countries need not be WTO members. They may be or may not be. Nearby countries, let's assume tomorrow India will create this preferential tariff with, let's say, Sri Lanka, Bhutan, Myanmar, Nepal. And between ourselves, we will create a lesser taxes. That is called preferential. Nearby countries. What is it? Nearby countries. Best example is NAFTA, North American Free Trade Agreement between Canada, Mexico, USA, European Union region, ASEAN, SARS, GSP. Next comes technical tariff. Different spare part, different component, different taxes. Remember this keyword, specific contents. Suppose I'm importing a solar module or solar cells. Solar cell different tax, on a battery every kg extra tax, like this plus C plus. Additional tax, different spare part, different tax. Tariff rate quota. See, in this, tax is also there, quantity restriction is also there. Up to certain quantity, either no tax or very lesser tax. Once that quantity exceeds, higher tax. Prohibitory tariff, as the name itself says, now prohibitory, intentionally charging exorbitant high rates of tax, higher taxes. That is called as prohibitory tariff. Next comes import subsidies. When government gives a subsidies that brings a benefit to the producer, automatically his cost of production goes down. That is called as a negative import taxes. Usually on per unit or maybe on the volume of percentage of goods imported, they will give a subsidy. So these are the 15 different types of tariff measure. These are the visible measures. In this, any question, anywhere it can be asked. All 15 types you have to remember. Sir, is there any shortcut to remember these measures of tariff? I often get confused. See, in shortcuts, the problem is there are some slight minute differences between one another. There, you will not be remembering that minute differences if I teach a shortcut here. So I generally don't teach a shortcut here for that very reason. Small minute differences are there. For example, here variable tariff between domestic price and foreign price. Escalated is raw material and finished good. Like this, we have to know the concept. So better to go with the concept rather than just a shortcut here. Wherever shortcuts are there, I will definitely teach. But unnecessary shortcuts, I will avoid it. So these are visible measures. And next comes invisible measures. This is even more interesting. Invisible measures. But every single time we can't use it. See, according to WTO agreement, non-tariff measures are allowed only under certain circumstances. Not under every circumstance. Only when there is a certain circumstance arises like COVID situation or something emergency arises, then only we can go with non-tariff measure. And such non-tariff measure is also of two kinds. Technical, non-technical. Under technical, two terms are there. SPS and TBT. And under non-technical, 13 different types are there. Even this non-tariff measure is also 15 types. Divided into 2 plus 13. Technical and non-technical. Under technical, SPS, remember this. Protecting of animal life, human life, plant life, biodiversity life. Because of any addictive pest, contaminants, toxin, disease-causing organism. COVID-19, disease-causing organism. Because of this, we can make a complete ban or prohibit your product for a time being in our country. Like this, we can impose anything. Temporarily, I can prohibit it or totally I can ban because of your commodity, because of any of your product has got addictive, pest, contaminants, toxin, disease-causing organism. Because of that, my human life, animal life, plant life, biodiversities are getting affected. Then we will impose the restriction. That is SPS. TBT. TBT applies to both food products as well as non-food products. This is where once the questions have been asked. And in case of TBT, all, let me say size, shape, design, label, marketing, packaging, functionalities, all the standard and technical regulation. Remember this keywords. Standard and technical regulation related to how the production should happen, what should be the size, what should be the shape, what should be the marking. It applies to both food products as well as non-food product, that is called as TBT. So both SPS and TBT are technical measures. Animal life, human life, plant life, SPS. TBT will be related to product and standard and technical regulations. That is TBT. So next, let us go to non-technical measures. So under the non-technical measures, there are 13 different types. The very first one is called as import quota, quantity restrictions. See, earlier tariff rate quota was there, na? Same to same. See, we will speak about that once again. But this time we will also include origin restriction to that. Quantity restriction is there, origin restriction is not there. That is absolute. Quantity restriction is also there, origin restriction from so and so country we don't allow. That is called tariff rate quota. Here binding quota means we will give you certain permission only to import a certain quantity. That's it. Beyond that you can't import. If you want to import beyond that quantity, whatever the 1000 quintal, you should take one more license. That is non-binding quota. Next comes embargo. Simple words. Total ban. Will totally ban your product inside our country. We don't want to allow your commodity in the nation. That is called total ban. Either from for a particular country or region, either for a specific period of time or indefinite period of time. It can be anything. Even this ban can be imposed based on health and even religious sentiments also. For example, in Middle East nation, they don't allow pig meat against the religious sentiments. Like this, embargo. Government procurement policy. This topic is very interesting, but most of them will get confused here. See, simple logic. When government is buying any goods and services inside the country, they will impose a restriction stating, see boss, just assume now Tamil Nadu government, they are planning to buy 100 police vans from Mahindra. Now they will say to Mahindra, see pa, I need 100 police vans like for all this women police, women safety, na? Like how we have a normal, let me say police beating vehicle, like that I need another 100 extra. But my only condition is at least some 50%, 70%, 80%, 30%, whatever percent. The components and spare parts what you are using, that should be used from domestic market. Like this, they may impose restriction when government is buying goods and services. But government cannot say 100% it should be a domestically procured. That is problem. Because there is something called as national treatment principle, an agreement signed under the WTO. If at all government says 100% component should be domestically procured, that is against national treatment principle. You can't discriminate between domestic good and foreign goods after importing that inside your country. If you want impose embargo, if you don't want the Chinese product to come inside your country, totally ban that product inside your country. Don't allow it at all. But once that goods enter inside your country, now you can't discriminate between that is not Indian good, that is a foreign good. Like this, you can't discriminate. So up to certain percentage, you can impose restriction, but you can't say 100% you have to use 100% raw material components of India only, then only I will buy car from you. If you want, you can impose restriction of say 80%, 70%, 50%. That means remaining 20-30% they can use a foreign component. Like this, while government is buying something inside the country, government will give that restriction. Certain proportion or certain percentage should be domestically procured. Then only I will buy the goods from you. That is called government procurement policy. And national treatment principle is you should treat your neighbor's country's goods and services which is coming inside your country as yourself. You cannot discriminate between domestic good and foreign good. That is called national treatment obligation. Trade related investment measures. Now this is interesting. What they do, now government will say, boss, whatever you guys have exported last year, not this year, last year, in that 75% alone you can import this year. That means remaining 25% check and buy from my local market. Let's assume I'm a car manufacturer. Last year in 2025 and 26, assume I have exported worth of 100 crore rupees of car. In this, 75 crores I can import now. That's it. Not 100%, only 75%. Next comes marketing and after sale services. If you want, you can come to India. You can sell your goods in India. But you can't have your own official service center. After sale services, you can't start. You can only and only come to India, sell your goods in India. But you can't have a after sale services, service centers, repair shops. No, you can't have it. That our local people will do it. Financial measures. Now government will say, still if you want to import that commodity, I'm saying not to import it. But you are just saying that no, it is important to me. I wanted to import. Okay, pay that money and taxes, whatever required is there 3 months in advance. Now, which intelligent fellow will do that? 3 months in advance you have to pay. See, value of the goods imported 3 months before the arrival of the goods or foreign exchange may not be permitted for the importing of new scripts. Intentionally we will delay, will not allow you the finance, FEMA regulations will not be cleared. And price control measures, intentionally levying extra taxes and making the prices to go higher, foreign goods prices in our country. license, I will not give it at all, or even if I give it, I will just give it for 1 year. Next year when you come for renewal, non-automatic licensing. Last year I allowed it, this year we have prohibited. And measures affecting competition, I don't give permission, I don't give license for everyone, only for my own government people or Adani, Ambani I will give, not for everyone, only they can import it. Like this, measures affecting the competition. Intentionally I will create a monopoly for importing and distributing that in the country. After importing, who can redistribute, who should not redistribute, and administrative delay, intentionally making it new procedures, new license, blah blah and all. We are totally frustrating the importer. Rules related to origin, if the good is coming from so and so country, we don't allow. Okay, leave about that. From Iran, if any goods comes, we don't allow. So people will take raw material from Iran, they will manufacture in Singapore, from Singapore product will come. We will ask for certificate of origin. Like this, rules of origin, from where did the spare part has come? I know product as end car has come from Singapore, but for that car, where did the tire come from? Iran, remove tire and give. No, we don't just do like that. I'm giving example. That means even spare parts, origin certificate we will ask. Like this, we will impose restrictions on origin. Third one, safeguarding measures. All of a sudden, sometimes your product has been imported more into my country, unable to sell. That is only flooding here. Now it has threatened my domestic market. It has created an injury. For a time being, temporary purpose, I will not allow that goods to come inside my country, any fresh goods to come inside. For a temporary purpose, foreign goods cannot come inside my country. See, country restrict imports of the product temporarily if the domestic industry is injured or threatened with a serious injury caused by the surge of the imports. This is on a non-discretionary basis. So these are the 13 types of non-technical measures. Embargo, Pakistan example, total ban. We don't allow certain goods from Pakistan, and even Syria, Lebanon, Iran, Iraq. Like this, there is a list of country here now. Wherever the examples are there, including examples, you have to read once, because sometimes straight away word to word, keyword, it has been asked in the exam. I will show the exam question papers. Next comes export related measures. This is most easiest. This is by this unit 2 comes to an end. See, ban on exports. We don't allow exports at all. Total ban. And export tax. Still, if you want to export it, pay tax here also and pay tax in the importing country also. Your product becomes worsened. Sometimes government will only give subsidies and other benefits, incentives to produce more and export from the country. And voluntary export restriction is a quota restriction. That is quantity restriction on exports. So what quantity we will allow you to export? Beyond that, we don't allow. Still, if you want to send it, excess of tax. Like this, voluntary export restraint, quantity restrictions on export. So these are voluntary export restraints. So these are the 4 types of export related measures. By this, unit 2 also comes to an end. Nothing big in the unit 2 also. Clear? Go through it. Any doubts, let me know before moving to unit 3. Unit 3 is very small. Unit 3 will also not take much time. RTAs are there, regional trade agreements is there, WHO and GATT. Full storytelling unit 3. Nothing big there. Even chapter 9 is easy to score. There is nothing like breaking your head there. Yeah, let's go to the next unit. YouTube live students. Okay, trade negotiation. So if you remember in the unit 2, I spoke about bounded tariff between WTO members. We have a legal agreement. We cannot raise it beyond. If at all we have to raise, we need to sit, we need to negotiate in front of a WTO and we have to compensate them. Sir, at the end of the class, can you give us the strategy? Sure, definitely. What strategy are you looking out for, by the way? Which one? Like preparation, one day before exams? What is it? Okay. So we have to negotiate with our trading partner. Then only we should compensate. That negotiating. See, trade negotiation. Because of negotiation, this will develop a new international trade rules. And this trade negotiation is a complex interactive process. That is not just a one round of meeting. It is a multiple rounds of meeting between the stakeholders and the engaging nation. It will be multiple levels of meeting. This will create a new international trade rules. So that is trade negotiation. One such beautiful example is RTA, Regional Trade Agreement. So wherein which in the previous unit we spoke about preferential tariff. Nearby countries will form their own small group. But here No rule that nearby country should only create a small group. Anyone can create, even from a different geographical continents. That is called RTA, the agreement between the trading partners to reduce international trade, to reduce barriers and promoting international trade. That is promoting more and more welfare is called as a RTA. Till date, 339 some change RTAs. That one once the question was asked, I think in May attempt, they have asked one question about it. Wait, I will show that. One GK question related to that they have asked here. Some 329 or 339 RTAs are existing till date. Only that one GK question was there from this. Some nook and corner they will pick up the question. Anyhow, when we are solving it, I will show you. Chapter 9. We will find in one of the question paper it is there. I think 329 or 339 RTAs are there till date, which is applicable. All such questions will also come. That's the reason I ask you to read once like a newspaper, all this ICA material. And mainly there are 8 types of RTA. This types and meaning, example, meaning, example, meaning, example. This is important. I usually call it as a lunchbox example. Now, as at the moment, forget the lunchbox example. Let's say European country, nearby countries. They will eliminate all kinds of barriers between themselves and with any outsider common external tariff. That is called as trading bloc. Arab League, European Trade Association follows. Now they say, okay, between ourselves, we will eliminate all the trade, all these rules, regulations and all. But outsider, why should we have this common external tariff? We will enter into our own wish. Let's say, for example, we will enter into with any outsider, we will have our own agreement, our own rules and regulation. That is called free trade area. Next, customs union, no. Between ourselves, we will have it free. Between outsider, we will have a common regulation, not for export, even for imports also. Export as well as import, both common regulation. That is customs union. Whenever you see this word union, remember European Union example and as well as GCC country. Once they have asked a question from this GCC country and European Union. Customs union is an example of GCC. And European Union, all 27 member countries. Next, common market. Now, between members, not just free trade and also free movement of factors of production also. Between outsider, common regulation. Next, same continuation. Free trade between members, common regulation with outsider, free flow of factors of production. Now, common central bank and common currency also. Europe is a best example. European Central Bank and Euro is there. Common currency. Unilateral agreement. One country opens its doors to another country without any restriction. Now, for example, Sri Lanka. Economy is not going well. Now Indian government will say, Sri Lanka, no worries, you come sell the goods inside India. I will not levy any kind of taxes and only for you. One country opening its doors to another country. One country opens the gates, other country gets the benefit. That is called unilateral trade agreement. Next comes bilateral trade agreement between two countries. Now India enters into trade agreement with Japan. Japan has its own rules and regulation. India has its own rules and regulation. Bilateral agreement. Multilateral, between group of country, between the group of nation like Middle East nation, European nation, between the group of country when there is an agreement, that is called as a multilateral agreement. Recently, Turkey, Pakistan and Saudi Arabia entered into a multilateral agreement. If any one country gets attacked, it is treated as everyone getting attacked. Turkey, Pakistan and Saudi Arabia. And after that agreement, only very next day in Saudi Arabia, there was an attack on one of their petroleum refinery. And even I was expecting Pakistan will go and join for them. They will try to blast the Iran there. Nothing happened. Simply, it's like one comedy it has become. Now today, geopolitics and Trump, all the stupid fellows have become a big comedy now. One or the other disturbance they will create. Next comes GATT and WTO. Yeah, 99% is against the WTO policies only. In your books, WTO, everyone are more powerful. Only in your books, not in real life. Okay. So now GATT, it's a very simple concept it is. After the Second World War in 1945, John Maynard Keynes, he wanted to set up 3 world-class institutions, IMF, World Bank, ITO. First 2 got established, IMF and World Bank. ITO was taking a lot of time because of one Kirik fellow, stupid fellow called as USA. He didn't agree to become a member. So all capitalistic economy backed out to become a member. As a temporary, as a secretariat, we established GATT. GATT was just a secretariat, which was only and only covering with goods. That's it. It was not covering with services or intellectual property. That became an issue later. And all the member country was somewhat insofar binding, and it was not having a proper, let me say, trade negotiating forums or dispute settlement body, nothing. It was just a secretariat with 123 member countries, and it was existing for 47 years. And it was only and only covering with goods. But GATT started losing its relevance after 1980. This is important. Why? International trade scenarios got increased. Leaps and bounds. Services, intellectual, it was not covered. And agricultural trade, efforts to liberalize agricultural trade was not successful. And the treaties were heavily exploited. Loopholes was exploited. World trade started increasing. But GATT could not able to control everything. Same thing I've given here one by one. See, in 1994, GATT was ended and became a part of WTO. In its existence, after Second World War, total 8 rounds of meeting was made. The last and the 8th round is called Uruguay round. That shaped the WTO and that made all of them to sign in a place called as Geneva, which is in Switzerland. There is the headquarters of WTO. So GATT was established as a secretariat. Later, GATT was culminated into WTO. Whatever we call it as a good council under WTO. This part, see, ministerial conference, top level general conference, this good council. Earlier, this is what we used to call it as GATT. So GATT was only and only existing for a temporary period, only for some 47 years. That's it. From 1948 to 1994. In its 47 years of existence, there were 8 rounds of meeting. Last round, 8th round was Uruguay round, which ended in 1994. GATT was only covering with good, did not cover services and IPR. All the member countries reshaped with 124 member nations was there in, they signed in a place called as Geneva. Now WTO covers all the three, GATT, services and intellectual property. See, why GATT lost its relevance? It was fastest evolving contemporary complex global world trade scenarios and international investments were expanded. GATT was not covering everything. Intellectual property rights and services was not a part of GATT. World trade increased leaps and bounds. It went beyond the scope. Ambiguity, that is loopholes, were heavily exploited in the GATT. And efforts to liberalize agriculture was not successful. There was an inadequate institutional structure and dispute resolution system. If there is any dispute between the country, between member countries, there was no forum to settle the dispute or any inadequate institution. Proper institutional structure was not there. And because of all this, in Uruguay round, finally they culminated everyone, all blah 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 rules they made, and they started with WTO. WTO headquarters is in Geneva, Switzerland. It has 164 member country. In that 117 are developing nation, 24 are negotiating membership, still yet to become a full-fledged member. Today's 95% of world trade is carried out by WTO. It started its operation on 1st of July, but it was established on 1st of January 1995. Now it covers all the three: goods, services and intellectual property, TRIPS, trade-related intellectual property services. What are its main key objectives? I've given here. See, key 6 objectives. Same, trade, dispute resolution, act as a forum to promote international trade, to reduce all those barriers, blah, blah, blah. Same thing, what we speak in GATT, same thing we speak in WTO also. And under this, there are 3 levels: ministerial conference, topmost level, they will meet once in 2 years. General conference, the General Council will meet multiple times in a year. They are the one who will actually run the WTO. They are the one who sit for dispute resolution. Under them, they have all the 3 council: goods council, service council, TRIPS council. And see, in India, we had something called multi-fiber agreement under the GATT. Now it has become a textile agreement under WTO. Both WTO and GATT both works on national treatment principle. Treat your neighbor's goods like how you treat your own goods. You should not discriminate after importing, and all this guiding principle. See, all this now I've given in a shortest form. What to remember in a keywords. This alone you pause it and read it like a newspaper once. This should be sufficient here. Sir, I'm good with micro, but I can't able to know from which chapters I want to start revision. So that's why I'm asking any strategy for the last 5 days. Okay, I will speak about it. No worries. Sankul, okay. Now there are some 13 agreements. All these are just read-only concepts. Sorry, 16 agreements. And Doha developmental agenda. 9th round of meeting. 8th round was Uruguay round. 9th round is Doha round. Here also, most controversial topic is agriculture trade. Agricultural trade liberalization was not that easy. Even today, same issue. And G20 economy, global 20 economy. See, remember the member countries. Till that, once the question has asked only from this area. All major big countries name. Like for example, you will hear some new name. Tunisia. That is not a member. Once they have asked which among the following is not a member country of G20, Tunisia was an answer. And all these people, they will meet whenever the crisis happens in the world, like recently COVID-19, pandemic, Russia-Ukraine war. They have their own kind of restrictions in the world, especially because of war and pandemic situations. And now because of all this US and Iran war, they are meeting it. They are taking rules and regulation between the G20, global 20 members. That's it. This is unit 3. Nothing other than full story between GATT and WTO. Yeah. May 25 they have asked. G20. Which among the following countries is not a member of a G20? Tunisia is not a member. So full storytelling. Just a read-only concept in that. Unit number 3. Nothing big there. Clear? Okay. So let's go to unit 4. One of the interesting unit it is. Another 30 minutes to 45 minutes will be done. Already like 45 minutes up. Another 45 minutes. Okay. So unit number 4, one of the interesting unit where numerical problems will also come. Formula is actually wrong in the institute material. You have to remember the same formula. From past 2 attempts, the questions are coming, especially from the numericals here. See, first understand, what is foreign exchange rate? It is a value of one nation's currency in terms of another nation's currency. That is called as foreign exchange rate. Now, for example, there will be 2 currencies involved. $1 is equals to 95 Indian rupee. I'm just taking round figure. 96 is it is today. Now, the left side, what we are writing, this is called base currency. And right side, what we write is called as counter currency. If base currency is a foreign currency, counter currency is a domestic currency, that is called direct quote. In India, we follow direct quote. Opposite. If base currency is a Indian currency and counter currency is a foreign currency, then it is called as indirect quote. Base currency is a domestic, counter currency is a foreign currency. Clear? And next comes foreign exchange rate regime. Mainly, there are 2 types of regime. That is what you have to understand. The very first one is a fixed exchange rate. Fixed exchange rate. In this, government of the nation will fix. That is also called as pegging or fixing. Pegged exchange rate. Second one is a floating exchange rate. Floating exchange rate, wherein which this exchange rate is purely decided by demand and supply market forces. So these are the main 2 types of exchange rate system. In India till 1991 we were following a fixed exchange rate. From 1993 and onwards we started following a floating. The biggest disadvantage of floating exchange rate is it will make international trade riskier. Today I will enter into transaction. $1 will be 95. I will say I will execute it after a week. After a week this can become either 90 or this can also become 100. But in fixed exchange rate, unless and until the nation's government changes the rate, the rates will not at all fluctuate. Rates are going to remain constant. That is called as fixed exchange rate. Suppose Indian government will say $1 is equals to 90 rupee. So until government changes that next time, whether today, tomorrow, day after tomorrow, 1 week, 1 year, until government changes, the rate will remain same. And to support that fixed exchange rate, nation has to maintain huge foreign exchange reserve. But here just an adequate reserves are required in floating rate. But huge reserves are needed in the fixed exchange rate system. Clear? In floating, inflation is freely operated, but here inflation is totally controlled. And independent monetary policy is needed in floating. Independent monetary policy is not needed in fixed. Like the small differences are there. I have also given those. And here, under the floating exchange rate, we have one more kind that is called as a managed float, or also called as a dirty float. So what is this managed float or dirty float? Simple concept. Nation's government will not straight away involve. In order to control heavy fluctuations, they will become participant in the exchange market. That is called as managed float or dirty float. So the nation's government, like people like you and us, they will become a participant by buying and selling the domestic country's currency. So if nation's government completely involves, fixed exchange rate. If they become participant in the currency market, floating exchange under that managed float. India follows that managed float, also called as dirty float, wherein which the nation's government will become participant in the exchange market to control the fluctuation. They don't target any specific nation's currency, but they will try to control it. So under the fixed exchange rate, any movement that is happening upwards and downwards, that is called as devaluation and revaluation. But here it is called as appreciation and depreciation. Deliberate increase in the value. Yesterday we spoke about those, na? Where is that? Here. See, appreciation, depreciation. This happens in floating exchange rate. If same thing is happening in fixed exchange rate, this is called as revaluation. This is called as devaluation. Depreciation is also called devaluation in fixed exchange rate. Appreciation is called revaluation in fixed exchange rate. So that is in fixed. This is in floating. This is the main logic yesterday which we discussed. Clear? When exports will increase, when exports will decrease, when imports will increase, when imports will decrease. So these are the mainly two types of exchange rate regime, fixed and floating. And inside the floating, we have one more type, that is managed float. So these are the exchange rate regimes. So same thing, see, floating and fixed. We have explained it, advantages, disadvantages, managed float. That is what India follows, especially in fixed exchange rate. The nation's currency, that is foreign exchange reserve, should be huge. See, they have to maintain huge foreign exchange reserves to support all of this. And at last, part number 5, I have given the difference. Yeah, see here. Difference between fixed exchange rate and floating exchange rate. Fixed exchange will be stable and credible, but floating will be transparent. We need transparency than stability. Fixed exchange rate, wherein which monetary authority or central bank will determine, but here demand and supply, market forces will decide it. In fixed exchange rate, inflation is totally controlled. Inflation will not work, but here inflation is not controlled. Here we don't want any independent monetary policy, but here we want independent monetary policy. In floating, we don't want huge exchange reserve, but here we need to maintain huge exchange reserve. Here it will bring stability and promotes international trade, but here it makes international trade riskier because it is flexible and unstable. And devaluation, revaluation under fixed, depreciation, appreciation under floating. So this is the main difference between fixed and floating exchange rate. Clear? But now numerical comes from this area, nominal exchange rate, real exchange rate concept. This you need to remember the most. Nominal exchange rate and real exchange rate. See, nominal means very simple. Today at which the market is running. Today's market exchange rate, $1 is equals to 96 Indian rupee. This is called nominal rate. No difference at all, no complications at all. But the complication comes when you understand real exchange rate. In real exchange rate, we are trying to understand the nation's currency in terms of goods and service value between the nation. Let's say, for example, now in India, 1 kg tomato. 1 kg tomato. Let's assume it is 70 rupee. Same 1 kg tomato in USA is $1.5. Now, how much is $1? Now, $1 is 95 Indian rupee. Consider round figure, 95 Indian rupee. But in USA, same 1 kg tomato is not 95. It is $1.5. Clear up? So 1.5. So 95 into 1.5. That means it is 142.5 rupees. This is the price of tomato in terms of Indian currency. But in India, we get it for 70 rupees. So we have to bring it into a common value. That means in terms of goods and services, what is the nation's exchange rate? That is where real exchange rate formula comes into picture. So real exchange rate formula. Today, what is the nominal exchange rate? $1 is 95 rupee. In India, domestic price of tomato is 70 rupee. There $1.5, that was 142.5. Clear? Now you need to solve this. 95 into 70 divided by 142.5. So it is 53.41. That means $1 is not 95 rupee. $1 is actually 53.41 rupees in terms of goods. So in terms of goods and services, we need to determine. So this is real exchange rate formula. So instead of giving domestic price and foreign price, they may also give it as index. See, domestic price index, foreign price index. So by using the same formula, for example, by using this real effective exchange rate, for example, formula, real effective, real exchange rate. One more concept is the real effective exchange rate. I will explain. So real exchange rate is nominal exchange rate into domestic price index divided by foreign price index. So this is the formula. Opposite of this is a nominal formula. So what is nominal? Nominal exchange rate is equals to real exchange rate into foreign price index divided by domestic price index. So remember this shortcut. Whenever you are calculating nominal, FD, bank FD, F by D. If it is real, D by F. If it is nominal, remember bank FD, F by D. If it is real, D by F. That's it. Let me show the exam question itself. In the past 2 attempts, continuously these questions are coming. Wait, let me show. Chapter 9. Have a look here. Calculate real exchange rate. By the way, what is the formula for real exchange rate? So real exchange rate is equals to nominal exchange rate into D by F, domestic by foreign. If it is nominal FD, it is D by F. So nominal, they have only given nominal value is how much? 15 into domestic price index 250 divided by foreign price index 200. That's it. 18.75. And one more question. Wait, even in January attempt also they have asked. In January that has nominal exchange rate value. Actually, these formulas are wrong. It should be different formula, but still follow the same. See, they are asking nominal exchange rate. What is nominal exchange rate formula? That is real exchange rate bank FD. So it is F divided by D, foreign index divided by domestic index. Now real exchange rate 25 into foreign index 70 divided by domestic index 140. So do it. 25 into 70 divided by 140. Answer is 12.5. But actually I had taken the correct formula there. The correct formula, if at all I take this has to be reversed. This part has to be reversed. That is correct formula. Answer will come 50. But as per your ICI formula, wrong formula, even in answer key, they have taken 12.5. So this is where the exam questions are coming. From past 2 attempts, they have asked the question. So kindly remember this. Do not forget. Real exchange rate and nominal exchange rate. So simple. In terms of value of goods and services, not in terms of the current market value. Current market value is nominal. Real exchange rate is exchange rate value in terms of goods and services. Clear? And real effective exchange rate, simple, from the present nominal exchange rate divided with a deflator value, GDP deflator concept. They will give the index, price index value. Just we have to remove that inflation part in the present nominal exchange rate. That is called real effective exchange rate. Suppose if this real effective exchange rate is increasing, that means currency is getting appreciated. Earlier it was 70, now it has become 60. 70 rupees to 60 rupee means appreciated. Whenever the domestic currency gets appreciated, our exports will decrease, imports will increase. That you should be remembering. Same to same. Yesterday I spoke about that same logic only I'm speaking about here. Whenever domestic currency appreciates, exports will decrease, imports will increase, because imports will become cheaper to us. Export will become expensive though foreign people stops importing from us. So this is the concept there. Nominal exchange rate and real exchange rate, real effective exchange rate. So this is where usually the exam questions are going to come. So be careful. So numerical calculations are coming from nominal exchange rate and real exchange rate. Okay. So this PDF, this is not as per the ICI flow. It has changed. That is why the other day I explained why I didn't share this PDF, because I have my own flow. That is the reason I did not share. But you can actually download it, not a problem. I think in the previous marathon, they have shared that link, material link. My main link only, they have given entire PDF of my main material, 500 page material only, they have given it off. I think it is in the Jan 26 attempt marathon link, or maybe May 26, anyone, you can check out. Clear? So foreign exchange market, that is part number 3. So what is this foreign exchange market? Simple concept. It is an electronically linked market where buyer and seller transact 24/7. Who are the dealers in this foreign exchange market? Bankers, institutions, brokers, and other dealers who will transact 24/7. Spot range or future rate. Spot range, it is an over-the-counter market. I go give a currency in counter, I will take the foreign currency in the other counter. That's it. The rest all of these are read-only concept. But now this is important. Determination of nominal exchange rate. See, simple logic. Demand and supply. Let's say this is the demand of dollar. This is the supply of dollar. The point of intersection. That is how the market rates gets decided. Clear up? So this is supply of dollar. This is demand of dollar. And today the point of equilibrium, the rate, let's assume it is 95 Indian rupees for $1. Suppose if the demand for $1 is increasing. Wait, let me copy this. Let's say the demand for $1 is increasing. So there will be new line towards the right side. So this is new D1 of dollar. So this is the new equilibrium E1. Now at the new equilibrium E1, observe the exchange values have gone up from 95. Let's say it has become 100. So what is the logic here? Logic is very simple. Whichever country's currency's demand goes up, that country currency gets appreciated. That is the shortcut. See here, demand is increasing. For dollar, demand is increasing. So RHS shift. So demand is increasing of dollar. Whichever currency's demand goes up, that country's currency appreciate, opposite country's currency depreciates. This is the logic with respect to demand. See, whichever nation's currency's demand goes up, whichever currency demand goes up, that country's currency gets appreciated, opposite country's currency gets depreciated. In supply, it is reverse. Whichever nation's currency supply increases, that currency gets depreciated. See, when supply increases, RHS shift. See, this is S1 of dollar. So this is new equilibrium E1. At this new equilibrium E1, observe, this is becoming 90 rupee. That means dollar supply increased. Supply is increasing for dollar. So now dollar gets depreciated, rupee gets appreciated. Now opposite logic. Whichever currency's supply goes up, that country's currency gets depreciated. But in demand, whichever country's demand goes up, currency demand goes up, that country currency gets appreciated. That's it. This is the shortcut. Either you are understanding from the demand perspective or either you are understanding from the supply perspective. It doesn't matter. Always remember which country's demand goes up. Simple. Whichever country's currency demand goes up, that country currency appreciate, opposite country's currency depreciate. If it is supply, reverse logic. Supply goes up, that country's currency depreciate, opposite country's currency appreciate. That's it. So how do we decide the nominal exchange rate? Simple. Due to demand and supply. In this, demand may change or supply may change. The reasons, all the theories are given. Why you need demand? Why are you demanding? Your money is going outside. I'm buying some foreign asset. I'm buying some foreign stocks. See, I'm purchasing some foreign goods and services. Unilateral transfer. Purchasing of financial assets and stocks and bonds abroad. I'm opening a foreign bank account. And same way, supply side, money is coming inside. Supply is always an inflow. Money is coming inside. Inflow. But demand is always an outflow. Money is going out. So in case of a demand side of the exchange rate, money is going out. Supply side means money is coming inside. So same shortcut I have explained. Whatever theories I have given, see, this is demand curve. Demand is going towards the right hand side. Earlier, assume it was 95. Now it is becoming 100. So here demand is increasing for dollar. So dollar got appreciated, rupee got depreciated. Next, supply increases. See, this is supply line. When supply increased, now automatically supply is increasing for dollar. One second. Supply is increasing for dollar. So automatically dollar will depreciate, rupee will appreciate. Observe, earlier this was 95. It is becoming 90. So same logic. Supply reverse logic, demand straight logic. Clear? So same to same thing. I have given few couple of questions here. By this, unit 4 will also come to an end. So first do this. Suppose India starts to export more. When we export, we should receive money or we should pay money. We should receive money. Receive means dollar is coming inside. Supply of dollar it is. So when supply is increasing for a dollar, reverse logic, dollar gets depreciated, rupee gets appreciated. Next, see there, Indian political instability occurred due to the murder of some Indian politician. So foreign investors will say, Tata bye bye. They will leave the country. So they will come and demand more and more for dollar. When demand increases for dollar, dollar gets appreciated, rupee gets depreciated. Like this in class, I have given multiple scenarios like this. Some Australian dollar, US dollar, some confusing statements and all. We have done all this. So like this, questions may come in the exam. So for a safer side, we have done it. And what are the effects of exchange rate fluctuation? That I have also given one shortcut here. What happens when currency gets appreciated? What happens if domestic currency gets depreciated? So simple, whenever domestic currency gets appreciated, assume $1, which was earlier 95 Indian rupee. Now $1 will become 90 Indian rupees. Because of this, exports will decrease, imports will increase. See, Indian currency is gaining value. Domestic currency is becoming stronger. So foreign goods will become cheaper to Indian, so imports will increase. But Indian goods will become costlier to foreigners, exports will decrease. India starts importing more, exporting less, and Indians traveling to abroad will increase. Earlier, to buy $1, I was paying 95 rupee. Now only 90 rupee. So Indians traveling to abroad will increase. Foreigner visiting India will become costlier. Indian who has borrowed money from abroad, I always want domestic rupee to get appreciated. I borrowed when it was 95 rupee. At the time of repayment, I have to repay only 90 rupees. See, Indian who have invested in abroad will always think that Indian currency to depreciate, foreign currency to appreciate. But who has borrowed from abroad, he wants domestic currency to appreciate, foreign currency to depreciate. So this is the shortcuts for rupee appreciation, Indian rupee appreciation. And next, Indian rupee depreciation. Let's say earlier, $1 which was 95 Indian rupee. Now same thing, $1 is becoming 100 rupees. $1 is becoming 100. So this is depreciation. Now exports will increase, imports will decrease. See, Indian goods becomes cheaper. So exports will increase, imports will become decreasing because imports have become costlier for us. So GDP growth rate will happen, employment will increase because we should export more now. We should produce more. We should appoint more people. And since we are exporting more and more rather than selling inside the country, inside our country is also demand is more, but we are not producing more and supplying more. Because of that, in India, demand is more, but supply is less. This will lead to excess demand and price increases. That is called demand pull inflation inside the country. Since imports have become expensive, we are reducing. Certain imports, we can't reduce it at all. Like life-saving drugs, petroleum items. Already you are importing at high price and you have to sell inside the country also at high price. That is called as cost push inflation because of importing of essential commodities. So both inflation will go up. Demand pull inflation, cost push inflation. Both the inflations will increase. So Indian who are traveling to abroad will become expensive. Indians who have borrowed from abroad, he has to pay more money. Cost of borrowings will go up. So these are the effects of depreciation. Good things and bad things. Good things, GDP will increase, employment will increase. When currency gets depreciated, export will increase. Our current account value, because we are exporting more, we will receive more money. But bad things, cost of traveling will increase. Cost of borrowing will increase. Cost of essential import will increase. Inflation will increase. Both the inflation, demand pull, cost push. Both the inflation will increase. Clear? So by this, unit number 4 also comes to an end. So unit number 5, the last unit, main predominance of FDI concept. Major FDI concept is what is explained the most here. Before moving into last unit. Can you tell about market research? That's my personal business, man, other than teaching. After completion of revision. Others will get confused if I speak about research and all other than about economics here. You can contact me if you are interested to learn after your exam. When you are free, if you are interested to do, you can. I can give you an internship, not a problem. Okay, let's get started here. So international capital movement. See, when we speak about capital movement, we should be very much clear about what is capital movement and what is foreign investment. So in this chapter, we are more and more interested on foreign investment rather than capital movement. So such foreign investment, we are speaking about two things here, FDI and FPI. Let me give a proper weight. I will take out from my previous material. Wait. 1 second. Economics. Class material, class. Oh, where is it? Chalo, I'm unable to find. Leave it. Let me write it off for you guys. Okay. See, first understand the difference between FDI and FPI. FDI, FPI. See, in FDI, it is always and always investment on assets or infrastructure. But FPI, investment on financial market, or we call it as capital market. This is the major difference. Investment in assets or infrastructures of the nation, FDI. Investment in finance or capital market is called as FPI. FDI is always greater than 10% investment. FPI is always less than 10% investment. FDI, intention is always and always long-term investment, but here either long-term or short-term. But in FDI, na, intention is to have a management control. Management and control. But here, no management and control, purely speculative. Speculative and opportunistic. We will just invest, we will make a nice amount of money, we will say tata bye bye. But here, equities are held, are for the purpose of management control. Here, equities are held purely as a speculative. That means profit motive. Thus, we have to bifurcate. This we have to differentiate. This is the most important. And in FDI, na, whenever a foreign company comes to India, invest it in India, they will just bring a technology. So there is just a technology transfer. But here, fund transfer, no technology and all, just a fund transfer to capital market or stock market. And here it will impact on employment and GDP of the country. Foreign investment comes in, they will take local employment and they will come and produce inside India, in India. So that's why inside India GDP will increase in India. But here no impact on employment or GDP. No impact on employment or GDP of the nation. Purely just a speculative motive. Invest it, take a nice amount of return profit, set it up, bye-bye. But here we are investing on assets of the country, will stay here for a longer time. So government gives more and more importance to FDI rather than giving importance to FPI, because it is a non-debt capital investment inside the India, non-debt financial investment. Without we borrowing a loan, a foreign company is coming to India, they are investing in India, they are operating and they are conducting a business inside India. That is what is FDI. And FDI, there are two ways of entry. Entry is of two ways. Number one, automatic route approval. The second one is government approval. Automatic route approval and government approval. But earlier we also had one more, Foreign Investment Promotion Board. But we have scrapped this. Now we don't have this Foreign Investment Promotion Board. It has been replaced with Foreign Investment Facilitation Portal, FIFP. But presently we have only these two ways, automatic route approval and government approval. Now, one of the most important repeatedly asked question is, after entering inside under either automatic route approval or government approval, what are the modes of FDI? This kindly mark it as important. How do you start this FDI business? Either by opening your own subsidiary company or associated company, 20% stake, or your foreign branch. You may also have a foreign branch, or through franchising business. McDonald's, KFC, Pizza Hut, Burger King, all this, or bringing through equity injection, like anything greater than 10%, and also acquisitions, merger, joint ventures, or any annexation of interest in the existing company. In this now, most recently repeated question is brownfield investment, greenfield investment. What is greenfield? Completely fresh investment. There was no infrastructure, there was no setup. Foreign company will come, they will only set up everything from scratch. That is called as greenfield investment. Brownfield, already facilities existing, we are coming and taking over, or we are taking, merging that, acquiring that, or taking in on lease. And then we are running. In India, 100% brownfield investment is allowed in airport projects. Automatic approval under the airport projects. Brownfield airport projects. And this once they have asked a question. So of late in the recent attempt, greenfield investment question has come. Previously in Jan, brownfield investment question has come. This they are of late recently asking multiple number of times. Clear up? So main, understand FDI business. See, it is always greater than 10% investment, and resident of some other home country will come and invest it in host country. Now here host country is India. Assume host country is India. Home country is the foreign country. Clear? And he will come to India. He will invest and he needs a substantial ownership, management and control. He will invest it on assets in the own host country. It is a long-term investment on physical assets. And here there is no kind of direct investment companies. All of this technology transfers will happen, cultural transfers will happen, employment and GDP gets affected, whatever highlighted na, same thing I have given here as a difference. Same thing I gave it as a difference. So this is FD. I see equity, retained earnings. See, in general, giving loan is not an FDI. But if any individual has a greater than 10% stake, let's assume that Shashikiran, I have invested in some company. I have a stake of greater than 10%. And I give a loan to that company. Even that loan money becomes FDI if I have a stake of greater than 10%. Suppose I don't have a stake of greater than 10%. In general, I will give a loan. That is not FDI. Only when a person is also having a stake of greater than 10%, then if he provides a loan, then if he grants a loan, then such loan money will become a FDI. Clear? And see, who can invest on FDI? Individuals, incorporated, unincorporated, public, private enterprise, associated groups, individuals, governments, agency, foreign governments, trust, or any combinations of above. What are the main forms? Usually they will come and open up their overseas company here, like branch and subsidies, or creating a joint venture, joint development of natural resource, purchase and annexation, mergers and acquisitions. And this is another important area. Most repeatedly asked question, types of FDI. There are mainly 4 types of FDI. The very first one, horizontal direct investment. Which investment? Horizontal direct investment. That means I will come to other country, I will start the same business what I am doing in my home country. Let's assume Yamaha, motor vehicle company, two-wheeler motor vehicle. From Japan, all the way they will come to India, they will do the same business in India. So when they come to other nation and conduct the same business, that is called horizontal direct investment. Vertical investment, similar business, not the same. Let's say Yamaha will come to India. Rather than starting two-wheeler manufacturing and sales company, they will start manufacturing tires. Tire is related to same automobile component only. That is called vertical investment. Conglomerate, totally different business. Yamaha will come to India. Rather than starting motor vehicle business, now they will start a piano, guitar, musical instrument. Yes, they are doing in India. That is totally different business. And reciprocal investment. We go to Japan and invest. Japan people will come to India and invest. It is like an exchange offer. Two-way direct investment. Also called as reciprocal investment. Appa, this is the most repeated exam question. Asked. Most repeatedly asked question. Horizontal direct investment is a same business. Vertical, similar business. Conglomerate, different business. Two-way direct investment is a reciprocal investment. So these are the 4 types of FDI. And modes of FDI, already I spoke. Reasons for FDI, just a generic topic. See, why? Number 1, profit motive, resource seeking. In your country, environment standards are low. We can come and exploit anything. In your country, cheap labor ka dukan. Resources can be exploited nicely. Your technologies are growing. I will take advantage. Your market is growing. I want to grow. And my business should be in international. See, market seeking. I want your nation's market to sell my goods and services. Resources are great in your country. Availability of a cheap labor resources. Technology is improving. I can earn more profits by making your people bakra. Diversification. I want to start something new in different country. Tax benefit. Nirmala aunty said, you come, we will not take tax from you. From our people, we will suck more tax. So we are coming inside and avoiding barriers and all. If at all I send goods, Nirmala aunty used to impose all this tariff barriers. 15 types was there, na? So I entered India. Apple is one best example. Environment standards are too low in India. That is why we'll come to India. Political environment. At the moment, only Modi uncle is stable. No good opponent at all. Next, interdependency is there either for market, technology, raw material, employee. Better I will only come down. My business is internationalization. My products are available in multiple locations. Your geographical location is good. I can serve East market and West market. In your nation, growth rate is going up. Even I should take advantage. Like this, generic topics. Clear? And benefits and costs of FDI. What are all the benefits? What are all the costs? Just a read-only concept to see. The biggest drawback is all these foreign companies will bring their capital-oriented technology. But India is a labor-intensive technology. And they bring only the low-level employment inside the country. All decision-making will be in their country only. They will bring their outdated technology and we call it as wow, amazing and all. They will start exploiting our own natural resources. Over a period of time, those stupid fellows will only become monopoly inside a country. Full opposite. It looks like great when we see benefits here. Large varieties of option will get available to our customers. Because of competition, it is also available for lower price. Foreign company starts competing with our domestic company. Our domestic monopolies will get eliminated of Tata, Birlas and all. And it will provide more employment opportunity. They will bring high-end technology, but bullshit. They will bring their outdated technology and low-level technologies. And it will effective on environment, optimum utilization, but over-exploitation will happen over a period of time. So these are the disadvantages. And history of FDI. See, same concept. Before 1991, we were not allowing any foreign companies to come inside India nor foreign goods to enter India. Only after 1991, we started allowing. And even in India, we changed multiple rules and regulations after that. We had FERA, Foreign Exchange Regulation Act. Later, it was replaced with FEMA, Foreign Exchange Management Act. So SEZ was established, Special Economic Zones, and SEZ Act was brought into a picture. And automatic route and government approval are the two different ways through which it will enter. And these are some liberalizations of rules that we have made for promoting more and more FDI same way. There are certain businesses on which FDI is not allowed. They will not allow to come inside our country in terms of lottery business, gambling and betting, chit fund, Nidhi company. This is NBFC. Foreign company cannot come and be a Nidhi company in India. Trading and transferable developed rights, real estate, construction, manufacturing, all kinds of tobacco and tobacco substitutes, and activities specifically reserved to our public sector, not even to our private sector allowed, like atomic energy generation and railways. Foreign companies cannot. These are the areas of prohibition. Clear? And rest remaining things are just a read only topic here. Like foreign direct investment, how much money we have received. India is a 8th ranking among the major FDI recipient in 2020. Just a read only topic. So next comes FPI. Clear? Foreign portfolio investments. As I said already here, difference. It is invested on financial capital, stock market, hedge funds, all those. Less than 10% investment. Either it can be long term or short term. No management control. They are speculative and opportunistic. Intention is profit motive. Just a fund transfer will happen. No impact on employment and GDP. Same thing here. If any investor confidence is shaken, something slowly happens inside your country, they will take out huge money and they will say tada bye bye. That will make your finance market more and more volatile. Especially stock markets will be volatile more and more. In India, what is happening from few months, financial crises in the host country, it will create. Same thing, differences I have given here. Difference between FDI and FPI. By this, the entire chapter 9 revision comes to an end. So any doubts, let me know before moving into the MCQs. We'll take up the MCQs of all the 5 papers, past 5 papers, and then we will also quickly say what all are the important area, what are all the strategies that you should follow, all those, and then we will wind up. Another maybe 20 minutes, 25 minutes, or consider half an hour maximum. We'll be winding it up. So any doubts, let me know before going to the MCQ part. Okay, we'll move on to the MCQs. Chapter 9. Suppose the exchange rate between INR and Euro, it was €1.80, it has become 85. Indian currency is losing value. That means Indian currency is depreciating against Euro. What does the principle of absolute advantage refers to? Adam Smith point of view, the ability to produce greater quantity of goods using the same amount of resources. That means same amount of labor comparing to the other nation. Option B here. Next, North American Free Trade Agreement, NAFTA, is between how many countries? 3 countries, United States, Canada and Mexico. Preferential tariff. Next, TRIPS, trade related intellectual property rights. Next, this is called cross-read. This information is actually given in the summary, not in the main material. See, what is it? Now, let's take up a realistic example. Now, Indian currency and Laotian KIP, Laos, KIP, KIP, KIP. KIP is the currency of the Laos. We don't have a straight away direct rate. So what we do, now we will convert Indian currency to dollar. US dollar value is there, and we will take US dollar values to KIP. So from this, US dollar will act as a vehicle currency, and we are deriving the value of India to the Laotian KIP. See, in mathematics you would have seen this now. A is equals to B, B is equals to C. That means A is also equal to C. That is called cross rate. That's it, nothing big. Next. What is the main advantages of, or what is the main difference between FDI and FPI? FDI is a physical asset investment and FPI is a financial asset investment. Foreign corporation invest in India to benefit from the country's particular investment privilege such as tax bracket and comprehensively lower salary in India to be paid. This is called FDI. Next, the tariff which WTO members are agreeing between themselves, bounded tariff. Which of the following is covered under the TBT? Technical barriers to trade. Under technical, SPS and TBT. Non-technical 13. Embargo, all these are there now. SPS and TBT. Technical barriers to trade applies to both food products as well as non-food products. Standard and specification, design, shape, labeling, all of this comes under TBT. SPS is human life, animal life, plant life, biodiversity. That's it. This was September 24. Next. January 25 term paper. Here. Chapter 9. Which among the... Okay. In which of this following sector FDI is not permitted? Telecom permitted, aviation permitted, defense permitted, but atomic energy not permitted. Railway and atomic energy, specially reserved to our own nation's government. That's it. Here. Chapter 9. Which of the following country is not a member of G20? Tunisia, Argentina is member, India is member, Mexico is member. Next, which act was initially aimed for regulating large firms? I spoke about this in chapter 4 also. MRTP, Monopoly and Restrictive Trade Practices Act. It comes in chapter 10 also, information. Now, this is actually chapter 10. Okay, theory of comparative advantage was given by David Ricardo. Total ban, embargo. Okay, investments which are reciprocal. You come to my country and invest, I will come to your country and invest. Two-way direct investment. Factor endowment theory. Another name is HO theory. Next, with regards to international trade, European Union comes under Customs Union. Which of the following is a measures where animal life, human life, plant life, SPS, sanitary and sanitary measures? The system where the nominal rate of tariff on importing of manufactured goods is higher, raw material, intermediate goods is lower. Escalated tariff. On tariff rate that expresses either on the basis of value of measurement of goods or, see this word, or on the basis of unit of measurement, any one, whichever brings higher revenue to the government, that is called mixed. If at all, instead of or, if there was a word and, compounded tariff. Next, which tariff is calculated on the basis of specific contents? Different spare part, different tax. Specific contents, technical tariff. That's it. So these are the questions. So Jan 25 is done. Sir, is there any particular chapter or topic that we should definitely never skip? Yeah, chapter 2, definitely never skip price elasticity. Chapter 6, GDP concept, never skip. Two sector model and investment multiplier, never skip. M1, M2, M3, M4 calculation, you can never skip. And money multiplier concept, never skip. Credit multiplier, never skip. These are most repeated questions. Like, that is what I'm saying. When you are seeing the question paper, you can easily identify 60 marks. You can easily say where it will come. Identifying 50 to 60 marks is never a difficult task. The trade policy reform includes policy reforms, that is removal of licensing under the import. That means slowly we are reducing all these rules, regulations, restrictions. See, when there is an appreciation of the currency or stronger currency makes a domestic currency more and more valuable. So we can buy more and more large amount of foreign currency. So $1 was 95. Assume tomorrow $1 will become 75. That means now if I have 10,000 rupees with me, now instead of getting, let's say some odd, I'm just saying an odd figure, $1,000. Now I can buy some $1,200 now, same for 10,000 rupees or 1 lakh rupees, whatever it is. So whenever domestic currency gets appreciated, our currency becomes more valuable. So I can buy more foreign currencies now, larger amount of foreign currencies. Trade policy reforms we did. Okay, chapter 10. Above we should go. Here. An investment in which one investor establishes a business activity in the foreign country which is totally different from their main business. But in some or the other way, it is supplementing similar business. But in some or the other way, it is supplementing, means similar business strategy. That is vertical. Match the following. Long-term interest. This is FDI. Speculation, FPI. Helps in developing countries, WTO. Government and central banks do not prescribe the markets to be a foreign exchange rate. That is floating exchange rate. Will not decide. Market forces will decide. Okay, the most controversial topic of Doha Developmental Agenda, agricultural trade, even today, same was the another controversy in GATT. The tariff which is set higher, that no imports can be entered, prohibitory tariff. Ad valorem tariff, meaning, see, the duty levied on a fixed percentage on the value of the trading commodity. Which one of this is the main reason why GATT lost its relevance? International investments did not expand. It expanded. Efforts to liberalize agricultural trade was successful. No, it was not successful. GATT was just a treaty. Yes, it was just a treaty. Secretariat, it is not a treaty. Next, there was an inadequate and institutional structure and dispute resolution system. Yes, this was the another reason. Clear? Inadequate institutional structure and dispute settlement system was not there in GATT. So it lost its relevance after 1980s. That's it. Chapter 9. One more here. The theory of comparative cost, that is comparative advantage. David Ricardo. Which of the following statements are true? It is based on money cost. No, it is based on opportunity cost, not on money cost. It is positive in nature. No, it will give solutions, not just define problem. It is normative. Yes. It does not take into account of factor price differences. Yes, it didn't take any differences of factor price. So 3 and 4 were correct. September 25 paper. Chapter 9. ABC Limited, a company based in country A, imports machineries from country B. Recently, country B introduced the measures that relates to all importers to pay 25% of the total value 3 months in advance. Same to same example we spoke about. 3 months in advance they should pay financial measures. Next, the monetary tool. Okay, monetary tool, chapter 8 it is. Which of the following contents of the group of countries that have a free trade among themselves and common external tariff? The very first one, trading block. Now, country X has been increase in real effective exchange rate. REER, real effective exchange rate increase means appreciation of their country's currency. When the appreciation happens, automatically exports will decrease, imports will increase. See, export of the country X will become less competitive, so exports will decrease. Brownfield investment. See, 100% airport development project. Airport project in India under FDI is called as brownfield, not greenfield. Next, who proposed that country should export goods in which they have a greater absolute advantage? See, greater advantage, lesser advantage you forego, greater advantage you produce. Comparative it is. David Ricardo. Anti-dumping duty is a protectionist tariff which the domestic government imposes on importing. The belief that the price level should be below their fair market value. When they try to sell lesser than our domestic country's market value, they will try to impose these taxes and to make it equal to our fair market value. No, we know that they will try to sell lesser than their production cost, but from the country which is importing, who is levying this import duty, now from their perspective they were asking. Even initially I said production cost. But actually, when you read the question properly, we'll understand. This is from the country who is importing. See, imposes on imports. That is to make it fair market value with their domestic players. Technical barriers of trade, TBT. Which of the following is not an example of technical barriers? Eco-labeling, quality standard, organic certificate is yes, TBT. All this, shape, size, design, standard and technical, import quota, quantity restriction was not there. Okay, a US-based cell phone service provider expand its operations in India by offering a same telecommunication service, a same business, horizontal direct investment. See, the government of India has imposed a tariff on steel products as under 5% ad valorem tariff or, see that word, what is it? Or is there. Mixed tariff. If the and was there, compounded tariff. Which of the following is not the advantages of fixed exchange rate regime? An increase in the speculation on the exchange rate movement. Hello boss, there is no speculation at all. Government has fixed once na. Until government changes, it will not at all change. Enhances international trade and investment. Yes, fixed exchange rate will enhance because it will be having stability. Avoids currency fluctuation. Yes. Eliminates exchange rate risk. Yes. Enhances the credibility of a country's monetary policy. Yes, but this is not true. This is false. That's it. So January 26 attempt paper. We'll go from the first. Purchasing of foreign countries currency contract at future rate, not now, future rate from the bank is the transaction of forward market, forward exchange market, forward it is. Chapter 9, yeah. When foreign investors had no previous experience initiated in the FDI in the business, which is not related to their existing business, that means totally different business than its home country, and it is usually in the form of joint venture, the foreign firms operating in the industry, different business, conglomerate. What is the primary purpose of countervailing duty charged on importing country? Countervailing duty is giving subsidy part. Countervailing duty, subsidy was not there, means anti-dumping duty. See, to neutralize artificially lowering the price by the exporting resulting from the export subsidies in their home country. They are providing subsidies. Which of the following currency is called vehicle currency? US dollar. Which of the following is not an objective of WTO? To set and enhance rules related to international trade. Yes, that is one of the objective. Resolving dispute between the country. Yes. Providing, acting as a forum for negotiating. Yes. But maintaining secrecy in decision making. No. Transparency in decision making, not secrecy. This is not the objective. Now, state policy aimed to protect the domestic producers against the foreign competition through the use of either tariff, quota or non-tariff measure is called protectionism. We try to protect our domestic players from the foreign competition. So, as a state policy, see, state policy, country's policy is to protect the domestic players. That is called protectionism. That is there in the initial theory part. Okay, which of the following is the combination of both quantity as well as tariff, both tariff, rate, quota? We have quantity restriction as well as tax restriction. Which of the following is not a benefit of an international trade? Provides greater stimulus to innovative services. Yes, because of international trade, more innovations will happen. Trade provides access to new market and new materials. Yes, underprivileged country will be less vulnerable now. They will be more exploited, more. They will be always forced to just export raw material, not a finished good. If you remember, one of the tariff, escalated tariff also we spoke about the same. Option C. Which of these measures related to technical measures within the non-tariff measures? Within the non-tariff. If you remember, non-tariff has two things, technical and non-technical. Under that they are asking which is following represents technical, SPS and TBT. Only two things was there, na? Custom formalities, no. Shipping requirements, no. Product procedure, standard and product procedures, shape, size, labeling, design, yes. Trade related, financial and investment, no. This one, this is called TBT, technical barriers to trade, standard and the product related measures, product process measures. Already we spoke about this. What does the brownfield investment in foreign direct investment implies? That means already there is an existing infrastructure, either through merger, acquisition or leasing. We will take it and we will continue. Which sector accounts to the largest recipient of FDI in India? Service sector, and also 53% contribution to GDP of the country. Most easiest questions, man. Seriously, from past 2-3 attempts, the economics paper is like damn easy. Okay, last recent one, the most recent attempt paper, that is May 2026 attempt paper. Yep, already we did this in the class now. The Gulf Cooperation Council is an example of Euro Customs Union. Another example, European Union, Union word. See, which of the following is not associated with the exchange rate? Depreciation. They are speaking about depreciation. That means $1 becoming 95 to 100. This is called depreciation. Lowers the relative price of the imports. No, not associated, they are asking. Next. Which type of non-technical measures other than technical, SPS, TBT is a technical, embargo, all these non-technical measures adapted in international trade in order to non-discriminatory and temporarily limit imports for protecting the domestic industry. Last one, safeguarding measures. All of a sudden there is a surge of your foreign goods inside our country. Temporarily we will ban. Next, which form of tariff is the duty to bring the price of an imported goods up to the level of a domestic price? For in Dubai example, you are getting the goods inside country, that one variable tariff. Which of the following is not associated about the absolute advantage theory of international trade? It is between two countries. Yes. Labor being mobile within the country but immobile inside the country mobile, outside the country immobile. Yes. Two countries have two commodity framework. Yes. Rice, wheat to India, USA. But existence of transportation cost. No transportation cost. Nothing we spoke there. So this is not an assumption. Okay. Which form of tariff is determined based on the specific content requirement? Different spare part, different tax. Technical tariff. Next, which of the following measures are usually aimed at restricting on quantity of goods that can be imported, irrespective whether they originate from the different source from one particular country or not? It is called non-automatic licensing and prohibition. That's it, I guess. So these were the questions of the chapter. One more is there here. The assumption that there were two media for storing of value, money and the interest bearing, chapter 8 it is. Inventory theory approach. Okay. Which of the following feature is not a component of modern theory of trade? That is called as HO theory, which is not. International trade is only a distinct case of interregional. Yes, it is an extension of interregional. It considers factor price differences and principles cause of commodities price differences, factor pricing differences between two countries, that is capital and labor. It considers the relative prices of factors which impacts the comparative cost of the goods and production cost between the two countries because of this cost of labor and capital. Yes, it is based on labor theory. No, labor and capital both, not only just labor and capital HO. So this is not based on the HO theory. Yep, by this we have successfully completed even the chapter 9. Clear? So a quick summary of what all is most important, what all you should cover and go, what all you should not skip. So write it down. That should be better rather than just saying by words. We'll go from the chapter 1 itself. See, in the chapter 1, positive signs, normative signs, that one. Positive and normative, business economics definition and that meaning, difference between general economics and business economics. Business economics concept is important in unit 1. These are important in unit 1. Next, unit 2, basic problems. Basic problems of economy and the types of economy, capitalistic, socialistic, mixed economy. This is what is most important in chapter 1. Next comes chapter 2. In that demand, most important, price elasticity. Price elasticity and exceptions to law of demand. Giffen's goods, all this, exception to law of demand, cross elasticity, numerical. Cross elasticity, numerical. This you can't ignore at all. For sure, you guys have to cover this. And in supply also, it applies the same. Ditto, copy, paste there. Supply also. Demand and supply. Better you write down like that. And especially numerical calculations. P by Q into change in quantity by change in price. This is formula method. Arc method is change in quantity by change in price into Q1 plus Q2 divided by P1 plus P2 and equation formula. Q is equals to A minus B of P. In this, the B value. This B value is nothing but change in quantity by change in price. 3 different types of numerical value. That is for sure going to come. Any one of that will be there. And consumer behavior, just to 2 questions. Out of that, any of the theory, you will get 2 questions. Usually they will ask main question only, like equilibrium concepts or indifference curve. Most of the time the questions have come from indifference curve. So their indifference curve is important. Consumer behavior, indifference curve, and all equilibrium condition, formulas and equilibrium condition. Straight away the question comes from there. So this is with respect to chapter 2, which is most important. Next, when we speak about chapter 3, in theory of production, law of variable proportion, LVP, and law of returns to scale. Entire production function is only important there. Law of variable proportion, law of returns to scale, economies of scale, diseconomies of scale, iso quant and iso cost. And next comes main our characteristic features of factors of production, land, perfectly inelastic, immobile, capital meaning, further production, all that characteristic features of factors of production. That is important. When it comes to chapter 3, theory of cost, average cost concept, fully important. Accounting cost and economic cost, numerical calculations there. Here average cost also, AFC, AVC, numerical. This is utmost important. Without even studying this, don't even get inside the exam in that average cost concept. Rest remaining everything is small. And here shutdown point. Repeatedly questions will come from the shutdown point. That is most important, shutdown point. Clear? And next chapter 4. In that scoring is very much easy. Perfect competition, all 4 types of market, characteristic features, logic, perfect, monopoly, and most repeated questions will types of oligopoly and buffer stock concept, monopolistic competition, buffer stock concept. And chapter 4 unit 2 graph, 2 questions for sure it will come there. Unit 2, and especially that uncertain condition, that whatever remains constant, that either price or quantity, that uncertain related area, those questions will come. Chapter 5 though most easiest, just 5 topics, 5 questions will come. Every heading 1 questions will come in chapter 5. Here the easily scoring is chapter 5 and chapter 1. Bachchu, 10 marks, year 5, 10 marks straight away free it is. So this is related to micro. And macro, specifically when we speak about chapter 6, GDP calculations, especially inflation rate, real GDP and nominal GDP, this calculation to most important. Without doing this, don't even enter into exam. This is in unit 1. In unit 2, 2 sector model and investment multiplier. These 2 numericals are most important even from theory. This is where most question comes. And in national income calculation, income method, value added method, expenditure method, that too small, easy, silly questions will come from that. This is the main area of chapter 6. Chapter 7, main, first budget, deficit calculations. 4 types of deficit, budgetary deficit, fiscal deficit, primary deficit, revenue deficit. This deficit calculation is where numericals will come the most. And rest remaining conceptual meanings until that first half. This is like repeated deficit calculation questions, numericals. And unit 1, unit 2, unit 4, full concept base. Especially unit 2 is most important in chapter 7. Unit 2, market failure and government intervention to market failure. Market failure and government intervention. Most important here. Market failure and government intervention to correct market failures. Chapter 8, full numericals of unit 2. Unit 2 numericals. M1, M2, M3, M4 and money multiplier and money supply and credit multiplier. This numericals will come easy, that too. And also public definition, that calculation of public money calculation. And in unit 3, especially RBI concepts, quantitative, qualitative, that is the important one. In unit 1, if I have to speak Keynesian theory, especially in unit 1, Keynesian, speculative money and post-Keynesian and post-Keynes. This is where most of the question comes from chapter 8. And chapter 9 already I spoke today. 1, 3, 5 are little more, 2, 1, 4, 5, except 3. 3 slightly one question will come. In that major coverages 2 and 4, 2, 4 and 5. Chapter 9 is 2, 4 and 5 is the major coverage. You can't skip that at all at any cost. And chapter 10, definitely 9 to 10 marks will come. You can't ignore. Already I gave an entire brief like what all are the important areas in the chapter 10 where you have to study 1991 and later. That is where most of the questions will come. Before 1991, you can just go through like a newspaper. Rest remaining things. See, in chapter 10, even if you have read once, like once or twice, if you have read seriously now, out of 10 scoring 5 to 7 is not a difficult task there. Automatically you will score. And see, the biggest drawback of any student in terms of like strategy now, see, while preparing, now you are almost at the fag end moment. Suppose if anyone is watching this for next upcoming Jan 2027 and all, never underestimate and just hold one single subject for one whole day. You should always touch multiple subjects in one single day. Like for example, economics and accounts, law and maths, like this, one theory, one practical, one theory, one practical, one theory, one practical. This is how you need to sit and study, solve more and more, especially law. I know that I'm teaching economics, but still law. Why students will fail in law? You will sit, read. Reading alone will not serve purpose. You have to write and practice answers. You have to know how to present answers in law. That is where most of them will fail. They will sit and read 100 times, but they don't even practice a single time. In law, you should learn the writing practice. Without learning a writing practice, you can't crack exam. Even if one subject goes for toss, all 4 papers you should write once again, including economics you should write. No exemption concept and all. In economics also, reading alone will not serve purpose. After reading, after understanding concept, you should solve more and more MCQ. See, MCQ solving this is the main order. PYPs. First and foremost, cover it off. RTPs. MTPs. And model question paper. And I'm saying this should be after completing ICI material and your respective study material, whichever academy you belong to, whichever faculty notes you have a study material, they would have given you here no less than their own study material. There will be somewhere around 2000 to 5000 questions will be there. In that, consider 50% you have solved. At least 50%. At least if not this you haven't solved, at least this though definitely you should solve. After solving this, once you have a concept clarity, these things you should cover. This is the order. First PYP, RTP, MTP. This is required, mandatory. After that, you still want to solve much more questions. Model question papers are there. And sir, should I take the mock exams of the ICI? Definitely yes. That is recommended. The more new questions you solve, you will have a better grip on the particular syllabus. And you should always stay connected with the syllabus. Be it any subject, man, not just economics alone. I'm saying be it accounts, be it law, be it mathematics, be it economics. The more you stay in touch with the syllabus, in a day, multiple subjects you hold, automatically you will remember, you will realize, you will write, you will practice, you will be getting in touch with multiple papers and you will feel more comfortable. Just holding one entire week economics, next one entire week only law, that is disaster. Don't do that. In a day, multiple papers has to be handled. In a day, multiple subjects you have to prepare. At least one question before going for a sleep every day. You have to write answers of law and get it corrected. If you are not confident, at least send it to your faculty. Ask them to correct your paper and let them give inputs like where you should improve, whether underlining of keywords or using of English language. Sometimes students now they will make it too simplified. Like rain is coming, water is going and all. Man, understand, you are in a professional course. They expect you to write in a professional manner. That needs practice. All of a sudden, you can't do magic on the day of exam. Even in economics also, all of a sudden you can't do magic. And I usually say this. See, out of 100, if you know 75 question, attend that 75 and come. Don't do this inky pinky ponky for that remaining 25 questions and all. On the result day, if you have done inky pinky ponky for this, you will become monkey and your friend is Venky for sure. To white 100 fix. If you don't know, leave it. Don't take risk and all. Attend 75 and come out. If you know 80, attend 80 and come out. If you know 90, attend 90 and come out. I know that in your school, 11th and 12th and all, your parents and faculty, everyone have instructed, don't leave any question, attend all and come. In CA, if you do that, to fix negative marking. Especially math, stats and economics. Never do that, over attempting and all. See, I know that you would have seen many of the podcasts of my own students, 96, 97, 98, 93, 95 and all. Even they say the same thing. That is purely a luck after the 90. Whatever they studied, whatever the questions have come, one and the same. Especially GK concepts, some nook and corner from the material. Yes, till 90, definitely your efforts, your proper knowledge is there. 95 also I will agree. 90 up to 95 you have a proper knowledge. Another 5 questions GK will be there. Some nook and corner of material, some corner line, some stupid economist, some point of view you would have said, some or the other thing they will ask. There is no rule that everything you will be knowing. You are not a robot to remember everything. You are not a chitty man. You are not a robo. Some error will happen. Human tendency will happen, but you should minimize that error. You should reduce that error. That is the most important. At home, even when you are sitting and practicing Allah, keep a timer and then solve the questions. Let's say 50 questions you are solving. You should be able to solve it within 50 minutes. And last 10 minutes for scrutiny. Like what have you attended, what have you not attended, do you know that, do you know, don't do this. If you are stuck in any question, see, practically understand. Your exam is for 2 hours. So for 2 hours, 120 minutes, you have 100 questions. So divide it, take out calculator, have a look. So practically speaking, 120 minutes divided by 100, that means 1.2. That means 20% of the 1 minute. That means 12 seconds. Technically speaking, 1 minute, 12 seconds you have to solve one question to attend all 100 questions. But I'm not saying you will not attend all 100 questions. Let's assume that you will attend 85 questions. Consider 85 questions, man. 120 divided by 85, still 1.41. Technically speaking, 40%. Consider 1.5, round figure only. 1 minute, 30 seconds. For few questions, you don't even need 1 minute, 30 seconds. Easy question will be there. Within 30 seconds, you will finish it off. Clubbing and taking average together, maximum for one single question you can spare is 2 minutes is the highest. Beyond 2 minutes, you should never sit for one single question. If you are stuck in any one single question for beyond 2 minutes, leave that question, go to the next question, solve the remaining. At last, you come back. Just assume you are stuck in some question and you are solving again and again. You are taking 10 minutes to solve that one question or 5 minutes to solve that one question. You will lose, end up you will losing. You can't attend more questions. So always and always in exam, remember 120 minutes is there. That last 20 minutes or consider 15 minutes. 15 minutes is for scrutiny. Whatever you have done, correct or wrong, cross-checking things. So you should finish technically everything in 1 hour 45 minutes. And last 15 minutes or consider 20 minutes only for recalculation of things, whatever you have left, whichever you are stuck, that comes over there. So keep this in mind, 75 to 85 is the decent of attending. 60 to bare minimal of attending. Scoring 60 is never a difficult task in economics at all. That is a really easy task. If you have attended your respective faculties, it doesn't matter, not only just mine, with any academy you are, any faculty it is. If you have attended the class, if you know the concepts, at least you have solved some basic MCQs. 60 scoring is never a difficult task in economics. See, up to 60 though, it is easy. After going back home, your efforts. This will take you from 60 to 80 easily. 80 above, you should have little in-depth knowledge of a subject. It means interconnection between the chapter, in-depth. This goes up to 90. 90 to 95 is where you have a full knowledge, GK also, some nook and corner of the material. Nook and corner. And another 5 questions, I'm only saying some GK related questions will come. Chapter 10, I can't assure you will get 10 on 10. Na? Some 1 or 2 marks may go for bouncer. So 95 till, yes, possibilities are there. 95 and above, definitely 1% of luck will work there. Till 95, I will never speak about luck. Only 95 and above, I will speak about that 1% of your luck also matters there. Whatever GK questions you have studied, same questions are appearing there. You could able to crack it. So some 5 questions will be always from nook and corner, GK, some or the other thing, bouncer will be there. So 95 is definitely in your control. That is why I usually say read ICA material once like a newspaper, including summary. Sometimes the question will come from that summary area, not from the main material. They have done it before. ICA doing ICA things. ICA is expert doing in all these things. You can't believe ICA. It will happen like that. Clear? Sir, from which chapter we should start while doing preparation? It doesn't matter, man. Whichever you feel comfortable. Go with micro. If you are more comfortable with micro, go with micro. Do with demand and supply first. Then go to cost and production. Then go to chapter 4. Then come to 1 and 5. See, always, I usually say this. Make this ABC analysis. Hope you will be knowing already ABC analysis. A means you are confident of. You know this 90%, you know already the topic comes under 9. A category. Sir, this 50% I know, another 50% I should study. This, sir, just 10% I have a knowledge, 90% I should study. When you do this, I recommend first complete this A and B. Usually A and B put together, you will cover 70% of your syllabus. You will be already knowing 70%. Rest remaining 30%, in that even if you cover 15%, another 15 you leave, no worries. First cover this A and B category. A category means you have 90% knowledge in the topic, just 10% small revision needed. B category 50% you know, another 50% you should study. Always touch this first A, complete this A. Once you are done with this A category, almost you will be, let me say some 30-40% of syllabus will be in A. Another 30-40% or 20% syllabus so definitely will be in B. So 50 to 70% category gets completed in A and B zone. C zone takes more time. Once you are done with 50 to 70% of your syllabus, this will not feel more burden. Straight away if you hold this will also get confused. That is what I say. There is no rule that 100% you will cover everything. No, don't be in that assumption. Don't be in that dilemma. Even if you are covering 70 to 90%, well and good. In economics, even if you are covering 70% of syllabus, still you can score 50 marks. 60 marks you can actually score. 50 to 60, so definitely you can score still. First, you should have that confidence. That is what I'm saying. You have done, your preparation was there 3 to 6 months, man. And don't do magics at last moment. New topic holding, one day before exam, 1 week before exam, I will sit and study new concept, new topic. That will add more stress. And I usually say, don't even take economics book to your exam center. You will be more tension, you will be more stressed by reading standing at some corner there. Sir, I'm used to it, sir. At last moment, whatever I see, even that questions have come, sir. Yes, I know, I understand. But you should keep your mind free. Especially now, 1 week before the exam, the better you sleep, you will perform better. The more calm and composed you are, you will perform better. The more tensed you are, whatever you know, you will get confused. So 1 week before the exam, your sleep, food, your health, routine habits should be proper. Don't take stress, don't take new experiments on 1 week, especially 1 day before exam. Whatever you have revised, whatever you have marked important, that things you should revise it once. Numericals, you should solve it 1 day before. Whatever chapters, numericals will come. Approximately in entire economics paper, if you see, 15 to 20 marks numericals will be there for sure. And that too easy marks it is. Cover that. Main topics. Now I said main topics. Now whatever I just wrote here, this one. These are the main topics. You see any paper, these questions are there. This covers 50 to 60 marks will be covered here only. See, that is the reason I don't do any kind of separate YouTube prediction videos and all. In class only I will say, boss, this is where it definitely comes. This is where it comes. Read it. Separately, I need not to do a prediction video on that. Anyhow, in the part of syllabus only, we would have done it. So this is main. Sir, I have got low marks in mock test. Will I get low marks in exam? No, man. This is what I'm saying. Mock exam, you are still practicing, you are learning. That's fine. You will make mistakes, but don't over attempt. That is what I can say. Sir, except market. Number 1, failure. Except market failure, everything has been completed now. Pace for 5-day strategy. Yes. Market failure and government intervention, you can go it. No problem. Sir, I have got low marks in mock test. Will I get? No, man, I answered Team Guru. See, that is what. First, remove that from your mind. In economics, definitely, if you observe, I can bet this. RTP, MTP mock papers will be slightly difficult. Main exam paper will not be that difficult. It will be always easy. Sometimes, if your ICA wants to play with you, then they may make it tricky, not difficult. They may make it tricky. They will play with options, not with question. They will play with options. There, I recommend you, if you're not even having a confidence, let's say if you're not 100% confident, 99%, 1% doubt, leave it. Don't take unnecessary risk. Even if you're attending 70 to 80, 85 questions also, that's fine. There is no rule that 100 on 100 you should attend. Always keep this in mind. I will try to come live 1 day before exam. I will try my maximum. I will not be in India. But still, I will give my level best. If possible, I will try to come live. But that is what I'm saying. 1 day before, the more you are calm, the more you are composed, you will do better. Any exam, not just economics, be it every paper. 1 week before the start of your exam, no new experiments and all. Stay calm. What you have done, revise it. Prepare your own short material, short notes. Sir, importance. Already I have given chapter 7, 8 and 9 important. Everything. I spoke here. Market research, now you leave it, first you complete. Sir, PYPU's PDF. I have shared it to the team. They will put, I think they are merging all the YouTube videos and making it as one proper marathon video. In that link, they will post it. No worries. PYPs. Past 5 attempts PYP, I have asked them to share. Chalo, any other doubts before winding it up? Clear? Chalo, all the best. Make sure that you clear your exams. We'll meet you in CA Inter, Strategic Management. There also, devil comes at last. Last paper, last subject, Strategic Management. 50 marks I will be handling there. We'll meet you guys in CA Inter. Until then, bye-bye. All the best for your exams. Let me know after your exams. How did your exams go? Good, bad, pathetic, worst, whatever it is. Don't worry. Share it. Clear? Bye-bye. Okay, once explain money multiplier. Simple concept, man. Money multiplier. Money multiplier is small m. MS by MB. Money supply by monetary base. How much ever money getting supplied in the economy. Let's assume 1000 crore. But printed 200 crore and circulated by RBI. That means money is circulating by 5 times. Same to same by using this formula. MS formula is there. Multiples of monetary base. That means money will multiply 5 times. RBI is printing and supplying 100 crore or let me say 200 crore. 200 crore multiplying by 5 times. Total money supply will become 1000 crores. Tanma, money multiplier. Bye bye. Yes. Sir, 1 to chapter 7 is enough to score 60 plus. I don't ask you to do that. Take a risk. No, Sharath, don't do like that. At least cover this. 2, 3, 4, 6, 7, 8. You cover this. This I can guarantee 60 at least. Not 1 to 7, just 1 to 7. 60 plus I can't guarantee, but definitely 45 plus though I can guarantee there. 1 to 7 alone. Bye bye. We'll meet you guys in CA Inter class.